So first thing we're going to do today, we're going to talk about why we're all here, but we're going to focus this conversation on futures trading. Who here has taken a payout from a prop firm so far in the future space? Awesome. Like half the room. So what that tells me is that those of you that did not just raise your hand for a payout need to go talk to those people who did. Part of being at this event is networking, meeting new people you might be friends with for a long time. I've met some of you at conferences, and you've been my friend. You've been here for 2 years, 3 years. So take advantage of that. Now, let's get into it, and then we're going to get into trading. First, got to give a sponsor. Shout out to our 3 top 1 futures, TradeZella and Bookmap, because without them, this definitely would not be possible, or at least I'd be losing money on the event if it wasn't for them. So got to give them a lot of love. We're going to do independent sessions over the next 2 days on TradeZella and Bookmap. Who here uses TradeZella right now? Okay, a third of the room. Who is using Bookmap right now? Awesome. Same, another third of the room. Who wants to use Bookmap after this seminar already? Cool, you're going to love it. Who is skeptical about using TradeZella because they don't want to spend 10 minutes a day journaling their trades? Be honest. Okay. So if you're not using TradeZella, hopefully by the end of this, you're using that as well. Let's go through a couple of questions before we get started. Like I said, who's taken at least one payout? Put your hand up again one more time. If your hand is not up, look at these people. Hold it high. Proud. Hand up. Come on. These are the people you want to speak. Yeah, double hand up. Yep. Who's still negative overall in their trading business? Be honest. We've all been negative. Most of us for longer than we like. Okay, good. Whoop. Who's made over $25,000 so far this year or in prop firm payouts in general? Nice. Okay, so that group back there, hang out with them. But this is the best question. Who believes that this year is going to be their most profitable year yet? One yell, the rest of you were like slow. I said, who believes this is going to be the most profitable year they've ever had? You're like, oh, look at Austin, the bar mitzvah DJ, getting me all riled up. I'm being serious, guys. This is probably one of the most important slides in the entire 2 days. Belief is at the foundation of any success that you'll find in life. Who agrees with that? Can I get a yes? Okay. You can clap, we can snap. I want the interaction. I want you to feel me, and if you don't feel me, I want you to tell me, okay? I'm going to talk about myself for a second, and then we're going to come back to belief. Most of you know who I am. I've been running the podcast for a while. Most people know us through there. But I also have had this education business since 2019, teaching people how to trade, running seminars. At one point, we were selling courses. Now we do our live streams. I'm very proud of that. That's basically all I care about, right? When people have left the Black Shirt Club, what do I say? Just leave me a good review. I don't need you to keep paying me. Leave me a good review if I delivered, right? So that's super important to me. If you have not checked out the podcast, let me ask you this. Who has listened to an episode of the podcast? Is everyone in here? Okay, cool. So you already know. Dope. Love that. But this is where I started, kind of. So that, I know, doesn't look like me. There's no beard. I look way more professional in that picture than I probably do today. Cut, glasses, the whole thing. This was in an apartment that I lived in back in New Jersey. This was the year I dropped out of college to commit to trading. I was still working as a DJ, but this was when it all started. You can see there's candlesticks on here. There's somebody looking at their phone sitting right here, my buddy Kevin. So like, even here, I was still trying to teach people how to trade. Same thing here. There's people sitting in look at the charts. This is my bedroom. Walmart pop-up tables and a TV screen connected to my laptop. Who's been there? Broke boy setup. Come on, hands up. No? Randy, you never had a broke boy setup? Christine? Some of us can relate to that. This is what I was doing to stay alive. As I was losing money trading Forex at the time, blowing money. At that point, probably $40,000, $50,000 of my own money gone. This is what kept me alive. So I would work on the weekends. I would DJ, host events, do the thing I'm doing right now, kind of. And that really was the money I funneled into my trading. This picture is super important. If you look at the date, it's 2018. So this is me on a roof in a hotel with my brother going to the Money Show. Does anyone know what the Money Show is? It's like an old person, sorry, older guys. It's like an old person conference where like boomers speak, okay? But at the time, I didn't know any better. So I was like, let's go to the conference. My brother is in finance. He still works in finance, so we went together. I feel like this was a huge turning point for me because from here, I ended up getting the job at T3. T3 is a prop firm. I traded with T3 for about a year and a half. So we went Wall Street, right? Classic, kind of corny picture. This is me in my broke boy apartment. My wife calls it a rabbit shack. This was the kitchen, living room, everything basically here behind me. I ran live streams for them, and I did videos for them for literally 380 days straight. I think that was an extremely important period in my trading and in my learning, and that's why I'm sharing it with you guys. By forcing myself to sit here and do videos, even pay for an editor and do all of that and commit to content, it made me review my trading. And that's why I'm sharing this with you guys, because as this process goes on, as my story goes on, I have reviewed and studied my own trading almost more than I've traded live markets. And I think that's a huge thing I can share with you as far as like, oh, I want to make more money. If you're not reflecting and reviewing, doing video reviews even, you're leaving money on the table. Who here has enough confidence to say, like, if I pulled up your TradeZella right now, you've got good trade recaps and good trade reviews? Who's confident in their journaling? Hands high. Okay, so again, look around. Those are people you might want to get with if you're not doing that. Who is doing video reviews? Here, 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 here. Are you posting them on YouTube or just for yourself? YouTube? Yeah? Yourself? YouTube. Okay. Get them on YouTube. Put them out. Put yourself out for the feedback. And like, what's the worst that happens? Patrick Whelan's going to call you short? Short kings, bro. Okay, cool. That guy. Do what's better for you. And I think getting the feedback from the majority of the silent people that will never say something negative or positive until you put out those videos, it's extremely valuable. So this was me literally running this live streaming room for 6 hours a day, every day. It was awful. I'll tell you, I was smoking a lot of joints because I was stressed the fuck out. It was really hard to trade Forex in front of people for 6 hours a day. But what do you think it did? It taught me a lot. Who remembers? Was anyone here with me? Anthony? Yep, I knew it. Ryan? Yep. So some of you remember this. The Silver FX room is what it was called. Remember that? That, again, was a huge learning experience for me. Being able to, I don't want to say that, forcing myself to show up every day and take trades in front of people, man. That's why when you guys come on stream now and you go, dude, streaming trading is hard. I go, I don't even remember it being hard because I did that every day from 6 a.m. to 11 a.m., 5 a.m. to 11 a.m. And now I left T3, started ASFX with my wife, and we've done 13 of these seminars. This was the first one we ever did. Some of you actually are in here. Ryan, you're in here somewhere, dude. If you've been to multiple seminars, you've been here. This was COVID. That's why there's only 4 people. This is March after COVID hit. Still got it done. Miami, Tampa, Ryan Holland right there. There he is. He's in real life, he's here. Another Miami. More Tampa, Miami again. Tampa. This was a retreat we did where we had people stay in a house and we traded together for a couple of days. And then we get into the big ones. We did London 1 and London 2. Thomas, you're in here somewhere with long hair right there. Look at him. Dude, we couldn't even find you yesterday because now you're like monk mode and like you look so different. And then we get to Dallas. This was earlier this year. Mr. James is here. Randy's here. A bunch of you were in here because now you showed up to this one. So now we'll get back to the beginning. The doing the hard thing. Whether it's the videos, whether it's the journaling, trading in itself is extremely difficult, right? Would we all agree? Does anyone in here actually think trading is easy? Maybe like the day-to-day of it sometimes, like if Isaac hits a nasty trade and he's done by 9:15 or whatever, then it looks easy. But you don't get to that point without doing what I like to think of as like the Kobe stuff. Being in the gym at 4 in the morning when the game's at 3 in the afternoon. Committing to doing difficult things because you know that they will reward you. Not because you're going to get the pat on the back from your wife or the pat on the back from the boyfriend or the husband. You're doing it because it's for you. And I think what I found over the last 6 years in building my brand and building my business is I believed in myself when no one else really did. And I was willing to commit to doing things that I thought would lead me to greatness, even when I knew people wouldn't understand. When I would miss family events, when I would not talk to certain family members, that's hard. Has anyone in here had to cut somebody off because they didn't support them in trading? Is anyone else in that same boat? No? Most of you are got super supportive families. That's nice. So, what I like to remind myself of every day is this quote. Greatness is not for everybody. Do you agree or disagree with that statement? Come on. Agree. You're all here because there's some sense of self-belief. Even if you're in the back of the room playing on your phone right now, tuning me out, you're here because you believe in yourself to some extent, right? So now I ask you guys, who believes them in themselves enough to be great? I saw hands there first. One of the oldest guys in the room put his hand up. Come on. Who believes in themselves to be great and accomplish something that 90% of people are going to lose money doing? Better. We'll get sound later maybe. Or you guys got mouths? We'll get sound later. So now, just a couple of things. I recently took a payout with Top 1 Futures. I think that that's a huge win. Shout out to Clay in the back on the successful launch of Top 1 Futures. I know Joey also took a payout already. Isaac, we're waiting. Tanner, we're waiting. Evan, Zach, we're waiting. Thank you. Also taking payouts with Tradeify. Got funded with Top Step March 17th, 2024. So Futures is relatively new to me. As you can see here, anybody remember these companies? Throwback, right? I mean, look at the date on that. That is 2022. That's 2021, right? So funding and getting funded has been a thing that I've been focused on, but also helping other people do it. So before we get into the trading today, I just want to show you a couple of people that are just like me and just like all of you. They're nobodies. We're all nobody, except those of us that think we can be great. Collins from Nigeria in the Blackshirt Club took his first payout with us last week. Evan's student, Nick Jocelyn, look at this. Best day was April 8th, $82,000 on 41 funded accounts. Unbelievable. Yeah, you can clap for that. Give Nick a... Craziest thing is before he joined the Blackshirt Club, I thought he was dead. He literally was like in the hospital. I was worried he was going to die and we were going to have our first death in the Blackshirt Club. And then he comes and within like 3 weeks this happens. But he also has a lot of trading experience, so big win for Evan. Julio, who was supposed to be here but can't make it, took his first payout with us a couple of weeks ago. This is end of March. Big dog himself. Got to give Mark a shout out. He was at the last seminar. Everybody loved Mark. Mark took a $15,000 payout last month. Another one of Evan's students, Troy, $1,300 on the day here, but look at that month. How much would you pay for a month like that? Where we start the bidding at? $1,000? Another one. This is Derek. Derek was amazing because Derek's taken payouts from multiple firms. I'll give you a little thing about a couple of these guys so far. They all trade completely differently. So what does that mean? There's no one path to payouts, and that's why I'm showing you this. Also, you'll see with Derek trying multiple firms, being willing to be like, I don't know if I like my funded futures. Let's try whatever that is, next gen. Randy, first payout a couple of weeks ago. Give Randy a round of applause. Mark again here, personal capital. Rebecca getting her payouts. Got to give Rebecca some love for sure. So you see, payouts are what we do, right? Not every day, not every week, but payouts are what we're focused on. So if you're here, that's what a lot of this conversation is going to be over the next 2 days. Does that sound good? Thank you. Does that sound good to everybody else except the front row? Good. Now, we're going to talk a lot about VWAP. Is it VWAP or VWAP? VWAP, hand up. VWAP. There ain't no VWAP. I don't want that WAP. Keep your WAP to yourself. But I get DMs like this all the time. It's VWAP, not VWAP. Man, suck, bro. If you like VWAP, please buy Brian's book. That's all I'm going to say. Just buy the book. Who here has the book? Beautiful. Who would recommend the book? Right, so if you like what you hear over the next 2 days, buy the damn book. 2 more slides, then we're going to get into trading. This is like 4 bullet points, 8 bullet points that I feel like I can sum up my entire 10 years of trading in. So your job is to make money, not to know where the market is going, and definitely not to catch the entire move. You'll see that in a lot of the trades we talk about. Number 2, change your beliefs. Challenge your beliefs. Are they helping you make more money? We talked about this at the last seminar, so I didn't want to harp on it too much, but audit your circle. Audit the people that are around you. Audit the things that you're operating under on a day-to-day basis. I mean, you could take this conversation it's a podcast in itself, right? Like, how do you even talk to your spouse about money? How do you plan your future when it comes to finances? How are you seeing, feeling, and interacting with money? That's what I'm talking about here. What's the old saying? Money is the root of all, what? Evil. Dude, think about that, though. So when you talk about challenging your beliefs, money is the root of all evil. Does anyone actually believe that? Okay, so that's what I'm saying. Now, number 3, this is super important. Y'all did this already, so big up. Get around people who have what you want. And especially as you start doing better, Don't stop doing that, because then you're the richest guy in a room full of poor people. You got to keep paying to get yourself around other people that are going to not only challenge your beliefs, but help level you up in general. You normally, anyone in here that's probably over 30 will agree with me, you normally end up paying for stuff like even coming to an event like this, thinking you're going to learn about trading, and you end up meeting somebody and doing business with somebody, and it creates this huge opportunity for you that if you were closed off, if you weren't willing to get around people who have what you want, you ain't getting that opportunity. With me on that? Green days lead to payouts. Being right doesn't matter. Does anyone question what I'm saying here? Do you understand what I'm saying? Being right, I know SPY is going to move higher. I know ES is going to move higher today. Cool, bro. No one cares. Like, no one, I'm not being funny. It sounds funny, but no one cares. If Nick called it to the exact tick that it was going to move, no, did you make money, Nick? That's the question. So I don't care if you're right. I don't care if you can call the market. I care if you're green. Why? Because green days lead to payouts. It's not that complicated. It sounds super stupid, actually, when I'm saying it out loud. But what happens when you're in a green trade? That could be compounded, like Nick just said, compounded to a payout. You stay in it a little longer because you hope you can get a little more out of her. You know what I'm saying? And that's where we want to kind of rewire it. What are you laughing at? You know what I'm talking about. You did it last night. So let's break free of the Brules. We talked about this word Brule at the last seminar. It's a rule that you live under. Who here, when they got into trading, thought that indicators were bullshit? Did anybody believe that indicators did not work, James? I did. I thought EMAs, everybody convinced me nothing would work. But as you can see with VWAP, if you know how to use it, indicators definitely can work. How about, don't tell ICT, I talked about it, but there's no secret algo running the markets. Are we all operating under that assumption, or do some of you think there is a secret algorithm running the biggest global financial markets in the world? Yeah? Strategy hopping is okay too, if you're self-aware. Zach, we talked about this before, saying like this VWAP thing is just not working for me. I need to go do volume profile. I want to try that. It's calling to me. That's self-aware strategy hopping. That's not today I'm going to buy this EMA, tomorrow I'm selling that RSI, and then Friday I'm going to do volume. Like, that's ridiculous. Everybody with me on that? Give me a head nod. Strategy hopping is okay until you find what you like. Last point, becoming a better loser is going to be difficult. There's just no way around it. That's probably the hardest part about trading, is learning how to take losses and walk away. Who struggles with that? All right, so now I'm going to point to who doesn't have their hand up. I'm going to say liar, 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 because we all do. No one got into this business thinking they would be a loser. And no one definitely got into this business thinking, I'm going to be the best trader by being the best loser. But that's the framework we want to operate under. Because if I can get you to not have tilt days and not have red days, like Nick just said a minute ago, what ends up happening? Compound some green, take some motherfucking payouts. Everybody with me on that? Okay. I'd love to get some feedback on the entire 2 days. Is anyone comfortable to share not just a takeaway, but maybe something they're going to start doing now that they've been here for the last 2 days? I'm going to pass. Retire. Yes. Let's go to Thomas first. Give him a microphone so we can get the audio.
My one-liner from this conference is, when I catch myself thinking, I think price might do this, I have to stop myself and create an if-then statement, because I know that's a problem for me. So that was a big eye-opener, and that's my one-liner.
You've been to a few of these seminars now. Do you find that you're still getting value out of each one?
Oh, yeah, right there. That, I knew when I heard that was the one-liner. Also, what Tanner was saying, on the growth and evolution panel, how relatable it was when I'm writing in my DRC the same damn thing every single day that I need to work on. And then you have 2 days where you do it fucking beautifully, and you know this is what good trading feels like. And then you have the weekend or whatever fucking happens, and you go back into that. But I related to that sentence so much.
Love it. Yeah. What else? Krista, love that. Hold on, microphone. Krista, front row. There's 3 girls here. He's like, Krista, where are you, dude?
I think the biggest takeaway has been to treat this like a profession. You guys have said several times that we're entrepreneurs, and that was a big slap in the face. That's kind of, I am an entrepreneur. That's how I label myself. I haven't had a real job in my whole entire adult life. I am an entrepreneur, but I've been treating trading like I'm a gambler, just to throw myself under the bus. So that plus the processes, I really resonated with Tanner's talk on I have an athletic background, a fitness background. So I kind of had the gambler mentality of like, this is my income goal. I'm going to get there right now. But you're a metaphor of like, I'm not going to walk into the gym and have a 700-pound deadlift in a week. So just focusing on being an entrepreneur, having my daily processes, just focus on the daily things that I need to do, and I'm going to get there. So those are all things that I think I knew, but you guys saying it was a really good reminder. So I'm pumped to get back and do all that stuff.
Would you come to another event like this, even though you kind of knew the takeaways already?
Absolutely.
Why?
The first thing that comes to mind is it's a good reminder. It's kind of like if you're a Christ follower, you go to church every Sunday because you want to like stay accountable. Sure, you can read your Bible on your own, but like being a part of a community and just getting back into it it's always good to surround yourself with those people that are where you want to be.
100%. Thank you, Krista. Amen. Hell yeah. Hell yeah. I have to hear from the one-legged man in the back here. Let's get him a microphone. So I have to ask, why did you decide to come even though you just broke your foot?
What's the alternative? What else are you going to do? Like not make this work?
Hell yeah.
You know? And so obviously you have to, you know, you get what you give. So you get in a room like this and it's much more, I was talking to Randy about it, but it's much more about like proximity than like, yeah, I got some technical takeaways for sure, but like just seeing that success can look so different in so many different ways, and like understanding that you have to find that within yourself, I think is the biggest thing.
Any super big takeaways that you're going back to St. Pete with?
I got a lot of time to study, that's for sure.
With that foot.
Yeah, I mean, probably the biggest takeaway would be what Isaac said about like 8 out of 10 times it's not your strategy, it's you. And to track the tilt days. I don't really tilt too often, but when I do, those are keys, man, but when I do, those DRCs go on for days. And that's honestly what I'm most proud of, is like being willing to face that.
Love that.
Yeah.
Thank you.
Yeah.
We can give him a round of applause. Can we get Anthony, do you mind? Tanner, could you get the mic to Anthony in the third row? Thank you. So I want to hear from Anthony. For those of you that don't know, Anthony's probably knowing me like the longest here. When did you first find me, Anthony?
I want to say it was 2019,
Right.
around COVID time.
Right before I left T3.
Yeah.
And
Actually, I helped Austin move to Florida.
he did.
Austin reached out to me, and I had just moved to Florida and said, hey, dude, got some apartments we're looking at. You mind going to check them out for me, take some video, scope the area out, you know, give me some feedback.
So it's your fault.
So
Thank you.
So what I want to say is I didn't come here to learn a strategy. What I came here for was self-improvement. So what I took away from this is a little piece of what each of you guys have done, not to learn a strategy, but to become better as an individual, right? So what habits did you create, right? So I own a successful business, but yet I suck at trading, completely suck at trading. I own a 7-figure business, but I can't trade to save my life. And it's like, okay, what can I take from each of you guys? What have you done to become successful in this? So I can relate to Tanner because I work out, and I could be disciplined as hell when it comes to working out, diet, all that. I've done it. I've been there. But I haven't been able to take that and relate it to my trading. So to be around other people that have a similar goal and see what we all struggle with, but what you guys have all done to get to where we're trying to get to, that's motivation for me. So I see that as giving me the ability to become a better person, a better spouse, a better father, and eventually that will make me a better trader, right? So you tie all of those things in together, and again, it's not Austin's strategy that's going to get me there, or Isaac's or Tanner's. It's the mindset thing that I'm taking away from these 2 days. And I would 100% come back to another one of these. And I don't know why it's taken me so long to come to one of them, but I finally, something clicked, and I'll give my wife a lot of credit to that. She's like, go be around people that are where you want to be, because you can do this. You're smart. You got the ability, but something is holding you back, and you need to go find out what it is that's holding you back from getting to where you want to be. because you've found success in other areas of your life. But what fear or what is that one thing that you feel is stopping you from getting to where you want to be with this? So being in a room with each and every one of you, because we're all here, right, for the same goal. We want to get better. So we're leaning on people that we look up to in this trading space, not to say his strategy is better than his, or, oh, I'm going to now go jump strategies because I think whatever. They've all gotten to that point with their mindset. And I think that's huge to be in a room with those people that we look up to aspire to become, right? So that's what I'm taking away from these 2 days.
You're the man, buddy.
Yeah.
Anybody else? Can we get a couple more? Yeah. Mr. Costa Rica.
All right. Well, I'm just super blown away by it. I had I don't think I had very many expectations. It's a lot to travel, and we're spending a lot of money and everything to make it all happen and taking time away. I wasn't expecting to be trading either. I thought I was going to take a break from trading. I didn't get that. I was like,
surprise.
I need a break. This is going to be really good. I never take days off. But I had some of my best days trading of the last few weeks while I was here. So that wasn't a disaster. But yeah, so my expectations were blown away. And I was just hoping, like, I have this, I don't know where I got this from, but if you spend, the most expensive book is like $100 or something. If you take one thing from it, then it's worth it. So I have that mentality with a lot of things. Like, for the price of the boot camp, I was like, okay, there's probably one thing I can take from it. Maybe I just meet a good friend or find a neighbor to copy trade. But not only did I get a few little tidbits that I think sometimes, like, the simplest things are just like can make the biggest difference with trading. Like, I agree with a lot of, that's what everyone's kind of been talking about, or part of it. But so not only did I get a few little things that I can now like implement in my own process of my trading, but also the community and like the realness I feel from everyone here actually is like a missing piece to my trading that I haven't found in over 7 years of trading. So to me, it's actually an emotional thing to like feel like I'm with my people and to kind of like have that handshake and like make it something more real in my life, that I feel like more motivation and inspiration in my trading than I felt in a long time. And that is something beyond, like, to me, that's the most important thing in life. Like, I follow that in my life. I follow where my inspiration and where that leads me. And this is aligned with all of that. And so, yeah, my last question is just, when is the next one? And I look forward to connecting with everyone here and connecting with you guys and now following you guys more. Like, I didn't come to learn a strategy or anything. I don't actually even know exactly how everyone traded. And it was really cool to get that real experience and hearing from you guys directly, and now more motivated to follow along and to come to future events and everything like that. So thank you guys so much.
Thank you.
Yeah.
Anybody else for feedback? Maybe one more person? I'd love to know just like a big takeaway. Just something, yeah, Steve. Something that maybe you didn't expect.
Well, I'll start off by saying I think you really inspired me when you spoke about that entrepreneurship spirit, and I think a lot of you guys hold that. And I think for me, this concept of like, do I have to be super passionate about charts and numbers? And, instinctively, that's not my natural, habitat. It's, speaking, it's mentoring, it's all kinds of different stuff, right? Music, like you say, you DJ. So I think when you said, hey, trading doesn't have to be your passion, but it can be the outlet to create the income that you desire to fund businesses and do other things. I feel like that gave me kind of like this ease of like, hey, trading doesn't have to be my entire life for it to necessarily be something that funds my entire life, if that makes sense, right? Because I am passionate enough about it to enjoy it, but I've never wanted it to be my entire life. And that's been kind of like a battle, because a lot of traders I know, it's super consuming. They tell you got to back test, 5 hours a day and all this. So I'm just grateful for that concept. I also enjoyed that everybody's trading different, and everybody here trades differently. Even though they follow one of you guys more than another, I think everybody here trades different. And that also gives us that freedom of like, find what works for you and then be systematic in how you approach that, And then the last thing I'll say, I entered a buy when Tanner entered a buy today, right? I was looking at the same thing. Funny enough, if he didn't go break even, which I know my boy Zach talks about break evens, his trade would have gone 300 points. And I think that, because yeah.
What are you looking at me for, bro?
And funny thing is, I only took 30 points out of that trade, and so just, for me leaving here, I got to let my winners run because of how my system works. And I've talked to Tanner about that. But overall, just to say what everybody else is saying, I think this was a fantastic event. I was in the MLM space many years. That's how I got involved in trading 7 years ago. So thanks to MLM for that. But I've never been to a conference outside of MLM for trading. And so to see people that are really in the trenches, they're really about it, I'll be at the next one for sure. So
My man. Thank you. All right, everybody. Chris, we're going to take a picture of the group. Tanner's going to close us out.
All right, real quick. First of all, thank you guys all for coming. How sick is it to be in a room with a bunch of traders? Right? In person. Like, this is like what got me all hyped in the trading space in general, is to be in person, because a lot of us are just behind screens, right? Just on going ham on the keyboard, right? Like, being in person with people is such a unique experience. And these events are not easy to coordinate. We didn't really make a dime off any of this. It's really all for you guys and just to like bring traders together. So let's give a huge round of applause for Austin putting this all together, because it's not easy. It takes a lot to do it. So now let's take a picture and let's drink some fucking tequila and have fun. All right?
Hell yeah.
Let's do it.
Real quick, Isaac wants to say one thing, and then we'll take our picture.
Yeah. So, again, this is my first time doing something like this for trading. I've been to so many seminars, and if you think about it, how many industries are there that have seminars for professionals, right? Doctors meet, real estate agents meet, tech bros and CEOs meet, right? One of you guys brought up me always touching on professionalism, right? You guys want to make as much as doctors and as much as lawyers and as much as CEOs. You wouldn't go to an unprofessional lawyer or an unprofessional doctor. So if you want to make that professional money, you have to treat this like a professional. Even if you didn't learn anything and you just came here and got energized or re-energized, sometimes that's the difference, because everybody knows that the difference between water that is standing and water that is boiling is a change of 1 degree. So if you just make very, very minimal adjustments, you can have major results. So always keep that in mind. It doesn't take that much more to have a lot more, because the last thing that I'll leave you guys with is that if you fail at this, you will likely stay in the exact same effing spot that you're in right now. But if you succeed, your life changes. That's all you got to lose. If you screw this up, you stay exactly where you're at. But if you make it, you've made it. All right.
Give him a round of applause for that.
Man.
First thing we're going to talk about is something everyone in here already said that they have felt, which is FOMO. So, Tanner, since you were speaking first, I'm going to have you kick us off here. You didn't really touch on FOMO too much in the presentation. Can you give tactical advice on this first question of how you handle FOMO? First, as a trader, and then as a coach. So as a trader, when you feel FOMO, how do you react?
So when I see my setup go without me and I get FOMO, the first thing I look at is, number one, location. Can I still get involved? Does it logically make sense for me still to get involved? Maybe a little chased, It really depends how far gone it is, obviously. But I look at the risk. And that's why, I showed you guys earlier today too, how I look at risk, and I look at those really tight structures. Because if it is a little far gone past my entry, I can still get involved and just lower my size, right? So it's like I accept that risk and I widen my stop, so I can still potentially get involved. If it is so far gone, I just know, and you all know too, right when you go long, it's gonna reverse. Every time you're like, okay, well, no, okay, it's still going.
Especially after it's already moved and you say to yourself, it's kind of high right now.
Yes,
right.
Exactly. And so this is something where I like to look at how far have we gone to where are we potentially going? And it's not a set specific number, because obviously the markets can do whatever they want whenever they want. But if NQ's already ripped 150 points from my entry, I'm like, I'm gonna go, Tanner, you're gonna get screwed. Don't do that. Don't do that. So taking a step back and logically trying to walk myself through it. Like I said, I like to talk to myself a lot when I'm trading. People are like, you would think I'm nuts, because I'm like, all right, Tanner, no, that's gonna hurt you. That's gonna hurt you. So actually trying to take a step back. One thing I got from one of my mentors that helped me a lot is, if you do get in a trade and you're just incorrect right away, you try to actually physically take a step back from your desk and you go, okay, is my read wrong? Is my read wrong? So,
and even that, the act of looking, stepping back physically, helps a lot. I like that. Let's go tactics. Isaac, you want to go? Any tactics on handling FOMO? You're in Tanner's position. You see a trade, you went to take a shit, you missed the entry. You're like, oh my God, dude, this is my setup and I missed it. The dog shit on the floor, I have to go clean it up and I missed the trade. What's a tactic for handling that other than getting up and walking away? Turn that on, yeah. Click that up.
Testing 1 2. All right, we're good. So even if I had to take a shit, I wouldn't miss the trade per se because I always let the market come to me, right? I set my limit orders exactly where I want to get in.
Hold that mic close.
Yep. Before I actually get into a position, I have my limit orders set. If I'm on Trade of 8, then I can see my exits on both sides, right? Because everybody's always prepared on where and when to get in, but no one really puts in the work on when to get out. When to get out when you're wrong, when to get out when you're right. I have all of that predetermined before I even enter a position. That way there's really no surprises unless something hits the wire. So if I miss an entry, it's not because I didn't have a limit order placed, it's I didn't have it placed in the right place, right? So there's usually 2 thoughts or 2 different types of emotions that I experience when that happens. It's either a good one because it's just like, okay, I was right, I just didn't get to participate. And there's nothing wrong with that. You should commend yourself when you're just like, okay, what I expected or anticipated happened, however, the bus left without me, right? And that's okay. But then there's instances where it's just like you got to reflect on, okay, why did I miss this? Was I being too cheap, right? Was I trying to get too good of an entry that I just put myself out of the play zone? Or was there something else at play that maybe I didn't observe? Or was there something that changed after I placed my limit order that did not allow me to participate? And then those are your opportunities to like learn from that. But I never have FOMO, right? Because like there's sometimes the best trade is the one you didn't take or the one you didn't get in. It's real easy to get, upset when you see it work out, right? But if I had gotten filled and it had went against me and I had taken a loser, right, then that's
You would
a
have
whole
been like,
other set
thank
of
you,
emotions.
dog, for pooping on the floor.
Exactly.
Yeah.
Exactly.
Go ahead, Joey.
So.
Yeah, I would say for me, I always ask myself, like, what's the rush? Like, why am I really in a hurry, right? If I miss a move, and I'm feeling FOMO, what's the root of that? Why am I feeling FOMO? Number one answer is I want to make money, and a setup happened, price is moving in the way I thought it was going to go, and I'm afraid and I'm kind of pissed off that I'm not in it and I'm not making money, right? So the root cause of that is you're not making money. Now, you also have to understand that the market always provides opportunities. This is not going to be the only opportunity that you see in that day, or if it is, so be it. You have tomorrow, right? One single trade, yet alone one single day, isn't going to dictate your entire week, right? And so understanding that, just taking the step back, I'm not in a hurry. I know there's going to be another opportunity is the most important part of that.
All right, Ev, let me go to you. We trade together. Great answer, Joey. All of you. We trade together every day, Evan. So a trade happens. What's the first thought in your head when it moves without you?
Fuck.
Exactly. Okay. It's funny, but I knew he would say that. How do we fix the internal self-talk like that? Because I think it starts there. When you go, fuck, I missed it, and that was mine. I think we have to assess that self-talk of, fuck, it was mine. It was my move. That's my setup. Is it? Thoughts?
Well, I think it comes down to knowing your own plan. Let's just pretend it presents 3 times in a day. That sometimes you can say, fuck, like that was one of the opportunities. I didn't maximize on it. How many more entries am I going to get today? That could have been the only one. Obviously, that's not the way we trade with the VWAP at least. There's plenty of these opportunities that I think it's a matter of knowing what you don't do well, more importantly, that I know, like what Tanner was saying, if you jump in too late and it's just a point of drawdown, you're going to start questioning yourself, want to pull it out early. You know I shouldn't have been in this. I jumped in late. That's how it quickly spirals. So it's not worth it for me to jump in and risk that tilt that could just, from one candle. That if I know the market can come to me slowly, and if I could take it, I'll be able to perform better because I was calm when I did it. FOMO is so quick that you're feeling like it's moving every second without you. You have to decide right now. But it's not. Let the next trade come back to you. That way you can just probably perform it better and execute it better. But if you're operating from FOMO, then you're really probably more likely to screw up when you're in the trade, even though it might have won, but you executed it mid-trade, pulled it early, oversized, got back in again, and then, fuck, I tilted again just because I couldn't wait for the next move to present in 20 minutes. So you got to think 30 minutes from now, is this really going to rip all day without me? Probably not. I could just game plan. What do I need to see next? I missed this plan. Fuck. What do I need to see next to get involved into the next move so I don't miss that one? Because why did I miss that one? Maybe I was off the desk, but if you're like Isaac was saying, overthinking it, trying to be too smart. Well, then reflect on that. Why didn't I take that setup? If you were watching it and you missed it, that could be a problem. But then just game plan the next one. There's going to be 100 trades a day, a week, a month. This next one, you're not even going to remember it. So you don't need to chase this one because it's not going to be your end-all, be-all. There'll be another trade in an hour.
How many times have we felt FOMO? Maybe you guys can relate. You feel it. You're like, oh, it's happening without me. And then you do take the break that one day. You're like, you know what? All the guys that are the trading coaches, they say take a break when I feel the FOMO. So today I'm going to get up and take the break. And it actually works. And then you come back and find a sick trade. How rewarding is that? You did what you were supposed to do and you got paid. I believe the market has I always joke, it's like the universe inside the market. It has like, it feels energy. When you're breaking the rules, the market knows. And what's she going to do to you? Slap this shit out of you. When you follow the rules, like an example would be you're in a winning trade, it turns against you, goes into drawdown, doesn't hit stop loss, comes back to entry. It's not working. And you cut a piece of it like you're supposed to do, that trade ends up going back the way you're supposed to. Or you double down or you hold it, guaranteed stop loss. The market knows. So I think you have to come into it from a perspective of like being humble almost to the market to avoid FOMO. Respecting the market, knowing that walking away, like these guys are saying, and creating space can literally save you thousands of dollars that day, hundreds of thousands of dollars over your career. Let's talk for a second, unless you guys have anything else for FOMO. Any questions on FOMO? Any thoughts? Anyone struggling with FOMO every day and you want to talk about it? Yeah, that would be, I'm sure everybody would raise their hand for that one.
I'll just add one more thing. For people that trade with others, as most of us are in a community or even on a live stream, just because someone else is in the trade, I do not care. Because one, they don't know it's going to be a winner. Two, if I don't know exactly who they are or why they're in it, I can't say that I should be in it just because they're in it. They don't know where it's going. They look at different levels. They're looking at a different asset. He's using Bookmap. Well, that's not part of my plan, so I can't.
You can't even read.
No, I really can't. That there's so many times where they're saying, oh, there's a view up in your way. I don't use that one, so you might be right. It could be valid. It could hurt my trade, but I don't weigh that in my plan currently, so you're not going to talk me out of what I'm seeing right now. I still need to do what I follow, and then maybe if it burns me enough times, I'll say, you know what, that VWAP just keeps making me lose. I'll add it into my plan.
We'll pick on that, because now I guarantee someone here is thinking, where'd you get that level of stubbornness and confidence to not get distracted when I'm in a trade, or when Isaac, someone else in the chat, is in a trade? How do you stay locked in of like, I don't care?
I don't know why they're in, and I don't know what they're doing to get in or when they're looking to get out, so I can't be relying on someone else to feed me my success. I mean, you want to learn from everyone of, hey, Isaac, why'd you get in that trade, and why'd you get out there and not hold it a little bit longer? So then if you start to understand why he's in the trade, then you could belong in that trade next time. But for each time that someone just jumps into a level, I know, well, it might win. There's plenty of times on stream where someone says they're taking a trade, and I'm like, yeah, I think it probably goes higher.
Me.
But it's just not my setup that I'm like, well, if it loses, I'll feel like a jackass just because I jumped in because Austin got in. Because I mean, he's not going to take responsibility for my actions.
No.
That it's like, okay, yeah, he got in for different reasons. He's got a different risk tolerance. His account has a bigger buffer, so maybe he's playing more aggressive today. I don't fucking know. So I just have to trade what I'm seeing, what I'm feeling, and then look to learn, I guess, afterwards of what did you see that I didn't see and vice versa.
Who wants to chop in on that about not getting distracted when other people are in a trade?
So this is a really good question, because I'm sure all of you have been involved in this at some point, because I was, especially early in my trading career, is call outs, right? You're in some Discord or something. Okay, you know, I'm buying Apple calls here at this, you know, and then they sell it like W's in the chat, bro. Okay, whatever. So
Are you making fun of me because I said the W's in the chat?
I am.
W's in the chat, bro. W's in the room. Everybody made money. What do you mean?
So it really changed for me when I started to, you know, I'd follow some of those because, of course, you follow, you're like, oh, this guy's experienced. I'm gonna take his trades. You know, it's gonna make me money. But then you realize that they still are gonna be wrong. And like, you know, you have that one day where, you know, they've been crushing it, ripping it, and you're like, okay, cool. I'm gonna throw an extra, especially when I traded options. I'm gonna throw 3K into this instead of 500. Like, you know, and then all of a sudden that one is wrong, and you're like, damn it, I just lost so much money. And once you start looking at like, does this make sense to me? Because I finally started to like cross that path when I used to do that, where someone would have a trade call out and I would be like, okay, let me try to break it down and see if it makes sense. Because that's also like, you know, you trying to actually learn, right? Like we're here to learn. Like the goal should be to be a self-sufficient trader. You know, you can come into the charts. You're not relying on anyone's game plan, anyone's live stream or anything. Like, you want to create your own trading business. And while you're in the developmental phase, if someone has a call out or something and you can learn how to assess it, look at, does this make sense? And then if it does, you can take it, or finally you cross that bridge where you go, I don't understand this. This doesn't make sense. I'm not going to take it. And you just don't. And you're just content because you just don't care where it goes because it doesn't make sense to you. So once you can cross that and really get that concept of like, is this something that makes sense to me? Okay, I will take it. It's gonna maybe add conviction, or I have no idea what this is. I'm not just gonna hop in blindly. That's gonna like helps like flip the script.
I would just say connect what he just said to chart markups and journaling, right? Oh, Tanner's in a trade. I don't know why he took it. I'm gonna mark it up and study it. I might find something I like. I might find something I hate. Either way, if I can pull some value from it, either what to do or what not to do, I consider that learning. And I think over time, when you sit here and listen to him say that, you go, well, how do I even get to some of you are probably thinking, how do I get to the point of confidence that I know this is mine or this isn't mine? Markups, self-study, asking for feedback from other traders, right? How would you be able to be confident in a setup if you did not practice it and study it, even the ones that you don't take? Follow me? Questions so far before we get into another point here. Anything on FOMO? Okay. Isaac, you want to add something or no?
No.
Okay. Save it. Okay. So, second thought here from FOMO. I want to talk about red days. Okay? We'll go to you first, Joey, and then we'll go to Isaac. We know everybody takes losing days. So, Joey, first, maybe share a red day that you had a really tough time. You don't have to share the amount of money if you don't want to, but could you just speak on like how that sucked and how you got over it?
Yeah, well, we all hate red days, and something I've always said and preached, and even to this day, like I still have my battles with red days. I think every single trader has battles with red days, right? As humans, we're naturally wired to not want to be wrong, right? We hate being wrong. That goes against our very human nature of accepting that we're wrong, right? And so if we're able to train our brains to think and to understand and be okay with being wrong, the quicker we're able to accept those red days. I know for me, when I have a red day that is much larger than what I'm comfortable with, I have a huge urge to want to continue trading to at least get some of that back. And raise your hand if you've done that. If you've had a massive, everybody in this room, right?
Sure.
Everybody in this room has had a red day where they just couldn't stomach it and they want to continue trading and get it all back. The issue there is that if it does work for you, now you're programming your brain to think this works, and you're gonna do that shit over and over and over again until it just stops working, right? So again, the quicker you can train your brain to be okay and accepting those red days, the quicker you're gonna stop blowing those accounts on those red days and be okay with it and continue the rest of your week.
Great point, but you didn't tell us a story about your loss. So I'll go to Isaac. I'll spare you, even though you didn't answer. Isaac, give us a story. Tell us how much money you lost on a bad day and how you got over it. Tell us you went to the gun range and the strip club and the cigar all on the same day. You hit everything in one. Come on, give us the real truth.
So I only do things like that, right? Like usually I did this a lot in the beginning. Anytime I had a really bad losing day, I would treat myself to an extravagant lunch. So I'd go to like Capitol Grill, $90 for like a burger and fries and a glass of wine. And that allowed me to reset to come back the following day, right? You get on this tangent, you go like throw weights around like Tanner, you go to the gun range and blow off some 300 blackout. And, I think that actually compounds the problem. You have to understand that losers are part of the process. Losing trades, losing days, losing weeks. We talked about this on your podcast. And contrary to what you say, I actually love being wrong. I love being right more. But I love being wrong because when I'm wrong, that means that there's an opportunity for me to learn, firstly, and an opportunity for me to improve, right? And that's what we should always be striving for in our personal lives and our professional lives and our trading. Always looking for ways that we can be 1% better because you compound that over time. Like that meme, it's like 10x that shit and then I'm kicking your butt, It's just like, and you're just constantly looking for like little tweaks. And it's really those little differences, I think that like, this much effort and change gives you this much greater results compared to everybody else, like the average person. So, just a couple weeks ago, I was on a little bit of a losing streak.
Here we go.
A little bit of a losing streak. It was like 3 or 4 days in a row. And, turned around and ended up having like pretty much my 5th biggest trading day ever, which was Friday of last week. And the second half of the month, some of you guys who follow me, so I put on Instagram last night, It was almost 40 grand in the last 15 days basically of the month. So it's like you got to let time take its course, right, and play out, and things ultimately smoothen out in the long run.
You segued into my next question.
Yeah.
So I'll go to Ev, and then we'll go back down the list. Great point, Isaac. Great point, Joey. How much time do you give after a big loss? Let's just start with max daily loss day. Does everyone in here have a max personal daily loss? It's okay if you don't. You're just full port every day. Who has a max daily loss they will not allow themselves to lose? Okay, cool. Ev, you hit max daily loss. How much time do you give yourself off the desk? Like, actually talk us through a day. You go to the gym, see your girl. Like, what are you doing?
Do until what? My next trading session?
Until you pick up the next trade. Could be the next day, could be the next week. I'm asking you to tell us, how much time do you need to process the loss? How do you figure out how much time you need to sit with that thing?
Yeah, so everyone's going to be different. That you have to really be honest with yourself. Of the next day's trading session, let's say, you have to be honest with yourself the best you can to ask, did I accept yesterday's loss, or am I still having it overhang and lead into today's trading, right? Because so many times, oh yeah, I put that loss behind me, it's fine, I'm ready to trade today. But they're really not. They're just still angry that they lost so much yesterday, so it's another max daily loss day. So you have to be aware of your own, how much are you really putting it behind you. But for me, I would say a day by now. It used to be, if I went on tilt one day, it's probably going to happen the next day and the next day. But through time, you try to limit that to 2 days, then the 1 day. And I would say, first off, for like a big loss, before max daily losses even hit, I would not just jump right back into the next trade. I'd say give myself at least an hour, get off the desk and reset. Don't even look at what's happening. Of if it came back in my direction and I would have been right, that's very dangerous. So I think give yourself a time hour, and then for the max daily loss, once that's hit, you're done for the day. Journal it tonight once you're now not emotional about why you got in, why you got out, what happened, what could I have done better. Put it behind you, and then come back later when you are level-headed again to talk about the trade. And then hopefully by the morning, you're ready to unbiasedly trade again. And then if you're not, say, you know what, I am still pretty aggravated because I was so close to a payout and I had a max daily loss day. I feel myself wanting to trade already. It's pre-market and I just want to trade. All right, well then you probably didn't put it behind you. Give yourself maybe another day off or an hour. Pause the account, something, because you didn't put it behind you.
Something. Go ahead, Isaac.
Yeah, so you have to have rules for when things don't go your way. And it's a little tricky, like if you don't have a clear and defined strategy or process or systems, it's a little bit harder to do this. But I have set rules. If I have 2 losers back to back, I'm done for the day. Whether that resulted in me hitting my personal daily loss limit or not, 2 in a row, that means one of 2 things. Either A, the current market environment is not optimal for my strategy and system, or B, my head's not in the right place. And of course, C is it could be a combination of the 2 things. So 2 losers back to back, I walk away, right? Usually that third trade is a scratch, meaning I might have had a winner, then a loser, right? We're gonna leave this to best out of 3 or the other way around. Loser, then winner, right? Best out of 3. And that usually always happens before my daily loss limit, because the way that I have things structured is that if I take 2 losers back to back, that should put me $500 less my personal stop daily loss limit. And you guys have to have those parameters and those restrictions and those training wheels and those guardrails all built into your terminal or your platform, because if you leave it up to you, you're gonna fuck up every time, right? The less that you can leave up to you and your decision making, and you make it less mechanical and more automated, the less problems you're gonna have in the long run. So like daily loss limit, that's an easy one, right? You hit it, you're locked out for the day, you come back the next day. But I put myself on a 1-week timeout before. I had the risk team of the prop firm that I've traded with for almost a decade now. They put me on a 2-week timeout. They said, we're restricting your account for 2 weeks, take a breather, come back. I came back, I crushed, right? So, if you're not working with a risk desk, especially if you're not in the live environment, you might not necessarily get that hand holding or that micromanagement, but just that other thing to kind of like, get you back on course. Trading is a lonely business. That's where, some of these communities really come into play, because they can help keep you accountable and help you become more consistent, more disciplined, and so on and so forth. But it's okay to walk away from trading. Like I said, they put me on a 2-week timeout, 10 trading days. And then I can come back and kind of start where I left off. And it was in a better place for sure.
Go ahead, Tanner. I would just add to that real fast. Hot or not, everybody. It's cool to walk away when you're hot. It's cool to walk away when you're not. I got a lot of guys that run hot and burn out.
New Year's resolution for me, 2023, was that if I had 4 trading days winning in a row, so like Monday, Tuesday, Wednesday, Thursday, I take Friday off.
I love that. I
right?
just don't. I
Four-day
know
work
so
week.
many people. I'm sure you guys have them too. Like they do really well, and you've seen it before, like through the coaching, and you're like, oh, dude, I know you're hot.
Right
You're
around
not
the
going to
corner.
stay that way though, buddy. Nobody does. Go ahead.
So on the concept of limits and max loss, story time. My worst day ever. It was my 3rd year of trading. I had like just barely became profitable. Was all stoked. And I remember it was February and I was up over $14,000 trading options that month. And it was like 4 days away from the end of the month. And I was like, oh, dude, this is epic. I'm crushing it. Friday comes along and I just decided to trade some 0 DTE SPX. And if any of you know, I've been down that rabbit hole. It's a rabbit hole. So I
That you may not come out of.
Yeah, that you may not come out of. So up 14 grand in the month. It was also going to be my first 5-figure month of my career. And I lost 700. Then I lost 1,400. And then I was down 2,500. And then I was down 3,700. And then I ended the day down $5,000. Not of sim money, of real cash. And that was my worst day ever. And that's when I was like, holy shit, how did I just let that happen? How did I let that happen? It's because I didn't have guardrails. I think I got away one too many times that month as well. I probably had a couple days where I was maybe down like 1,100, then I clawed back and I was fine. But it's like having that hard limit actually really does save you. It's the whole concept of like, you know, when you build those bad habits and tell yourself it's okay, it's just a matter of time before that day comes around the corner and just kicks you in the face. So I remember that happened. And then, you know, of course, I self-sabotaged my 5-figure month and I ended the month. I think the day after that too, I lost another 2 grand. So I lost like 7K in 2 days. And I was like, oh my God. And that really, really hurt. And it took me like a whole week of, luckily I'm pretty good about like every single day is a new day. I will say after a big loss, for sure it's on my mind. Like definitely I'm like, oh shit, you know, I did this yesterday or whatever it is. Especially if you're close to a prop firm payout. I'm sure you guys have been there where you're like really close. And then you
That's
have like,
the worst, bro.
You have a red day and then the next day is red. And then you start going into panic mode. And you're like, oh shit, dude, I was real close. I don't want to fuck this up. And so, you know, coming into the session and asking yourself like, today's a fresh day, right? Like what's going to happen today? Pull it back, slow it down. Because once you kind of create that rift in your losing and like put the hard fork in it, and then maybe your next day, you know, you make $200, $300. The day after, same thing, $300, $400. You start to kind of build back that momentum on the other side, and you remember, like, okay, yeah, this is what I need to do. So it's so unique and different for everyone. But last thing I'll add on this is, I forget the name of the trade. I think it's Tom Catfield.
Yeah.
Okay, so Tom Catfield, really great trader, big on Twitter.
Well, he used to be. He's gone now.
He's gone now. Yeah. So when he used to post a bunch, he told the story about how he took this massive loss.
500 grand.
Yes.
In Apple.
Yes.
And then he went to Colorado.
Trip.
Yeah, he went to
Yes.
Colorado. Some of you know this story. And then he came back and he started trading Apple small. Still couldn't get his feet under him. And then went and took another break and went to Colorado by himself for like a month without his wife and kids and just zenned out in the woods for a little bit until he could find himself.
Yeah. And the
Chuck's laughing. Chuck's like, dude, I want to do that, bro. Let's fucking go.
And the whole point of that, you know, is like it takes everyone a different amount of time. But the cool thing about him is he was being really objective and honest with himself, saying like, I'm just not ready to get back to it this second. It's not like he's quitting. He's just very aware of like how he is normally performing usually as a trader versus like where he is now. And it's that concept of self-regulation.
Exactly.
Because all of us are going to go through dry spells. We're all going to go through periods where you're in drawdown. Some of the best traders I know, like literally they're multimillionaire traders and they go into these periods where they lose for 7 to 8 months in a row. And like you think, oh, that can't happen. You're 10 years in. That's impossible. Like, no, it can.
And it actually happens with more money.
Yes, it happens a lot more.
If you do your job right, you will take bigger losses the longer you trade. With me on that? Right. Okay. How many of you think Tanner had to lose that money in the options trading to become the version he is now? How many of you have taken a few burns on the stove and feel like you're building the callus? Yeah. You probably need more.
I know a guy.
You're talking to people who coach trade. We talk to traders more than we talk to our women. I'm serious. And my son sometimes. So like all we do is talk with traders. I'm telling you, even when you think you've kind of got the callus built and you're like, I think I know how to control my emotions, guarantee you that week or that day, the market's going to self-check you a little bit. So I think the big thing from these losses, and then Isaac, you go, is just their tuition. You have to pay. Pay to play. Who here has gone to college? Okay, who's doing what their degree is for? Oh, see, that's the fucking thing right there, not two hands. You know what I'm saying? So tuition is mandatory, but it doesn't lead to a designated outcome. Follow me? Just like college. Got a political science degree, you still end up working in IT. Feel me? So now as a trader, you come to the market and you pay tuition. You're not going to go to class, you're going to take losses. But it comes to the perspective that we're trying to share with you here of how to be a better loser, learn from those losses, and take less of them before you become profitable. The whole goal of everything I do is to make it so you guys make money before or in a shorter amount of time than it took me to make money. You feel me? Cool. Good, Isaac. Got it? All right, yeah, it's the tuition. It's the tuition. You got no student loans. You got none of that. It's real cash. Okay. Yes, please. Especially this guy. Go ahead. Great question.
Yep. So I'm big on receiving coaching, right? Like I'm a good coach, but I'm very coachable. And I've worked with a lot of business coaches, performance coaches, personal counselors, relationship counselors, so on and so forth. It's a consistency thing. I tell people all the time, I'm like, how can you expect consistency as far as your results and your performance if you're not consistent in your behaviors and your actions?
Mic drop.
You can't expect consistency in whatever you're involved in if you're not consistent yourself, right? So it's just a discipline thing, right? Like it's not a belief, it's a command, right? And it's like you have to respect yourself and the business enough to accept your rules. Like just accept, all right, I was wrong. This day didn't work out for me. If God blesses me and I wake up tomorrow to have another crack at this, I'll do it again. That's it. And you learn, unfortunately, like you said, right? Like my whole design with like my Discord, my community, my coaching is like, learn from the mistakes that I made, learn from my experiences, so you don't necessarily have to go through them yourself. However, most people learn through friction and an ass beating, right? So, everyone has to go through their own journey and their own process. However, when there's shortcuts, right, take them.
Yeah.
They're there. Somebody else paid tuition, that means you can get in at a discount, right? So,
dude, how many mic drops in one little rant right there, bro? Jesus Christ, save some for the rest of us. Go ahead, you got something, Joey?
He just covered it.
Yeah, that was good. The thought, we're getting a little feedback. The thought about performance, consistency, routine, as you mentioned it there. You made me think of this thing I used to say all the time. I want to be consistently persistent. Nobody says that. They kind of mean the same thing, but they also don't. Like I'm going to be persistence to me is like annoying about my goals. I'm going to be relentless. Persistence is like I'm not giving up until you kill me. So I want to take that to the next level and be consistently persistent. So that's what you made me think of there. When we think about consistency in general, you spoke about it a lot. Yeah, what do you got?
I was going to say, in the learning curve, you need to be consistently resilient.
That's good too. Yeah. With just that word, consistency, it's such a buzzword in trading. Let's talk about routines. Let's talk about like structure that leads to good performance. I talked about Kobe Bryant in the beginning. We all know Kobe was in the gym every game, 4 hours before. Other people are still waking up from their nap, right? That drive, that ability to commit and respect yourself. I love that you said it like that. Like respect yourself enough, Lawrence, to just be like, I don't do that anymore. I don't identify with that person. But that takes the shift. And you said that like the routines and the things that you do day to day all feed into that performance. So let's go around and just talk a little bit about day to day things that you do to make yourself feel that you should have that level of respect for yourself and not waver from it, not disrespect yourself. You want to go first? Since you spoke about it, we all know you're going to say deadlifting 800 pounds or whatever.
Yeah, that's the
720.
720, sorry.
So the day-to-day routine of like things you do and the idea of like what gives me energy, right? This is actually a concept I've been like working with and thinking about a lot because when we take losses especially, or when you don't follow your plan or when you screw up, think about how shitty you feel the rest of your day. Like I know we're all trying to work on it and like not feel like that, but like it drains you, right? You don't have energy for the rest of your day. So once you start doing what you're supposed to do, and you have to practice this on a loss day, especially a max loss day, you hit your max loss, you're frustrated, but you accept it and you move on. And then you're like, oh, my whole day isn't ruined now. Like I have energy still. And so I've been thinking about this concept of like, what gives me energy, what makes me feel good, right? Obviously, at this point in my health fanaticness, like I know eating whole foods like really gives me energy, makes me feel good. I know getting good sleep makes me feel good.
Taking your steroids.
I know taking steroids makes you feel good. I know that like doing all these things makes me perform better and ultimately like thrive. So like find something that you can work on individually that maybe you're not doing. And of course, like the cool part about trading as well is it's also a concept of personal development. Whether you realize it or not, like it's literally a pursuit of trying to become a better version of yourself. And that's another cool part of like being an entrepreneur is like we want to get better, right? Like we're not fucking average. None of you are average. We're doing hard shit, okay? So yeah, come on, give your all.
That's what I'm saying. Like, come on, you got to feel that. That's why you're here.
We're not average. So we're trying to do something really, really tough and find areas in your life where you're lacking and you're like, you know what, I could really work on that. And I love the concept of personal development because it's different buckets. So everyone neglects certain buckets in their life and you all know it, right? And everyone's is different. Some people say it might be their eating, it might be their sleep, it might be their partying, it might be their relationships, right? There's so many things where you're like, oh, I'm just not good at that. But it's like, but you can work on it and get better and you're neglecting it. So how can you find something that's going to like flip the script, give you energy and make you feel better? And so pre-market routine-wise for me, like I was kind of talking about it earlier, but when I moved to my new apartment, I didn't really have a good like pre-market routine going on. I kind of noticed that, and I was like, oh, I'm kind of like all over the place. So ChatGPT is a great tool if you don't already know. I literally plugged in like, okay, here's when I trade, what I like to trade, how I want to do it. Here's some rules behind it. Build me a good pre-market prep routine to kind of get ready for the open. And it literally helped me step by step, being like, okay, like first thing, like I have it all detailed. And like first thing I do every single day is I wake up and I chug a glass of water. I know you're just like, okay, well, that's whatever. But like the first thing I do kind of wakes me up. And then I literally leave my apartment instantly and go get coffee. I have to walk and just like get my body moving a little bit. It helps me wake up. It helps me feel good. It gives me energy. Then get to my desk by a certain time, do my pre-market prep, go through everything, go through my scenarios, build like me feeling prepared, gives me energy. Execute, I win or lose, I respect my max loss, doesn't matter, gives me energy. Go on with what do I have to do the rest of the day? You know, I'm still an entrepreneur. I gotta work on my business, make content, do that stuff, gives me energy. Go lift, gives me energy. So it's like, ask yourself, where areas in your life that you can add to that will give you energy and what are you neglecting, right? You're all neglecting something.
Well said. Pass it to Joey. Let's keep going. Who here has thought about this though before? Who here is self-analyzing themselves to say like, what gives me energy? If you have not had that thought, don't raise your hand. I'm genuinely curious. Okay, cool. It's a really good self-awareness question. What are you doing, Joey?
Yeah, there's a lot of points here. Now, one thing I want to build on is I'm a big believer of I'm going to take care of myself for you, right? So as an example, for all the people that are married, say, you know, if you're a husband, you can't be a good husband if you don't take care of yourself. You can't be a good father if you don't take care of yourself, because all that bleeds into your happiness, right? And that will bleed into your relationships. The same thing for being a trader. If you don't take care of yourself mentally, you're not going to be where you need to be a good trader, right? All of that bleeds into one. And so one thing that I'm really big on is that trading isn't my entire life. Right? I have other hobbies. I have other things that I love and I enjoy doing. And I find things that I'm good at. If I have a really big red day that just really turns my stomach over, if I hit a maximum loss day, I want to go find things that I know I'm good at and I enjoy because it's going to take my mind off of that big red day. And I'm not going to come into the next day with it on my mind. Right? I'm completely forgetting about it and focusing on the things that I'm good at and that make me happy in order to make myself a better trader.
Go ahead, Ev. You can go next. I think it's a great point, Joey, because it's like, why would I want no disrespect to my wife or my son, but it's like I come off the max loss day. It's 4 o'clock. She wants me downstairs at 4:30. You want me to just throw that away? Like it's hard. Well, if I go take care of myself, I go hit the sauna for an hour, get in the cold plunge. Now I can come out of it. I literally feel like a different person. I feel like I've detached from the day and I can be my normal self. But we all get lost in the sauce. So you got to find a way to, not just what gives you energy, in a way like Joey said, what pulls you out and reminds you there's a bigger world out there than just the charts. Go ahead, Ev.
Yeah, I mean, I would totally agree with that. In the beginning of my trading, and for many everyone else, it's like your identity is your trading. Like someone would ask, "How you doing today?" And you're like, "Well, I'm in a trade. I'll let you know after. If I win, I'll be good.
Who's been there? Like the trade impacts your mood. It's crazy. We're laughing about it, but it is all of us.
Yeah, that you're letting the trading obviously dictate your life, but obviously, like he was saying, you're not your trading results even. That especially in the early going, you need to have other things to track your small wins. So it could be I worked out today, I ate good today. I didn't win on the trading desk, but I mean 2 weeks ago I was over trading like crazy. I said I would stop. So yes, I haven't gotten a payout yet, but I haven't over traded in like 2 weeks. So like I'm still progressing. I'm still not seeing the results I want, but I am in a better position than I was 2 weeks ago. And so from 2 weeks from now, I hope to duplicate that again. But if you're just consumed by the P&L, even when it's green, it's unhealthy to just be, I made $2,000, so it was a good day. Well, how did you make that $2,000? Because if it was poor trading, then tomorrow's probably going to be poor trading again, but different results. So I think just tracking smaller wins off the desk, being a good husband, being a good father, but even just tracking things that you said you would do and then holding yourself to it, you could feel like, well, I've been doing all those disciplined things. I feel like if I get to the desk tomorrow, I should be able to be disciplined there because I've been keeping my word to my other things. But if you're not keeping your word on other things, then it's going to be very tough to do that in your own trading.
How you do one thing is how you do everything. You got anything, Isaac, on that?
No, just harping back on again, no consistency if you're inconsistent, right? I'm so routine. If you guys saw my calendar or my schedule on my phone, most of you would probably throw up. It's loaded. It's usually the same thing. Even my process and like pre-market prep and like choosing my levels and preparing for setups, it's exactly the same every single day. And for those of you guys who follow me on Instagram, you see my stories. It's like obvious. Isaac wakes up early, lets the dog out, makes a coffee, right? Does his pre-market prep, goes to meetings, have phone calls, smokes cigars, goes to the gym. Like it's just very, very routine. I'm happy with my life, right? That's why I do it day in and day out. And there's still things that I'm working for, but I understand this is the way that my day needs to look today in order for it to look the way that I want it to tomorrow or next year or 10 years from now. And just like understanding that good trading looks boring. Right. So if you can find a way to make it fun, partners are tuning into something, you know, like PW, DT, right? Some people absolutely hate watching their streams and whatnot because they're just very loud or whatnot. But for some people, that's what helps. Again, it's a lonely business. And, you know, you want to get excited with a big winner, right? And feel the emotions of like, you know, having a loser, right? And being angry or sad or mad. But like, again, good trading is repetitive and it's very boring and that's perfectly fine. Not only perfectly fine, like I think that's the way it should be. If you're getting really excited with your trades, then you probably got to like dial it back a little bit and just kind of,
like you said, we all want that. We want that excitement, but that's not going to feed long-term success. If you haven't had a big winner yet, we want you to experience that. But I really don't want you to experience too many highs because they'll lead to lows. You do want to be kind of in the middle of that bell curve. Go ahead, Anthony.
Well, it's funny that you ask.
So what Anthony said, if you didn't hear, is how do you handle winning days? What do you do? When do you stop? What do you do to process that? It's a great question. You want to go, Isaac?
Yeah, so a few things I'll touch on, right? How many of you guys currently work a full-time salary or hourly job with a schedule, right? Okay, and obviously I'm not going to ask what you guys make, right? But some people will go to work for 8 to 9 hours, plus the commute, plus getting ready, right? Plus the break. It's anywhere from like 10 to 13 hours, right? If you're a nurse, maybe you got like a 16-hour day or something, firefighter, and you'll do that for like $150 for the day when you look at like your hourly rate or your salary. And you'll be up on a trade, you know, $800 in 3 minutes and not lock that shit down and not walk away. Like you'll slave at a job that you probably hate for a fraction of what you just made in minutes. And then you want to keep going. Like the idea of like getting into trading for me was to be able to buy more of my time, right? Because I was working jobs, trading my time for some money. Now I want to trade so that I can get more time back. So, you know, one of the things for me, who was it that asked again? Over here, right?
Anthony, yeah.
I'm usually a one and done kind of guy. I say it all the time, OAD in my Discord, one and done, right? If it's a winner, right? 2 losers back to back and then sometimes 3. And you'll see that with my trade reports later. Right, if I get one winner, especially if I get it fast, if I get like 7.5 to 15 points in like less than 10 minutes, I'm walking the hell away. That's it, I'm done. I know I got other shit to do, so it almost gives me a break between shutting down the trading terminal and then getting to whatever my next meeting or call or appointment or Zoom or whatnot. But Top 1 Futures, powered by Project X, there's a personal daily profit target. And I coach everybody in my Discord to have it set to a specific number that's in line with consistency rules on 150K. That way, if you cross that threshold and then peel back, it automatically liquidates, automatically blocks you for the day. Done deal. Again, automate these things, because if you leave it up to you, you're going to fuck up almost every single time.
Facts.
Automate it, have it coded in your terminal, have it coded in your indicators. That way you can't even make the choice. It chooses for you. $3,025. You exceeded it. You're at 3,600. It comes back to 3,025. Liquidate, block. Done. Walk away.
Let's stay on the winners. That's a really good point, because I was going to ask you guys, do you treat trading like a business or trading like a sport? Anthony, when you're playing a game, hockey, do you stop scoring? No, you just keep playing until the bell's in. In this sense, I agree with Isaac. I like treating it more like a business than a sport. You know, a lot of people will say, this was a saying going around for a little while, if the game is still on, keep shooting. That's not protecting gains. The market can change. So just because the markets are open doesn't mean it's time to participate. So we're going to talk in a second. Go sport sometimes, go business sometimes. Just like trading is an art and a science, it's the same thing. It's a business and a sport. So I think in this sense, you keep shooting. Who shoots 100% in anything, in any sport ever? Is there any statistic in sports about 100% in any, like, nothing? You're a Hall of Fame baseball player if you hit 3 out of 10.
3.5.
3.5 out of 10.
40%.
So the more you shoot, I look at it as like a perspective of it's opening me up to more risk. You get me? So it's like I want to be defensive even in those winning positions. Yeah. It's well said.
Yeah, set windows of time though, right? Like you were saying, like the sports thing, right? You have to treat trading like a business because it is. If you're not treating it like a business, you'll never find success in it.
True.
Okay? Because as a sport, there's tons of professional athletes that you'll never know their name. And they had an entire career, sometimes that lasts years, right? Because it's sport. However, you know, hockey, basketball, whatever, they keep playing until when?
End of the game.
When is the end of the game? When the clock runs out, right? Somebody sets that time. You have to have time limits. Anybody that's been in my Discord or is currently in my Discord, they know. What time am I usually done trading? Usually 12 o'clock. Done deal. So I'm so strict on that if I see a setup developing at like 11:40, I won't even take it.
Yeah.
Because I'm like, then there's a likelihood that I'm going to drag this out into 12, 12:30, 1 o'clock. There's a number coming out, lunchtime liquidation. You're at risk for tweets. News hitting the wire, and then it's just, and it's an ugly day. Now it's 3 o'clock. You're making up from the loss.
Oh, you're stressed, bro.
And it gets crazy.
Stress, yeah.
You gotta have rules. For me, the latest I'll be in a trade. That means I was in a trade that I kept nursing along, win or lose. 1 p.m. That's maximum cutoff. But for me, 12 o'clock, I walk away whether I've taken no trades or not. And again, if I've taken none, and one really juicy one starting to set up, but it's like 11:35, 11:40, I'll just forego it sometimes and say I'll come back tomorrow.
Go ahead, Joey.
To the point of, you know, when to walk away, especially for those that have a job outside of trading. When you make $1,000 in a day, or say $1,500, $500, whatever it is, right? Ask yourself, you know, what could I do with this extra money? Could I pay off debt? Could I take my family on a vacation? Could I do whatever, right? And ask yourself, do you really want to risk giving back that amount of money that you just made, knowing that you could extra you could do with that money, right? And so that's really kind of helps fight that greed aspect of trading, to where it's like, I made X amount, this is what I could do with it, so I'm going to keep it.
Well said. I'll add 2 things to that. The bandwidth that we have as traders is very different. The Black Shirt Club guys, we've talked about this. When you started trading, Anthony, or anybody in here, your ability to sit there and trade all day is very small. Your ability to make good decisions is a very small window. Emotions come into play, markets are moving, you're getting tossed around in a lot of different ways. Now, trading 10 years almost every single day, my bandwidth is way different. I ask that, Evan knows, I'll sit there all day sometimes and still not take a trade, even though I'm at my desk all day. Old Austin could never do that. If I spent that many hours at the desk, I would eventually take something. You follow me? So who here is maybe year 1 to year 3? Is anyone fresher than year 1? Nice. In those first 3 years, first 5 years, your bandwidth is probably 2 to 3 hours a day of live trading. And then probably an hour to an hour and a half of review. That's what I would aim for. Year 5, 6, 7, you probably can start opening yourself up if you want to trade more. That doesn't mean you're going to make more money. Would you guys agree with those? The bandwidth, the time frames?
Yeah, and I would just say it goes back to what Isaac was saying. Everyone almost forgets why they got into trading. Many of you, it's probably to escape your 9 to 5. So same thing like he was saying, that I don't want to trade all day. Even though I could potentially make more money, bringing it back to the sports analogy of like trading is the only sport where the opponent isn't also scoring unless you take a trade. So if you're up 1-0, you don't have to keep on scoring to win the game.
That's a good point.
If you stop trading, the other team's not going to score. The market's not going to take your point back. So if you just call it there, you guarantee a green day.
One and done. Like when that's what we do. If we hit a good winner before 10 a.m., it's hard to get me to take another trade, to be honest, Anthony. Even if I'm sitting there at the desk, it is hard for me at this point to take another trade when I'm up, which is a bad thing in some ways because I could make more money. But I prioritize the idea that we talked about like earlier with you, Nick, is like stack. Yeah, today I made 600, I could have made 800. I made 1,000 today, I could have made 1,200. Well, that extra little bit is not worth the risk of continuing to trade versus the value that I get of the stacking of the green days. An $80 day is better than a red day, yes? There's a hierarchy, maybe you've heard me talk about it, right? Big green days, we all want that. Small green days, very important, right underneath that. Break-even days, still very important. And then you have small red and big red. If we just avoid the big red days, everything else will work itself out. You'll have big green days without trying that hard. The market will work for you, just like you'll have small green days. But if you prioritize that hierarchy and avoid that bottom of big red, you're going to be good.
Don't worry about profit.
Ooh.
Just worry about having winning trades. A winning trade could technically be break even. That's a shitty trade, but it's better than a losing trade, right? Don't focus on profitability. Don't focus on dollars, right? Focus on the mechanics, the execution, the risk management. The dollars follow you.
That's a good answer.
Like you'll find profitability with that risk management. Quarterly.
I'd even say yearly.
Quarterly.
Yeah, because like markets change.
The year at the end of the day, it's the end of the year that matters.
That's all that matters,
right?
yeah.
But you want to be throwing up, and you're gonna have, hopefully not, but you're going to have losing quarters.
Yeah.
Right. Like my worst month ever, I think I lost like $28,000. But my best month ever, I made like $72,000. Right. It's just like you got to have a large enough sample size. For me, it's like you want to just make sure that you're always putting up profitable quarters. Right, a losing month is fine. Losing weeks, they're definitely going to happen. Losing streaks are going to happen. But on a quarterly basis, especially if you have 2 losing quarters in a row, then you got to reassess
Something's
your strategy.
wrong. Yeah, that should not
the
be.
strategy.
6 months of losing straight, that's something wrong. Yeah. I would just say like it is yearly, and I agree with Isaac. It's quarterly, but it's day to day. Keep that hierarchy in frame. If you're taking big losses every day, dude, something's wrong. That's not what trading is supposed to look like. So I think it's like keeping them. Anybody in here know Gary Vee? Any Gary Vee fans from back in the day? Gary used to say, macro patience, micro speed. I love that for trading. Day to day, I am locked in. I'm trying to follow the rules, the discipline, the structure that we're talking about. But if I have a red day here or there, kind of like I was saying to Anthony, I don't let it knock me off my macro patience, my macro goal, my big goal for the year, 5 years, 10 years. Anybody want to add on that?
I would just say one thing on most of you are obviously following one of us here, that you're not trading alone, but there is the say that if you're trading completely by yourself, that maybe your routine and your plan isn't good and like it's not going to come out of drawdown however you want to approach it, that having another set of eyes on your trading could help make some tweaks faster.
Facts.
Because there is no saying, well, this is my plan. If I just give it long enough, it should work itself out.
No.
There's no saying that. So if you
No,
get
it
another
could
set of
suck.
eyes on your trades and then it could be like, yeah, you're doing everything right. I think it's healthy. Just give it more time. It's been now 3 months, but you're getting better each time. Then the plan is probably solid. You're just working your way through it. But there is such thing as, well, this plan makes no sense. No matter how long you trade this, it's not going to make you money most likely. So that's why you got to get around.
That's a great point.
As many of you are, you're doing the right thing. Asking others for feedback unbiasedly because.
Well, think about it like Tanner. How many powerlifting coaches have you gone through?
I've actually only had 2.
Still, though, you've had 2.
Yeah.
My thought here is, if you, let's
He
say
ate
this
the
way.
last one.
Huh?
No,
He ate
3.
the
He
last
killed the last guy.
3.
Who here has asked a trader, not their wife or their boyfriend or something, who has asked a trader for feedback on their trades? Yeah. So I think you have to look at this as a perspective of like, I don't know it all. I need the feedback. If Evan looks at my trades and I lost and I go, I think I took a good trade, and he looks at it because he knows how I trade and he says that's a good trade, I can actually leave and not have that weight of the loss on me. I feel good about it. Well, then what if he tells me, dude, how did you not see this? The Delta was doing this, that? You're right. I need to pay more attention to that. I get to make a note of that. I get to bring my awareness to that. Because I'm always a believer in like fixing trading issues. Step 1, self-awareness. Talk about it. Tell everybody about it. Put it on your t-shirt. Put it on your mirror. See it. Say it every day. Self-awareness is step 1 to solving any problem. So self-awareness only gets you so far. You need that outside feedback from people in order to grow. Like Tanner said, the outside people telling me I talk over people on my podcast. I don't have to listen to them though. You know what I mean? What were you going to say?
this is where the data comes in. This is like where all the back end work, documenting stuff, doing all that work. Like this is where it actually provides a lot of value, because if you are in a losing streak or you are struggling, it's going to be there in your data. It's going to be crystal clear, especially like in your journals, in your reviews. Like you're going to be doing the same thing over and over. I guarantee it's one or two things. And this is the crazy part of trading, where it's actually usually just one or two mistakes that we're doing that we need to really, really work hard on in order to actually flip the script and go the other direction. And too many people try to, like, I've dealt with some people with coaching where they're like, okay, I'm doing this. Okay, what next? What next? What next? And I'm like, let's focus on this one thing for literally the next 3 weeks. You're still not dialing this one thing in. And it's like, once you start focusing on one thing that you can identify with your trading that is screwing you up and holding you back, and actually work really, really hard at that one thing to fix it, then all of a sudden you're like, oh shit, I'm flipping the script. I'm starting to go green now. Like, I am treating it like a business. Things are turning around. So that's why I constantly preach that. Like, it's like, do the damn work. I know it's tedious and boring, but like, do it. It's actually going to help you.
And there's so many ties to weightlifting. You know what I mean? Like, you go to the gym. Who here has gone to the gym and like gone home and looked in the mirror and been like, yo, I'm looking good. And you're fucking lying to yourself because you don't make the change in a day. But you were like, yo, I do look kind of good. I'm going to go back tomorrow. You don't see those improvements. You don't get to a 700-pound deadlift in a day. You see what I'm saying? So like when you talk about committing to something great, has anyone in here ever lifted that much weight? It's a very hard number to get to.
If you have, get out.
Yeah. But it takes a lot of time. How many years would it say did it take you to build to that level of being a power lifter?
Oh, over a decade.
Exactly. So trading is no different. The problem with this business is just you lose money along the way. Like you go be a doctor, you can suck, and you still graduate, and it says doctor next to your name. You come to trading, you say you're a trader, the only thing next to your name, it's blank. It's just losses. That's your tuition. That's what you're going to have to stand on. You know what I'm saying? Anything you want to add there, boys? I want tactics. Well, first, before we do tactics, questions for the guys about performance, mindset. Yeah.
Just reading confirmation. Like, I'm like, is this doing what I needed to do? And that's something that just comes with experience. So you can't really replace that, unfortunately. It just is screen time and experience. That is the biggest teacher. I've been looking at charts every single day for over 5 years. So when the market is doing what I needed to do, I go, oh yeah, this looks good. Okay, cool. This is doing what it should. This is doing what it should. And I'm like reinforcing and walking myself through that versus like, oh, that's not good. Like, you see like a sweep or reversal. You're like, oh, that's not good. That's not good. So walking myself through the trade, and that's why I will take some haircuts near the bottom right there, because sometimes it is a little tough. But if I just have a decent enough stop where I'm like, okay, it shouldn't clear this, but if it does and then instantly reclaims right away again, I'm like, okay, I was just a little too early. Let me get back in, and then now let me confirm that it's doing what I need to do.
Good question. Yes.
I love this.
Look at Tanner's smile, bro. Go ahead, Tanner.
So I love this because I just love when I can talk about powerlifting. So in the sport of powerlifting, we go through I go through a week every like 4 to 5 weeks called a deload week. And it's scheduled in no matter what. It's because usually what you do is you build up all this fatigue, you're tired as fuck, and then you need a week to reduce it to kind of get back to baseline. And now you have this like new level of strength that you've adapted to. You make strength adaptations. That's how you adapt. But without doing a deload, you just run all this fatigue into the wall, and then you feel like shit. And so this is a really, really good question, because I remember I asked a trading psychologist about this when I went to Traders for a Cause, and I was like, he like coached a bunch of like Olympic athletes and stuff. Then he started coaching traders. And I was like, what are your thoughts on a deload week for trading? And he's like, you know what? This is actually a really good question, because not enough people take a week off when they need to, because they just keep going and going and going. He goes, what's like a notorious week that always is kind of low volume or tough that you're like, just know you shouldn't trade?
4th of July week.
First
Steer
week
clear.
of the month.
Christmas.
Christmas.
So the week between Christmas and New Year's, it's low volume. Markets are closed a bunch of the days. It is the best week to take off. And I promise you, not being red and going to Christmas dinner feels really good. It feels really good.
Right, because then your uncle that's like, hey, how's that trading thing going, bro?
How's that little trading thing going on, buddy?
Right.
Yeah. So literally, I did this last year.
Stick to the deadlifts, bro.
Yeah. I scheduled a whole week off during then. Didn't matter my performance. I think I was doing fine. Like, it wasn't even a bad month or anything. And it felt really good to take that. So it's like, I think that is something most of us need to schedule in more. I think what's really hard is in the beginning years, you're so excited to trade. You're like,
Especially because we're all type A for the most part.
Exactly.
Like, what does a type A person do when you tell them to stop? Bang.
Exactly. Go, 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 go,
Fuck
go.
you. Get the fuck out of my way. Right.
So scheduling this time off actually I think is really, really beneficial. So just look at like either give yourself some grace to be like, you know what, I'm gonna like, I love what Isaac said. He's like, oh, if I have 4 winning days in a row, I'm gonna give myself Friday off. Fuck yeah.
Implement it. I can't. I'm responsible for a Discord now. Trust me.
Dude,
try that.
Yes.
If you win Monday through Thursday,
Bye.
long weekend, take Friday off. How many of you guys are here on PTO today right now from your job? Okay, so not too. I know somebody, I'm not gonna call them out. I know somebody that had to bank a day of PTO on credit. They got PTO debt now to be here at this event,
Respect.
right? You have to take PTO days in your trading business too. By nature of the prop firm that I used to trade with, live traders were actually not allowed to trade the week of Thanksgiving, the week of and the week after Christmas or New Year's, and 4th of July. So there was only 48 trading weeks, less bank holidays, right? But 48 trading weeks instead of 52. Because those 4 weeks we were actually not allowed to trade. All of our accounts were locked. We couldn't place a trade if we wanted to. We'd get the order rejected in Tradeovate, right?
That was a good one, bro. That
was
sounded
close.
really good.
I've been hearing it for a very long fucking time. But schedule your time off. Like, again, try the Friday off if you have 4 winning days in a row. Try the, like, I'm just going to go to Argentina for a week on vacation, like, not trade. Like, do that stuff. It's important. You do it from your current job. Why wouldn't you do it from your business? You wouldn't open up your laptop in Cabo to see how your, human resources job emails are looking, right? Like,
Definitely
so why are you looking at the charts? Enjoy your fucking vacation. The money will be there when you get back.
But it's so funny because everybody gets into trading and they're like, I want to trade and travel. Then you start making money trading and you're like, dude, I just want to travel. Please
I've
leave
had
me
my
alone.
flexes. I'm like, I made $1,200 in the barber's chair today.
Right. But even, it's just so true. So true. Go ahead, Joey. What were you going to say?
Yeah, I think it goes back to what I said earlier about I'm going to take care of myself for you in this situation. I'm going to take care of myself for my trading. And for me, I'm a new father. So, thank you.
Yeah.
Thank you. So for me, I've implemented, that into spending time with my son. Like I have an entire week, literally an entire week where trading or business is a fraction of my whole day, right? That whole week. And so I spend that week with my son, with my wife, family, to just take myself out of the pocket, so to speak, and to be present elsewhere, right? And to be able to do that and come back the following week makes you that much more excited. You're that much more refreshed and clear-headed, and you're ready to hit the ground running and get to work.
Who here has heard the reference, like, as traders, we want to be, it's a gun. You shoot people from far away. What's it called? We want to be snipers, right? Like precision is a word that comes up in trading. How could you be precise if you're trading all day and every day? You don't think there's variability here? Back to my point about bandwidth, Like, be honest with yourself.
You will fatigue.
Some of you are not as smart and don't have as much endurance as you fucking think.
Yeah.
Be humble. Respect the game. The game says if you're in your first 5 years and you can't figure out how to make money in the first 2 hours, what makes you think you're going to figure it out at 1:30 in the afternoon when volume is half that it was in the morning? So I'm a big believer in the taking the day off. I'm too busy now, unfortunately. I'm also a big believer, like Tanner said and Joey said, hobbies. Like, it's sad to say, but I stopped DJing until last year because I was just working. That's not cool. Like, you gotta have hobbies and fun stuff, And I would just say, too, the more that I have found balance in my life, valuing relationships over business, taking care of people, treating them better, the universe throws stuff back at me. So I really do think that as much as some of you may hear what we're saying of like, I thought I came here to learn about that VWAP, but now we're talking about how to be a better person and perform better. It's more valuable. I can teach you how to read a VWAP in 5 minutes on a video. This stuff that like takes you to the next level, it's hard to get. So any questions for these guys? Yeah. I don't.
Yeah, when I traded on straight on TradingView, I would have it filtered to ticks rather than the dollar amount. I mean, you do want to do the math of how much size you should put on.
I couldn't stop thinking about Isaac when I saw the word tick, big tick. I just keep thinking, it's distracting.
Yeah, it definitely could help, especially if you are just chasing that momentum of seeing the dollar figure fluctuate. I was up 300, now I'm only up 150. Should I cut it here because it's going to go down to just break even? But if you're just, I'm up 15 ticks. I risked 20 ticks, so let's give it a little bit more room. It could definitely be less emotional. It's the same thing as like the silliness of changing the colors of your candles so you don't register a red candle as being so devastating. It's like
I'm all black right now.
it moved 2 points. Let's all relax. It's not a
Relax.
giant
Don't say
red
something
candle.
inappropriate. Everybody relax.
You'll never go back.
I did. I went from all black to red and black just to be like cool for the marketing, and now I'm back to all black. So I did go back. If you're struggling with that, Paul, it's probably like a lot of the time when I see people struggling, like I look at my P&L and I close my trades too. I would just like, it's gonna be kind of weird advice. Create other ways of making money so you're not as attached to the money from your trading. I'm big, like these guys in the front row, a lot of these guys, Tanner, I've helped him a lot. Like, I'm big on building your personal brand. I'm nobody, bro. Like, nobody knew me until you knew me. I've built my brand over 10 years. Anyone can do what I'm doing. Anyone can do YouTube videos. I am not special. I'm shorter than the average guy. You know what I'm saying? So I think a lot of you think, I just want to be a trader and just make all this money. Do any of you have just one stream of income? No way. Does anyone really wealthy have one stream of income? No. Sure, maybe, you're Anthony, you sell your tech shares, cash out for 50 million, but the rest of us are all simple people. We don't get that luxury. So I think you should really be serious about this. Like, if you want to go down this path, Tanner said it, Joey said it, of being an entrepreneur, what else are you doing to become an entrepreneur? With Fiverr and YouTube and building a brand on the internet and TikTok shop, there's a lot of ways to make money in less than 2 or 3 hours a day. You can trade for 2 or 3 hours in the morning, and you can work on building your business. That's going to take you time, but I can tell you firsthand, and I'm sure the boys up here agree, it is a lot better than working for somebody else. As someone who worked a W-2, I worked in the DJ job for a long time, building my own brand, even through the shit, is way better than working for somebody else. Amen or no? Hey, fucking men. Any thoughts on the multiple streams of income?
Yeah, I was just working one job when I learned of trading and started trading, and it bought me the time that I needed to go and do other things. And I went from, going from working to working and trading to then just trading, and now I have like 8 or 9 different income sources, and still growing. So it's like, that's not for everybody, right? You might be okay with 80 grand a year, but answering to no one, right? Or like living in Costa Rica or Portugal, that's fine. But like, you only get one shot at this, right? And we don't know how much time we all have. So
and you can't get a Lotus in Costa Rica.
I mean, you can get some off-road tires or something. But yeah, trading has created lots of opportunities for me, ones I never thought that I would have. But again, like the same way, it's not everything for me, right?
But it's
like
also taboo.
I love not trading.
It's taboo for us as traders to say, make other money, keep your money up so you don't stress about trading. That is super frowned upon, I feel like. But it's the honest truth. Like, I don't think I would trade as well as I do if I had to take that money out every month to pay rent. And of course, as you trade better over time, you end up building up some reserves and maybe you make some other money or whatever it may be, and you can breathe a little bit more. But even then, I mean, maybe I'm just too conservative. I wouldn't want to sleep well at night knowing I got a wife, a kid, 2 places, a mortgage, and this and that, and I got one stream of income. That if I have a bad quarter, we're all kind of sweating. Even if we got a couple $1 million in the bank, when we're down like that, it's just tough. So I like it that I can be down in one bucket and up in another bucket. To your point, Paul, that this is about, it helps me not worry about that P&L as much, detaching a little bit.
You can't trade from a place of scarcity. You have to be in this abundance mindset. And I know this is going to sound like woo-woo shit, but like it's a real thing. Like
super real.
It's when I quit my corporate job to trade full time, I did it strategically. I used to work at a restaurant for years and years and years. And then I worked corporate. And when I was at corporate, I still worked at the restaurant 1 day a week. I was always trying entrepreneur things. I tried everything in the book. I owned a gym for a little bit. I tried Amazon FBA. I tried drop shipping. I tried all this shit. And then I found trading and I was like, I'm going to stick with this. And I strategically did it where I quit my corporate job. I had $50,000 to my name at the time. I was like, I'm going to quit my corporate job. I'm going to go back to working at the restaurant at night. I went backwards. But like, you have to do that. You have to be okay with taking a step back if you need to. I literally went from like first college graduate in my family, working the corporate job in tech,
to black sheep.
To literally, I'm serving beer at night to a bunch of drunk dumbasses. And I had to go backwards though and do that. And my first 2 years, it was just what was required. But it did take the stress off of me learning in the learning curve, because at least I was like covering my initial bills. And then eventually, as I became profitable, I just started to dwindle down my days more and more, to the point where I would just work 1 or 2 days a week. But I'd still kind of have that. And I'd say really until I started coaching and like kind of replacing that income of like the 1 to 2 days and then building that, that's really when like my trading even took off more, because I'm like, oh, cool. Like now I have extra income from this, and it's kind of making me trade from this better headspace, better mindset. And then all of a sudden, you know, you develop as an entrepreneur and you get other income sources. And then you just don't be so attached to like, I need to win today. I need to make money today. Like, I can't tell you in the beginning how many times I struggled with that, where I was like, oh my gosh, I'm not going to make rent. Like, you know, I need this trade to work or I'm not going to make rent type shit. Credit card debt, all that type of stuff. Like I'm stoked because I know eventually when I am like a fucking millionaire and like I've like made it, quote unquote. For reference too, I literally just had my first 6-figure year working for myself last year. So,
That's huge.
Thank you.
In your first or second year of doing it, right? Isn't this your second year since you quit the job?
No, I quit my job in 2019.
Okay, so 4 years into
Yeah,
it. Still
4 years.
Still
Yeah, 4 years. Took me some time, but I grinded, just like scraping by, eating shit and stuff. And this is the thing a lot of people don't talk about too. Just because you're profitable doesn't mean like you have a brand new Lotus. Like it's like, you know, it's just because you're profitable, like you could, you know, it's still a really great achievement, but being profitable like means like, cool, like, you know, you're making money. It might not be insane. Like literally I was doing like 2, 3, 4 grand a month. And like, it was just enough for me to like cover my bills at the time until eventually, like now it's pretty consistent with trading where I do like roughly at least 5 figures a month, like about $10,000 a month. And there's still room to grow, obviously, right? It's like, that's the beauty of what we do, is there's no cap to it. You can just keep getting better and better because it's a skill. And it's a skill that no one can take from you because you just keep developing it and developing it. But if you trade from a place of scarcity or like, I need to make this, I need to do this, it just makes it so much harder on yourself. So definitely a huge advocate of having other sources of income, growing those, and you just ultimately will trade better over time because you just gain the experience.
I think I lost, like, I'm so biased to this advice of like, go make other money, because like when I got into trading, everyone was like, don't do that. Spend all your money in a personal brokerage account and lose and then figure it out, which is really shitty advice. You know what I'm saying? Who here's like, I want to just receive your feedback on this point specifically. Who's finding it refreshing, exciting to have permission to go make other money other than trading and still call yourself a trader? Super cool. I'm glad to hear that. Break free of the bullshit. That's the whole theme of the seminar. And it's bullshit to think you're a trader, you have one stream of income. Even the biggest guys. You don't think they also have other ways of making money? Lance and all those guys that you like? Of course they do.
That's the hard part too, is a lot of those guys, they're in real prop firms. Like, you know, if we're talking about like prop firm space, like talking about like where they sit next to each other on a desk in the same building, right? Like a real
Not a funding company.
Yeah, not a funding company, right? So it's very different because all those guys come in at like, you know, 21 years old out of college and stuff, and that's just what they're taught to do, and that's all that they do, and they're trained, highly skilled to just do that. But we're not in that same boat. We don't have those same resources. And like one thing I do like love that Lance always talks about, he said literally the learning curve for him takes, and this is like obviously one of the best traders to this day, took him 2 full years of losing and eating shit at a prop firm with all the best resources, surrounded by people making millions of dollars every day. And it still took him 2 full years of trying. And so when you're in year 1 or year 2 or year 3 or year 4 or year 5,
On
and you're
your
still
own.
struggling, like, why do you expect to be at that level if you don't have those resources? It's just going to take you a bit longer. So that's the question too. Everyone's like, when do you become profitable? When does it happen? It's not a set thing, and you cannot compare your journey to someone else's because there's too many factors involved.
I hate that whole conversation.
I
Are
hate
you a
it.
profitable trader? Well, I took a payout last month, but I lost money today. So how would you read that?
Exactly. And
I'll
it's
show
like-
you a TradeZella
Yeah.
that shows green.
Yeah.
Am I profitable?
Yeah.
Well, how much money did I actually make?
Yeah.
And versus how much did I spend? Great points. We're going to move into the next section unless anybody has any more questions on mindset and performance. Yes.
He didn't trade from a place of scarcity. He actually was already very successful with his business before. I think he was already worth over 7 figures before he took that payout. So
It takes money to make
It takes
money.
money to make money, but to be fair, I think he lost over $200,000 trying to learn how to trade. Most of you can't stomach obviously losing that because you don't have, we don't have the capital. Some of us don't have that to do that. But that's the thing, is like he wasn't afraid in that sense. He failed and failed and failed and failed and failed. But then he was just like, all right, let me get disciplined with it. Let me not stress it. Respect my max loss days. Rinse and repeat, rinse and repeat. He literally just traded opening range breaks. It's so funny. Like so many people are like, what's his magic sauce? I'm like, he just disciplined.
Copy trading too. He's copy trading.
Copy trading, of course. Yeah, of course.
Yeah.
But yeah, it's like leverage.
Was he
but
doing
yeah,
20
that's it.
accounts?
20 accounts.
Yeah, so just divide it by 20. That makes things smell, and it's just a lot more palatable that way.
For
right?
sure.
Divided by 20, but that's still killer.
Killer.
Right?
Yeah, rinse and repeat.
He's
And
probably taking gains because he doesn't need the money. So he's like, cool,
Yeah.
win. Especially with Apex because of their trailing drawdown. He's probably like, win, win, win. Because with Apex, you can't let a winning trade turn against you, basically, right?
his best days were never more than like $2,000.
Snag, see ya. Snag, see ya.
Across 20 accounts, obviously, but yeah.
This is the thing. You want those big returns, and we are all thinking they come in a day. They don't. They don't. They don't. You have big days. Michael Reese has had some big days, but your big gains have come week over week after compounding those green days. It's not usually you're down 100 grand on the 29th of the month and then boom, 101,000 on the next day and you're profitable now. You see me what I'm saying? Same thing for, what was his name?
Min beer.
Yeah, Min Beer. Cool. Who else? Yes. Blue Chew, Trojan. How'd you know? Art of the deal. I got you now. Art of the deal. You get with companies, you get with people. Business is all about who you know. Certain companies will do, like I have a lot of my stuff is all commissions. So I take up and downs, right? But when I first started doing affiliate stuff, I took salary. I wanted to get a fixed fee. How do you do that? Art of the deal. You got to talk to people, get in a meeting, ask, be willing to take no's, be willing to push back and get your way as much as you can. Find a middle ground. I'm a big deal maker. So if you like me and I like you, we're going to work together in some way. You know what I'm saying? That's how I feel. Whether there's prop firms that don't even pay people commissions, they only do salary, like those types of deals are going to be very unique. But if you're first starting out in it, don't start a YouTube channel and expect to make money on YouTube ads. Like do the research in what you're doing so you know it's going to be financially rewarding for you. You know what I'm saying? Like I think people think you just start a YouTube channel and you just run ads and make money. I don't even run ads, but I make a lot of money off of YouTube. You get what I'm saying? So you got to figure it out. You got to play the game a little bit. You guys got any advice on that?
Back to the process, right? Everything like I preached on. So for me, growing in this space of like influence, I guess you could say, whenever I make a reel or like make content or whatever, it is, Gary Vee says it's the oxygen to your business, right? And so I don't see direct ROI on it. Like I built my Instagram over years and years and years, and literally until probably the past like year, I would say, like I was barely making any money off making all these videos and doing all this stuff over time. But then once I started to see a little bit of a return, I'm like, oh my God, it's just about literally making the videos and doing the work. And there's tons of videos that flop, don't do well and stuff like that. But like that is the process of like, okay, I got to create. As entrepreneurs, we have to create. You cannot consume. You have to create things. And so whatever it is, whatever business, videography is a great one. How do you film something good? How do you work on this edit? How do you do this? Whatever it is, it's like you have to get obsessed with like, okay, I checked that box towards that thing today. It didn't directly lead to an ROI instantly, but eventually it's building my reputation, it's building my brand, it's building whatever it is, and that's how you grow in that sense.
If there were, Joey, I'll let you go. If there was like something I could tell you like that takes time, like he's saying, it's YouTube. But I know people that have started a Fiverr little thing and they're doing executive work for people, organizing emails, doing spreadsheets for them, and they're making $3, $4, $5 grand a month. No college degree needed, no prerequisites needed, because there's that much demand for work on Upwork and Fiverr and things like that. So if you just shift the mindset to like, I'm gonna be a digital nomad basically, and be able to work from anywhere, because trading falls in that bucket, you're gonna be able to find something that maybe doesn't require as much of a commitment to process as he's talking about. What you're talking about is very valuable. It's the thing that you keep forever. The thing you do for these people like I'm talking to you about right now, it's a little short-term job, but for some people that's better than what they're currently doing. Michael, yeah, and then Joey. Yeah, like tell ChatGPT you broke your foot and it's gonna laugh at you for saying you're a videographer. Yeah. Oh, it's hard. It's super hard.
Yeah, I got you there. So I think the important part of that is having the other income, right? That way you don't have to rely on the income that's going up, down, sideways, right? You're not reliant on that. You don't have to feel the emotion from that because you have something different. It's just like trading, right? We just got done talking about not having trading as like your only source of income, right? Having something else takes the pressure off trading. And so that applies to what you're asking. When you have a side hustle or whatever it is that fluctuates in income, having that other option takes the stress and the mental capital away from the one that fluctuates quite a bit and isn't like the same every month. Yeah, it's just like look at it like it's there, but you have this.
If I gave you
right?
10 grand, would you care about your sim losses? Like if I deposited $10,000 into your paycheck account today and you lost $500 in a sim account, would you care? Exactly. That's what so you want to have something that's like, it handles the psychology for you because it's there. It's consistent. Good.
Yeah, I think it also just comes down to living below your means. If I made 20,000 last month, doesn't mean I'm making that next month. So let me just go spend 15K on rent. That next month it might be 5 or 10. So good thing I made 20 last month. But it's just going to fluctuate. But if you're not overspending or like following that, that's just going to keep on trending upwards. Ideally it does, but it's going to stay consistently upward. Then yeah, you want to be able to afford slowness. And if you're not, then you're going to stretch yourself thin, which is going to probably not help the case at all.
Great point. I had my biggest month ever prior to last month in 2020. So you talk about entrepreneurship and like the ups and downs. I've been doing fine, but my biggest month that I've been chasing did not happen again until last month. So like for me, I think Evan hit the nail on the head. But I would also say it's like I got stubbornly lucky. People started coming to me about trading because no one knew what trading was, and I like became a trading coach like accidentally. So then the business formed around it because I was having so much demand. But think about it from a perspective of problem solving. I was, in a way, creating the oxygen, creating the content, showing people on Instagram and Snapchat back then what trading was, and I was solving their problem even though I wasn't profitable because I was giving them a way out. And when I learned more about sales, I was like, you're not selling a product, you're selling a vision, you're selling a dream. That's what sales is. You sell feelings, not things. You know what I'm saying? So when I realized I was selling emotional things that you can't really touch, I was like, I don't have to be super successful, Mike Bellafiore's. I don't have to do that to still call myself a trading coach and create a business. Am I going to get haters and people being like, what's your P&L? Yeah. You think I can't handle that to make my family and me free? Come on. Believe, right?
Another thing I want to add to that that's outside of the monetary aspect of that. So if you're going to build something that can fluctuate, let's just take affiliate stuff as an example, right? We all create content, okay? When we're creating content about something we love and we like to talk about, right? You really want to get down and like have an idea, but throw rocks at it, right? Get real deep into what it is that you're going to do and build, and are you going to enjoy that, right? If you're going to create videos, okay, what videos are you going to create? But in those videos, what do you enjoy talking about? Is it teaching? Is it
like where's the passion?
Yeah, make sure you have that passion behind what it is you're going to do. Otherwise, it's just going to
short-lived. Yeah. Good point. Great point. Did you want to say something, Isaac?
No, I mean, to answer your question, the biggest thing you want to get to quickly is build a 24-month cushion as fast as you can, right? Having that 24-month cushion, it gives you a lot of empowerment. Then you want to live below your means, right? I drive a Lotus instead of a Ferrari because it's just smarter to do right now. And also Porsches are better than Ferraris. So
quote of the day.
But, right? It's just like, you do have to live below your means. Because I've been in a position where, you have a $10,000 month and then you're at Mayer's looking at Rolexes that cost $30,000. And it's just like, okay, this is
and then they think you're poor because you're not looking at the 60Ks.
Exactly. And, just don't focus, like, do what makes you happy, right? I'll tell you all the cheesy things. Do the things that you're good at. Do the things that you thrive in. One of my favorite mentors of all time, Dr. Nathaniel Woods, Nate Woods, he told me, he's like, Isaac, if you focus on serving others, servant leadership, and solving problems, the money and or the titles that you want will chase you down. You won't be able to keep them away. My business outside of trading is business optimization. So I take businesses and companies and projects and products across all different lines of business, and I find ways to make them better. That's how Go to Isaac came about, because if like you need to fix something or you need to figure something out, what do? You go to Isaac, right? So, you can give me just about anything, and I'm always, even if it doesn't need improvement, I'm gonna be like, how can we make this better? That's what I'm constantly thriving to do, and you gotta take the same approach with your life and every facet of your life.
That's why he's a good trader, because that's an 100%. Entrepreneurial mindset right there.
To back that as well, one of my mentors always told me it's all about the people. So like, especially in the restaurant industry, it's all about people. So it's like, if you can find ways to help others, serve others, and you give them more value than you gain, like it's inevitable that you won't be successful in it. You just gotta, I have this huge canvas above my couch that says, keep going. Because you got to just keep going.
I think you can be passionate, like Joey said too, about something else, like basketball. We were talking about basketball, right? And make money off of building a brand in basketball and still be a trader. Like, you don't have to become me or any of these guys. Like, I would recommend against that, to be honest.
For me, trading is like going to the gym. Like, it's a part of the day, right? And just like the gym, maybe not Tanner, it's probably why I don't deadlift 720, but I try to get out of the gym as fast as I can, right? I try to leave the office as fast as I can. So I try to get out of the trade environment as fast as I can. Like, it's not my life. It's not even my business. I tell people, I'm like, yeah, people are like, oh, you crush it. You make a killing as a trader. And I'm like, it's not even a third of my total income because of everything else that I have going on. But at the same time too, I don't do anything that I hate anymore. Sure, Zoom calls are annoying. Meetings with assholes are annoying, right? Like,
How are we gonna meet?
We live close to one another.
True.
But you know, it's like you gotta do what you love, right? And it just can't be trading.
Who thinks their passion is trading? All right, good. Because I would say most people are not passionate about trading, but they can make a lot of money from trading. So now, when you answer that question, what are you passionate about? That's where I would go first. Who made money today? Hands up first. God damn, that is really good. On top one futures accounts? Oh, that's even better. So we're going to talk about order flow. Zach, as you heard already, is like an expert in volume profile. Together, Bookmap, volume profile complement each other really well. Bookmap is what we're going to focus on for this section. Bookmap is also a sponsor. I have a link that I can save you some money if you want to sign up for 3 months. I think it's $147. So it's going to be the most expensive thing you buy because everything else is relatively cheap, but you get what you pay for, right? Like, we're literally giving you an insight into where the market probably goes. So how much is that worth to you? So let's talk about it. Bookmap, I would say, from like Scott Pulcini and some of these other people, it's a cheat code to see where the market might be going. Liquidity only can be seen like this in a centralized market. You cannot get information like this in the Forex market. You cannot get information like this in the crypto market. This works for stocks, this works for futures, and what underlies all that is the options market. So those three here are kind of coming together. There's actually add-ons that you can put on your Bookmap to show you key options levels. If you want to deep dive into Bookmap, Nick in the golf hat in the back, Nick, wave your hand. Nick is a Bookmap wizard as well, so he's someone to pick brain. We talked about this, so I don't need to linger. The brighter areas show us larger order blocks. The dark areas have less orders, less pull, and more space to slide. The volume balls are somewhat important. I don't really pay that much attention to them. I pay attention to the color, not the size. Super easy. Christine, get your mind out of the gutter. That was a good one, though. I'll give you that. CVD. There's your time of day at the top. This is at the bottom of the Bookmap every day. This CVD is the cumulative volume delta. It's going to sit down here and tell us, hopefully, which direction to trade. For example, on this day, I'm taking this picture at 12 o'clock in the afternoon. Look at those orders up at 5,500. Where'd the market open over here? 5,400? So you're looking at a 100-point rally here. Those orders were on the book at the start of the day. Where did it tell you we were going today? Everybody see that? Where did it tell you we were going? Higher. We popped this thing open a little bit here on the same markup, especially at the open on the left side of the screen. Where was Delta telling us to trade to? There's some orders right there, there's some orders right there, but Delta just said straight up and nothing underneath, nothing. Maybe a little bit here, and they use that as support to go higher. See that? That comes on at 11:30. So do you see how when there's nothing, it wants that? Yes? Can I get a yes? So here's the settings. Get your phones out, because I know people are going to ask about this. In Bookmap, you'll see cumulative volume delta as an add-on. Inside the cumulative volume delta add-on, you want to have your reset points to market open 9:30 Eastern time every day. Questions about that? Because I ain't got much more to say. I just want you to copy it.
Yeah, as you guys are taking pictures of it, yeah, you can scroll to the next one because this is simple stuff. It's worth it to note that Bookmap, first off, is super solid. partnered with Bookmap myself, so can't stand to be unbiased. I think it's always good to say that. But it is 2 subscriptions. So it's Bookmap itself, and then you need level 2 data. So you can get level 2 data directly from Bookmap. You can get it from Rhythmic, DX Feed, but you do need some level 2 data subscription the same way that you would need it for any traditional depth of market. But it's worth noting that if you guys are going to go look up, Bookmap after this, which I'm sure many of you will, some guys go, well, what the heck is this subscription for level 2 data? You would need that for any form of order flow software that you would utilize as you're taking pictures of these settings.
Good point. Now, once you're in, the ESM5 is the current contract we are trading. You see the .CME, so we're tapped into the CME at Bookmap data. That's what he is speaking about. That's where you get your data. So Bookmap itself is your software. Bookmap data is going to provide you the ES feed that you need. If you want to do this with other assets, gold, oil, you're going to need different data feeds because you're literally basically hardwiring in from Bookmap to the CME or the centralized exchange. You'll need to keep both of these open if you want to run the TraderMap Lite. We're going to get into the TraderMap Lite now. This is going to remove the algorithms from your Bookmap. So if you look here, you're going to go to Configure Add-ons. Take another picture of this. You're going to add the add-on called TraderMap Lite. It is included in your subscription. You literally leave everything else the same. This stays as is. You don't touch it. So just turn on the TraderMap Lite and then keep both of these open. If you were to look at this one, this is the one that Zach was looking at, it's crazy. It has an algo that trails current price at all times. You can't see any levels. When you go to the TraderMap Lite, it gets a lot clearer like this, where I don't see algos. And I can see very clearly what side of current price has more control. When you look at this one, what side of price has more control, the top or the bottom? You can say it, you ain't wrong. Top, yeah, exactly. Is everyone following me? I want to make sure you guys are picking up what I'm putting down. Yeah? So who's in control here? Where are we more likely to move, up or down? All right, good. Okay, good to know. You need Bookmap data for TraderMap Lite. Of course you did. You just thought you'd have to be better than the rest of us. And how'd that work for you? No, you're right. So now let's talk about the current order book. This is going to show supply and demand before it happens. You're also going to be able to spot the spoofing and the games that we talked about earlier. You're going to really be able to see through speed of change where the market intends to move. The word intention is important because there's no guarantees, right? This is all probabilities. But this is showing us by tick how many orders are at each price currently, and it's constantly changing. So here at 54.80, we have 231 contracts. At 54.50, 74 contracts. Notice, this clearly stands out, right? Like everyone looked at this and saw this block down here away from current price. Everyone also saw 54.70, 54.75, and then the big one up here at 54.80. So what I want you to do is look at the numbers, okay? This thing is so easy, but I can't let you just default to looking at colors. And, oh, it's hotter up there, I gotta buy. No. You need to look at the current order book and understand who may be spoofing you as well. So you want to look at the numbers. 74 here, 230 here. Which one's stronger? Exactly. Now here's an example of the spoofing thing. So I have two prices here. 55.10, shown here, zoomed in. 55.11 and 3/4, shown here. You see that white line now? And here and here? So here, this block, which is dark red on the book, is 50% of it controlled by one person, one algo, one trader. That's what that means, because that line is 50% of the block. This one is like 90%, which means out of 108 contracts, probably 100 of them are one algo sitting there. Yeah?
You mean horizontal, where the white line is?
Yes, yes. So if there is no white line, that order is not controlled by one person at all. Sometimes you'll see the white line halfway or 30%, but usually not too far to the left. The white line will usually be midway or towards the right. Yes, thank you. Further right, more one person has. Yep. Everybody got that now? So you see current price at 54.61, nothing underneath us. 65 has orders, 70 has orders, 75 has orders, and 80 has orders. When you look at this, what is the dark? Everyone now understands what the red means, right? We're all aware of what the red means. Say no if you don't understand. I want to make sure. Everybody got it? The red lines are the orders. So what's the dark mean to you, Zach? When you see a setup like this, no orders below, and then dark, dark, dark.
low liquidity area that we might move through quickly to that next area of liquidity. So again, just so you guys know what you're looking at, because when I first looked at this, just like I'm going to talk about the basics. When I first looked at this, I'm like, what is this crazy heat map looking thing? It's wild. All Bookmap is really doing, the way that we're discussing it right here, is displaying a traditional depth of market, which has individual price levels and then individual quantities of orders above and below price, resting sell orders and resting buy orders displayed by a heat map. So again, like oftentimes it's crazy to look at and say, what's all this stuff doing? Different colors changing rapidly. It's just making the DOM really easy to read, and it gives you a historical reading of that DOM because the DOM changes in real time, and everything right of that line where the volume bubble ends and it turns to dots, that's your best bid and that's your spread, best bid and best ask. That just moves in real time. And if you run a traditional DOM, it's moving in real time. You can't go back and back test, you can't watch it. So, but again, this stuff is fairly simple. So again, what I see through this, again, in the very simple pattern recognition way that we're talking about it, I think we're likely to go fill those orders the same way when we hopped on the charts today, and it happened to be a good example of it. Doesn't always play out that way. We had orders up above. I thought we were likely to go fill those orders. If it lines up with market structure, price action, and trend, we got a little bit of that covered, but we're trending to the upside here as well. Buyers are taking this thing higher. They're overpowering sellers, positive cumulative volume delta. We're likely to go fill these orders. Another area of interest that I want to pay attention to on my chart. And again, just looking at this, the way that I would read it, I hop on the chart and I watch what's happening pre-market, and then within those first 15 minutes, if I note that there was a massive badass order of sell orders above price, we came up filled, there were some other levels above, but we started selling off aggressively. Do I immediately start to get long because there's levels above? No, I watch how it reacts, and I anticipate it to continue to react that way. As in this example, and we saw today, buyers continue to outweigh sellers. We continue to want to go up and grab those levels of liquidity above price. Oftentimes, I get cautious, right? Because they are sell orders. We do find resistance sometimes. So if I'm nearing a take profit, I'm a point above a big level, a stack of 200 orders. It's an added piece of information to say, maybe I just want to grab that take profit right there. That's a great point. I don't know that I want to hold all the way through it, but just kind of talking about the way that I look at it. And I will comment, there is an insane amount of stuff you could do with Bookmap. It gets very technical. They do a great site. They do a great job on their site if you want to learn about all of the narratives and market mechanics behind order flow. But I think it can be really powerful, the same way that I'm very technical and basic with all my stuff, to watch this play out over time, run it on the side before you're using it in your own trading, and you start to recognize things the same way that you do on a candlestick chart. So.
And in this example, well said, you can see it filled those dark areas quickly and then moved to 57.40, took those orders here, then moved to the block that was here at 75, took those here, look at that green volume ball here and here, and then as it approached the orders at 80, it comes off of those. Like Zach just said, when you're trading into a heavy block, this is a tip that's not written down, so listen. When you're trading into a heavy block, you have no issue front-running it and getting out before the block fills. Do not get married thinking, we're moving up, it's going to go fill that block above, and then it doesn't, and you're surprised. Part of the reason of that is if you look at this, at a 283, half of it, Anthony, half of it with that white line halfway is controlled by one algo. Maybe it didn't fill because that guy knows he doesn't actually want to get filled. So when you see a level you're trading to and there could be potential spoofing at that level, front run it. You're getting that bone, like I said. You're getting insight into the centralized order book. Get out before that becomes an issue with the spoofing. Thomas first, then you.
So I know you said you said you don't care about the size of the ball, you only care about the color.
Yeah.
How would you interpret this, the size on this one? Because
I wouldn't. The size is a subjectivity thing that you can control inside Bookmap. Yeah, so I can make mine bigger or smaller, and he might see something totally different.
Yeah, you can get
not objective.
No.
You can, if you wanted to, I don't at all. You could get really technical, like I was just talking about, and use a data tooltip and see exactly how many orders were filled at that level. Like if you wanted to see, for example, really, really zoomed in, that volume bubble and the volume traditional kind of down on the bottom, similar to a traditional candlestick chart, gives you the volume. If you zoomed in like crazy, and there's a little data tooltip, you could see hey, there was 100 lots. I want to know for some reason I'm going to use that in my trading. Like if there was 100 lots right there filled, I can do that. But to your guys' point, you can adjust the hell out of this chart, very subjective. As you zoom in and out, it changes.
But what you can adjust is those levels that come on the book.
No.
Yeah. Oh, sorry, hold on. Yeah, you're next. Hold on, Anthony. Go ahead.
So
We call that Jarvis, right, Nick? Jarvis. You go, oh, this thing dings and tells you there's a large lot being filled. So it is an add-on you can get, right?
Yep. Yeah. I don't know if you had more to the question.
Sorry, I've been trying to search and I didn't really get clear answers of how to really filter it, really looking more at the aggressive orders. So right now I've been using a separate swap type of thing.
So when you're saying aggressive orders, you're saying just like market orders that are not on the book. Yeah. So that's not visible. But I'll comment first on the other thing. It's a really awesome add-on with just regular Global Plus to have that large lot, and they have something called sweeps and absorption, and it shouts out when high volume of orders are being filled or traded as you're trading. It's pretty cool. You can adjust it so it automatically does it, and it's great if like I was live streaming or not paying attention. We come through one of those orders, it starts barking at you, which is pretty cool. Audible alert. To that question, and maybe Titleist can answer this one even clearer. You can't see orders that are not placed in the market, right? Technically. We can see limit orders above and limit orders below, but we can't see orders that are not placed yet. Stop orders, they have stop trackers where they post almost as it's happening afterwards, but technically you can't see that liquidity in Bookmap on the DOM. Yeah, yep. Same with like icebergs and stuff like that.
That's what Nick uses.
Yeah, again, there's a whole bunch of trackers, right? Because as Bookmap is doing what it's doing, and in real time, orders are filling on both sides of the book, we're able to interpret that information. And a lot of those add-ons do it for us. Iceberging, a ton of stops being popped, it can recognize that and pop it right on the chart for you. But as far as, again, like at any time, anybody can come in, right, technically, and hit market buy 1,000 lot, right? That's not on here. It's not anywhere until that person presses buy. Majority of the time, you were able to see liquidity above and below price on the bid and the ask with Bookmap. That's what we're looking at.
Anthony? You could even, for sure, and then use 70 as support, right? Like, because if you're saying this ball here is telling me sellers are stepping in, if to show that they're absorbing, you would say this kind of yellowish red block here holding confirms it as support.
To contradict what you're saying about the size of the volume of the balls doesn't matter, but you got that large red selling.
Just for clarity, everybody, the reason I said the size of the balls doesn't matter is because there's a slider on Bookmap that you can control them. Relatively speaking, if you shrink them, you'll have tiny, tiny ones and then some other small ones. If you make it as big as possible, you're going to have big everything.
But the size of each ball relative to the ball.
Exactly. Yeah. Exactly. Yes.
You see that large selling coming in, but there may be a lot of ask buyers.
Yeah. Look at it. All in here. Boom, boom, boom. No. Those buyers kept it up. Right. Yep.
And even with the aggressive selling, the orders never filled there.
No.
So and you can see buy orders may be sitting there, passive buyer.
To balance it.
Look at the volume bars when that red ball fills. There's no selling volume, so it's like there's no follow through on that.
Good point. Randy's saying, look at the bottom here. No volume down there. That's a good point too.
Yeah. There's so many. Yeah. There's. No, but again, it's the same way that we do with a candlestick chart, right? And the tools that we use. There's so many different narratives that you can understand and create around what's happening, and I think it's kind of, as long as you're objectively correct, you're not just making something up out of nowhere. Creating a narrative from pattern recognition or from market mechanics, from auction theory, can all make sense. And again, there's so many different add-ons that you can add to this.
Crazy.
Just like a candlestick chart, you can really kind of custom tune how you want to, understand and look at this stuff. And again, the way that I describe it is a very simple, large orders, above and below price, pattern recognition, type of a way. How is price reacting to that? But if you want to zoom in heavy on watching, what's happening, are orders coming on and off the book? Where are they spoofing above and below price? Where are market, orders being moved above and below? Order book flips they talk about a lot. All of that stuff can be done. So again, there's, just like trade, so many different ways to go about this. It's awesome software, really is.
So here, another example. Look at the time along the bottom. Before market open, there's blocks at 52.48 here, a block here at 53, a block here at 56, all the way up to like 52.60 basically. What's interesting is that when you have blocks like that that are on pre-market, they tend, in my opinion, I'm curious if you agree or disagree, Zach, I find that pre-market blocks, if left on, usually want to get filled. Yep. And here, look at the noise at market open. See 930 right here? Drop, pop, back to the low, back to the high, down, and then it takes off. What happens before it takes off? Who can guess? I'll give you a hint. It's something down here. Before this takes off right here, and starts to move into the block here. What happens here? What do you notice?
Order start and pulled up.
Not only up, but off. See how this got red and then turned blue, 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 dark blue, yellow, yellow, gone. See that? Exactly. They could be marketing it. So when the dark shows up on one side of price, it's telling us the price may move towards those liquidity pulls. Does that make sense? And you can see how easily that does. So now let me give you an example. This was a trade from a few weeks ago. We bought mid-range, similar to today, stop at opening range low, trade to opening range high. Stopped at 81 after it did not fill 5,500. See 5,500 right here? I got stopped in this first bar down right here off that opening range high. But what did I do? One off at 84, stopped on the other half at 81. I think I only had 2 on this trade. So I'm closing the trade as we move into that 5,500 level. Look at it. Here's the trade when I took the entry. Look at that heat block above, everybody. Do you see it? Yep. Come on, yes? Answer me. Do you see it, motherfuckers? Thank you. Jesus Christ. You pay to come to a seminar. You want to sit there and zone out? It's fucking red. It's screaming at you. So we buy into that level. I didn't get out full. You trail the stop on the second leg up because you are starting to think maybe Austin was right. And when we have hard blocks, maybe we don't fill them. What happens when it approaches it here? The ask, the red line goes into it, but the bids don't fill it. So it fills a couple and then dumps everybody. So this is an example of why I say you want to front run sometimes. Do not have a long at 54.70, take profit at 5,500. Take profit should be 54.97, 54.87 before that block. Does that make sense? It is a target. You don't have to get to it though. Simple, right?
Yep. Simple. Just to add to it, exactly what we're talking about, kind of what I was describing before. You can front run these levels, especially if you have a big standout one on the book like that. There is something above it, but not that much. They're also often at, like that's at 5,500, key round numbers, psychological levels. If you watch it side by side with a candlestick chart, they're often at these massive levels, right? Where it makes sense to be either cautious, targeting towards where I think we're likely to fill, but be cautious as we're getting there, right? It's kind of same way if we're gonna break a high, right? If you're gonna hold for an extension, what's more likely to happen? We come up and reject before breaking the high. We come up, reject after sweeping the high. We come up and break through the high. Reject before the high, then sweep the high, then extend above, right? So if you're going to set a take profit, oftentimes you do want to be cautious trading right through it. When it happens, as we're about to see,
next day, this is the next day,
there you
everybody.
go.
So that 5,500, same price that Zach's talking, stayed on the book for 2 days, right? Dark. That's why I got these arrows here. Dark. Delta 6,000 right here. Positive delta. We trade higher into it into the afternoon. And then finally, like Zach said, it takes it and it goes. It takes it hard.
Similar to what we're watching today, right? We broke overnight high. Key area. Are we going to actually break out and get above that range? Kind of a decision-making point, similar to VWAP. If we do, and buyers vastly outweigh sellers, you give it a moment to open up, and then the market continues, it's a real big indication that buyers were lifting that. Now we are going to continue. Again, you can look at this stuff somewhat similarly to just standard market structure and key levels. Definitely. And I think if you think about it that way, it can be a little bit easier to interpret as well.
Another example. We were short. You could see my entry 55, 59, 50. Here's 55, 50. Delta's red. There's an example of a red delta. Look at the time. This is minute by minute. This is like 5 minutes here, right? Over the course of these 5 minutes, that 55.50 was the clear target. There's a little bit of heat here, 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 here. But look at the difference. Can everybody see how this red is different than this orange? See the slight difference? That red is the target. And then look, what's down here underneath it? Another target. What comes on here? Another target. What's coming on above? Somebody fucking say nothing? Thank you. Good. We're listening. Good. So now you can see when we're short, I'm only holding one contract. Why? Because when we got to that 55.50, I'm full out of that thing except for the one that I'm going to trail because I don't know what it's going to do at this level. I did not know it was going to slice through. That's not what I'm telling you guys. I don't know what it's going to do at those key levels. I know it's going to pull to them. And then I got to do something when we get there. Yeah? Yeah. Thank you, Frank. Another example. Oh, that's interesting. Short here on the break in New York VWAP. Stop is at the opening range high, trading towards the overnight VWAP and towards opening range low. 55.50, 55.50. Where did I close for? 55.50, right? I was out at here. You can see 59, 56, and 46, right? Come on. In my notes even, orders at 55.50 are the target. Do we lose connection here? No, this is, maybe we did. No, no. Oh, now we're all over the place. We're lagging. It's this trade. This is this. That's why. 55.60 here. 55.60 here. Say 59, 59, 50. 55, 59, 50. Say that 5 times fast. So this trade here is this same setup here. 55.50, 55.50. So like I said, I'm full out except one contract. See how I have one right there? And then my note says close 4 or 5 right there. And what ends up happening? I get tapped on that last contract. So to the point of like whenever I try to trail, I usually get tapped on it. More to my point. The second you think, let me leave some of this trade on, just get full out. Just get another trade. That's the beauty of this conference too, is you're going to hear from different traders how they do it. You don't have to listen to me, but that's how I do it. I'll just take another trade. I'd rather that than have it turn around on me. Okay? Questions on Bookmap? Kind of a short slideshow for this one just because we've talked about it all morning.
Yeah, and guys, Bookmap has so many resources straight from their site. Again, it can get very, very advanced, or it can be very simple, the same way that all of trading can. I don't consider myself to be a genius. I use it in a stupidly simple way, and I find it to be very, very helpful. Coming from the Forex and CFD market where we have no reliable volume and order flow data, being able to utilize that, super cool. And again, it's different than any indicator or something that you would overlay on your chart because it's new information, right? It's live liquidity on the book. It's not time, price, and volume the way that we're often looking at that. So I think it'd be super powerful. I would exercise some caution if you're looking to add it to your trading, just because like anything else, it's new information that you have to process. It's not right all of the time. It's not like you see a big order and we automatically go fill the order. And if you are going to add it in, I would do it slowly, watch it on the side, start to get comfortable with it, or if you're thinking about experimenting with it.
Who's going to buy it? Who's going to get it now? All right, so we convinced 4 or 5 people. That's it. Why are you not going to get it? I'd like to know. Ladies, why are you not getting Bookmap? Frank? You already have it. Who else? Why are you not getting Bookmap? Speak up. I just want to know. I'm not offended. It's not my company. I could give a fuck. There you go. $150. Anthony will
in the
pay.
back.
Anthony will pay for it for you.
The huge truck in the
What,
back
dude?
of the room.
I can't wait to hear this one. Let's hear it.
There you go.
All right. No, I mean honestly, I'll take that answer.
Yeah. Well, so listen. So since nobody's answering it, right? There's going to be something for everybody, right? There's plenty of traders that trade well with or without order flow. You'll find guys on absolutely both sides of that fence. You can find them all over the place. So it's about finding what's best for you. I do think it's worth exploring, to a degree if you're trading futures, especially if you're trading the U.S. indices. But again, you might say, I got this locked in and it's working well for me, without this added piece. I'm going to kind of watch these guys from the outside for now. So not answering for everybody, but I'm giving you guys the out since you're all so quiet.
Is anyone up over $3,000? One person? Close? I'm up 1,500. That don't count, bro. That don't count. So Evan's one of the bigger P&Ls of the morning right now. So go ahead, Ev.
Yeah, so first off, it's 1,000 per account. I'm not risking 3,000 per account. It was actually 2 trades, so I scalped a short off of the New York view up in blue, just to the downside, because on the bottom in black, I don't want to fade the 15-minute overnight VWAP, because I think we could still want to be bullish, but with the NFP setting us so much higher pre-market, expecting some sort of pullback to where I'd want to buy it, which was that black overnight VWAP. So quickly, kind of similar to Tanner's, I did like it. I checked it out once he was in it. Of the same long idea off that overnight VWAP, just anchored to the changeover of day, back into the trend continuation, because that's just the trades that I do better, rather than trying to scalp it down against the trend, trying to find the next leg of the trend, which is back to the upside. But this is on ES. I like to just a little bit better on NQ because it was just sitting more sideways. See if I can pull that up.
Yeah, you can move it around. You can close that bottom panel if you want. Yeah, that looks really nice. Look at the double bottom on opening range low.
Yeah, so I'm scalping ES, but by the time I'm out of that one, seeing NQ hold up and not being able to pull back so much as ES was, I'm comfortable taking along once buyers step in above that blue VWAP, and I have a clear stop loss at the low of day, already out of my short on, like I said. So I don't normally flip-flop either both assets and both directions. Maybe it's just because I was here that I quickly scalped it to the bottom, saw that wasn't running, and quickly scalped it back up to the top, because that's the one I probably like better, because there's a clear bottom here. There's a clear direction on the 15-minute that I wanted to be long anyways. So this is more of the trend continuation. I could see this thing going on forever. Where to the downside, the most I would see it going is that overnight VWAP, which is what we did do.
Who would take this trade I have on screen? Based on the opening range already being set, you're risking 62 to make 35. Who's taking that trade? Yes. He took the trade. Yes. Yes. So now we'll get into this whole conversation about 1R not mattering as much. When you are playing a strategy, if you can get your stats to 65 plus win rate, that 1R starts to become less and less. Last year, my entire year win rate was 76%. At 76%, you mathematically do not need to make 1-to-1 on all your trades to still be profitable and take payouts. Lou's looking confused. Lou, why are you confused? Okay, good. Just making sure. Just you're resting confused face. It's okay. Who would take this trade? Looking at it now after what I just said, who would take it? Why? Sinead. Why would you take it? That answer. What I would say is like Evan's point. You see the dotted line, the overnight VWAP? You don't really want to fight that. You don't want to trade against that VWAP. So while I made some money short on these little scalps in the range, the bigger move, like Tanner was trading, is in this trend higher. So to take advantage of that and see that, you want to use that overnight VWAP and then use that New York VWAP. Once the buyers stepped in and higher lows are coming off that double bottom, yeah, the risk reward here is 0.6. But based on studying this and trading this and knowing how opening ranges work, if we're bullish, we're most likely to give me something more out of the top. And I'm probably going to close it when it slows at the top and then trail the stop and try to catch a little bit more. But moves just don't usually sustain and run all day. To our point of like, take what you get. Good.
Yeah, and I'd even say that more so for a counter trend. I was on ES for the shorts, but just imagine on a short, if I'm not near the blue VWAP shorting it and I jump in maybe a little bit late, since it is counter trend, there's not that much follow through, so it could be tougher for any of us to even scalp less than 1R if you don't get a perfect entry, perfect exit. But when I'm buying it on the break above the New York VWAP, buyers are back in, and the trend is bullish, you don't want to just jump in wherever. But if you are a little bit late or a couple candles late, you could still see money to the upside because it's more likely to run further that direction because that's at least in the direction of trend. Where with the shorts, they're sometimes short-lived, so your price really could make the difference on if you make money out of that or not.
What I would add to that is if you look at YM, which Tanner was in, right? You look at NQ, you look at ES. ES is kind of sitting in between because ES is how many stocks? Oh my God. Fucking say it louder. Thank you. Holy fuck. You really don't know that, people. That's really bad. Like, I need a minute. So, the reason ES is a little bit more in between what YM looks like and what NQ looks like is because there's 500 stocks in it. There's overlap. They're not all weighted the same, but there's overlap. NQ is all tech. So as tech trends higher, we'll pull on the ES. Can you go click the arrow twice down to go to YM? But look at YM because of these other stocks it has. Look at how different that looks. Tanner said he thought it was going to go higher again. Not so much because it has these other stocks in it that can act completely different. Maybe Caterpillar's earnings came out last night and they fucking suck. And YM's taking a dump. Do you know how much weight Caterpillar is in ES? 0.00 something. You get what I'm saying? Is this making sense? Questions about this? So then when you look at this, to Tanner's point, click through all three again. Now let's play hindsight. Remember, opening range shows 930. Which one of these three looks the best to trade today?
I like NQ just because it set a clear bottom at least around that New York VWAP where, like what Tanner was saying, and I would agree with all three being slightly divergent or just not completely running in tangent right at the open. I don't either really trade those days the best either because ideally, if we're trending higher across all three indices, yeah, we probably continue higher. But on the days where we're indecisive and NQ's pumping higher but ES is actually falling, first off, that's why ES is moving slow and I don't want to trade something that's not moving. But it's also making me wonder, well, which one will maybe ES end up following? Will it drop down with YM or will NQ carry that higher? I don't really want to have to guess or predict. So when they're all three running higher, makes it pretty simple to just say, okay, I'm probably going to want to see this come higher as well.
And who had earnings last night? Two of the biggest tech companies in the world. What were the reactions to the earnings overnight? Higher. So now market open comes in. We usually trend. What is the? Does anyone know Brian Shannon's like most famous thing? Trends most likely to that are established or most likely to continue. Trends most likely or trends once established are most likely to continue. I'll say it one more time because I'm like retarded. Said it funny. Trends that are established are most likely to continue. How many people try to call reversals once markets move higher? How many people want to short this? What did I just say? What is the trend? The trend is up. Trends once established are most likely to? There we go.
But it's too high.
But it's too high.
It is too high.
So we're going to get into TradeZella stuff here and a few markups that dive deeper into this VWAP. But I want you to see here, everybody, one thing that I like to do every morning is watch the Mag 7. Tanner should be watching the heaviest 7 or 10 stocks in the Dow every morning. Because if he's trading YM and 5 of the stocks that are weighted heavy are up and 5 are down, you think he's going to have clear trend? You think he's going to have good trades? Yes or no? No, probably not. That's indecisive. Versus you have good earnings on the 2 biggest tech companies. The market moved up pre-market. The market moved up overnight. Now the market's open. Where do you think we probably go on those tech companies and on that index that's weighing those tech companies heavier? Half of you were falling asleep already. Yeah. Exactly. That's it. And rotation happens very infrequently. And in fact, the heavy weighting that we see today is not unheard of, but it is recent. The last time it was weighted this heavy was basically the dot-com bubble, when you had 7 to 10 stocks basically dominating 40% of the index. Everybody, I'm going to pass the mic to Tanner. He's got a very special presentation for us. So, one more time, give it up for the strong trader, everybody.
Thank you, thank you. So for those of you that don't know me, my name is Tanner Owings, aka the Strong Trader. And I want to say first and foremost, thank you all for coming, because in-person trading events are so unique. I go to a special one every year called Traders for a Cause. It's one of my favorite ones. And the ability to network and talk to people in person is something a lot of us don't get, like ever. So I'm telling you right now, if you leave this weekend and you don't have like phone numbers, Instagrams, you've made friends, you've tried to talk to everyone, you're fucking up. Because like that is the whole point of this as well. Obviously we're trying to learn stuff, but the ability to network, your network is your net worth, right? It's like, it's important. So make sure you're doing that, put yourself out there because it's worth it. So let's get into it. The commitment to consistency in your process will determine your progress. I know that's a mouthful, but there's a reason for it. So first, disclaimer, trading is hard. If you didn't already know, trading is really hard. Like for real, this shit is hard, okay? Don't let anyone ever tell you otherwise, because trading is hard. It's always difficult. It does get easier over time because you have more of understanding, but it's still hard. You want to make doctor or lawyer money, and I say that because obviously, you know, we have the ability to make 200 grand, 500 grand, $1 million, even more than that with time. But the big thing is the learning curve. And a lot of people seem to forget that doctors and lawyers go through shit tons of schooling before they start operating, before they actually start working and doing the thing. Traders have no barrier to entry. You literally open a brokerage account, open a prop firm, and you go. And so you have to lose money in order to figure it out. And that is like what it actually takes. So as a reminder, like I said, it's hard. And don't forget that. So who am I? My background. So we're actually just going to talk about squat, bench, and deadlifts this entire seminar. I'm going to teach you the mechanics behind it. No, I'm just kidding. So I'm a competitive powerlifter. For those of you that don't know, powerlifting is the sport of squat, bench, and deadlift. You total your 1 rep max between all 3 lifts, and you go against other people in your weight class. I lift heavy shit all the time. It's what I like to do. I don't know why. It's what I've chosen to do. I've been lifting for over a decade, about 14 years actually consecutively. I've never taken more than a 2-week break. That is my flex. But it is just part of who I am. It's what I do. It's ingrained in who I am. I've been competing in the sport of powerlifting for over 8 years. So I've done I think 14 competitions now. I have done a national ranked one. I unfortunately am just still not one of the GOATs, but it is something I love, and I always come back to it because it is a way for me to push all of my work that I've put in and kind of see what I get out of it. So I've been trading full time for over 5 years, specifically trading options in the beginning of my career, recently moving over to futures in the back half of it. And my whole goal is to connect the understanding of process. I've learned a lot of process from lifting because me getting strong has not happened by thinking, oh, I need to deadlift 700 pounds. I need to squat 600. It's then like, okay, what's the day-to-day work required? Oh, the outcome is I'm getting stronger. Let's start to kind of test this and push it. So my whole philosophy behind the brand Strong Trading is the process, understanding process and how to kind of bring all these processes I've learned from gaining strength and muscle over to the trading side of things. So, got to put up the stats, right? A lot of foogers out there. I have definitely made well over 6 figures trading in over 5 years. Tons of payouts. One of my best ones, Tradeify, $15,000. You know, this is from my options account, a little over $130,000. Top set payouts, Tick Trader, they're trash, don't use them. Take Profit, still need to get a top 1 payout, it's coming soon. These are majority prop firm profits. On TradeZella, I switched over to TradeZella about last year. It's a better journaling software. And I'm gonna get into journaling and kind of going over all that stuff, but these are some of my stats. So I do own a brand called Strong Trading. We do focus on one-on-one coaching. Shout out Lawrence in the room. He is also a coach. I've coached over about 100 traders now, I'd say. And some great success stories, honestly. One thing I do love about one-on-one coaching, and it's really funny because people always ask, they're like, why do you coach if you're trading? I'm like, well, who else is gonna teach you shit, right? And I come from the fitness background, personal training background, so it's like, I know it feels good to help people get in shape, feel better about themselves, so it also feels really good to help people make money. Like this, it feels good to do it, honestly it does, and it's rewarding. Last week I had one of my clients, Vale, she's a single mom, works at Starbucks, and she just took her first payout with Top 1, $5 grand. And yes, incredible, shout out Vale. And to hear that, like she literally messaged me and was like, I'm crying, I can't believe it. Like, oh my gosh, like that's like how much she makes in like a whole month at Starbucks, right? And like she's been grinding at trading and like pushing it for years and like finally starting to see her like come out the other side. That feels really rewarding for me and then obviously for them as well. So these are just some examples of some student success stories. You know, you can see a bunch of payouts here. This one's from Brian right here, 1,300. Brian's in the room too. Brian's a man. Woo! So really cool there. One of my biggest flexes now. Some of you probably heard the Minbeer story. He recently just took a $2.4 million payout with Apex. And it's so funny because I got all these people asking, oh, you know, what's the magic thing? I didn't teach him anything magic. He just literally finally got disciplined from the processes that we teach. And that is really, again, what I want to talk about on this presentation is the process, understanding that. But shit's possible, guys. Like, this is possible. This is someone who like lost a bunch of money trying to learn how to trade and just stayed consistent. And finally, you know, it paid him big. So pretty cool there. So there's me lifting some weights. Let's talk about it. Process, progress, consistency. So I know I have some muscle now, but I actually used to be really skinny. I was 135 pounds before I started lifting weights. I'm 235 now, so I've gained 100 pounds for reference. So, and I didn't do that, you know, just in a little bit of time. Like, it's been over a decade since I've like gained all that muscle and strength, but I've been consistent, right? Like, I didn't go from deadlifting 300 pounds to 700 pounds overnight, like, and I was never fixated on that specific number. It just like over and over, I was just like lift, sleep, eat, keep doing the thing, and then eventually it all comes together. So I've accomplished this through 2 main areas: process and consistency. So let's get into it, the process. So first let's ask, what is the word process, right? Like, what is this concept? It's really important. I actually have it tatted on my wrist. Can't see it, but it's there. But process is the idea that we're following basically a series of calculated steps in order to achieve a desired outcome. But we're not focused on the outcome. We're focused on the steps it takes to get there. And as a competitive lifter, I've always run programs. So basically, when it comes to gaining strength, you go through these things called like macro cycles. And in these cycles, you end up going through blocks of training. And your training is gonna be set up in this like format where you have like a certain amount of sets and reps prescribed to you, and you just follow the work day to day. You have a process of doing it. So I have days where I'm like, oh, maybe I feel so good. I want to lift as heavy as I can. But I can't because my program tells me to hit 4x4 80% of my 1 rep max that day, and that's what I have to do. So it's like, I know from trusting this over time, though, I eventually get to where I need to be. So this idea of like, kind of just like, fuck what you're feeling, follow the process, like that is what is ingrained in me, and that is how I understand this concept of process. So, like I said, even though I'm not pushing to hit that 1 rep max, I know the process of following my prescribed program over a 12-week period of time will lead to this desired outcome of getting stronger overall. So I've gone through this so many times, right? Like I said, I've been competing for 9 years. I've done over 13, 14 powerlifting competitions. There's so many times when I'm getting really close to my meet and it's peak week or it's a week before and I'm like, oh, I feel like shit. I don't know if I can do it. I don't know if I can do it. And one of my first coaches told me, he's like, you just have to trust this process, that it's all gonna come together. And still to this day, I'll get close to my meet and I'm like, I'm so weak. It's not gonna work, I'm gonna have a shitty meet. And then all of a sudden, I trust the process, I reduce fatigue, I feel better, I go into the meet, energy's there, everything, boom, I perform. It feels good. So I've just gone through this so many times that I understand following the series of calculated steps eventually leads to this outcome that you do desire, right? So what does this mean for traders, right? You're like, all right, I'm not talking about the weights, bro. Like, we're here for trading. What does process mean for traders? So traders were often so fixated on our P&Ls, right? Oh, I need to make this much money. I need to do this. I need to do that. We're so fixated on these P&Ls that we act on emotions most of the time, right? Instead of like, what's the process of what I should do, right? What's this scenario? What do I do in this type of scenario? Like, we are so fixated on the emotions to chase this magic number on the screen. And while it's hard, because we do have this big scoreboard, right? We have this huge scoreboard kind of telling us, this is how you're doing, this is how you're performing. But when we start to look at processes and put processes in place, we can actually start to break it down and try to figure out how to respond in these types of scenarios and situations. So, example, I took 3 losing trades in a row. I'm really close to my max daily loss. I'm emotionally frustrated. Who's been there? How many of you have taken multiple trades in a row? You're really frustrated. You're like, oh, fuck, I just want the money back, dude. And you get there and you're so frustrated because you're just focused on those emotions. And so all the logic goes out the window. And then I guarantee you hit your max loss or whatever, and then later in the day, you're driving or something, and then you're probably yelling at yourself, like, you're an idiot. Why can't you just stop? Like, it just makes so much sense. Just stop. It's like we all run on like adrenaline and fight or flight, and it's always the same fucking story every time. When you're in your logical state of mind, you go, I should have done X, Y, Z. Yeah, of course, I'm gonna do that. I'm gonna do that next time. I'm gonna do that next time, for sure. But it's like in the moment, it is really hard because emotions take over. And that's what happens when we're so fixated on those and focusing on them. So this business is a probability-based game. I love this. Lawrence always talks about this. He goes, it's all probabilities, bro. It's all probabilities. And it is, right? Hit rate, win rate, like R multiple, all that type of stuff. It's all based on statistics because newsflash, you're gonna lose a lot, all the time, and it sucks. But it's part of the process. Like you have to understand, taking losses is just what we do. It's what happens. So process is what can protect us and allow us to stay in the game for a longer period of time. So, process-oriented trading, right? What is process-oriented trading? Having guardrails is the first thing. And this is why I brought this up in the beginning, right? The lockout feature. Having guardrails to protect yourself. Funny story, when I traded options, I used to trade on Thinkorswim, and I also had a TradeStation account. I went through so many different brokers trying to figure out which one I liked. And I remember I had a max loss in the day. I was like, okay, my max loss then was $300. So I only can lose $300 a day. That's the max loss. You know how many times I broke that? You know how many times, my second year, I remember I added up every single day that I went past a $300 loss. And who can guess how much money I would have saved if I just respected that one rule? Guess, throw out a number. More. It was $50,000 in my second year of trading. I was like, holy shit, this statistic of this one thing would have made me extra 50 grand by just respecting this one rule. So I remember calling all the brokers. I called Thinkorswim. You know, I'm calling TradeStation. I'm like, can you guys put like a lock on my account to stop me if I hit this? Because I'm just a fiend, like going after it. And they're like, nah, we can't. And I'm like, all right, cool. I'm just gonna go blow another 5K like in a day. So the beauty is a lot of us now in the prop space, you know, trading futures, we are so lucky to have something like this because this is literally the answer most of the time to your ego, to your greed, to everything. The lockout feature. And this is a process where like simply all you can do in the beginning of the session, set the lockout on your risk settings. So I don't know if you guys are aware of this, but you can literally lock out the actual risk settings itself in Project X, in like top one. So you go to the risk settings and you can lock it out for the day. So let's say you have like a $1,000 loss in the day. So you can click liquidate and block. And then also at the very bottom, it says lock out risk settings. You click that and the risk settings are locked out. So if you're down 900 and then all of a sudden you're like, oh shit, I'm $100 away from a max loss. And you're like, I'm gonna change it to 1,200, right? I'm gonna change it to 1,500, you know? Okay, 2K, that's it. 2,500, no more, right? Boom, 3,750, you were fucking done. And you all know it, you've all been there, right? So this is a process where like literally in the morning, you could set this lock on your risk settings to fully protect you. And when it comes, guess what? Yeah, you go, shit. But you just screwed up for that specific little instance, that's it. And then when you're back in your logical state of mind later, you go, damn, I'm really happy I only lost $1,000 today. Like that could have been really bad. And now you have, you know, if it's a fresh account or something, you got 5 more chances, bro. You're good. Like it's like, so that is one thing of process that we can do is create guardrails, right? Set those types of boundaries. So it's not just about protecting the downside though, right? Another potential process is like, how are we creating profits, right? How are we scaling out of trades? So process-oriented trading means maximizing winners, cutting losers. Example, your trade runs into target 1. You sell everything there, and this is gonna be contrary to actually to what Austin kind of talked about earlier, but the beauty of trading is everyone has different styles. You sell everything at target 1, but then it continues to run 3 times your target, right? This is literally actually today's chart. I just threw this in here. I needed to add one more slide in, so I was like, perfect. So long here, like let's say I covered everything into there. I didn't actually trail it this perfectly or do it exactly like this, but this is the idea of if you took it all off here, you know, you lost out on another 100 points of the move. But if you cover some here, cover some here, cover some here, you're maximizing more of the gain. So you have a process and a system to do that. And you can go about this by like trailing your stop, right? A simple way to do it, a lot of people do on momentum-based play, is just the prior low of the previous bar. So like let's say you are long from here, any bar low that isn't taken out technically wouldn't take you out until right here, right? Because this breaks this previous bar low. So that is one way to potentially maximize more profits, is to create a system and a process-based system of taking profits. And you could do this a bunch of different ways too. I've heard of like 50, 30, 20 is actually a really good one. Take 50% off into target 1, 30% off into target 2, 20% potentially to run and trail, whatever you want to do. But that is another process-based way to maximize those gains. And like I said, it's not just about protecting the downside, also trying to like maximize the winners. So as traders, like I said, we need to have a system of what to do when things are working and a system of what to do when things aren't. So be wrong quick. You know, that's why I showed you guys earlier. Like I take those quick little losses and I have a lower hit rate, but I will have a high R multiple because I will let them work when they actually work. So the more you can create processes behind like how you enter, how you exit, how you scale, all that type of stuff, this takes time for sure, and it takes figuring out what works with your psychology as well. And it's like, it's not a one size fits all. And it's so, this is why I do love trading so much, is because it's so unique for everyone. You have to figure out what works for you. Don't let anyone ever tell you like it has to be like this, it has to be like that. One thing I got from the powerlifting side of things is the concept of like squatting or bench pressing or deadlifting. Ironically, whatever you've been told, there is no perfect way to squat, perfect way to deadlift, perfect way to bench press. It's all based on how you're built, your anatomy, your leverages, your weight, like so many different variables. So it's like someone that breaks with their knees initially on the squat, another person can break with their hips, and they're like much stronger in that position, but that works for them. So that's why too, I like to tell everyone, like trading is something for you to figure out what works. Find mentors, find people that like influence you in a good way, that create good systems where you're like, oh, okay, this kind of makes sense. I'm gonna keep trying this and do that. But creating these types of processes take time, but you have to create them because that's gonna kind of systematize it and make it more of a business and you'll understand it more. So another thing, like we're all prone to, this is my account, by the way, no, I'm just kidding. So is process focus versus P&L focus. So traders were often victims of looking at how we make progress simply just by our profit and loss, right? It's the giant scoreboard, I get it. And you're like, oh shit, I'm down X amount of money, like this is awful, like whatever it is. But when it comes to big picture, being process oriented, we need to be able to understand that we can measure progress through like tons of different ways besides just looking at P&L. And I know that seems hard and like it doesn't really fully make sense, but a great example is maybe you have one bad, okay, here's a good example. You have one bad habit of always trading the open. You're a gunslinger, right? At 9:30, 15 full-size NQ contracts off the rip, right? You're a gunslinger off the rip, but you've noticed through your data that you're like, oh, dude, if I would just wait 20 minutes, 30 minutes for like the opening range to set, I would avoid all these garbage trades. So let's say you make it a goal to not trade the first 5 minutes for the week. And let's say you hit that goal, but let's say you still had like multiple red days in a row, and on that last day you're nice and green. Overall, even though you might be slightly red on the week, you're making progress towards building better processes, towards building better habits, because you have identified something in your trading that is not suiting you or hurting you, mainly hurting you. And you are taking a process-oriented approach in order to change that and fix it. So the more we can kind of recognize these things and implement these types of systems, that is how we actually are making progress. And then eventually, like I said, the outcome will follow, the P&L will follow. It just takes time. And one thing I have wholeheartedly believe is literally you can do anything you want in this world if you don't fucking quit. Like literally if you just don't quit. Like it just takes time, guys. Like trading is, whether you guys realize it or not too, you're all entrepreneurs. Trading is an entrepreneurial endeavor and entrepreneurs eat shit. We fail, like we lose, like it's part of what it is. So, but if you don't quit and you keep going, like I promise you, it's like, I always say this, it's never a matter of if, it's just a matter of when. So I kind of talked about this already, but like the idea of like, you have 3 red trades in a week, they're all small, maybe they stay within your guardrails, what you had, but then on like those last 2 days, they're big green, right? They make up for all those losses. That's why too, like when you see people with like, oh, I've had so many red days this month, but they're green overall, or like they actually, solid green month, that's fine. It just depends how you stomach it personally. Like you can have, like I said, 30% win rate, 40% win rate, but I know a great trader, Carmine Rosado, I don't know if any of you guys seen him, I think it's Investor Trade or something like that. He posts months like this sometimes where he's literally like 35% hit rate, but then the dude drops 90K in a month. And I'm like, okay. So it makes up for it because he understands overall, if he's following his process, like he will be green overall. So again, focusing on the process of like, okay, I would, the max loss is another good example. Hit my max loss, damn it. Hit my max loss, damn it. Hit my max loss, damn it. Next 2 days, really fat green, and then you're green on the week. So it's like, yeah, it's frustrating to stomach that, but it's better than blown account, damn it, reset, blown account, 2 blown accounts. Okay, here we go. That's what it's about, is understanding that like we need to measure progress in this different way. So trader not focused on process may try to force a green day on any of those small red days, and you actually end up causing it like a 3 times bigger loss than it actually should be. So perspective matters, right? We need to remember that the market can reward us for bad behavior. And this is like the worst thing, the worst thing. Because you guys all know it, you've been there. You go, okay, I'm not going to take any more trades, I'm done. And then the little demon in you comes on the side and he goes, take one more, do it, take one more. And you take one more, and then you just rip a fat green day, and you're like, see, told you. But then that happens again later, and you're fucked. because it's like it doesn't work over and over again. Eventually, you will have a time where you get hit and it doesn't work. So just because we climb into that sticky situation once or twice does not mean it's the right thing to do in the long run. Building habits, like we internalize these things. We internalize justifying with ourselves why this is okay or not. And the more you get used to being like, hey, it worked last time, I could do it again, I promise you there will be times where you blow up and it hurts a lot. So we need to start measuring, making progress at how well we are respecting our process and keep the big picture in mind. So a big, big part of trading and getting better is confidence. Confidence, right? How many of you have taken a trade where you're like, it's planned out, you see it, you execute, it fucking whips perfectly, it does exactly what you want it to do? How many of you have done that? Good. So that feels good, right? It's like empowering. You're like, oh shit, I got it. I can do it. And so when you follow process, you remain in control. And being able to be in control, I can't tell you now especially, I'm almost 6 years into this. And my one and done days where I take one trade and I'm done, I'm like, oh, this is the best day ever. Like, let's go. I don't have to sit here. And so that's why when I was sitting in the back kind of watching a bunch of you, I was like, you guys are just all getting after it right now, okay? I get it, it's exciting. Like, you want to take trades and stuff like that, but like the one and done mentality, building confidence is huge as traders. Confidence leads to conviction in our trading. And the more conviction you have in your trading, the more, just more confident you are, the more money you're gonna make overall. So this lets us build into the traders we want to be and we need to be. So how do you build consistency, right? Probably a great, great topic to talk about. So it's in the day-to-day work. And this is literally what we teach at Strong Trading is the day-to-day work. And it is incredible how many traders are so lazy and just don't do enough. They don't want to journal, they don't want to review, they don't want to do pre-market prep. And I believe there's 3 things that you have to do pretty much just every day. I do this every single day. I'm not perfect also. I have days where sometimes I won't do it here and there. But I'd say 90% of my entire trading career so far, I've done pretty much these 3 things all the time, and they have led to that confidence, to that consistency. First one's pre-market prep. So if you're not sitting there making game plans before the open, you're throwing a dart at the wall and seeing if it sticks. It's like, what's a scenario, right? Create if-then scenarios. If the market does this, then I'm gonna do that. If NQ rips through 20,000, then I'm gonna look for longs into 20,100, right? So creating game plans before the open in those types of scenarios for the trading day helps us build these plans to be okay, I followed it, right? I know what I'm looking for. And there's times you're gonna write out a plan, the market just does completely the opposite. And you sometimes do have to kind of go on the fly and be okay, how do I call my audible here, right? How do I make changes? So I'm not gonna read all this, but this is an actual example from one of my pre-market plans. And one of the things is you could see there's, right, if then scenarios, if right here, if somewhere then, but basically if then, it's that's what we're looking for overall. The day-to-day work. First thing is pre-market planning. Second thing, it is incredible how many people don't journal. It's insane. What grinds my gears so much, people are oh yeah, I journal. I'm okay, can you show me an example of your journal? Yeah, I got long here and then I closed it here and I was kind of upset. What the fuck did you learn from that? What does it teach? You don't know anything about what you're actually doing. You're just word vomiting on paper. So there is a method to the madness when it comes to journaling, I believe in personally. I believe there's journaling for individual trades, which is the way to actually break down what's the setup, right? It's a pullback to VWAP setup, okay? How did it look? Well, we pulled back into VWAP after 10 a.m., had a nice signal bar, we bounced, I got long, I set my stop right below the signal bar, I aimed for a retest of the highs. That's an individual trade review because that's a specific trade you're taking. Maybe it's a daily support buy setup and you're okay, I bought support on the daily and I'm looking to target the recent highs, something like that. So individual trade review is the first thing. Second thing is for those psychological components. So it is important to talk about what happened during that day, right? Because a lot of traders, we carry a lot of baggage. We have my shit going on in our life and maybe you're breaking things down. You're I just didn't perform well today. Why? What happened? Well, my girlfriend broke up with me yesterday And it's like my head's all heavy because of it. Oh, well, there you go. That's why, right? My house caught on fire yesterday. So it's like, it's a crazy example. But the idea of psychological components, there is reasons that like life impacts us and like we do certain things and make choices and decisions. And when we don't take time to review and look at like, why did this happen? Was I in an altered state of mind? We could see that like our setups are actually there, but we're just not performing because we have other shit and baggage kind of going on that's making it heavy in our lives. So psychological components is the second part of journaling. Finally, this last one, this is the sauce for you, okay? If you leave with anything from this whole conversation, it's this. Documenting the easy money trade setup of the day. So what you're gonna do is I think Austin calls it chart markups. You're basically gonna take a chart. I didn't take this trade specifically, but at the end of the day, I rip through the charts and I look and I'm like, what was the easiest money setup for my trading system, setup, strategy, process, whatever it is, that makes sense to me that I can mark up here, right? I'm not looking at small caps and being like, oh yeah, that one went to the moon, I should have got that. It's like, I don't trade that. It's like, what do you trade, what makes sense? I trade a lot of pullback to VWAPs, like I said. So here, this is a great example. This was an easy money setup for me on this day. VWAP is this purple line, we get a retest of it, we get a rejection, we have a nice signal bar here, a bearish engulfing bar. News pushes us into VWAP, we reject, I get a clean area to get short. I get short right here. My stop is right here above the highs. Very, very clear. As we kind of ride down into target one, I'm covering most, and then I would probably trail accordingly depending on the setup and whatever it is. But to my eyes, when I'm going back in the charts that day, I'm looking at what was the easy money setup for my system, right? Because you should have a bread and butter setup that you're looking for almost every day. And for me, this is it. So I literally go through the charts, I rip through it, I annotate up, what is it, what am I looking for? And I do that. And honestly, the way I finally got decent at trading futures was I did this exercise every single day for an entire year. Literally, I have a log of it. It's an entire year, and it's just like ripped of it. I've showed some people it, and they're like, holy, I remember I first showed Lawrence it, and he was like, holy shit, dude, this is like, it's like, this is what it is? I'm like, this is what it is. And so then Lawrence started doing it, and Lawrence started ripping it, like Lawrence crushes it. So this exercise is so, so beneficial. I know some people want to be like, oh, this is hindsight. But the thing is, it's like a form of backtesting because once you come to this in the moment, you're going to see this shit get tested and you're going to be like, okay, cool. Like, this is what I'm looking for. Let's see if it reacts right. Okay, cool. I have a signal bar. And you take the trade and guess what? If this doesn't work, it's not a bad trade. It is my setup because sometimes it's just not going to work. It just sometimes won't. But when I see this, I'm going to take this every damn time because I know based on me documenting and doing this stuff that it works for me and my system. So easy money trade setup of the day, great exercise, do it. Finally, the daily report card. So this is a really unique tool because it depends on, there's so many versions of it out there. I have a version that kind of walks you through your entire day. I tell my traders like, oh, it's gonna hold your hand through the trading day. You're gonna have like a pre-market section, you're gonna have an intraday section, you're gonna have after the close reflection section. And the idea behind this is all focused on habits, right? What habits are you trying to focus on? For me, it's like respect the daily loss limit, stay in control, trade your edge, walk away if it's hit, no trades till this time, 3 trades per day, only trading my specific setups, pull back to VWAP, a key level or near-term volume point of control. Trade location, right? Where is the risk? Kind of like I showed you guys earlier today. Where is my risk, right? Trade location. I'm not trying to enter the skyscraper and be like, okay, my stop is, -3R. Let's see if it goes higher. It's like, where is it? So intraday, I love doing this part of it because basically I'm checking in with myself. I'm trying to see like, how am I feeling, right? What's going on? I have alarms go off where I'm like, okay, how am I feeling after the open? And these are so many scenarios we run through, right? Maybe you saw your setup at the open and it ripped. And you're like, oh, I got FOMO, right? Maybe I would write here, FOMO, saw my setup go, wasn't involved. But the idea is that's me being objective and being like, okay, I just saw my setup go, I have FOMO, I don't want to do something stupid. So I'm checking in with myself and doing actions like this. So again, I'm focusing on just habits right here. Like this is all about my habits and going through it. I'll write little comments and stuff over here. This is like how many trades I'm taking, whatever. Then after the close reflection. So these are kind of goes back to like the psychological components of journaling. But I'm asking myself, like, what did I learn today, right? What did I improve upon? In this example specifically, I talked about I was kind of building out a better pre-market prep, like a routine. I just moved in my new apartment, and I like kind of didn't have like a good routine going on. And I built a new one, and I was like, wow, this pre-market prep makes a world of the difference in how I perform. Getting a step-by-step process dials me in. I feel like I'm ready to take on the market and trade the setup as it comes to me. I truly improved today focusing on my process and seeing so much value in doing this step by step. It's gonna take discipline and not to be lazy with it in order to see consistent results, but this has me in a good headspace for sure. So I'm reflecting upon the day, I'm reflecting upon my actions, I'm reflecting upon the things that I have put into place, my systems, in order to perform in the market. So I'll like talk about changes and whatnot and everything, but that's the idea is like, I'm doing this after the close reflection as well. So that is the day-to-day work I personally do. If you're not doing at least like one of these things, you guys got to do it. Because again, I've talked to so many traders that they're like, I don't journal, I don't record my habits. Like I just open the charts and just get after it. I'm like, okay, well, your learning curve is going to be 10 plus years, bro. Like honestly, it's going to take that long. So it's like, this work is so, it feels tedious, but eventually it gets in the routine where it's not. And just, I promise you, it will make you a better trader. So that is the process overall of what I do. Do we have time for questions? Questions or anything? Questions? Cam. Good question. I think it depends. So a big part is obviously market cycles because we go through so many different market cycles and markets change and whatnot. So you got to evaluate like, is my setup not working or is the market just not respecting it well enough? Do I need to look at things differently? So it's not really a set amount of time because what I've noticed is once you build a good habit, it takes consistent work to still keep that habit, right? It's like until eventually it starts to become ingrained in you and it's almost like a non-negotiable. Great example is I used to be the king of averaging down. Oh my God, so many times I'm like, okay, well, it's down a little bit. Let me add here, and now my average is here. No, I'm good. I literally haven't averaged down, I think, in over 2 years. Because I've just gotten screwed so many times doing it that like it didn't serve me, it didn't serve me, it didn't serve me, and then eventually it became ingrained in who I am where I'm like, I just don't average down. It's stupid. I'll just take the small loss and just look for a better entry. So it's not really a set amount of time. I'd say you still have to experiment with that and kind of find what works, but it's about like keeping that goal. Like it is one thing though. Focus on one thing, because when you try to do too many things process-wise, that's when it's really hard to stick to stuff. You need to focus on one thing and hammer it. Good question. Yeah, good question. Yeah, so everyone is unique and it's personalized because everyone does have unique things that they deal with, but you'd be surprised at how many people deal with the same shit, dude. So many of all of us do the same stupid things in trading, but some people do have certain areas dialed in another. Great example, Brian's in the room, one of my clients. He is the most disciplined client I have. He will take one trade a day, rarely will go for two, but like I can count on him 95% of the time to always take one trade and be like, that was it, move on to tomorrow. So that's ingrained in him, right? Versus I've had some other traders that are like, dude, I can't stop taking 27 trades a day. And I'm like, okay, well, let's move down to 6, Okay, let's move down to 5,
But couldn't you say, Tanner, that they're both issues, under trading and over trading? So when you look at that from a coaching perspective, you might have to coach somebody from either side of it.
Correct. Yeah, exactly. But I would never tell Brian to take more trades because that's what's working for him.
Exactly.
It's just like the concept of a lot of people do experience the same things, but some people just have things more amplified than the others.
On that question too, we used to track trading mistakes in the Black Shirt Club, and we only had 15. and you would have to fill out in your daily report card of these 15 mistakes, which ones did you make today? I entered too early, I exited too early, I entered too late, I exited too, like you can break it down, and usually it was one of those 15 or two. It was never like you had to have a write-in. So to answer your question, I think most people, we've talked about this, they make the same 5, 10, 15 mistakes.
Can I add one thing on that?
Yeah.
What is something that you've learned from coaching that maybe someone else has kind of revealed to you that you've applied to your own trading? Like, what's the biggest thing? Is there something that someone did or someone made a huge breakthrough and it made click for you too?
Good question.
Great question.
Really good question. Yeah, so he said basically like, what is one thing that I've learned from people that I have coached that I've actually taken away to apply to my own trading that has helped me? So I would say just the concept of, patience. Just, I know it's such like the concept of patience at the open, at least for me, because I now am very specific what types of setups I want to take at the open. And one thing actually in this daily report card section is changes I need to make going forward / work on from today's session. I kid you not, when you start doing this exercise, you write the same fucking thing every day. And you're like, oh, okay, well, okay, that's what I'm gonna work on tomorrow, you know, and then you do it again, then you do it again, then you do it again. And then all of a sudden you look and you're like, I have 17 days of me trading the first 5 minutes. What's the problem with my trading? Right there, right? So I would say just like, I learned a bunch of different things from everyone. And that is also the kind of the cool part of coaching is it's like symbiotic in that way where I'm like, oh, cool, I've learned from this or learned from that. But really seeing how many people are just eager to take trades without like being able to sit there and just be like a monk and wait. That's probably the biggest takeaway I've gotten because I just see how many people get hurt doing it. So I'm like, and I'm not like a mellow person. Like if you guys can't tell, I'm full of pre-workout and energy all the time. So it's like, I'm a gunslinger naturally, dude. Like at the open comms, I'm like, let's go, 15 full.
I've been waiting 6 hours for this bitch.
I've been waiting. I've been up since London, So yeah, but good question.
Great question. We're gonna hold off on the rest of the questions because we're gonna move into the panel. The panel will do a lot of open Q&A. Cool? Yeah. Any other questions specific to Tanner himself? All right, cool. Give him a round of applause, everybody. Crushed it. Great job, buddy. Absolutely.
Well, what happens as you start getting to the end of your shift, right? If you're a construction worker or a chef or a housekeeper or anything, especially if it's labor intensive, you start to fatigue. You get more and more tired and your performance starts to dwindle, right? I think that's why they only let us work on average 8 hours because then we're just garbage after that, right? People in my Discord would tell me all the time, they're like, your system is so robust, it's so profitable, it's highly profitable, it's so low risk. Why don't you just take every single setup all day, every day? It won't work out for you. Like by the end of the day, you'll start to fatigue. You won't be as sharp. You won't be as quick with your decision making. So like for me, it's just like again, get in there, go in for the kill, and then just walk out with your game, right? Like whatever you killed.
We will say something that someone we won't say their name used to say: trade for tomorrow.
Trade for tomorrow.
We don't need to say who came up with that quote, but trade for tomorrow. Cool. All right, everybody. Cool. Focus. 2 sessions left to finish the day. Give the man a round of applause. Let's get into it.
All right. Thank you. Again, Isaac Rivera, OnlyFunds, Big Tick Energy. Don't let the title slide scare you. Mean reversion and quantitative deviations. Sounds heavy because it is. No, I'm just kidding. I know you guys had lunch already. Ooh, feedback. Soda, snacks, whatever. I'm going to try to keep this as light and short and sweet as possible, like my trading and the women that I like. Short and sweet and a little spicy. So let's see how this works. Obviously, I don't think I saw anybody else put up disclaimers today. Disclaimers, all right? Everything I'm gonna tell you is complete BS. Don't listen to it, don't follow it, it won't work out for you. Just kidding. Trade responsibly, right? And of course, do your own research, but I challenge you to test these. Full disclosure, you're getting everything that somebody would pay me to receive because you paid to be here. I'm like not pulling any punches. You guys are getting the whole shebang, every last inch. All right, so what are we covering? Reversion, deviation, quantitative extreme, and overextension. Reversion and deviation from what? This is gonna be interactive. From what? The mean. Oh my God, love you guys. All right, so, but before we get into that, who am I? Son and brother, born to Puerto Rican parents, originally from New Jersey, currently living in sunny Sarasota. I'm into travel, motorsports, other sports like tennis, big into music, all forms of art. I dabble in fitness and fashion, love to wine and dine, and everybody who knows me knows that I love a good cigar. Am I holding one in that picture? Yeah, probably. Went to Valencia College in Central Florida, and I got degrees in finance, business, and organizational leadership. So you guys can kind of see how this kind of came full circle, right? I'm good with money, right? I'm good with business, and I'm good at putting together really, really kick-ass teams. And then, so this is a little bit about how I got into trading. I was introduced to futures by fluke. You can get a lot more detail about that story in my masterclass in the Discord. April 4th, 2015. So literally a year and 1 month today. Oh, sorry, 10 years and 1 month today. And then, so obviously that came with mentorship, development, and testing, back testing, forward testing. The way that I got introduced was I met somebody who was a quant fund manager for close to a decade, and before he became that, he was actually mentored and trained under a previous hedge fund manager and trader who is currently on the Forbes billionaire list. Nothing crazy, only 2 billion, but he's on the list, I'm not. So I got funded with my first prop firm in October of 2016. I'm still actually funded with this exact same prop firm. Obviously not the same account, because when Trump got elected, do the math, guys, a month later I lost my first live account, the day after Trump was elected, okay? So it's not all been sunshine and rainbows. And I went from this to where I'm at right now on stage today, doing full-time college while also working 2 full-time jobs. I went through an entire process of working retail, then lower level management, middle level, upper level, then got into banking, then higher level finance. Now I work for myself. And like Austin, I think, was mentioning earlier, I'm a part-time trader. I am. I try to spend as little time per day, per week, per month, per year trading, okay? That way I can go work on the things that I love to work on and also work on nothing, right? Because I also like to play hard. So who am I? OnlyFunds is the name of my business and my company. Big Tick Energy is something that falls underneath OnlyFunds. So what is it? Financial and business consulting, right? We deal in cost savings and recovery, tax credits for business, fundraising, settlements, mergers and acquisitions, the works. Also, I have an affiliate sales and referral partner network. So we got about 1,800 people in the Discord. The bulk of them, I would say probably close to 45% of them are in there for Big Tick Energy. And everybody else is in there for other OnlyFunds opportunities. Everything from health and wellness, peptides, research and development, e-commerce, so on and so forth. But Big Tick Energy, which is probably what's going to resonate with you guys most, is obviously a trading community where we deal with coaching, education, live streaming, etc. So, and shout out to the BTE people that are here at the event today. And this is what the Discord's grown to. Also, 1 year and 1 month today. It was April 1st of last year that I started the Discord, and from that it has grown to this. So you can kind of see everything built in there. There's a 21 chapter masterclass. This is everybody kind of throwing up their P&Ls from, what was that, yesterday? Yeah, yesterday. So fortunately, while I was back there, I was updating the slides, so most of the stuff in here is super current. I'm lying, I did this today. All right, and oh look, you guys might recognize this guy, right? $10,000 a month, slightly below average. 10,000 in monthly prop firm payouts consistently, regardless of how I perform in the markets, because I built a big enough buffer and cushion to be able to do so, right? So can't expect consistency if you're not consistent. There's proof of a payout, and then there's some payouts from some students. You can see some of these are pretty fresh. Look at this. Pay attention to this. Is February 26, 2025 at 11:30 in the morning. He's like, I've taken 20,000 in payouts this year, not in 12 months. That was in 2 months, exactly 2 months, which is what? In line with what I do. Right? 10,000 times 2 is 20,000, 2 months, 20,000. And it's all because when I enter a trade now, I have relaxed emotional state because of the rules Isaac has implemented. And then somebody already on one of the newer prop firms taking payouts as well. So there we go. And before you can get to that, right, you got to start somewhere. And so this is actually a screenshot from when Top Step was actually Top Step Trader, not just Top Step. Still been in Sarasota for a long time, obviously, but focus on this. My goal at the time was to match or exceed, right, my annual professional salary through trading. I just wanted to just match it, right? Not necessarily even to double my income, so I could just walk away from that, right? I wanted to replace this with trading. And then it goes into all this other stuff. But you go from something like that, getting funded for the first time, right, to then, something a little bit more recent on the XFAs. But like, pay attention to the stuff, right? My average P&L is $1,500 a day. It's not huge, it's not small, but you do that with a 90% winning day percentage, it's a lot of money, okay? And then also 84% winning trades, right? But this is a little bit skewed because it's an XFA. Only trade the S&P, right? No areas for improvement. That was like a real shocker because I actually saw this shoulder tap live when it was being presented, and I was like, wow, to hear a senior performance coach that I admire and learned very much from to tell me that there's no areas for improvement was probably the highest level of praise I ever received in trading. That to me was more important than any sum of money. But also, look, average 3 trades a day. It's usually less than that. I think they had to round it up. It was like 2.6. They made it 3. But then we look in the live environment, right there you can see a change to live. They screwed up and put crude oil. I never traded crude a day in my life. Average P&L dropped a little bit. Why? More data, right? Over time, things start to spread out. You look, ooh, I think I pressed the dreaded button you didn't want me to press, dude. Yeah. Tap the laptop. No. There we go. All right. So look, 60% winning days and also 62% winning trades. Why do you think my winning trade percentage is so close to my winning day percentage? Anybody? Right? Yeah. Usually one and done. And I guess my trade average went up a little bit for whatever reason. But yes, I'm very selective, right? The way that I like to look at things, especially if you're going to, transition into being one and done, if let's just say that you were only allowed to take 1 trade a day, and if you took a second one, something really bad happened to you. We're not going to say it, nothing vulgar, nothing graphic, but let's just say something really bad, like Tanner punched you in the face. If you took a second trade, you probably wouldn't take it, right? Unless you're a weirdo. So if you were only allowed to take 1 trade per day, or else something really bad would happen to you, or even better, someone you love, then you'd be much more selective about what trade you take, if it could be the only one. Right? You wouldn't even look at the B+ setup. You wouldn't even look at the A- setup. It's like A+ or nothing, right? A+ or bust. And I don't know why they said I'm a high time frame trader. I think they just meant that because I can sit in trades a long time. Same thing, work on cutting losses sooner. The reason why that was the case is you might be in a trade losing for a long time and then all of a sudden, you just cut it off, right? So these things just kind of work themselves out. But anyway, we're gonna jump right in. So, key terms before we can get into the nuts and bolts. Don't worry about taking too many notes or pictures. Anybody who DMs me on any platform, I will send you this presentation direct, and you get a lot more than what's in this presentation by being in my Discord, okay? I just want you guys to pay attention. And of course, if you want to take notes, take notes. I'm just saying you don't need to. Simple moving average is a tool that plots the average of closing prices over a specified period of time, all right, also commonly known as an SMA. Average true range, it's one of my favorite indicators. It's one of the only indicators that I actually use because it allows you to figure out what your target expectancy in any position or potential position or setup is. And I will not take a trade unless ATR is at 5 or better, okay? 5 or better, because then that means I have at least 10 points worth of target expectancy, and this is big tick energy, not little tick energy, so if it's less than 10 points, I don't want it, okay? What's that? Only the ES. I only trade the ES. On the NASDAQ, your ATR would probably have to be probably like 15 to 20 for, to work out like this. And then, of course, anyway, it's a volatility indicator used to measure the average price fluctuation in a time period. So people would be like, 5, 10, how are you getting that, right? If that's your baseline, then that means you have a fluctuation of 5 points in one direction and 5 points in the other direction. You have a total of 10. Make sense? We're good? All right, awesome. Volume profile. It's a charting tool, not an indicator, that displays the amount of trading volume that occurred at each price level over a specified period of time, and it's exact. The difference between volume profile and market profile is that market profiles are estimations based on time, which is good because if you are not getting level 2 or level 3 data where you can actually get volume information, right, then it gives you something that's very close to it. However, volume profile is exact, and of course you do have to have a volume data feed in order to collect that properly. Market profile also goes into things like A period, B period, C period. Are you guys familiar with that stuff? Nope. Well, it's funny that we're bringing this up because Top 1 Futures Academy, my class that I put together for that was actually on volume profile, market profile, and how to trade with them. So if you, who's seen it already? Top 1. About a week ago. So they gotta go watch it. Now you guys gotta go watch it. Because yes, this gets very, very helpful in 2 things: determining levels on a daily basis and deciding on whether or not you want to either take an execution or where you can make adjustments to an exit on a trade based on things that fall into a volume profile. So, quantitative extreme. It's a market condition or price level that is considered statistically unusual or highly improbable based on quantitative analysis. All right, we'll read that again. So market condition or price level that is considered statistically unusual or highly improbable based on quantitative analysis. How does that differ from overextension? Okay, overextension is a level in which price of an instrument has moved significantly and rapidly in one direction beyond what might be considered a sustainable range, right? So when you've gotten to the point of quantitative extreme, let's just use this display as an example, right? Everything that's in the display is normal. If all of a sudden key terms was up here, that would be unusual, no? Right? Perfect. So what would make it no longer unusual? If it shifted back down into here, or if this entire range shifted higher. The markets are exactly the same way. So anything that would be outside of normal range, right? But if we got outside of this black curtain and end up here, right, then that would be overextension. That's the best way I can put it. And that just came to me naturally. It just worked out. Okay, so, but before we can get into quantitative extreme overextension in more depth and talk about trade setups and trading and trade management, we got to go over trading non-negotiables. All right? What does non-negotiable mean? Anybody, no matter what, always. Don't fuck it up. Keep it 100. Yeah, keep it 100. Chart parameters. These are the chart parameters that I use. I only use open, high, low, close bars. I don't use candlesticks. I think they make too much noise on the chart. I think that this allows you to understand the story that is being told in a little bit more depth than you would with a candlestick. I only use SMAs, simple moving averages, not exponential moving averages. And it's always the 200 period on almost every single chart. It's 100 period on like 1 or 2 charts, and I honestly don't remember which ones they are. So we use multiple time frames in determining our levels. However, I only execute trades on either the 1-minute chart or the 1,000 tick chart, okay? So we can pick out levels, right? Look for support and resistance levels, certain adjustments to entries, adjustments to exits on these other ones, but we're always executing on the 1-minute or the 1,000 tick. We also use technical charts. So those would be your Renko chart. Anybody know who doesn't know what a Renko chart is? You don't? Oh, a lot of people, okay. So it's basically you can set it to different parameters, but the like industry standard for Renko on the S&P is that 1 box forms for every 1 point of move, okay? And in order for that 1 box to move, you have to have 2 points in that direction for one to form. So it eliminates a lot of the noise where you could see raw and true price action, right? Or sorry, price direction and bias. You get a better feel for sentiment when you look at the Renko. Now the 1,000 tick is almost opposite of that. Who does not know what a 1,000 or a tick chart is? Who does not know what a tick chart is? Does not. So a tick chart is, in this case, 1 bar will form for every 1,000 transactions. Okay? So that tells a different story because a lot of people think that I'm one of them, that time is irrelevant in the markets. Other than the opening bell and the closing bell, right? And then midnight to 11:59 p.m. Outside of that, time to me doesn't really mean anything. You can gauge like when is the opening range open, or sorry, start and end, initial balance, so on and so forth. But at the end of the day, time's irrelevant, right? Price, volume, price action, liquidity, those are the things that are most important. Because in the ability to exploit opportunity in the markets only becomes available when you have volume, liquidity, and range. If you don't have any one of those 3 things, you need all of those 3 things in order to make real money in the markets. Following me? Cool. All right. And then very, very, very few indicators. Average true range, obviously the simple moving average, right? Average true range, cumulative delta, and then of course the big tick energy setup tool, which is not really an indicator, it's more of a tool, which you guys will get a setup. And so when you configure things with these parameters, you'll end up with something that looks like this. I like to keep my trading terminal clean, to be honest. I only keep this on for streaming purposes. I would really like to just eliminate that so I have more real estate for screens themselves. And also, this is even a little too messy for me. Just coming from Tradevite for a very, very long time, you don't get tabs up here to switch between charts. So like I gotta like open and close them, right? And then obviously always looking at depth of market. Who doesn't use depth of market? use Bookmap. That's a form of it. So obviously you could see I don't have level 2 data yet on the top 1 futures Project X, but of course on my live account I do. And so with that, I'll flip to TradeOvate, and you could see I get tabs for every one of the charts that I mentioned here. So this to me is a lot cleaner because it's just one chart that I'm looking at, right? If it's the 1 minute or the 1,000 tick or the Renko, we'll go back one. So there's a Renko chart, right? So what would you guys say that from 9:30 in the morning through this morning, right? What's the overall sentiment or bias? Bullish, right? But if you look at this 1,000 tick chart, right, this almost kind of looks flat. It's a little bit higher, but it looks kind of flat, right? And then this just looks like a shit show, right? So this gives you a much better understanding of what is the overall sentiment or bias, if any, in the market. And that's how you eliminate that noise, right? So each one of those little boxes or diamonds represents 1 point worth of movement in the S&P, all right? So, and then there's all your volume profiles. Who's familiar with volume profiles, even if you didn't see my top 1 futures? All right, perfect. So yeah, obviously everything above this magenta colored line is your value high. Oh, sorry. So you have everything in between point of control, and that one is your value area high, value area low, point of control, session high, session low. And the session runs from when to when? RTH. What does RTH stand for? Regular trading hours, which is 9:30 Eastern to 4 p.m. Eastern. Thank you. All right, awesome. So trailing parameters. Guys, I want to see you guys take notes on this right now. It's the one thing I want to see everybody take notes on whatever the hell you have, your phone, your tablet, your scratch pad, you got to write it on your forearm, I don't care. Trailing parameters. This is the difference. You could be a shitty trader with no strategy, and you just enter at market at some random level, okay? And if that position goes 6.5 points in your favor, and you either manually adjust your stop loss to 4.5, or it automatically happens through an auto trail feature with your bracket system or your ATM system, it will make you profitable long term. Guaranteed, okay? So, firstly, you gotta have your brackets or your ATM, right? Automated trade management. I think Project X calls it risk management. Somebody help me, maybe? Think so? Risk parameters? Yeah, risk parameters. And unfortunately, it's P&L based, which is stupid because everybody tells you to like not trade your P&L, but then everything inside of Project X is P&L driven. So you want to set your brackets at minimum to either 10 points or 40 ticks. Why 40 ticks? Because there's 4 ticks and a point, right? 10 times 4. So 40 ticks for your target and your stop. It's 1-to-1. Yes, I know, but you guys saw what my average winning trade and my average winning day percentages are, right? So you can have a 1-to-1 risk reward ratio. And the thing is, this is minimum, right? So that sets automatically when you enter a position. However, most of the time we push the target out to up to 40 points. So any one of my trades at any point in time based on ATR will either be a 1-to-1, 1-to-2, 1-to-3, 1-to-4. Usually never more than 40 points unless things are getting real crazy, right? So this is just automatically set to 10 points in both directions, 1-to-1. However, based on that particular trade, you can push it out, or this is just a really good thing that if you can't babysit the position and you have to walk away, then you know that this is taken care of, especially if you have an auto trail implemented, because then you know that risk is going to be eliminated from the trade automatically the moment the opportunity presents itself. Then you only have 2 outcomes. What are the outcomes of your trade at that point? Win or win more. I love that. Oh my God, that feels so good. All right. So when is it that you trail? Once you are 6.5 points in, you immediately, and I'm going to call Clay out. Actually, the best thing about sitting in the back today is I saw monstrosities and shit shows on these screens. You guys are doing nasty stuff, real dirty stuff on. I was like, oh my God, what's everybody doing? And I told Clay, I'm like, you're sitting in a position, you're up like $1,800. Why haven't you just moved your stop to 1,500? So yeah. And then he goes and he moves it to just slightly below his entry. I'm like, that's still red, right? Or imagine break even or a little over. I'm calling out Clay. I'm like, lock in. And I told Tanner too, right? When you were sitting in that NQ trade, I'm like, bro, move it up to 1,500, right? Move it up to, he's like, then I'll get tagged out. I'm like, exactly. You'll get tagged out for a profit. Move it up. He's like, 1,250. I'm like, all right, $250, right? Doesn't really mean much, but people will see that money in real time and not lock it in. And that's this right here is the only thing that's stopping more than 85% of traders from being profitable, even when they have a shitty strategy or no strategy at all. You lock this down and you will lock cash in your bank account. Period. End of story. Enough of this. So what was that question? Anybody? No? All right. So automation eliminates emotions, okay? So anything that you can automate in your platform, do it, because you're going to make the wrong decision 8 out of 10 times. I guarantee it. You're going to say, yeah, let me just give it 5 seconds to breathe. And if I do it right now, it'll tag me out, and then it's going to go and end up hitting my profit target and probably beyond. And then what happens? 10-point loser. And you start seeing it coming, and you're like, oh, my God, I was almost at my trail. Now I'm almost at my stop. Let me just give it some more room to the downside this time. And you move your stop now to 15 points or 20 points, or you delete it, and next thing you know, you get that hard breach or that soft breach email from Top 1 Futures, and you're buying another account. Make sure you use code. No, I'm just kidding. So picking out levels, okay? Picking out levels. So first things first, I want everybody to read it out loud at the same time in unison. You ready? Go. Know your effing business, okay? You need to know what the hell is going on, all right? And check it throughout the session, because people who have been on my streams have seen how all of a sudden Trump speaks gets thrown on the econ calendar, and they didn't put that on until 10:30 or 10:20, and he's coming on at 11, and you're sitting in a position that maybe you could have just flattened or just trailed early or prematurely into profit so that you're not exposed to risk to the downside, right? Check your econ calendar first, okay? Know what's coming out and when, okay? That's, I mean, I think it pretty much saved me on my trade this morning. I know it didn't work out for some of you guys in here. So you work from your longest to shortest time frame. So what does that mean? I start at the daily, right? The biggest picture that I can look at, and then I dial that down all the way down to 1 minute. Some people say, Isaac, actually your 1,000 tick is your shortest. Shut up, all right? As far as time goes, daily all the way down to, or basically a 24-hour chart to a 1 minute chart. Now, the next thing you're going to do is you're going to check your price relative to your toggle SMAs, right? Where is price? Is it above or below the simple moving average on the 5 minute, on the 10? There is no 10 minute on Project X, but not everybody's on Project X. So you can skip that one if you don't have 10 minutes, but then you're looking at the 15, the 30, and the 60. So where is price relative to those SMAs? And we'll go into that a little bit later. Then you're going to check your volume profile references, right? Where's value high, value low, point of control, session high, session low, spikes, gaps, anomalies, single TPOs. If all that shit's going over your head, watch my Top 1 Futures course on market profile and volume profile, because that's not what we're talking about today. But you look at all that stuff, then you're going to go ahead and reference your previous levels. The only time that this does not apply is if you're starting today. You don't have some from yesterday, right? So you're going to go ahead and check your other levels. And so what does this mean here? So of your previous levels, which one of them were good, right? Where did price find support at your lower level, right? Or consolidate at your upper level, or reverse at your upper level? Which ones were bad? You just missed it. Like market blew through that, didn't pay attention to it, you screwed up, it wasn't a good call. And then which ones are developing? Right? Maybe you were nowhere near your upper level on yesterday's session. Now you're going into the open today, and you're like, oh, it actually looks like it's inching towards it now. Or you say, oh, well, it didn't happen during the session, but it happened overnight, or it happened pre-market, right? Those are still good things. So you want to see, you know, where are your previous levels in relation to price today? Okay, and how did they behave back then as well? So then at that point, once you've gone through all this, and I do this exactly the same way every single day, non-negotiable, no matter what. And we do it as a family together on my Discord. After that, you can determine your levels, right? So your levels are your exits first. Ideally, you should be trading into your levels, okay? So it's an exit first, then it's potentially an entry second, right? Because if it really is a place where institutional, let's just say in the case where you're going long, right? So you go long, you're approaching your upper level, you either want to just take profit there, just be done with it, right? I love that. Or you can go ahead and cover the trade very, very aggressively, right? You trail your stop even more beyond the 4.5 points, right? To make sure that if there is a reversal here, if there is resistance here, if institutional selling comes in heavy here, that you exit with the most profit possible while still giving the trade a little bit of room to breathe. However, it's going to happen oftentimes where your levels that you determine, especially when you're not great at it. As you get better, you'll see that you start really getting this dialed in. You have to have extended areas of interest. So these are levels that if the levels that you predetermine fail for whatever reason, fundamentals, technicals, thin markets, then where's the next spot? You got to have a backup spot, right? So everybody following me? You get all that right, it starts to look like this. Okay, these are the most recent levels. And, you know, you'll start seeing things where, like, you know, one of your levels ends up almost perfectly being point of control, or that your watch zone ends up being the session high. Or what's another good one? Look at this, where you end up calling the high and the low in the session, right? You start to, you know, see these things, right? So my levels are always the dots, okay? They look really humongous because this is an hourly chart or a 30-minute chart. When you look at it on a 5 or a 15, you could see that the levels are really dialed in, like usually within like maximum 6 ticks. And then, of course, the purple boxes are the extended areas of interest. So you could see here, right, the watch zone, there was massive resistance there. It turned around. Ultimately, my lower level ended up being point of control for the day, and we started getting pretty close to my extended area of interest, but we still missed it, okay? But then you can see then overnight, we kind of came down to it and ultimately found some support. So you'll start seeing this stuff, and that's why you have to keep it on your charts. You gotta make sure that you're journaling important levels in real time when you're making your analysis, and then ultimately you pick your levels for the day. I don't remember, yeah, well, maybe I'll show you guys today's levels a little bit later. So enough of that. Now let's talk trading. How you guys feeling? We're good? All right, cool. All right, so we're looking at this. Where do we execute? Where do we take trades? Obviously, you can say, now seeing in hindsight, it's just like, well, yeah, Isaac, I would have gone short right here, right? In hindsight. But like really, if you're looking at this, where were the best places to take trades, right? It's like all you have is this simple moving average. Where do we long, where do we short it? It's even difficult knowing where price went. You could be like, well, obviously long here, short here, long here, short here. But in real time when it's happening, that's what makes good traders great traders. When you can start analyzing stuff in real time and then make decisions based on those things in real time, that's when you get really, really good at things. So look at how things drastically change with one adjustment, my indicator, okay? These are constantly following the mean. So one of my trade setups, for example, would be the break-in, retest, hold, reversion, right? Deviation to the opposite quantitative extreme, okay? Consolidation, mean reversion. Deviation to the other extreme, mean reversion, another attempt, reversion, deviation, right? Break back in, reversion. It happens over and over and over and over again every single day. You just have to be patient. Now, again, you would look at this and you'd just be like, well, Isaac, obviously then, right? Long here and short here, or exit here and then short here, right? But then look at how many different types of opportunities there are once we plot potential executions. The exact same charts, guys, look. So that's naked birthday suit, right? With some clothes on, the full shebang in a tux, all right? So you could see, again, look, the break-in, retest, hold. So level 2 long to the mean. Same entry, level 3 long to the opposite extreme. Level 1 long from the mean to the opposite, or not the opposite extreme, but the upper extreme, right? This wouldn't be a level 1 short opportunity here. Why was this a level 1 long, but this not a level 2 short? Because the bias or the sentiment was bullish. So we only take long trades, right? When you have a bullish sentiment, and then vice versa. So, and you can see right here at the very tail end of this, this was all from 9:30 until noon, okay? Would you guys believe me if I told you that right here, there was $7,500 worth of profit opportunity with 2 contracts? Only taking 3 trades, 1, 2, 3. Obviously getting the biggest one. $7,500 on 3 trades with only 2 contracts in the S&P. You don't got to deal with the bullshit in NQ. Right? Just saying. Just saying. All right. Where are you going? So what exactly is quantitative extreme? I gave you guys like a little definition. We'll go into a little bit more. I don't want to bore you too much with like sentences and sentences and sentences. Represents a significant deviation from the norm, okay? And it's identified using statistical tools and models. Luckily for you, my mentor and I, we did all of the back testing and all of the real-time testing and future trading to figure out where those extremes were in the S&P, okay? It's data-driven. It relies on historical price data, volume, open interest, and other market-related information like volume profile, so on and so forth. And it's just statistical methods, right? Who took statistics in college or in high school? Sucked, right? Yeah, imagine trying to build a model based off of it. But again, standard deviations, percentile analysis, z-scores, and extreme value theory to assess the probability of price movements, deviations, and reversions. Okay, you guys following? Cool. We're gonna have a really great example because we got water right behind us. I don't care who you are, how big the set of balls that you have are, you jump in that water and eventually you're gonna get to a point where you said enough's enough, I'm going back. Or I'm gonna just stay right here for a second, assess the situation, and then decide do I move forward or I move back, yes? Every single one of you guys, I don't care who the hell you are, even Tanner, he could eat a shark, but he's gonna go out there and still get to a point where it's too deep for him, he's uncomfortable, he's gonna make his way back. So it's just this pattern of, being in the shallow, the mean, right, going to the deep end, and then coming right back to the shallows, all right? That's all it is, and it's a process of comfort and courage and fear, right? So coming back home to mommy, right, this is the mean, price deviated from the mean, got to a point where it was out of quantitative balance. It got to the point of extreme, and swimmer turned his ass around, got right back home to mom. Make sense? You guys following? Decent illustration? Perfect. So again, started back testing this all the way back to 2012. Started trading it in real time in 2015, and it is still at work today. I will prove it in this presentation. My P&L today also proves it. Okay. Every trade that I took today, actually the only trade that I took today, was a big tick energy setup. A very simple one at that. So how do you see it? How do you get that indicator, right, these lines, drawn out? It's right here. On most platforms, it's called a moving average envelope, MAE. On some, it is just an envelope. It's not really an indicator. It's a drawing tool, just like volume profiles, a drawing tool. Yeah, this is the money maker right here. Take a picture. Here, hold on, I'm gonna smile. All right, okay, that's the money maker. Okay, so it only works on a 1 minute chart and it only works on the ES. I'm gonna save you guys the headache. Don't try this shit on NQ. It's not gonna work out for you. How about this? Try it and then call me back. All right, try it and then call me back. It's not gonna work out for you, I promise. Another guarantee. 200 period, simple moving average. So your length, right, that's 200. 200 period, simple moving average calculated on close. Upper percentage, 0.23. Do not put 2.3, you're gonna have crazy envelopes. 0.23. and 0.28. Why is it bigger to the downside than to the upside? I drew it right here. Price, like my bank account, loves taking the stairs up and the elevator down. All right? So, yes, price is much more likely to revisit places where it's been, right? You notice like all-time highs, it takes forever to put in an all-time high and then another all-time high, but then it'll flush like a right? So that's the reason why. Your price is much more likely to pull back deeper than it will extend. Make sense? We following? Good? All right, cool. Can keep it moving? All right, how we doing on time, Austin? Yeah? You sure? Oh my God, I feel like I'm super over. All right, cool. We're gonna burn through this then, guys. Pay attention. So, level 1 trades. You look at current price relative to the moving averages across all 5 time frames. 3 or more rule for level 1 trades. So these are trades that are executed at the mean. These are deviation trades towards the points of quantitative extreme. So if you're at 3 or more, so technically it should be more than 3, right? Then if it's above, you only take longs. If it's below, you only take shorts. What you're looking for is either a crossover of that mean in the direction of the bias, right? So if it's a bullish environment, a crossover from below to above the mean, that's your signaling. So either just a crossover and close, or if it comes down to the mean and it holds there, you can also go long, all right? So either crossing or breaking into it, or maintaining it and then going back to deviate, okay? Your targets are always gonna be 10 points or more to the point of quantitative extreme. And you should only be executing this trade if your ATR is at 5 or better. We're good? That makes sense? Did I lose anybody on that? Speak now or forever hold your peace. All right, and then this is what level 1 trades look like, okay? Damn it, I did it. Oops, I did it again. All right, so you see, look, crossover here, straight to the deviation, right? Support here, straight through, right? Crossed over, right? So held here. So you're not gonna believe this trade here. You guys might be like, well, Isaac, look at all that heat on this one. Guess what? Again, my mentor and I, we did all the math. This came within 3 ticks of getting stopped out, fixed itself, ended up being a big-ass winner, okay? We did the math. Everyone's like, why 10 points? There's a reason why. Trust me, don't try to adjust these parameters. It's not, actually, try it. Call me back, all right? And then again, so sometimes you have instances too, and this is why I don't like giving away the indicator, because people get too reliant on the actual indicator and then you're reactive instead of proactive. That's a kick-ass opportunity right there, but some people will say, well, Isaac, it didn't touch the moving average. But it got close enough where I could smell it. I could taste it, so I took it, right? So, you know, you're gonna be looking at opportunities in that sense as well. So these are all level 1 trades. So again, this is all from, look, 9:30 to noon, 2 contracts. Let's just assume they're all 10, right? So 10, 20, 30, 40, what, 5 grand? 2 contracts? Real simple, $5,000 a day keeps the doctor away. And if it doesn't, you can afford the bill. All right, well, you guys ready for this though? Look at this, this is my favorite part. This was today. While you guys were listening to other presentations, this is literally today. You can go back and reference. So there's our open, our 9:45 number, our 10 o'clock number. I told you guys that I took the trade from here, right? I said I didn't want to take it here because I knew a number was coming out. I didn't want to take it here because I knew a number was coming out. I was patient. This was good enough for me. I took it here and I got out here. We'll talk about that on one of the next few slides. But look, what you wait on is the crossover, the retest, the hold. It was a level 1 long or more, right? Level 1 plus some, all right? That was this morning, guys, in real time. Now, let's talk about level 2 and 3 trades. Real easy. It's not gonna sound too confusing. 2 and 3, they're the exact same trade as far as entry goes. The only thing that changes is where you get out, okay? And we'll show you that. So there's 2 types. Trend following. What did I put there, guys? A ghetto little text heart, because trend following. The trend is your friend. More often than not, whether you're doing even the level 1 trades, right? You want to go with trend following. What I do now at this stage in my business and in my career is that if it's trend following, I'll put on full size, 2 or 3 contracts, right? If it is counter trend, then I'll do 2, sometimes even 1. For me, if it's an instance where I got to size down to 1, it probably means I shouldn't take the trade, right? So these are only mean reversion trades. So the level 1 trades are deviation trades. They deviate from the mean towards the points of quantitative extreme and beyond, okay? So these are mean reversion trades. So again, you're either having a hold of those envelopes and then reverting back to the mean, or if it got out of quantitative balance, meaning it exceeded that line, that quantitative extreme, then what you're waiting for is the break-in, right? So if it breaks in, retest, then it holds, then that's when you take the trade. Now your target is either the simple moving average. So if the quantitative extreme holds, right, and it's going back towards your first target should be the simple moving average. Your next one would be the opposite quantitative extreme. That's how you get to a level 3, right? So the difference between level 2 and level 3 is the target, where you get out, okay? Ready? Today, all right? Would you just look at it? Would you just look at it? That was today, okay? So you could see that here you have, it's a little hard to see because of the coloration, but from this point to there, that's a level 2. But from this point to there, that's a level 3. And from this point to there, that's a level 1. All longs, all basically within the same 20 minutes, less than 20 minutes. Pick your flavor. Which one do you want? Right? Which one are you the most comfortable with? This happened today, this morning, while you guys were all facing here. I was back there looking at this in real time. You got a level 2, a level 3, and a level 1 all presented itself between 10 a.m. and 10:30. Not bad, right? So let's go deeper. So now, where do we execute, guys? You probably feel a little bit more comfortable with this because you guys saw my quantitative extreme, right? But still, it's a little tricky, right? Because again, this is happening in real time. So, you know, you're seeing the DOM and everything else, right? And it's all happening in real time and you're getting a little scared. It gets a little bit easier like this, right? So much easier. What would, Thomas, what would you do right here? Well, you gotta buy that. You just gotta buy that up, right? Like, just, you know, let me get 2 of them. Let me get 2 of them. I'm gonna buy 2 of them, right? So once you know what quantitative disruption is, right? Who can take a crack at what quantitative disruption is? Don't be scared. There's no wrong answers. There's just stupid ones. Yeah, go ahead. Exactly. So you've broken out of the quantitative extreme. You're no longer in quantitative balance, right? You can be out of quantitative balance or in a state of quantitative extreme without being overextended. And this is not to be confused with overbought or oversold. What is the leading indicator for determining if a market is overbought or oversold? It's an indicator. Who knows what it is? What does that stand for? There's some newbies in here. What is RSI? Is that an Audi? Relative strength indicator, right? This is very different from that because this is like some of the ladies in my Discord like to say AQM. It's algorithmic, it's quantitative, it's math. There's a difference. All right, so this is, all right, when the market exceeds 10 points from the point of quantitative extreme, then where is the next spot that it's willing to go, right? You guys saw, I saw like courage and comfort and fear, but what about those rip currents? Rip currents, thin markets, headlines, tweets from Donald Trump, really, really bad JOLTS numbers, FOMC. That's the stuff that is considered a rip current that takes you outside of quantitative balance, but there's still gotta be a spot, right? So you could see here, right, look, we broke out, we broke back in, reverted back to the mean, deviated towards the point of overextension, back to the mean, then it broke, but look at that free fall. Where did it bounce for the first time? The point of overextension. You wanna know who operates within the boundaries of these envelopes? The big boys and girls, the algos, the institutional traders. They have their algorithms preset to operate within this playing field. The people who get crushed are the ones that get caught in between, right? In between the point of quantitative extreme and overextension, okay? Look, that's the illustration. Full transparency. Look, if you took it from here, so the difference between, now we're talking about level 4 and level 5 trades. Same entry, different exits. So from a short here, overextension short, it is a level 4 if you're taking it to the mean. It's a level 5 if you're riding that bitch out to the other point of overextension. Make sense? So look, then we come down here, we try it again. Why do you think these little green lines are so teeny tiny? What kind of stop though? Trailed out for profit. Guess what? The move didn't play out. Look at what happened. If I didn't trail out here, right, I would have never gone into this trade. But if I didn't trail out here, I would have lost my ass, right? By implementing a trailing stop system to your trading, to your trade and risk management, you could take a losing trade and still make it a winner to the tune of $450 a pop on 2 contracts, okay? Look, full disclosure, you get the break-in and the close. I thought there was gonna be a retest, there wasn't. You take the trade, you take a 10-point loser. Who gives a shit? You just made $5,000 on that trade. Who cares if you lost $1,000 on this one? You would not have lost $1,000 on this one if you had just walked away with this one, right? One and done. But look, okay, so it fails. You take a loss. It happens. Try again. Look, there was no signaling there because we didn't have a break-in. Then look, break-in, close, retest, get in, level 4, level 5. Guess how much money is on here with just 2 trades with 2 contracts? Take a guess. A lot. Yeah. It's relative. 10K, right? 50 points, 2 contracts. $5,000, $10,000 on 2 trades. Virtually no heat, 0 heat. And guess what? You guys see it there. Oh, by the way, look, you could see this was at the close, right? And obviously it extended beyond. But look, very quickly after the close, it what? Started going right back to mommy. We're almost done, all right? So what exactly is overextension? Moves often appear excessive compared to a historical price action, underlying fundamentals or statistical measures. It suggests that the market may have moved too far, too fast, and a correction or reversal could be imminent. Trading in overextended markets, though, can be risky because of the price could continue in its extreme move before the correction occurs. So if it is a overextension trade, a level 4 or level 5 that is counter trend, only trade it with 1 contract. If it's trend following, then you can get ballsy, 2 or more, depending on your equity position in your account. Same principles apply as quantitative extreme, but now you notice we're not in a swimming pool, right? We're in the Pacific Ocean or the Atlantic Ocean, right? Just it's deeper, right? Same thing, shallow, deep, back to shallow, but rip currents, news, numbers. Ooh, that's what gets us to the points of overextension and outside of quantitative balance. Make sense? Okay, I'm losing you guys. Same thing, back tested, forward tested, still working today. This is how you set it. Take your picture, guys. Take your picture. This time, what's changed? Talk to me. What's changed? 2-minute chart instead of the 1-minute chart. Yes, it makes a difference, okay? Still 200 SMA. And your upper percentage 0.45, lower 0.485. Why? Same thing. Stairs up, elevator down. 200 period, 0.45, 0.485, simple on close. On the what chart? 2-minute chart. Oh my God, you guys are great. All right, so level 4 or 5 trades, same thing. Trend following or counter trend, mean reversion, and equilibrium trades. What does that mean? Right, mean reversion is obvious, right? Going from the point of the extension back into the mean. But what's equilibrium trades? Any guesses? What was that? Well, so you're in that state of where you've exceeded quantitative extreme, but you haven't quite gotten overextended. So if you have the mean here, The point of quantitative extreme here and the point of overextension here, right? Before you can get to the mean, you have to what? Break back inside of quantitative balance. So that's where equilibrium comes into play. Make sense? You guys picking up what I'm putting down? All right, and again, difference between 4 and 5 is just a target. So here's overextension trades getting real crazy. Look, there's your level 2. There's your level 4, your level 5. There's your level 2, your level 2. That's a level 2. Guess what happened there? Trailed out for a smaller profit. That's still 10 plus points, right? Level 4, level 5. And all of this was from 11 o'clock on a break-in all the way through to the close. Massive opportunities. Okay? You guys ready? So, what the F? That was today, right before we broke out to lunch. Level 4 from overextension to the mean and some fries aside. What do you guys think about that? So what can they be used with? Obviously, opening range, initial balance, failed in successful auctions, volume profile, VWAP. You guys got to know these things, but I'll tell you what, less is more. Okay, you guys heard me say that earlier. So what did we cover? Mean reversion, deviation. How do you guys feel about it? Good. Quantitative extreme, overextension, risk management with the trails, and obviously all 5 of my setups. But again, they're really only 3 setups, right? It's either a mean deviation trade, which is level 1, mean reversion off of quantitative extreme, right? And then mean reversion off of the point of overextension. So it's really only 3 executions. However, they come in variants. 2 different flavors for the 2, 3, and the 4, 5 setups. Make sense? Cool. Where to find me? You guys can scan these QR codes. Instagram is definitely my most active. My first YouTube video is going to be posted later this evening. Ooh. So subscribe for early access. And Twitter, I've been having some fun in there. I just got that recently. Getting CEOs at the flop firms pissed off. You? All right. And special thing for you guys, for those of you guys who are not in the server, use code TOP1 to get into the Big Tick Energy premium subscription in the OnlyFunds Discord for 25% off for life, not one time. So if you want to get much deeper in everything that I covered in this, that's the place to be. I stream every day at what time, ladies and gents? 9:15. Then we do what? Pick out our levels, then we trade, then we shut it down, and we go spend our money. All right? And yeah, that's it. Cool.
Give it up, everybody. Great job.
Sorry it took so long.
Great job.
Who's about to go make about 10 grand next week? Raise your hand.
Maybe 20,
I
bro.
need
Maybe
to see
20.
it.
Joey, hold that mic right up to your mouth, please.
Yeah, we need to see about 10 grand next week at least. Minimum. Cool. All right, we're going to talk about trading the initial balance. This is one of my most profitable strategies that I have used. It is almost scary how accurate this can be sometimes. Krista, I know you've used this quite a bit. It is a strategy that I have really found success in, and it's been very consistent. For me, what we're covering is what makes up the initial balance. I know a lot of you have raised your hand earlier about what the initial balance is. We're going to cover that just briefly. We're going to talk about failed auctions, how to trade those, what they are, and targets. We're going to talk about trading breakouts and continuations. And the most important part, I want you guys to really look at this and let this sink in. When to stay out of the market. How many of you have gotten in trades knowing that you damn well shouldn't have? Yeah. We all have. We've all done it. That's going to be the most important thing here, is when to stay out of the markets. All right, who am I? Full-time trader, going on 7 years. Not full-time 7 years. I've been trading for 7 years. I own Iconic Traders, where I develop systems for new traders. I'm a big systems and process guy. Tanner, I know you talked about processes earlier. I'm a full believer in having systems and processes. Without that, trading is not going to go well. If you look at some of the biggest companies like Apple, Microsoft, Amazon, what do they all have? They have systems. They've built systems to build their empires to where they are now. Without proper systems, things break, right? You look at companies that experience growing pains, right? When they go through growing pains and experience strong growth, systems tend to break. You encounter some problems, right? So I'm a big believer in systems. I had streamed daily on YouTube. It helps keep me accountable, right? I don't do it just because I want to. It keeps me accountable. I love being around people, being around other traders, talking through trading, and having that experience and those people around me helps keep myself accountable too for trading. Moving on. Let's brag a little bit. Payouts. Been able to take payouts from a few different prop firms. TradeFi, there you see a payout for top 1. I think Clay mentioned that I was in like one of the top 5 taking a payout with top 1 there. Enough about me though. This is what I want to talk about right here. She's actually sitting in the front row here. Krista took her very first payout. She had never taken a payout. She came to me. We worked with her. We developed systems and processes, put things in place, and she was able to take her first payout ever. But that's not the best part. The best part of this is that in those 3 months that we worked together, she took out $26,000 in payouts. Incredible. Incredible. That goes to show that if you want something bad enough and you put your time and effort into it, you're gonna make it work, right? All of you are here for a reason because you all are here to be great. You wanna be great at trading, you wanna take payouts, and you wanna rock this shit, right? All of you here are capable of doing all of that if you put the time, the effort, and the mental capacity towards it. Does that make sense? Let's go. All right, moving on. What is IB? I'm gonna refer to it as IB. It's called the initial balance, but you'll hear me say IB a lot. Basically, what we're talking about here is the first hour of the trading session, right? From 9:30 a.m. to 10:30 a.m. You'll see here on the chart, we have an IB high. Sorry if it's that blue is a little bit hard to see, but you have an IB high and an IB low, right? First hour of the trading session. We're gonna talk about strategies that you can use around those levels. So why is this important? Traders will look to the IB for, 1, breakout areas or range extensions, right? Whether you're playing a long off a range extension on the top of the IB or a short of the extension on the lower end of the IB. These can be used for areas of support and resistance. Sometimes what you'll see is price may go up and test the upper end of the initial balance, find a little bit of resistance, come back down. Other times you'll see it break above, which we'll get into failed auctions here in a little bit. You'll find that the price will break above the IB, fail it, and come back within it, and that's where we're going to talk about failed auctions. It's all based around market context and sentiment, right? If you have a large initial balance range, generally you'll see some pretty good price action. If you have a small initial balance range, generally price is pretty choppy, right? We're not really going anywhere. Price is staying in one general area. We're not really moving that much, right? And so when we have large initial balance areas, I'm looking for great PA, whether it's failed auctions, range extensions, or the most important part that I said, when to stay out of the market. These are strategies we're going to cover. We're talking about trading failed auctions, which I just mentioned, breakouts and continuations, and I'm going to say this again. The most important one, when to not take trades. Again, how many of you have gotten trades where you shouldn't have, right? I'm gonna keep saying that. There we go. We've all done it. All right, so this is trading the failed auction. I'm gonna point out here, we have this is just an example. We have initial balance high, right? Let's just say this is the first hour of the trading session, right? This is initial balance high, this is initial balance low, right? Failure would be breaking above or below the initial balance, but closing back within on the 30-minute time frame. And we're going to get into examples of like entries and predicting failed auctions before they happen, so on and so forth. We'll get into that in a little bit. But it is on a 30-minute time frame when you get a failed auction. So as an example, let's just say, we have the initial balance high. We're going straight up here, kind of hovering in here, and then we come right back down on the 30-minute time frame. We close. What happened? That'd be a failed auction, right? Moving forward. Here's an example, a chart example of what that looks like, right? You see initial balance high, initial balance low. What do we have up here? This is on a 30-minute time frame, okay? What do we have up here? One failed auction. You can see how it came all the way back down. We closed here, came all the way back down. We actually had a second failed auction on the IB high as well, where we came down and retraced all the way. Vice versa, we had failed auction on the low side. Again, 30-minute time frame, where we broke below the initial balance low, failed it, came back up, and retraced roughly about 50% of the IB. And we're going to cover targets, again, 50%, whether it's full IB, 50%. We're going to cover that here in a little bit. But this is just an example of what that failed auction looks like. Does that make sense? Guys see hands? Any questions over that? Cool. All right. When a failed auction occurs, you can typically target the other end of the range. Does it always happen that way? No. You don't have to target the other end of the range. Sometimes I target 50%. Sometimes I target less than 50%. But generally, you guys know I've talked about how I trail out of positions, right? Generally, if we do get to 50% of the range, I might trail out of it, right? Because I want to lock in at least something to put money in the pocket. Here, as an example, if we break above the IB high but close back below, we can target the low end of the IB as long as momentum carries us and selling volume is still in the market. If I go back to this chart here, where do we go? When we fail, IB. Again, does it have to happen? No. But a lot of times, this is what we see. Continuing on. I just mentioned that I'll target 50% of the IB tracement in trend positions, or I'll take all profits, right? If I'm feeling out the market and I just feel like, you know what? It's a good time to just take all profits, pull Austin, be full in, full out, I'll do it, right? But if I'm really seeing the continuation that I want to see in this trade and volume's looking good, we're getting a good price action in the direction I want it to go, we might trim, right? We might just trim, let the rest run. All right, this is where you will get the best entries on a failed auction. Now keep in mind, remember I said failed auctions happen on the 30-minute time frame, right? When the 30-minute candle closes back within the IB after breaking out of it, that's when you get a technical failed auction. But what happens? Sometimes if you wait 30 minutes for that 30-minute close, we could already be back 50% of the IB, or worse, all the way back down, right? And you miss a trade. There is an argument to be made where you can predict failed auctions before they happen. For me, I like to see a run, just take IB high, for example. I like to see a run of IB high, and then we come back down below IB high, maybe get an engulfing candle back down, right, on the 5-minute, close back within it on that 5-minute time frame, and then take the entry, right? Because then I'm saying, okay, we look like we are reversing here. We look like we were getting a failed auction. I'm not waiting for the 30-minute, but price action is indicating that we might be failing here, and I'm going to go ahead and take that entry and target at least 50% of the IB. Does that make sense? Cool. Now, that's where you'll get a lot of your better entries. Again, if you wait for confirmation of that, you will take a more aggressive entry, okay? And that's all right. If you do take the aggressive entry, just make sure you're sizing appropriately, right? Whether if you normally take, 5 micros on a trade, maybe this time you only take 2, right? Because you have the general idea of the trade, but the entry is not the best, so you have to widen your stop loss a little bit, right? So we'll take a little bit smaller position. All right, let's go over an example real quick. So here, we failed the IB high. Momentum carried us the opposite, and look where we went, right? We kind of went over this a little bit earlier, but you see where we went. Again, here, failing the IB low, look at where we went, 50%. Next example, right here. Let's talk about this. IB low, right? IB low is right here. Sorry if that's a little tough to see. But you'll see IB low, IB high. Where do we go? All the way back up, full retracement, right? We failed the initial balance low, full retracement back up to IB high, right? Next example up here. This is the next day. IB high, IB low. We broke above, came back down. Where did we go? All the way back down to IB low again. And we actually got a little bit of continuation there on the IB low there. Cool. Does that make sense? Everybody still with me? Yeah? Cool. All right. These can be a little bit tricky, right? Because you are taking a little more aggressive entries on breakouts and continuations or range extensions, right? Whenever the IB high or IB low are ran and we see follow through where market is accepting higher prices, you can catch breakout trades, right? Now, am I taking a trade that immediately just takes IB high? No, I'm not taking it immediately, right? I want to see it get taken, but then I might wait for price to come back down and catch a little bit of a retest and hold that. Because I want confirmation that we are going to hold that IB high and not actually fail the auction there and come back down and retrace, again, 50% or the full retracement, right? I want confirmation that we are going to hold that and catch a continuation higher. Vice versa on the lower side. If we break out to the low side, I'm not entering it immediately. I'm going to let it break out. If I miss it, I miss it. That's okay. But I'm going to let it break out and then come back up to the IB low, retest it. If we hold that, then I could take my entry short, catch a continuation back down to the downside. Make sense? I'm going to keep asking that. Real quick, how many remember, what were the 3 questions that I ask myself every single day? Krista, you're not allowed to answer. How good of a job is it doing? Perfect. I ask myself that every single day, every trading session. I will ask it at 9 a.m., 11 a.m., noon. I will ask it throughout the entire trading session, right? Total clarity. Now, here, there's a couple things happening here, right? One, we had a failure of the initial balance high, right? Once we failed that initial balance high, we did come back down to IB low, and we did catch a little bit of continuation where we caught some lower pricing. And you'll see here when I told you that I don't necessarily catch the trade right when it breaks out below. I wait for a retest and a hold. In this example, we broke below IB low. We came back up. Now, we didn't quite get the retest that I would normally want, but we did come back up, stay below, and continued down. That would be a good example of catching a continuation down, whereas you break out, wait for a retest, and it holds, right? Does that make sense? Cool. All right, so this is on the lower time frame of this chart here. So going to a lower time frame, again, we had that failure, we came all the way down. Here is where we almost got that perfect retest of that, where we broke below IB low. We tried to come up and retest it. We saw a little bit of consolidation. We didn't have the volume to come up and retest, and we continue lower, right? So this is an example where you could take that short and catch it lower. Now, this is, I think, the most important part of trading, knowing when to stay out of the market and don't get caught in moves you don't want to be caught in, right? Generally, that'll happen a lot of times after that noon hour where things just get real choppy, price isn't moving, volumes died off. There's no real good setups unless, obviously, one presents itself. But generally, you don't get too much good price action then. When price is range bound in the middle of the initial balance, you typically want to stay out of it, right? If you're trading the initial balance, you don't want to take trades in the middle of that. You want to wait for it to come back up and retest key areas, right? Hashtag don't diddle in the middle. Everybody heard that? Yeah, perfect. Moving on. Again, best trades are taken at key levels, right? Whether that's initial balance high, initial balance low, right? Key levels. This is an example of staying out of the market. When price is in the middle, it's range bound, doing absolutely nothing, right? Here, obviously, we had a failed auction, but look here. We're sitting here just range bound, chopping in the middle, directly in the middle of IB high. Who wants to trade that? Raise your hand if you want to trade that. No? I don't either. Doesn't make sense to. We want to stay out of that until we do get price to test those key levels. And look, IB below, straight back up, right? Patience. A lot of people get too caught up into thinking that you have to take a trade right now because you're bored, right? Everybody taking trades because they're bored? Happens, right? When you're feeling that way, get up and leave. There is no point of sitting at your computer waiting for price to do whatever you want price to do, because you're generally going to sit there and take a trade that you know you should have never taken, right? And this is an example of that. Staying out of the market when no key levels are being tested. Any questions so far? I'm going to keep asking that. What's up? Would I have shorted at VWAP? So this is on a 30-minute time frame. So this now, granted, it did close. You are getting a true failed auction. I probably would have taken this a lot sooner than this closure, right? Because I would have noticed that we broke above the IB high. Again, this is a 30-minute candle, all right? If I had waited, we would have came all the way down here before I took the entry, right? So I'm anticipating that on a lower time frame, I'm seeing that we broke out, and if price action and volume is indicating that we are going to come back down, I'll take it on a lower time frame instead of waiting for the 30-minute. But the perfect world scenario here is when you do get the closure on the 30-minute time frame, right at IB high, right? When you get that closure right then, that's that perfect world scenario where you don't have to anticipate, right, beforehand. You're getting a confirmation of a failed auction right then and there, right at a good entry level to where you then take the short, right? That's perfect world scenario. It doesn't happen all the time that way, but that's perfect world. Now, here in this scenario, I would have probably taken it on a lower time frame, probably more so up in here. Again, I'm looking hindsight, obviously, but I would have taken it a little bit higher than what that indicates there. Does that make sense? Cool. I'm a big 5-minute time frame guy. I love the 5-minute. I know some people go to look at the 1 minute, 2 minute. I am big on the 5-minute. So I love, and sometimes, again, that 5-minute can cause me to miss out on the entry, right? If I do wait for a 5-minute closure. But again, we're not getting a true failed auction until a 30-minute closure. So I'm looking at the 5-minute, anticipating that we're going to fail on that 5-minute time frame so I can get that better entry. Does that make sense? Cool. Anybody else? Yeah, it would be right at the top of the initial balance high for me. Well, so in this scenario, it would be here, right? Yeah, it would be there. That would invalidate my trade. Anybody else? Cool. Yeah. So this indicator is on, it's through Lux Algo. I had a partnership with Lux Algo where they created this initial balance indicator for me. So you can go through Lux Algo and it's like $15. You can get it, and you can get it through TradingView. Cool. All right, moving on. Again, another example of no trades. Doesn't that look gorgeous? Looks so good, doesn't it? No, we don't want to take trades here, right? That is horrible PA. It does not look good. We do not take trades. If we're trading the initial balance, right, we do not take trades in the middle there. Any questions before I go on to some chart studies? Yeah. I generally pay attention to only New York. Yeah, I've had that question a few times. Generally, it's only the New York price action that I look at for IB. Now, I look at other levels for the London and Asia, like the London Asia lows, Asia highs, London lows, all that. But for IB, I only look at New York. I think from my trading time too, but I think also just for the New York price action, the volume there, I think that just makes more sense for my trading style. Yeah, so I don't have an exact percentage, but I would say majority of the time my trades here are on failed auctions versus breakouts. Yep. Because, I mean, if you think about it, how often do you get trend days? Exactly. They don't happen too often, right? So a lot of times you'll see those failures on that IB more so than breakouts and continuation. That's where a majority of my trades take place. I saw another hand over here somewhere. Repeat that question real quick. Yeah. Yeah. Yes and no. I mean, you can use the Edgeful and look at percentages, right? I mean, I generally just, again, I will take profits at 50%, that range, but I generally don't look at that. I mean, it's more so I've used this strategy for so long that I get a good feel of when a failed auction could occur. Again, I'm not 100% accurate. Obviously, nobody is in trading, right? But I generally get a good feel if price is going to hold or if it's going to come back down. Anybody else? Cool. All right, let's go into some charts. I'm gonna let you guys tell me, what do you see here? Who wants to answer that? What do you guys see here? Candles is a good answer. Confirmed failed auction, yep. So you do have a failed auction up here. Where do we go? Yep, all the way back down to IB low. I think I saw a hand over here. Did I see a hand somewhere? No? Okay. Yep, we broke out above IB high, came all the way back down to IB low, right? You could have seen this, again, this is on a 30-minute time frame. I want to reemphasize that. This is on a 30-minute candlestick, right, where we're getting a closure below. Now, you could have anticipated this on a lower time frame. Again, if you went to a 5-minute or a 2-minute, whatever lower time frame you feel comfortable with, you could have looked at this and said, you know what? We've broken out of IB high, and on the lower time frame, we're coming back below. We're feeling and looking pretty weak. Volume is kicking up. We're seeing selling pressure come through. You could take the short, anticipating a failed auction there before the 30-minute closure, right? All right, here we have a couple of things happening, right? First one is we have a failure of IB low, right? So this is IB low, IB high. We have a failure of IB low. Look what happens. It's almost scary how often this happens, right? When you get a failed auction, it's almost scary how often you go back to at least 50% of the IB or get that full retracement, right? That's why I love this strategy so much, is because it's scary how often this happens. You get that closure, right? Back above, we go all the way back up. Now, we have something else happening here. We have a continuation to the upside where we broke out above IB high. Get a slight little retest here, right? But once you see this continuation, you would have taken a nice long there, right? Again, that's why I always like to look for retests. I don't want to take it immediately because I don't get caught in something I don't want to be caught in, right? So I usually wait for those retests to catch that continuation higher. A little bit different, yeah. It could be any of them. Yeah, we could fail it. We could set IB at 10:30, fail it at noon. Yeah. Cool. Any questions over that? Yeah. Time of day is, it's very important because generally after that noon hour, volume really tends to fall off a cliff. So we may not have enough to send us higher, and so I'll maybe look for a failed auction, or I may just stay out of it in general, right? I usually like to take my trades. I'm Central Time, so do the time math here. For me, it's 8:30 to about 10:30, right? That's generally when I am done trading, right? And so I will look for trades of that nature after the IB is set within that time frame. That makes sense? Cool. So yeah. Talking about this candle here? It can happen on any 30-minute candle. It could be 11, could be 11:30, could be noon when we get a true failed auction, which is a closure on a 30-minute candle, any 30-minute candle. That would be a true failed auction. Does that make sense? That answer your question? And again, you don't have to wait until a 30-minute closes to take this type of trade, right? You could see it on a 5-minute time frame where we broke out. Let's just say you're on this is a 30-minute chart, but let's just say on a 5-minute time frame, you saw us come back up within IB low and things are looking we're getting a lot of volume, things are looking bullish. You could take it before a true failure actually happens. That makes sense? Cool. Did I have another hand somewhere? Cool. All right. So this is, again, what I just talked about, right? This is on the lower time frame, that 5-minute, right? We had a breakout below the IB low. And when you want to anticipate this, again, if you're on a lower time frame, is when we broke back above that IB low with some serious bullishness, right? We have some engulfing, we're coming back up, right? That would be where I anticipate that we're failing it, even if we don't have a true 30-minute close. Okay. Cool. Anybody else? Cool. All right, what happened here? We have IB low set. We had a lot of failures here. This is on this is a 30-minute time frame. We had a lot of failures where we tried to break below that IB low. And this is a good example of how powerful this can be. How many times we tried to break below IB low and we couldn't, right? We got below it, would come right back up. We had about four, what was this on? 1, 2, 3, about 4 failed auctions right there to where we finally held and went right back up to where? Look at this wick. Isn't that crazy? It's almost scary, right? Right back to IB high. Yeah, I would have been, I probably would have been long before any of these tails, honestly. Yeah, because again, I'm anticipating that failed auction happening. Would it have happened right when I took the entry? Probably not. In this case, probably wouldn't have, right? It could have been a couple stabs at this before I finally got it right. Right, but the idea and the concept stays the same. We broke below, we came right back up and closed back above. I do, yeah. Yeah, so it does vary. Generally I'll start about 5 micros, right? And then if I'm getting confirmation that I am right in the trade, I might scale in, add a little bit more, go up to maybe 7. But again, when I get to that 50% mark, generally I'm trimming at that point. Cool. I am NQ only. I have traded ES a few times. I just, for some reason, I'm addicted to the way NQ moves. I really enjoy the movement on NQ. I'm sure you guys know that feeling. But yeah, I only trade NASDAQ. But the concepts still apply to ES, gold, whatever you trade. Like all the concepts stay the same. Cool. Yeah. Yeah. There you go. I execute on the 5-minute. Again, if I execute on a 5-minute and I am getting close to that 30-minute closure and I get that 30-minute closure, that's all signs go for me. I'm letting the trade play out and I'm letting it go. Yeah. Cool. Anything else? Yeah. I don't look at IB when I look at individual companies, but I will look to them for confluence and see how they're acting on that certain day, whether they're bullish, bearish, if they have some news that came out that sent them down. It just all varies day to day, obviously, but I will look to them for confluence but not necessarily the IB. Yeah. Cool. Yeah. What does the VWAP do for me? Again, like I said earlier, all roads lead to VWAP, right? We've all heard that saying. I like to use VWAP as a reference point, right? It doesn't necessarily mean that I'm going to get out of my trade at VWAP. It just means I understand where we're coming to, and I want to see how price reacts there. Yeah. Yeah, it's very tricky here. I mean, you can see we get a break above VWAP, come back down before we get the continuation higher, right? So it's just a reference point for me. I know how price can act around VWAP. Sometimes it can reject VWAP, come back down. I know we have some VWAP traders in here. We know how price can react around it, right? So I like to keep it on my chart, even though I don't necessarily use it to make trading decisions. I like to use it as a reference point to give me ideas. Yeah. 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 100%. 100%. Yeah. I mean, it's almost scary, right? How accurate this can be sometimes. I mean, you at least get 50%. When you get a true failed auction, I'm usually at least seeing that 50% retracement. Cool. All right. Moving on. Oh, we already went over that. There we go. Chart 34. This is one of the, again, like I mentioned earlier, sometimes it can go without you if you wait for a 30-minute closure, right? And when you see price acting that way, when you get a failed auction, you can see that we barely broke below IB low there, and we absolutely ripped, right? This happens a lot, especially when you're getting tests of key levels such as IB high or IB low. Sometimes price will try to run without you, right? And that's the importance of, again, there we go, going to lower time frames, right? Because then if you look at it on a lower time frame, you can get a general idea of what's happening, right? You can look at the 5-minute time frame. Look at the difference here. If we go back one slide, there we go. This is a 30-minute. Look at the difference on the 5-minute. Right? Yeah.
Are you basically just waiting for, I mean, once you set the range, the bound, you're basically saying, you know what, I'm just going to go to the 5-minute chart, I'm going to wait for it to break, and then come back in, and off I go.
A lot of times, yes. I will wait. I will anticipate a failed auction happening before it does on that 5-minute time frame. A lot of times I will, and especially in this scenario where, we break below just barely here, and we get all of this bullish engulfing candles here, taking out all of those candles, right? When I see that, I'm all systems go again, because I'm seeing a failed auction potentially taking place. If I'm wrong, I'm wrong, and I am sometimes. Yeah, we all are. But this is a good scenario where looking at it on a lower time frame makes a whole lot of sense and taking it there to get a better entry versus waiting for an actual 30-minute close, right? I'm not. No, I'm not. Yeah, we have a pretty good risk to reward right here, right? Especially when I take the entry. My stop loss is just at that low there, right? That's where it invalidates my trade. Cool. All right, moving on. All right, so here we have, again, a couple things happening. We have failed auctions on both sides of the IB. We have a failed auction on the upper end. Where do we go? Right back to the low. We have a failed auction on the low end. Where did we go? Bingo, right back to mid-range, right? Again, I just want to reemphasize, like, this is why I love this strategy so much, because it gives me clear idea of what I'm looking for in my trade. I'm not looking for a specific amount of points, whatever. I might trail. Do I always get the 50% mark when I'm trailing? No, I might get stopped out, and that's okay with me. But I at least still know what I'm looking for in my trade and the target that I want price to go to before I start trimming out of my position, right? Okay. All right. So this is, that was on 30-minute. This is, again, going to the lower entry there, or the lower time frame there. You can see, again, breaking out of IB high on a 5-minute time frame. I love this, right? Where we get that large candle trying to break out above IB high and we come all the way back down and open bearish like that. I love that setup. On a lower time frame, that is all systems go for me as well, right? We get another stab at this here, right? Failed auction. Another stab at it. Take it all the way back down. Again, down here, IB low. We get a failure on a lower time frame. You can see on the 5-minute. Bang, right back up to the 50-minute, or the 50% retracement. Does that make sense? Everybody still with me? Cool. Any questions over that? Yeah. Yeah. Yeah, what you said is exactly right, playing the extremes, right? You're getting good price levels where you can play those extremes. You get those range extensions and see the failures on those extensions and play the opposite end of that. Yeah, that's perfect. Cool. Anybody else? Awesome. Yeah, go ahead. You have to be careful with that on news days because like we saw today, right, on NFP when we got the big move up, we kind of just stayed put for a little while, right? So you have to be careful with news days where things can get really choppy and consolidating. I like to see more volume in the markets because it'll give me good PA on the failures on sending me all the way back down to that 50%. If it's choppy, sometimes we may not even get 50%. We may just hang out at IB high and just chill the rest of the day, right? So I do like to have more volume there. So on news days, you have to be kind of careful. It depends on the news, right? If it's maybe a CPI day where we get some volume all day long or we chop. You just have to really get context of the market and what the market is doing that day to then make your decisions on how you want to trade the IB. Cool. Anybody else? Yeah. So and again, this is based around context of the market and what I'm looking for. If I'm getting a 50% retracement, I'm definitely going to feel out how the market's moving. If we're still getting a lot of volume coming through in the direction I want it to go, then I'll take partials. But if we start really kind of hovering that 50% mark, I might go just be all out at that point. Yeah. Half. Yeah. I go back and forth with that. I don't have a consistent way of going about that. It's more so of I'm locking in profits. If I want to make sure I'm keeping my stop loss tight and I'm continuing to trail, I might trail in profit. That way I'm still at least locking in more to put in the bank. It depends on the context of the market. Exactly. Yeah. Yeah, context of the market is very key. Yeah. That's kind of what he asked earlier. I don't have an exact number. I can tell you that majority of my winning trades are on failed auctions versus the breakouts. Yeah, because you generally have a better trade location on failed auctions, and when they happen, right? Whereas like breakouts, sometimes they can get a little tricky. They can kind of consolidate a little bit, maybe come back within the IB before continuing to break out, right? So it kind of gets a little tricky. But I can tell you that majority of my winning trades all come from failed auctions.
We've seen multiple failed auctions and then a breakout. Do you limit yourself a lot of your trade? Do you have a trade limit?
100%. Yeah. It does, again, I want to refer back to context of the market. It does very much depend. However, I'm a big fan of 2 trades, maybe 3 a day, right? I try to stay away from over trading. If I can lock in gains on even just one trade and I'm happy with that, I'm bouncing. I'm out. I'm going to touch grass. Yeah. Yeah, 100%. Yeah, usually if I catch a good failed auction on that first trade, generally it's the first trade, right, that I take that's pretty good. Yeah, right when IB is set. I mean, well, let me rephrase that, right? Right when IB is set, I want to make sure I'm getting a failed auction first off. Because sometimes when IB gets set, we can come back down, right? And we can range within. But I want to make sure I'm at least getting the failed auction first before. No, I'll take the first. That first failed auction. Yeah, 100%. Cool. I want to reemphasize too, like stop losses here are very important, right? Because again, if a failed auction doesn't happen, right, and we're getting continuation, you're in a failed auction, you want to make sure you have a stop losses, right? Because price can absolutely run without you. The only thing that doesn't have a stop loss is my hair, because that thing is going back, right? You know what I'm talking about.
We know what you're talking about.
Yeah. Yeah, we don't.
Even mine, bro.
Yeah. we don't have stop losses. We're getting completely liquidated up here.
Yep.
Cool. Anything else? Yeah. Repeat that one more time. Okay. Yeah. It very much depends on market context. Again, right? I'm on a lower time frame when I'm anticipating it, and so if I'm seeing like on a 5-minute candle where we're engulfing, some previous candles and we're getting some good volume, That's what I'm looking for. Not necessarily how much time, but what price action is doing in that current moment on that certain time frame. Yeah, as soon as it closes. I mean, as soon as initial balance is set, yeah, I'm looking. Yeah, 100%. That answer your question? Okay. Before, no, because we are still setting the IB, right? We are still setting levels. Right? We could, set a level. Oops. We could set a level. Go back for me. There we go. We could set a level here, and it only be 950, right? But IB is not going to get set until like way up in here, right? So I want to make sure I set before I start trying to play failed auctions or continuations. Cool.
One more question, Anthony.
No, I do. This is generally after the IB is set. I do trade before. Again, what I mentioned earlier, like looking at Asia levels, London levels, I love trading off those. A lot of times you can, on the NASDAQ especially, you can see price run those levels, sweep that, and come right back up and you catch a reversal, right? I love those. So this is only after IB set, but I do trade before.
David, go ahead. Yeah, you could put it that way. I mean, yeah, these are high liquidity levels, right? We see this a lot of times where price will not even break this and will just range out right at it without breaking it before coming back down, vice versa on the low side, right? It's just an area where you can find good liquidity and look for those sweeps, right? Good question.
Yeah.
We're gonna not answer that because no one here works.
Yeah,
at an
I was to say
institution.
we're not. I don't work at an institution, so I really don't. I couldn't answer that with 100% accuracy. I can just tell you that they do act as major levels.
Read the BI. What is it? The Bank for International Settlements report. They've got algos running all the time. Yeah, it is. If you like data, like you said, it is.
Yeah. All right. Just to wrap up, this is where you guys can find me. One thing I want to leave you with, right? I want you guys to really pay attention to this because I preach this often. And if you can, write this down, put it in your notes, computer, whatever. Too many people get caught up in one day of trading and letting that dictate their entire week, right? I preach this a lot. Don't let that happen. Number one, if you win the weeks, write this down. If you win the weeks, you win the months. And if you win the months, you win the year, right?
Mic drop.
Mic drop. Write that down. Remember that. Cool. Thanks, guys. This is where you can find me. Discord, YouTube. I trade live on YouTube every single day. And, of course, Twitter.
X. Give it up for him. So this session is just about how I want to emphasize the things that have helped me with my journaling, especially for the newer traders and people that are trying to really refine a system and have maybe a little bit of information overload here. And you're like, well, I kind of like Isaac. I kind of like Austin. I kind of like a lot of what these guys are doing. How do I find something that fits my trading personality, like Joey said? Markups are the way to do that. So first thing, because TradeZella is a sponsor, if you don't have it, this QR code will give you a little discount. 10% off the monthly, 20% off the yearly. Yep, scan it, take it. Cancel it and then re-up it. Yep. Good? I can come back to it. So the goals, like I said, I want to teach you how to do a trade review quickly so it doesn't take time away from you hanging out with your family and doing fun stuff like we talked about yesterday. I want to explain to you why chart markups matter, and I'm going to share with you some of the stats. I was going to do this whole year and show you April to April, but then I was like, everything has changed since Trump took office in these last 3 months. So I was like, that doesn't even matter. I'm going to just show you this last month and show you what's working right now since I took 2 payouts. What is a chart markup? Tanner's like, I think you call it a chart markup. Whatever you want to call it, you want to make sure you're not cherry picking winners. And that's what people tend to do in the beginning, which is why this slide is here. What does it mean to cherry pick a winner? You can't just go around and say, well, if I put a VWAP on, look, there's the trade today. And then tomorrow you have an envelope from Isaac. And you're like, well, look, there's the trade today. You're cherry picking too much. Have a consistent approach. Whether it's VWAP, envelopes, EMAs, it doesn't matter. These can be trades that you take and can be trades that you miss. People will start doing markups in the Black Shirt Club and they'll be like, yeah, I only have 2 markups today. I only took 2 trades. And I want to punch them because I'm like, you're paying me for the coaching and I can only get 2 markups out of you a day. What are we going to talk about? I need a lot of markups. You need a lot of markups. Your eyes need to see this over and over. And how many push-ups does it take to build good chest muscles? Is it 10? Is it 100? It's 10,000 and it's probably still not enough. Ideas can be marked up throughout the day and saved at the end of the day. Don't wait until 5, 6 o'clock when you're tired from work, your wife wants to talk to you, your son needs you, and then you need to sit there and do an hour of markups in hindsight. Do it as you trade. Have the ability to discern if you should be in a trade or not, and then still mark it up regardless. This trade fits my system, I'm going to take it, and I'm marking it up as I take it. This trade fits my system, but I'm not taking it because news is coming, but I'm going to mark it up, save the markup, note it on the news reaction, and study that. Make sense? This is a great example. I'm overviewing the entire day. This is a 1-minute chart. Opening range, blue line is New York VWAP, purple line is low of day VWAP. I'm using the entire day to tell myself the story. Chop for the first 90 minutes of the day, 54.90 holding a strong resistance, which was the open price of the day. 1, 2, 3 hits. Sellers really regain control here, clearly sending us lower. However, from the low of day, it acts as strong support. We wouldn't want to be short until this is broken and held. Sellers are done, buyers are back in as we take New York VWAP and finish the day higher. This is a simple annotation. If you don't take a trade that day, doing this will actually start to get you comfortable seeing what's happening in the market and reacting to it, not forecasting. Do we want to react or do we want to forecast? Louder. Thank you. Forecasting gets you broke, in trouble, a lot of bad things. React, react, react. Now, take this a step further. This markup then becomes a trade idea. See? Why is this a trade idea? Well, the way I trade with VWAP, when price holds VWAP, buyers are stepping back in. If buyers are stepping back in, what's the next thing I need to do? Find where my stop loss should go. I'm going to use structure here, and I'm going to use the previous note that I put right here. I would not want to be short until this low of day VWAP is broken. So I'm going to put my stop there, because if that low of day VWAP is broken, what would I want to be doing? Thank you. Good. We're getting there. I'd want to be short, so I want to be out of my long. Does that make sense? Say no if it doesn't. I'll slow down. You following me? Does this markup help me? Yes or no? Not really. Not until you really know how you see VWAP. Like me now, doing this every day for almost 10 years, I know what I'm seeing here. But this doesn't help me when I'm new and I need to review. This helps me when I'm new and I need to review. Do you understand? What's the difference? I'm explaining what I'm seeing. Short on the third break of New York VWAP after no break of 54.90. Boom, boom, boom. We're getting a lot of resistance there. Sellers are stepping in. Strong resistance up there. I'm going to use that as my stop. First take profit on a mid-range trade is, come on, boom. Take 3/4 off of the trade, trail the stop, and I can catch more. Probably stopped on the trail in here based on the way I trail on 2 minutes. Now, this goes from nothing, not helping me at all, meaning I look at this on Friday, it happened on Monday, and I have no idea what the fuck was going on. Now I actually can look at this and say, next time this presents, I might be able to take this trade. Make sense? How long do you think it took me to do this? Not even, dude. Literally not even. The more you do it, the faster you get. Thomas. Got to give you a shout out, buddy. Look at the text on this. NVIDIA is nearing opening range high here. Going to wait and see how we consolidate around the VWAP. This could be a gnarly signal from NVIDIA here. He's correlating NVIDIA while we're looking at an ES chart. He's trading to previous day VWAP. He's short here on the New York VWAP break. NVIDIA is at its New York VWAP, but high side. Does it find a bounce here? No, it ends up sliding through. 2 entries here, really nice short. I was calm, and that hurt me. Being too content with my P&L. This is now taking the chart markup of the trade idea and actually studying yourself and saying, what am I feeling? What am I thinking? What am I seeing? Where am I hearing? Where's my focus going while I'm in the trade? Because then I can pinpoint, well, I was in the trade at 7:45, and by 8:15, in 30 minutes, he's already distracted, too calm, too complacent. That's the bandwidth. See how self-awareness leads to you understanding, okay, this is the moment where I start to go tilt. This is the moment where I'm not seeing things right. Why? You won't remember this by Friday. But when you do it every day and you can look back on it, and on the weekends you can review 5 of them every week, it really starts to make these patterns of mistakes that you're making stand out. And nobody wants to repeat mistakes. Agreed? Yes, Krista. Absolutely. Screenshot it. You can save right through TradingView, putting it in TradeZella every day in the daily report card. This probably takes Thomas no more time than he would give time to trading. He is doing this as he trades because he knows if he's doing trading decisions minute by minute, he's on tilt. No one in here should be doing minute by minute decisions. Agreed? No one in here is a tick scalper, right? Right? So if we're not doing decisions minute by minute, when he takes this entry and it doesn't move for 3, 4, 5 minutes and it just sits there because this is a 1-minute chart, you don't think he can type this out and tell me why he took the trade? That's all it is. Take the trade. Be ready for it. Plan the trade. Be in it. And then as soon as you're in it, don't just sit there and go on TikTok. I'm serious. Don't just sit there and go on Bumble. Sit there and type out the ideas that fed the thesis. Randy? Oh shit, it's me. This is Randy's markup. Not as much text, still very, very valuable. Short 1 micro on the break, below the New York VWAP. As much as I want to be bullish, the CVD on Bookmap is steadily dropping. Look at that. He wants, and he's aware of his bias, but he's reacting to the CVD. That's fucking good, right? Closed here as price breaks back into the opening range low, and it looks to hold it. 50K, top 1 future, straight to funded, plus 118. What entry is this that we talk about? Mid-range. Stop is a little tight, Randy. Where's target? Opening range low. It's a perfect trade. Second trade, he puts a low-a-day VWAP on. Sellers defend that blue New York VWAP, and he says, short 1 micro on the break of New York VWAP and the low-of-day VWAP again. I'm watching the CVD declining, telling me buyers are not here. Not only are the CVD telling you that, we can't even... Zach, could you click the computer for me? It's on sleep again. Yeah, just hit cancel. Oh, there we go. Not only here are we seeing the sellers step back in because buyers can't extend higher and make higher highs, but the CVD confirms it. And then he's out here at the initial balance low, trading into equal lows. So like to Tanner's point, is Tanner here? Tanner, this is a great example of what I'm talking about, buddy. First trade, flush it. Look at that is a flush. 1 red candle, 2 red candle, a 1-minute pause, 3, 4, 5, straight down to profit. At to the target. Take it. There's another trade coming. This most likely does not fall into the abyss. Not often. So then, second trade here, taking profit at the lows. Taking profit at the lows. And look, there's still more. What could he have done? Randy, you could have shorted it here. You could have got in here. There's other trades to take, but if this would have rebounded and he doesn't get anything out, then he's not following the system. And then you can come to these markups and look at them and be like, dude, how am I not, like I said about Tanner's trade, how am I not taking profit at those equal highs? I can see it. I know there's people going to step in there. When you do these markups and you see your mistakes a lot, it gets easier to stop doing it. Yeah. That's a super discretionary question. And if you're on stream sometimes, you'll see I take trades, Evan doesn't take the trade. Evan takes the trade, I don't take the trade. So it's super discretionary. Sometimes Bookmap has a huge area below and we'll just trade into it. I'm like, that's got to pull. So if the risk reward's a little shitty, I'll still take it because I feel like it's a higher probability play. Isn't that interesting? So I'll risk 10 and make 4 or 5, bro. But if I feel like it's a 90% hit because there's no orders above to pull us higher and I'm just going to drop that 5 points, 4 points, I'll take it. Here's Evan. Totally different style of a markup. I'm showing you these different markups. I don't want you to think it's just do it my way. Do it your way. But don't slack off and do nothing. That's what I'm saying. 15-minute, very bullish, open candle, looking like our pullback to create a higher low. Boom, he called it. Long on buyers back in above New York VWAP and holding above on NQ. So he's long on ES here. Stop loss at opening range low. This is a mid-range trade because it's right in the middle of the opening range. Out on the first break of opening range high. Does it go higher, everybody? Yeah. Does he care? No. Job is not to catch the whole move, right? Make money. Follow the system. And then here's that final one here. Now, let's talk about what's working right now. We talked about the payout. This was the stats that led into the payout. Anthony, we're going to talk about something you asked for. How do you take payouts? What's it look like on a daily basis for P&L? It looks a lot different for a lot of people, and it takes people sometimes a lot longer and sometimes a lot faster. This was the amount of time it took me to take the 5K payout. Green every day is probably the most important thing that I would say about this. What else do you notice about this? Louder. Not a lot of trades. Good words. Good words. What else do you notice about this? Flat days. Yep. No problem. Not trading, not trading, not trading. What else? I have notes every day. That is true. I'm always documenting, doing my daily report cards. What did someone say over here? Win rate. I mean, it's perfect. As far as day win rate is very good. What else? There's something I see. No one's looking at the dollars. Are there any outsized gains here? Yeah. Chuck said, what did you say? Well, the account started on the 14th. These days up here, I did not have this account. It started on the 14th. There's still no trade days, but look at the numbers, everybody. 600, 700, 1100, 1200, 500, 800, 1100, 500. Are any of those really outsized? No, there's actually a few smaller than average in there, right? If I'm shooting for $1,000 a day, I actually missed a couple of days. And what did I do? Locked it out, walked away. Everybody following me? If y'all want to talk, I'll shut up. Okay. Here's the stats that we can go into now. So $6,600 profit, average daily trading volume 12 micros. That means some days I might throw a mini, some days I might throw 2, sometimes I might throw 15 micros. Just depends on where my stop loss is going to be and how much I want to risk on the trade. Average winning trade, $372. This is on a 150K account. Is that kind of surprising? You said, why? What are your thoughts? Which is funny because I think you give people $3,000 a daily drawdown and they think they can go crazy. I'm like, you give me $3,000, I'll stop if I make $600, $700, $800. I can take that $3K a daily drawdown and kind of make sure I come out positive more days than not. Great point. How about the average losing day? Minus 135. Small. Very small. Total no. Yes. Am I adjusting the number of contracts based? Absolutely. I do stop loss based on the strategy, and then I do the dollar amount. Yo, boys in the back. Easy. Thank you. The stop loss is always based on dollars, no matter what. For me, I'm going to go with this 3K of daily drawdown in Sim World. Maybe there's news coming. I might risk 500. If we have no news and we're ready to go, I'm probably risking about $1,000 a trade. But if you go back to the calendar, if I'm risking 1,000, that's a 0.6R, a 0.7R, a half an R, a 0.8R. You see what I'm saying? To this whole R multiple conversation. Also notice I'm locking out. If I risk 1,000 and I make 1,100 or 1,200, that's like over 1R by a little bit. I'm locking out. I'm done for the day on that account because I'm not giving that back because I know how close I am to a payout if I stack 3 or 4 of those. What else do you notice on these stats? Small losses. So to get to the payout, like we talked about yesterday, it's about eliminating the red days. No one cares about $730. Small. No one cares about $1,100. But when you stack this for the week, how's $5,000 in a week sound? I guess nobody wants to make money. Doesn't sound good to anybody. One guy goes, good. You guys must be fucking rich. Why are you here? The profit target for these accounts was lower. They changed the rules. The profit target is now $7,500. So you have $6,000 of drawdown to make $7,500. Not bad. There's other firms you have to make more. Some are huge. Yes. So this was an account on the older rules. So I didn't have to make as much. I didn't have to get to the 7,500, but I got close. I got 66. Max consecutive losing trades, 1. Max consecutive wins, 9. Only 3 losses. So keeping those losses small. Now talk about this, because I think this stands out the most to me. Why am I holding my losers 10 minutes longer than my winners? Because it's where I struggle still as a trader. Absolutely. I hope my losers turn around because I win at such a high percentage, I'm not used to losing. So when I'm in a trade that's losing, instead of me thinking, sometimes I do, but most of the time I don't think, yo, cut this, bro. Just take the small loss. I think, no, dude, you're probably right. You'd probably been right before, so it's going to turn around. And then you end up sitting in it longer, and that's where you get that bigger loss occasionally. This is what it looks like, which again, to me, is not very, like, sexy. It's not. It's just doing business. I'm risking my $1,000 usually a day, and I'm taking what the market gives me. Maybe this $600 day I had a call, and I'm done trading. Like, I'm busy. I have other stuff I'm doing. I'm doing coaching calls with everybody. So if I'm going to be busy, I'm not going to keep trading. I'll take my money and I'll run. This is one of the trades that helped me get over the line. This was on Monday of last week. So 277, nothing crazy on this trade, but I did take another trade later in the day. Again, what would you call this as an entry? If you know the way that we trade. Mid-range. Am I late? Fuck yeah, I'm late, bro. If you were on stream this day, Evan knows I was late because he was already in it. So I'm late. Stop still goes at the right place, Anthony. 17 points. Where did I take profit? You can see my entry and exit here. 13 and a quarter. So I risked 17 to make sure the stop is at the level that I've tested and I know I want it to be. And I know I'm trading down into this opening range low and this overnight VWAP. Look at the risk reward of that. It's not that great. You know what pushed you over the line on here? Read the notes. Orders at 55.50 are the target down near overnight VWAP. So just like I said to you a minute ago, Anthony, if I have a high probability pull based on Bookmap and I'm a few minutes late and it screws I don't care. If it still feels like based on my study, I'm going to get an 80 to 90% chance of winning, I don't need the one-to-one because I'm just going to trade it from this take of sellers stepping in on VWAP. I'm getting out here. And then I'm trailing one contract. 4 or 5 closed, and what happened? It took me. It tapped me at entry, right? Always. It never just keeps going. Does that make sense? Yes, questions. Later in the day, there's the sell-off that we just took. We bounce. Guess what Austin did? He bought it. Why? Buyer stepped back in. We took VWAP. I buy with a stop at the low. The low holds. Look at the management here, everybody. What did I do? Can you read those notes? Closed full. Does anyone know why? We take the long. Exactly. And it didn't work. That's why. You take what you could get, man. I should have been stopped. It could have 2, 3 more points. I'm out. It gave me a gift. I will take a small loss. Remember the hierarchy of day trading we talked about? I will gladly thank the market for that small loss that will feel like nothing by the end of the day or the end of the week, rather than hold into the trade and hope that it just, oh, dude, it's coming back up. Now we're going to be fine. Well, how does that work out? It comes way lower. It's all the way lower. Like, you can't even see that trade. You get what I'm saying? My exit was at 55.60. We're at 54, 5,500. We're 60 points lower in a few hours, like 2-3 hours. So you see how maximizing the trade, even if it means small red. How do you know when a trade is not working for you? Doing chart markups, studying your system, and knowing what winners should do. When you've marked up 100, you're starting to get it. When you do it every day for 2-3 years, you're at 600, 700 trades, you know what a winning trade should do. Winning trades should not instantly give up the VWAP that I used to get into the trade. Does that make sense? Say no if it doesn't. I want to make it clear. Okay. So then I go to my workout. It's 1 o'clock. I work out from 12 to 1, 3 days a week. I had a long bias up here. Well, we're starting to flatten out. So Austin takes another little scalp, 54.97, 10-point stop, and I close it at even highs right here. Look at the flush. You see the flush? We talked about this with Tanner. If it's going to give me easy money, counter trend, you think I'm just going to hope it keeps going all the way to VWAP? Which it did. It did go higher. But I'm full out at those even lower highs. Lower highs in trend, I'm out here because this could be another lower high for a leg down. So notice, I'll take this trade. It's wrong. I'm wrong. I'll take a small loss, walk away, and come back and hit this. Now, this ends up being a beautiful day in the daily report card. We nail the short, crush it, even if we're late. Long, small loss, win, finish the day up $500. I was only up $277 by 10 o'clock in the morning, but I finished the day by staying focused up $500. Questions on this day? What is this? What kind of trade is this? Some people are paying attention. You know what I'm saying? It's not that hard. 54.11, out at 54.30. Beautiful rip. Long on the New York VWAP break before the opening range is fully set, Anthony. I like the stop at 5,400 for the opening range low. Why? Because it's a beautiful whole number of 5,400 and there's orders there. Bookmap also has orders at 54.25 and 54.20, but my target is near previous day New York VWAP at 30. Where do we go? 30. So here's 20, 25, and then we make our way up to 30. Does that make sense on this one? When it flushes, you don't let it turn around on you. So I'm full out of this trade right here. This thing kept going. I'm full out of it here because it did what I wanted it to do. It held my stop and it went to the order blocks that I saw on Bookmap. We went over this trade already, but again, it's a beautiful mid-range trade. Stop at opening range low. After a massive candle tells me buyers are here, bro. Like, that type of a candle is extremely telling in the first 7-8 minutes of the market moving. Buyers are here. We wait. We see if they hold. This is a very important tip if you're going to take trades like this. I do not just buy on the VWAP, kind of like Tanner does. I wait for a 1-minute candle to turn. I need a little bit of bullish turn, and then I'm looking to get into the trade. Every time I've tried to get in, Evan laughs at me. I try to get in when it just hits the VWAP because I want to be like Tanner and get sick entry prices, and it fucking smokes me, bro. Like, just destroys me. Instant stop loss. But when I wait for the turn, that means buyers may be here. 2nd minute, buyers are here. 3rd minute, buyers are still holding. Buyers, out at target, even highs. Notice, target is 5,500. Again, another nice whole round number that I like. One off at 84, and the rest got stopped at 81. Did not fill to 5,500. Going back to our Bookmap conversation yesterday. Remember where we front run those orders sometimes at those big whole numbers? That's exactly what this trade was. Now, here's an example of a pre-market kind of bias that comes in, Anthony, why I'm going to trade before the opening range is set. This red VWAP is the VWAP from the tariff pause when Trump came out and we had the 600-point candle at 1 o'clock in the afternoon that day. So I throw a VWAP on there. We're sitting here overnight. We're sitting here pre-market. I know this thing, if buyers step in, it's a launch pad. So I take the trade before the opening range is set, and I'm out here at 52.60 because of Bookmap. So when I can overlay orders above me, Anthony, and I have this VWAP that I like as a base, I'm not going to wait for the opening range to be set to trade into that. Like, that move to me was happening before the opening range was set, so you have to take advantage. Does that make sense? Questions on that, trading before the opening range is set. I wouldn't recommend it every day. Sometimes the opening range like today is very choppy. But if you have something like a very key VWAP that was acting as support for days and nights, that's where you do want to maybe take a little more of a risk. How about this one? Previous day VWAP in light blue. Consolidation there once the opening range is set. Sellers step in here. I wanted to be short at 53.30, but I didn't want to fight the New York VWAP. So I waited for the New York VWAP to be broken so Christine wouldn't yell at me. Entry on a strong New York VWAP break. Nice strong break. Stop at the highs above the previous day New York VWAP right here, right? You want to go into those pins even. Full out at opening range low. This is a mid-range trade. I'm entering in the middle of the range. I'm on the right side of the VWAP, and I'm out at the bottom. Thoughts on that? Are you seeing how repetitive what I do is? Wins and losses. Is it starting to, if it's not repetitive, tell me. I want to make it repetitive. Do you see it? So let's play a game. What are you doing here, friends? Hands up if you're buying. You don't even know. Hands up if you like my stop loss. Okay, so these little hands, I don't know what that means. Hand up if you're taking the trade and you like the stop loss. Okay, hand up if you're not taking this trade. Why? Brian? It definitely could be a lower high. What else? Okay. What about the higher lows and higher highs that are forming here? Higher high, higher high, higher low, higher low, higher low. It did. It took that pin. That's correct. Zach's going to fix us here. Thanks, buddy. Why? Beautiful. That's why he takes a couple paper cuts sometimes, I think. So buyers step in after being in control. So Brian, you're not wrong in what you said, buddy. But what I would say, if you look at this photo, the question to ask yourself, everybody, who has been in control more since market open, buyers or sellers? I like when you guys answer me. See, that felt really nice. Thank you. Buyers. So, am I going to just assume that we're going to sell this and it's going to be a lower high? No. I want to establish a trend and trade it so it continues most likely. Trend is up. I'm going to react. Buyers are stepping in. I'm easily protected with a stop loss here. Where's my target? The previous high. This is probably my favorite trade because New York VWAP left the opening range. The probabilities of you trading the right direction when you have New York VWAP either above or below the opening range levels drastically increases. If you want to write that down, that's another one I don't say too often. Once the New York VWAP leaves the range, it really gives you a good bias for the rest of the day. So when the New York VWAP comes out, I'm looking for longs. Maybe down here like Tanner off previous day VWAP, but definitely here. This is when buyers are officially stepping back in. And where am I trading this to? Target, man. Like it's giving me the target at the high of day. I don't care if it goes higher. Okay, let's do another one. Tuesday, the 29th, 1 o'clock in the afternoon. Who's taking this trade? Hands up if you're taking it. Oh, this one stumped everybody a little bit more. She's making a face like she thinks it's disgusting. One person put their hand up over here. Thomas is like, all right, if you make me, I'll take it. Some people want to sell it. How about now? Louder, Krista. Krista's selling it because it's holding under VWAP. She might want to see us move lower. Did you remember the... Okay. 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 What else? Good point. No way. What was the question I asked on the last markup? Do you remember what I said? I know we're talking a lot. It's a lot of information. Does anybody remember what I said on the last markup? Thank you, Adam. Say it louder. Nope. Who's been in control? React. Don't forecast. Who's been in control? What direction does that mean we should trade? This is what I talk about when I say sometimes a VWAP will not be perfectly respected like that. This is still VWAP respect. You know why? I'd love to know if somebody can tell me why. No, because that's subjective. That can change when volatility comes in. It's not a take of VWAP because there are no lower highs forming underneath. Yes, maybe this, but the higher lows are here. What you should be thinking, because buyers have been in control, is there could be a higher low anywhere in here. Any of this could be a higher low for another trade back into that high a day. You made a great point, Krista, when you're like, I kind of want to short it because the highs look so good. That's what I'm talking about when everybody wants to just take the opposite way of the trend. The trend was up. Look at this photo. Buyers in control. Sellers tried to take control at 10:30. Fucked. New York VWAP way outside the range. Buyers are ripping it today. You can't sell this. You either stay flat or you trade with the VWAP. And you hold through this drawdown because your stop is at the structure appropriate. I'm a big believer in trying to see where the higher lows could be. If we have a low here and we have a clear 1, 2, 3 hits here, I want to see this respected. But to break the trend, you'd probably have to break this to me because I could see this do. Whoops. I could see it do this. I know that that's possible to put that lower high in. So I'm willing to take this long only if I'm willing to put in the right stop and only if I'm willing to take that drawdown. Does that make sense a little bit? Okay, got another one. Last one. Make it count. What are you talking about? Are you long or short? Are you making money? That's good. What do we think of this? Okay, so I'm giving you a little bit more information here. Don't jump too quickly, Michael. This is an entire previous day. This is the open right here. We're 3 minutes in. There's those 3 minutes. Now we're sitting on this previous day VWAP. This was the previous day price action. What are we doing here? Are you taking this trade short? There's your trend. Trying to give you guys some information. Say it again. If you're guessing. So he likes it for longs. Yeah, Michael? like that answer. What else? How do you feel now? What's the market telling you today? Because remember, here's our trend from yesterday. Here's our trend from the previous day, too. You can see finished lower. So when we're here now in the trade, what are we doing? If you weren't in yet, who's getting in now? Wow, only a few of you. Very interesting. Why are you resistant to that short? Even at this position. Even if I'm telling you to enter here on the take of the New York VWAP, why are you not willing to take this when the trend was lower? Previous day VWAP pointing in the direction of you to trade this thing lower. Resistance beautifully here on a double top, like Krista was just talking about. Why are we resistant to that? I'm curious. Are you afraid to lose? Why? Or are you afraid to be wrong? I don't think you're afraid to lose, James. Thank you. Who just said that? Dave Ford from Canada. Fuck yeah. Canada! Path of least resistance says buyers are really having a hard time today. Sellers here, sellers maybe here. Why aren't the buyers extending? Why am I getting pins here? Strong rejection. This doesn't surprise me. Look at that move. 46 points. Don't overcomplicate things. If previous day VWAP is pointing down, left to right on your screen, you're probably better off trading with that trend. If previous day VWAP is acting as support, you might want to give it a try and let it act as support. In fact, what I would say, and you'll see this often if you watch me trade, this is the last level that I would short it at. Because, like Luis asked, why is the stop loss there? Well, there's no levels up here, bro. I got nothing to do for a stop loss. So if this thing goes and like takes out these highs, dude, I'm wrong. It's wrong. I got to get out of it. But if it holds, that previous day VWAP often will be your last level to short it or your last level to buy it as a counter trend move is expanding. The counter trend being this move up in the overall downtrend. So this small move up today, overall downtrend, this is the last place to short it because you wouldn't short it up here. As we expand higher, you would only be looking for longs if you're a VWAP trader. Questions on this one? What does this bar mean for the shorts? How would you interpret that yellow circled bar? Shorts are dead. Not even in trouble, Michael. They are dead. That is a very strong break of New York VWAP. So even as this move is a 46-point move, if you trail your stop, man, you're getting tapped out somewhere in here and in here. You're not getting all of that move. If you're trailing very aggressively, you're probably getting taken out down here on this first bounce up. And that's how you can maximize those moves. Questions on this? No? Thoughts about VWAP and mid-range trades in general? Any questions about that? Do you hate it? %70. Yep. So I think if you don't worry about 1R, you will find that you will win more trades. If you stop worrying about R multiple and just trade to win and respect market structure when we trade into highs, and because, like, let me give you an example, James. Let's say you risked 13, and this target at opening range low was 40. Way further. I'm probably not taking it for 40, buddy. I'm probably taking it for half of that because it's even over 1R. But I'm not married to this idea that I have to get the 1R. So if I need to, I'll cut the trade sooner. What if Trump tweets something and I see it on Financial Juice and I think it's bullish and it starts popping? I have to react to that. You see what I'm saying? So to increase the win rate, I think you want to be more reactionary. Not forecasting. My entry is perfect. I'm getting my 1R. I know I can get that. That's a very aggressive stance in a trade. More thoughts, more questions? Yeah. Every time, basically. And it might be 15, but it gives me position size flexibility. Exactly. Yep. Did everybody hear what Nick said? Okay. Anthony, questions about the prop side of it? After this conference so far, who wants higher win rate? Who wants higher risk reward? Okay. Lawrence, what's your take on that? That's why I'm calling you out. So how do you find the middle ground? How do you find the middle ground between a high win rate and a decent risk reward and a decent R multiple kind of setup that fits your personality? I like everything he said. If you commit to a high R multiple, if it fits your personality, like Joey said, I think you can absolutely make it work. But I ran the 4x1, 100 meter. I'm fast in everything that I do, so I'm probably not going to be the guy that can hold a trade for 4-1. But I could definitely be a fast little scalper trading with VWAP. Like, it fits me. Going back to what I did in high school. See what I'm saying? So you got to know yourself. Absolutely. $100%. Yes. It's not even comparable, though, to be honest, buddy. Yeah, like, I can't talk to you about swing trade R multiple when we're talking about day trading. Okay. You can't do 1R. Yeah. Like, if you do a 50% win rate, you can't really do 1R. When you factor in commissions and fees, you cannot do 1R. You're bleeding out the account. For sure. I understand that. Sure. Together. Yeah. That's a great point. Lawrence? Yeah. That is the only thing you got to work through. Yep. You cannot trade a high win rate strategy and take big max daily losses. Yep. That is the only thing I've seen for myself and for the guys I'm coaching. It's the only thing I've seen hold them back. On the coaching aspect of it, I think it is harder to teach people to sit through trades and win 4-1 trades and losing 40% of the time. I'm not somebody that can lose 40% of the time and feel like I'm still doing something correct. Who feels like they could lose 3 out of 10 and still think that they are doing the right thing? No, like, I'm asking you to know yourself. Can you go in the hallway if you guys are talking? I can't think. If you're going to know yourself truly, think about this. If you lose 6 in a row, you don't think you're going to question the strategy a little bit? I question my marriage, question my life, bro. I might have made a lot of wrong decisions. So you see what I'm saying? Like Joey really said, I think the best thing of the panel this morning, your trading personality determines so much of how successful or not successful you are. I know myself. I just told you I'm fast, bro. Like, I'll race your ass and beat your ass outside right now, bro. In these red shoes, suede shoes. I'm fast. I'm not going to swing trade. I suck at swing trading. The only swing trading I've done is like a week-long trade. Everything else I do in my retirement account, and I don't touch it. You just buy into. That's not even trading. It's investing. You know what I'm saying? It's not for me. So who here now, hearing this, who thinks they're more of a fast-paced, higher win rate person? Who thinks they're more of a slow-paced, maybe higher risk-reward person, right? You got to know yourself. There ain't no right or wrong. It's a great point, Lawrence. Exactly. Yeah, absolutely. We're going to do a lot more risk-reward stuff later today. Don't worry. Good on the markups, good on the VWAP stuff. Little flashcard action makes you really see you don't know the outcomes of any of these trades. Your job is to react. What is the market doing? That's my biggest tip for you. Cool? So So I think we're ready to kick it off. So first thing we're going to do, everybody, is I'm going to invite two people to the stage who are in the Black Shirt Club. First is going to be Thomas. Second will be Randy. So Thomas has been with me for at least 2 years. Thomas flew from LA to London for the first seminar that we did in London. You came to the second one too, right? Yep. Then came back to London again last year for the second. Just the second one, sorry. So he came to London, joined the Black Shirt Club, and since then has completely changed his trading. He's going to talk about his payouts in a second. Thomas has been trading a little bit longer than Randy. Randy is a little bit newer. Randy's only a year and a few months into trading, but already taking multiple payouts. In fact, yesterday he took his first top 1 futures payout. So give him a round of applause. Randy, Thomas, come on up, boys. You guys can have a seat. And we'll kick this thing off. So the plan is we'll run this for about 30 minutes, and then we're going to move into the live trading with the boys. That's what she said. Beautiful. Here you go, boys. Yeah, you just got to click them up.
Testing.
Testing, testing. Cool. One more time. Round of applause for the boys. They've never done anything like it. So it's cool. So, proof of progress. Randy, first payout, April 11th. Second payout, May 1st. Congrats, buddy. It's a huge win. 14 months of work, 1 payout. Not an overnight success, but a real one. Why'd you want to start with this slide, Randy? Why did you want to, emphasize to people that it's 14 months of work for, well, now 2 payouts?
I just think, is it
Yeah,
on? Oh.
yeah.
So for me, it was just, I wanted people to understand that even though I was trading with the community, I was part of something, it didn't happen.
Mike, closer. Get it in that mouth.
Hello?
Yeah, get it down there.
Hello? Oh, yeah. But no, like I was saying, but just, this doesn't happen even if you join a community. Like, don't think that it's the magic answer. It took me 14 months to get a payout, but it's the, surviving that learning curve of 14 months that I want people to really understand, where I've had many instances where I wanted to give up. I didn't think I could do it. I thought I was a shitty trader. I just thought, this is not for me. And I didn't give up on it. And I spent 12 months actually of that trading from a place of scarcity when I didn't need to. And Tanner touched on that yesterday, and it was something that really hit home with me. And my bills were paid. I was always coming to Tampa. I had gone to Dallas. I did all these things to better myself, to be a better trader, but I was trading from a place of scarcity when I didn't need to. Once I let go of that, lo and behold, I get 2 payouts, not 1. So it's when traders say, when you stop wanting the money, it just comes. Like, you stop needing the money, it just becomes very natural. It's so true.
So true. Can you guys hear him okay in the back? Zach? Yeah. Michael Reese, can you hear him okay? Yeah. Get the mic close to your mouth, okay?
Like, do I want to touch in my mouth? Like?
Touching the mouth, yeah.
Oh.
Yeah. We're friends. I spit on it yesterday. That's crazy. Now, it's Friday, boys. Come on. This isn't working now. Here we go. Thomas, you're up. So here's Thomas's payouts over the last couple of months here, everybody. Top step. With us in the Black Shirt Club, walk everybody just through real quick your journey of the London seminar to today.
Yeah, so I started trading, and I found a large difficulty finding a community that I resonated with. So I wanted to make it real for me, and for me, I needed to shake someone's hand and meet someone in person. So that was the first conference I went to in London, shook his hand, joined his mentorship, and now I'm seeing success from that, and I'm repaying that by, providing content online and showcasing my journey, because I see there's a gap between high-level education and then education for new traders, and there's a lot of questions that new traders have that is not answered. So that's my goal with kind of some of the things I'm going to be sharing in this presentation. And yeah, I mean, now I've taken a couple payouts, nothing crazy, but it's real and it's all possible. So I'm excited to be here.
Let's see if I can get this to work. Maybe it's dead. We'll go old school. Perfect. So here's a couple pictures, Thomas.
Yeah. So the first picture is me with David and Sam. They're small cap penny stock trader and then a mind coach. And then that was London 2023. And then that is all of us in Los Angeles. What I want to emphasize on this slide is that the biggest changes in my trading have been in the hours after these events, whether it's me in my hotel room going over my trading plan, reviewing what Evan talked about at the last seminar and adding that to my trading plan, or it's the conversations that we're having at dinner last night about abundance mindset. And, I just think being around a group of like-minded people like we are and around people with the same goals, there's so much inspiration. And I would really motivate everyone to take the energy that you get from this conference and use it to make a change in your trading, because every single time I come to one of these, it's the sixth one, something changes for me. There's a one-liner that I remember, and it's specific one-liners from each conference that I remember that I take into my trading day every single day. And that's been a huge, huge important thing for me right now.
Any one-liners that you can share?
Be hard to kill.
Oh, good
Be
one.
hard to kill.
Okay, so let's talk here. What do I actually need to improve on is a really good question.
And so here's my corny little graph. So we all start getting into trading with curiosity. No, we don't really know what it is, but we see people doing it. And between each level, it could be years, it could be months, it could be years, depending on how fast you progress. So most of us, we're all at level 2. We all, we're all here. We all have a technical based strategy. We all have a community we trade with. But then the next level, once we get to this technical learning and community, we see the success, we see what's possible, but we don't always know how to get there and the steps to make it. So that's where we need a coach to help us. So the goal at the end of the day is to be consistent with your trade execution. But you can't be consistent with your trade execution if you're not consistent up here. So that's why I put that as number 3. Number 3 is overcoming yourself and all of those, demons, for a lack of a better word, that we struggle with trade management, whatever it might be. And that's different for everybody. So that's not, I don't need to cover that. But at the end of the day, it's just about executing your strategy with consistency. And I do a lot of journaling, and I find that there's certain questions that I ask myself that have really helped me evaluate whether I am trading with emotions, whether I'm trading with a strategy that's consistent. And I think there's discrepancy between whether you're actually executing your strategy with consistency on like a rules-based strategy versus just executing it off of an emotion. So I want to share some of the questions that I ask myself to help go back and journal and find, was this a question or was this a trade I took with emotions? Did I manage this properly, or was I, kind of self-sabotaging myself? So first and foremost is keeping your charts simple. I can't stress this enough that we all want like the flashy object, whatever's going to work. And I hope that we can take away from all the amazing guest speakers that there's no one size that fits all, but it's most important to be consistent. On the left, this is someone who is genuinely trying to make money in trading. They're paying for a mentorship and everything. They have EMAs, volume, RSI, key levels, VWAPs, trend lines. How are you going to make consistent decisions with so much information? We already have enough doubt as traders in our mind. Every single setup we've taken, we've seen it lose and we've seen it win. So how are we going to make consistent decisions with almost random information? You're going to put weight on one thing one time and then not the next time. So I started trading ES only after the London seminar. That was one of the biggest mental shifts for me, is becoming a specialist in one market. I trade using a few key VWAPs in the opening range. Anytime I've ever added anything on, I've added the 21 EMA, I've added the whatever you want to call it, I've always removed it the next week because it doesn't help. If something doesn't resonate with you about your strategy, don't be afraid to change it. But really audit what you're adding to your charts and what you're adding. Is it actually going to add value, or is it just kind of jumbling your clarity?
Even like yesterday when you were asking me about combining Isaac's thing with VWAP, what you're doing, Randy.
Yeah, exactly. Yeah, it's just adding stuff that you don't need. It's like if you see a flashy object, you see Isaac make easy 10K, but that doesn't mean you should just add that to your chart. So for trade entries and trade management, basically we're all discretionary traders to some degree. I don't know if anyone in here is actually using a real bot, but we're all discretionary if we're not 100% algorithmic. So not all entries are going to be replicable, but do you have a repeatable way to find a session bias and a way into the market? That for me is the most important thing with my strategy. Anything on my trading plan, I want to know for sure I have a repeatable way to find my bias and then a way into the market to capitalize on that bias. And then next is this is a huge one for me, and I would really challenge everyone to ask yourself, are you managing your trades with a system or with emotion? And you like kind of have to keep asking yourself why you did something to really understand why, because I mean, I love the phrase, is it a business cost or is it a loss? Because when it's a business cost, we can all eat that. We all know losses are part of trading. But when it's just a loss, that's something that you did to affect your trade, to whatever it was, whether you took too small of a winner, whether you cut a loser that ran to your take profit, all of these things. So this is the question that I ask myself with every single trade, if I managed it, which I actually have found my trade management does not help. So this year, I've been doing no trade management. I'm either full in or full out. And I've seen more success this year with that. So these are like that's a question that I'm going to ask myself after every trade to audit that process. And then lastly, are you consistently following the plan you set yourself out prior to entry? On those chart markups, I use it as like a canvas to print my thoughts. Anything I'm thinking about, I just write it down. And particularly before my entry, I'm going to have exactly what I want to do. And I'm going to put it on the chart so that after I can look back and see, did I actually do what I wanted to do, or did I stray from the initial plan? And then that can give me a really good idea of whether I was managing a trade with my system or with emotions.
Everybody got a picture of this one? Randy.
How do I even follow this? Like,
he's good.
Thomas is just crushing it, so I'm even more nervous now. But yeah, for me, the 4 lessons that changed my trading, and again, letting go of needing the money, this place of trading from scarcity and not realizing, if you put yourself in a position where you need to trade to pay your rent, you shouldn't be trading. Like, you need to be in a financial position where you can focus on trading, and the outcome of the trade is not going to dictate whether you have food on the table or not. Because if that's where you're coming from, you're never going to make right decisions. You're always going to be chasing everything. And for some weird reason, I put myself in that mindset, even though there was food on the table, we had a roof over our head, we were still enjoying our lives. So letting go of needing the money was huge. The 2 payouts I took, the first payout I took in the middle of April, the money's still sitting in the Rise account. I didn't realize that. I thought as soon as I get the money, I'll take it out and I'll go spend it on something. And now it's like I almost forgot it was there. So it's having that, letting go of that need of like wanting this instant gratification of getting paid, and then almost like showing everybody like, hey, like, look, I went and bought this with my payout. Like, that's not why we want to be traders. We want to be traders because we want to be successful, long-term, and profitable. That was a big one for me. Small wins are huge. If you're struggling in trading, just try and dial it back. Get some small wins, and just the confidence and conviction will build. For me, I spent a lot of time thinking me being right was confidence and conviction, and those are 2 different things, right? Me being right is me being stubborn, and I lost every time. When I was confident and convicted in a trade, it played out beautifully. I managed it well. It was a home run. So for me, it's so easy to be like, I want it to be right, so I was convicted. No, I wasn't convicted. I just was stubborn, and I didn't want to be wrong. So that really helped me.
That was huge.
This year, Austin pushed me to start doing social media, and I started a YouTube channel.
You sound like a boomer when you say it like that.
I'm 43, by the way. If you guys can't tell, you probably think I'm a lot younger, but. But no, so Austin pushed me just to get. Another thing is just getting out of this comfort zone we're in, and this comfort zone puts us in a place of fear. You get yourself out of this comfort zone, you grow. I'm sitting on a stage talking to you. I never pictured myself doing this. I make YouTube videos, daily recaps every day of my trading day, whether it's a winner, a mental breakdown day. And I have people reach out to me all the time. It's the coolest feeling, and be like, hey, I saw your video and it stopped me from doing this today. And just to hear that makes me more confident in my trading, and confident just as a person, like putting good energy out there. You'll receive good energy back. I'm a strong believer in that. So creating the content, putting yourself out there, getting out of this comfort zone is big if you want to be successful at anything in life. Just put yourself out there. Journaling's another thing I didn't do, and clearly you guys know my age now, but I spent my whole life, I haven't had multiple businesses. I've been successful in things, but I've never journaled, and I didn't realize until I started journaling. And in the beginning, you have to be honest. You can't just journal your winners and be like, oh, this is I'm doing it right, but not really. You want to spend more time on the losers. You got to focus on the losing trades, what's happening in the trade, why are you losing? Like Thomas said, how do you feel the emotions? And that's where journaling is huge. The reflection every day. And for me, journaling is, I do it in a daily report card, and then I do it in a video. So I get to see it visually, and it really, really helps. And then what changed for me, the mindset was, staying consistent. Once you get that consistency, you build that conviction and that confidence. And once you have those, you're unstoppable. You're going to take losers, but they're going to be smaller than your winners, and you're going to stack up wins. And before you know it, I wasn't expecting to take a payout. I took 2. And literally on the way to coming to this trip, like, how did that even work out like that? You can say the universe is, someone upstairs is looking out. Well, you wouldn't say anything, right? But it just
downstairs for you, buddy.
Yeah, well, exactly. And then
it's Friday. I told you we're spicing it up, bro.
A big thing I've been working on this year too is after meeting Sam in LA was the emotional self-awareness. You don't realize when you're in a trade the stuff that's going through your body, the dopamine, the emotions and how you're feeling and how you're reacting without even thinking about it. You're thinking something here, but your hand is doing something else. You're pushing a button, you're doing this, you're buying, selling, getting out of a trade, moving your stop. But you're like, Austin said it, I think, really good yesterday, just take a step back from the desk. Just be self-aware, feel how you're feeling in that moment. Journal if you can, but just really pay attention to what your body's telling you. Your unconscious mind is a powerful, powerful tool. And it's in the driver's seat majority of the time, and you don't even realize it. And locking my account early to protect my good days, that's something in the beginning when I first started trading, I thought by not locking my account, I have the discipline. Like I'd have a winning day, and I'd be like, I don't have to lock my account. I'm not a junkie. And lo and behold, I would come back to the desk later to do some journaling, and something would present and blown account. So it just goes to show I am a junkie. I have an addiction to trading. It's an addictive thing. Like we got to learn to manage these emotions. It's a form of legalized gambling, and we're gamifying it with the prop space. So
well, that was a thing in the LA conference with David. He was like, I don't like the word degen. Yeah. And the three of us were like, well, I'm out then. So it's like it's a balancing act for sure.
And then coming to Tampa, for me, LA was a mental shift. It was all mindset stuff that I worked on. Dallas was technical. Tampa, I came here, and now again, I'm mentally just sitting in the room and listening to everybody talk around me, and my mind is just hearing things, and it's just soaking it in. So, huge thing again. And then believing in your future self. In LA, I told myself one day when I left LA that I'd be sitting on a stage talking about trading, and here I am. So, have that belief in yourself, and the conviction, the confidence all comes with it. And
we could clap for that.
Yeah, Rin.
But it's
and we could clap for that calendar. That ain't bad looking.
Well, I didn't get to update it, but I was about to take a payout in my top 1 account last week on stream with Austin. Austin hits his payout. I didn't hit it that day. I put the unneeded pressure on myself on Monday morning before this trip to pass this, to get funded, and I almost blew the account. I had a day of 11 trades, which is over trading for me. I was down $1,000. I had to break my rules to get back to break even for the day. So I felt like crap, even though I got back all my losses. It was just, I felt like shit. So it's like, there's no win in it. And, I took my time and I spent the next 2 days passing that account and getting it to a payout. But it's, not having these, if you look at my other red day there, it's 8 trades. I'm down $1,000, and the rest of my day I'm up 250, 300, small greens and some big greens. But, I'm able to absorb that one bad day, 2 bad days actually. But, just be consistent. The conviction comes. And with the conviction, like Tanner said yesterday, when you do your journaling, and we do it in the Black Shirt Club, we have a trade of the day that we put in our journal every day. And for the longest time, I thought that meant pick which one of my trades was a trade of the day. And it wasn't. It was pick whatever the best setup was, win or lose. And, when you get conviction and confidence, you're going to have a day where you're one and done. You're doing your journal, and the trade of the day was your trade. That's when you know that, hey, this is all clicking now. Like everything that you've worked your way towards is like there on a piece of paper in front of you, and it's like the calendar will show it, and you'll be like, there's days in there where it's just one trade, one and done. And I trade at 6:30 a.m. on the West Coast. I can be done by 7:30, 8:30 a.m. and I have the whole day to spend with my family. So it's, you know, just be consistent and build the discipline and, you know, be kind to yourself.
I want to say one thing on the calendar. When I look back at my calendar, I only see green or red. I don't see the number. So for me, it's been a really powerful mental shift of like, even if it's 200, for me, I'm like maybe shooting for 800. But if it's 200, I take that because when I think about my best trading weeks, I just know it was green for 10 days in a row. It was green for 15 days in a row. Not that it was 5,000, 2,000. It's more about the green and the red, especially like respecting the process where we're at right now. Because a lot of us are all newer traders, so we're respecting the process of green days rather than, you know, the process of large P&L, because that's just going to come with time.
I love it. Give them a round of applause, everybody. Great job, boys. You guys can have a seat. Thank you very much. Friends, one of our last sessions of the entire seminar. Take a deep breath. We're going back under. Grab a Diet Coke, grab a coffee. Full attention here. We're going to focus on risk, reward, and win rate. So this is going to tie together strategy, back testing, risk management. I mean, basically everything we've spoken about over the last day and a half, 2 days, is now going to come together for you here. Yep. So if you need to chat, head out in the hallway. Otherwise,
What's going on, everybody? I know it's end of the day. Let's go. You know, we saved the best for last year.
Absolutely.
No, honestly, this has been awesome. I know we're coming to the end here. I'm so grateful to be up here with all you guys before I yap about myself and win rate and risk reward. Give yourself a hand. Like, everybody, you guys are awesome. You all deserve a round of applause. All the questions, the conversations, this feels like a mastermind with a ton of great traders, because it is. It's really awesome. So let's jump right into it. Risk reward or win rate, what matters most? Before we get there, a little bit about me. This is like the Mom I Made It slide. You can see a whole bunch of highlight reels, Top Step TV, Boris Schlalsberg, obviously right here in Tampa with you guys. We know this guy over here. But outside of just bragging about myself, I'll tell you who I'm not. Not the best trader in the world. I don't have it all figured out. I definitely don't claim to. Probably not the best trader in this room. I'm sure one of you sitting here outside of all of us is. But what I do bring is 6 years of experience in the markets to a spot where I'm now taking payouts every month, multiple payouts per month this year, which is pretty sweet. Hope to continue that with Top One. No payout from Top One just yet, but we're working on that. But I don't have any numbers up here because I like to let my trading talk for me. If this skips, let's do it. Oh, I went too far. I went back 3. Okay, one more. There we go. Because I trade live on YouTube, 100% free almost every damn day. 9:30 a.m. You can watch the wins, losses, break-evens. You can watch me make mistakes. You can watch me do well. I love to do it, not behind a paywall. It's really fun to do. And I hope to have some of you guys on there hanging out on Monday for NYSE Open. Happy to answer questions. I talk with the chat. It's great. But you could decide for yourself whether you want to fade me, listen to me, if I'm worth a damn, all of that fun stuff. So that's my track record. I enjoy doing it there on YouTube. Hope to see you guys on Monday next week. So we'll jump into these next 3 slides and a little bit of the mindset psychology stuff before we jump into the boring math. I know this thing's trying. There we go. Is it going to skip too? Okay, so I was born and raised racing motocross, but before I even get into it, who knows the story of the 4-minute mile? The Roger Bannister story. Okay, bunch of you guys. I'm going to tell you my 4-minute mile story real quick. I was racing motocross since the time I was 3.5 years old. 3.5 years old. Every year consistently up until that picture there when I won my first race. About the time that I was 3 years from this picture, I was ready to win. I had everything dialed in. Great bike, my father as my coach, great nutrition. I was training, focusing, riding like multiple times a week. I was upstate New York, supporting it through college. But every time I showed up, every weekend I was going racing, I would be second, third place. I was right there. Sometimes I would even get the whole shot. I'd be first to the corner, and I would end up right behind first. I couldn't put my finger on why. And it wasn't until I won that first race did I recognize what was going on. Nothing changed when I finally made that decision that day, and I remember it, where I was so angry and mad that I had been, something shifted right there. I was so angry and mad that I had been in second place for so long, and I said, today's the day that I'm going to win. And then I went and won, which was cool. But what happened right after was just absolutely insane. I continued to win. I won every other race that I went to for like the next dozen races. Nothing changed, except I won that single race. And I didn't recognize it at the time, but it was the 4-minute mile story. I didn't know that I was holding myself back. I didn't believe that I could win, even though I had all of the skill set. I had the machinery to do it. I had the will. I just didn't believe in myself. Because I didn't believe I could win, I never won. Second place every single time. And then once I crossed that line, and it took me way too long, and I could have done it a whole lot earlier, I had the belief in myself, and I showed up confident. I'd whole shot and run away with it. It was such a drastic change. My father even said it to me, "What changed, man?" And that was it. So I encourage for you guys to try to take away from this. In trading, we are faced with this really difficult challenge. We know how hard trading is, and it starts to get to a point where you learn technical analysis, you learn risk management, you take one of these guys' strategies, and you fight some of the demons inside, and you kind of understand, you're able to control emotions, but you have to believe that you have the ability, without a shadow of doubt, to extract money from the markets, or you won't. And the market won't give you that winner's mindset. Motocross, years, it didn't give me that winner's mindset. I had to make it that day. So I encourage you guys, think on that, reflect on that. I don't have the easy answer on how to just flip the script and give yourself the winner's mindset, but recognize the market's not going to give it to you. If you're waiting for it, it's not going to happen. And unless you believe you're ready to take prop firm payouts to hit whatever goal that you are, striving for, you won't hit it. You physically cannot. So winner's mindset and belief in yourself. Don't hold yourself back. Running. I've ran quite a few races. This is me at New York. Town of Celebration Marathon, ultra running. That's a 50-mile race. What I take away from running is grit. Doing something really hard every day. Now, you don't have to be an absolute psychopath. I'm not a great runner, by the way. Here's me in New York. I wanted to run a 4-hour marathon, a sub 4-hour marathon. I blew up. It was the second hottest day ever, the year that I ran it. I blew up and I ran like a 4:45. I was walking in the middle of the race. It absolutely sucked. I fundraised. It was autism awareness. Everyone knew I was running it. I was so disappointed. I wanted to quit that race specifically. I finished it, and then I said, I'm going to keep training, and I'm going to hit that 4-hour marathon no matter what. If I blow up at the next one and the next one and the next one, I'll continue to do so. And that's the grit. Just never stopping from whatever that goal is. One foot in front of the other, continuing to hit your goals. And that's what I did, Town of Celebration. That race was super gnarly. It was a 50-mile race this year. I ran it with my brother-in-law. At mile 30, I had a gnarly headache, super gnarly headache, probably from the long-ass hair that I've cut off recently, bouncing around. My knees were absolutely killing me. My legs were swelling up. And I sat down at mile 30. I was like, dude, you got to go. He was a better runner than me. He's on his way to a 100-mile race. I was like, you got to go. And he left. I sat there. It was a 10-mile loop. We had to do it 5 times. And I sat there, and all those demons crept in, right? Same thing with trading. You don't belong out here. No one cares that you're out here. What are you doing? You're never going to finish this. You're not good enough. And you have to make the conscious decision. And there was so much ahead of me, like 20 more miles ahead, right? You have to make the conscious decision to say, I'll die out here, literally die out here, before I don't finish this race. I'll be the last person in. It was taking me way longer than I wanted to, way longer. But if you make that conscious decision and you just step back up out of the chair that I was sitting in and start walking your ass towards the finish line, you'll hit the finish line. That's me in the dark. I started the race at 7 a.m. Just remember that no matter what, if you keep putting one foot in front of the other in trading, no matter how hard it gets, no matter how many, accounts are blown and mistakes are made, it's not, to be the degen and run yourself into the ground. If you tell yourself, I'm going to do this, and I don't leave myself any option but to do it, you will do it. Period. End of story. Conquering your fears. This is kind of another similar one. This is me diving with bull sharks in Jupiter, Florida. I was horribly afraid of the open water, My wife was scuba certified, and she got me first my scuba certification for my birthday. And I made a whole bunch of excuses. I pretended I was sick one time and would reschedule it. It's a true story. Because I just didn't want to go. And eventually I did that. And then for another birthday, I think she's trying to like off me. She goes, we're going to go shark diving. So this is Jupiter, Florida. That's a bull shark that I'm next to, like the most aggressive shark species. And I was horrified when we were going. She was scared as all hell. Why we do these things, I think, is to prove to yourself that you can do whatever is the hardest thing for you. You can do it, right? I didn't want to, and if I looked back on this, even right before I did it, I'd say not for $1 million am I getting in the water with the sharks. I'm not jumping into like where all the sharks are in the water. Like, that's crazy. You can do whatever you set your mind to. You have an unlimited capacity to grow and to do whatever the scariest thing in the world is. You can do that. I'm proof of it. Horrified, right? All of you can do that, and everything else that I've done. That's the mindset that I want you to take away from this, guys. Grit, conquering your fears, never giving up, and don't limit yourself. Don't limit yourself. Believe in whatever it is with an arrogant confidence, right? Before you're able to become profitable, at a certain point, you really have to believe in yourself. Create all of the data. And if it's through back testing, if it's through tracking your data, being at conferences like this, reading all the psychology books, all of that is extremely important, right? You have to have an edge. You have to have an understanding of risk management, all of that. But at the end of the day, when it comes time to actually do the damn thing, if you don't believe in yourself, no matter if everybody else around you does, you won't do it. So remember that. Believe in yourself. Now, the fun part. Whoa. I'm going to skip through these pretty quick, guys. Quick show of hands. Who knows what win rate and risk to reward are? I know we got some new people in here. Throw your hand up, because if you don't, I'm going to have to take time to explain it. Okay. We understand what hit rate is. We understand what risk to reward is, right? The amount that you're risking versus the amount that you stand to gain. Simple examples up here. You guys can all get these slides. I see Steven taking a picture. You guys can all get these slides, but that's why I wanted to do it. This way you know what we're talking about. Let's jump right into it. There's a couple parts to this, but first, you guys might know where I'm leading with this. Show of hands for win rate being the most important metric. Who thinks a high win rate or win rate in general is more important than risk to reward? And again, it's cool. You're all going to be wrong. Don't worry. Cool, awesome. Show of hands for risk to reward. Okay, I got like half the room raising their hand. Awesome, awesome. You guys guessed it, you're all wrong. Neither. Why? We know this stuff, right? But we're going to build on this. They have to be viewed together. Win rate alone, you tell me you have a 90% win rate, you know that doesn't mean anything, right, guys? We understand that. If I have a 10-to-1 risk to reward, if I tell you that without a win rate, does that mean I'm profitable? Okay, we understand that. We're all on the same page. Great. They have to be viewed together. They give no indication by themselves at profitability or positive expectancy. Okay, we got there. Now, this is a little bit dark. Before we even ask which risk reward is best, who, when they first started or early in on their trading journey, was told that you needed to make more on your winning trades than you lose on your losing trades? You need to make 2 times or 3 times. Show of hands. Like, you've heard that before, maybe. Okay, great. The entire room has their hands up if the camera can't see it. I love this stuff, man. It's great. Which risk reward do we think is best? Let's just do 2 of them on here. Show of hands for 1 to 3. Show of hands for 1 to 1. Okay, maybe like halfway split. The next one. You're all wrong again. There's no best, guys, and here's why. This is really the point of this entire presentation. It's been really pivotal in my trading, even to recently reflect on this. There's no inherent edge in risk to reward alone. Okay, I see Lawrence shaking his head. He likes this one. This is good. There's no edge in risk to reward alone. And I'm not talking about win rate not being spoken about with risk to reward. I'm talking about risk to reward alone. Let's get into that. Looking at these risk to rewards, which is a little bit dark, I hope you guys can see some of them, they all have a natural break-even win rate. We probably understand what this means, but the basics. If you are trading a 1-to-1, in order to make money, you need to be over the break-even win rate. If you're risking $100 to make $100 and you're winning and losing exactly half, you're breaking even, right? We have to increase past this break-even win rate for all of these risk rewards. But here's the example that is really important to understand with this stuff. In random market conditions, which we technically do not have, but completely random market conditions, with no edge whatsoever, entering randomly, and nothing that would erode our P&L like spreads, commissions, fees, swaps if we were trading Forex, anything else, we would end up breaking even at the natural break-even win rate for any risk to reward that's on that board. Does everybody understand that? Let's take a look at both of them again. This is actually going forward. In random market conditions, if we entered randomly, flipping a coin, right, with a 1 to 3 or 3 to 1, right, making 3 times what we're risking, we'd end up not making or losing money. We would just have a 25% win rate. The same is true for a negative risk to reward. If you risked $100 to make $50, you would end up break even with a nice high win rate. Why do I think this is so important to reflect on and really understand? I'm sure a lot of you guys are more advanced, you understand some of this. We are often holding on to this belief that we need to make our winners larger than our losers. We need to hold on to these winning trades. There's unique benefits and drawbacks to each of these, which we're going to discuss briefly after we get through expectancy. But I believe so many traders are held back by this belief that they need to have these massively outsized wins, which will inevitably be a low or negative, what we call a negative win rate, and really create a difficult to trade system, right? Now, you might be the Lawrence and really enjoy a high win rate, low risk reward system. We're going to talk about what that means, but I need you guys to know that you don't have to have a very high R multiple and a high or a low R multiple. Find what works for you in your strategy and you personally. Okay, we're going to talk about the differences here, again, both on the practical side and then just a little bit of my opinion, as well as kind of the unique differences. But this, I think, is one of the most simple but misunderstood concepts by beginner traders. It's something that I held on to for years. And if you asked me this 3 years ago, I'd say, yeah, no, higher risk reward is better. You need to make more money on your winning trades. That's how you make money trading. And then if somebody asked, well, don't you just need to increase past the natural break-even win rate for whatever risk reward you would have? I'd say, I don't know what that means, man, but I'm just going to keep on trading. Hold your winners, man. So as we get into it, we're going to talk expectancy just real quick. I'm going to breeze through it just so we can talk about some of the differences here. You guys still with me on this? We're following? Does everybody understand what we're talking about on here? Because I know I'm getting like technical on it after that beginning piece, but we understand what I'm stating here, right? You guys grasping this? Okay, cool. All right, we're going to talk expectancy real quick just because I didn't think it would be appropriate to do this presentation and not talk about the combination that brings risk to reward and win rate together. So real quick, expectancy is the average amount that you can expect to make or lose per trade over the long run. I don't love this metric, but I think it'd be helpful if you're comparing different risk to reward combinations. We can very simply say we need to just get past that natural break-even win rate, right? If we're running a 1-to-1, we know we'll be profitable with a 70% win rate, right? If we're running a 1-to-3, for example, we know the natural break-even win rate is 25%. If we're at 40%, we're nice and profitable. But if you really want to get into the nitty-gritty and understand what that expectancy for that specific combination would be, expectancy is going to be the formula. It also is going to help you compare the difference between increasing past the natural break-even win rate with a low R multiple versus a high R multiple, which is a little bit different. And there's a case to be made. One's better than the other there, but it's important to recognize there's no edge in it alone, guys. It's just continuing through a little example on it. Again, I'm going to breeze through this stuff. I don't think we need to do math here at the end of the day. I'll give you guys the slides. You guys can pay attention to it. But just explaining what the expectancy would look like for a 1.5-to-1 with a 60% win rate, how to calculate it, and what that means for you. Positive expectancy at the end of the day is going to indicate a profitable system. A larger expectancy, if you are comparing like risking $100 per trade with different win rate and risk reward multiples, ratios, you'd be able to compare them side by side, kind of see what that looks like. But here's really what I want to talk about. The differences in win rate and risk reward combination. So we know there's no edge in it alone. We know we're faced with the same challenge of increasing past that natural break-even win rate. But we might say, well, what does that look like for me? What does that look like if I'm trading a higher risk to reward, lower win rate, which is natural, or a lower risk to reward, closer to a 1-to-1, like you've heard a lot of these guys talk about today, and maybe a higher win rate, right? Austin's talking about being around a 1-to-1 with a 70%. One is not necessarily better than the other. I'm going to talk about one piece with expectancy. It's a little bit important to recognize. But they create drastically different distributions in equity and in the distributions of wins and losses that you will see. So this is somewhat obvious, but it's important to recognize as you guys are kind of crafting this for yourself, looking at your averages and deciding how you want to structure your trades. Higher risk to reward, lower win rate systems can be very profitable, but inherently you will deal with significantly more losses, oftentimes losing more trades quantity-wise than you win, and having longer losing streaks, okay? Opposite is true for higher win rate systems. You will win more frequently. You will go on winning streaks as opposed to those losing streaks. I feel, and again, here's where I'm adding some of my, my opinion here. I feel a lot of traders struggle with confidence because they are attempting to trade high risk to reward, low win rate systems. It becomes very, very difficult to continue trading after 3, 4, 5 consecutive losses. And even with a modestly low win rate, I'm going to give you the example, you will have to withstand a number of consecutive losses in a 50 trade sample size. I'm going to look at you for this one, Lawrence, for sure. I'm going to try to get the numbers right. With a 40% win rate, you're near the 90% mark. I think you're over the 90% mark to see 5 consecutive losses over every 50 trade sample size. So doing everything correct, naturally, with a random distribution of wins and losses, you will incur a 5 consecutive losing trade streak. I want you to think about what that looks like, right? Maybe you're taking 1 to 2 trades, per day. That could be an entire week of losses. If you're trading with a 30% win rate, that number continues to go up, okay? Again, they can be extremely profitable, but I think it's really important to reflect on. And if you choose to go that route, which is totally fine, there's a ton of high risk reward traders, you have to really reflect on what that distribution of wins and losses will look like for you doing everything correct with your system. Higher win rate systems and a more modest risk reward. I'm not talking about a negative risk reward here. Maybe we're closer to that 1-to-1, 1-to-2, with closer to that 55, 60% win rate, something modest in the middle there. You won't have to withstand those losing streaks. You'll go on more winning streaks. You'll be able to build some of that confidence and actually be able to trade the damn system in front of you before you strategy hop, change something up. Again, I think this is really, really important for men and women that are early in their trading journey. Continuing down this path. Questions, guys, and feel free, hop in. Anything in between here. Lawrence, comments, give it to me, man. Yeah, no, it's a great question. So I think number one, most traders have this, they're misinterpreting it. Even if they understand the basic stuff that I'm talking about here, and I hope you guys do, and I'm happy to answer questions on it, I don't think they really recognize the high probability of the losing streaks that they're going to see with a low win rate system. And if you're trading something with a 2-3 to 1 on average, you're more than likely not going to be at 50%. I mean, we have stats from a lot of traders. I don't love the top step board because I think it gets a little bit skewed. But you could look at some of these numbers, and if you're over a 2 to 1, you're almost never at 50%. And if you're under a 50% win rate, you're going to lose more frequently than you win. You really have to be ready to take those losses, and I think they can be difficult. I think it can be really difficult. So either adjusting by deciding to widen out a little bit, get more modest on, widen out stop loss and maybe bring in, take profit a little bit, get more modest, increase that win rate. But past that, it would really just be acceptance of your system. How do you know what your risk reward is, what your win rate is? Again, if we're not trading with let's just look at it again. If we're not trading with a fixed risk reward, right, which most of us are not, we're not entering and exiting the market with one contract size with a fixed take profit and fixed stop loss, you're going to have an average, right? Maybe you look at your account metrics on whatever firm you're trading with. You're going to have an average. That's your average risk reward and win rate, and from that, you can create an understanding of what the equity curve is going to look like, right? And I think that in itself is important to reflect on. It's a Mark Douglas quote. I'm going to see if I can hit it right. there's a random distribution of wins and losses for any given set of variables that define an edge. Okay, it's a great one. Mark Douglas, Trading the Zone. Rest in peace, Mark Douglas. Love that book. I've listened to it on tape while I'm running ultra marathons like 100 times. Not 100, probably like 6. Think about that quote again, though. There's a random distribution between wins and losses for any given set of variables that define an edge. Reflect on that. When you flip a quarter, does it land heads, tails, heads, tails, heads, tails with a 50% win rate? No. It lands heads, 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 tails, 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 heads, 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 heads. That means you're going to see negative and positive variance. And if you're running a system with a 50, 40% win rate, and again, this is even for modest win rates, guys, you're going to see a lot of losses. You're going to have to recognize that, and it's a random distribution. It's not an even spread. So, you have to build confidence in your system if you're not going to backtest through forward testing with low risk. And again, creating that belief in yourself and understanding of the game of probabilities that we're playing to be able to trade through the losing streaks. I think a lot of traders are, one, misinterpreting some of this stuff, but two, just really not recognizing what this means and what this will look like over the next 50 trade sample size. And they may have a great read of the market, great way to manage risk, a great edge, but they never let it play out. Because as soon as they take 2 or 3 losses, doing everything they're supposed to do, and they actually needed to take a 4th, they never get to the 5th and 6th trade that bring them back to profitability into a payout. So think about that, guys. There's a lot of losing in this game, a lot. And it's a game of probabilities that we're playing. You can adjust this stuff. You can decide to tone back on risk to reward. You can decide to increase it, and that will adjust your win rate naturally. So I think by understanding some of this stuff, it opens you up to a lot of freedom and flexibility. Don't be pigeonholed to think you have to have some high win rate or high risk to reward number. You don't. You have to create a positive expectancy. You have to increase past the natural break-even win rate and understand what your combination means for you. So just a little bit more on this, and I'm happy to take some questions. High risk to reward, low win rate strategy. What does that equity curve usually look like? And Lawrence might be able to speak on this. Oftentimes, a lot of flat periods and then sharp stair-step type movements. It oftentimes requires a larger sample size to be able to evaluate it effectively. Otherwise, you might take 3 or 4 trades right off the rip and they're losses. You might have a great strategy, right? But if you don't actually give that thing time to play out, you never really get to realize that. Opposite is true for low risk to reward, high win rate. They appear reliable right off the bat, right? So if I give you a half to 1, I say you only got to make $50, 5 points for risking 10. You'll probably be able to hit that pretty quick, but you got to recognize you also have to allow that to play out over a large sample size. As well, can be more fragile. Here's where we kind of get into some of the differences here. Quick, and they're also just more susceptible to errors. Multiple losses can really start to disrupt that overall growth if you're running a negative risk to reward, right? As opposed to the real high risk to reward. I think on the next slide I got some more on this. Psychological differences, which we really want to get into, but I'm going to start on the bottom here. High risk to reward and low win rate systems. This is more of the math, and important to recognize because I'm sure you guys will do the math and call me up and say, no, Zach, I think you're wrong. So I got a ton of YouTube comments on it. I love having this conversation. With a high risk to reward, low win rate system, you will have a sharper increase, a more drastic increase in expectancy as you increase win rate past that natural break-even win rate. And the opposite is true for lower risk to reward, higher win rate systems. That can be seen as an advantage to say, I don't need to increase as much in win rate past the natural break-even win rate because I have this high R multiple. But what you also have to recognize is that's a double-edged sword. Because if your win rate starts to drop off, that expectancy is more volatile with the high risk to reward system, and you run the risk of ruin a lot quicker if you run that win rate down quite a bit. But that's a really important math part of this to understand. From a psychological point, it's a lot of what we were just talking about. A lot of patience required for the high risk to reward stuff, guys. A lot. You have to be able to withstand losing a lot of losses. We have to lose a lot in this game as it is. If you set yourself up with a 25, 30% win rate, it requires an enormous amount of confidence in your system and belief in yourself that a lot of traders just don't have early on. And it can be very, very difficult to get through. I'm a fan. Obviously, you kind of hear the way that I'm biased talking about this. I'm a fan of a more modest risk to reward, modest win rate. Something more down the middle, preferably right around that 1-to-1 and positive on the win rate. I believe, again, it allows you to build more confidence. It turns those losing streaks into winning streaks. It can be, quote unquote, easier to trade that day in and day out and stack up green days on prop accounts specifically. But lower tolerance for errors, right? With a high risk reward system, if you take a quick L, if you have to take a quick haircut like Tanner did this morning, it's not as drastic, right? If I'm running a 0.7 to 1 and I enter on tilt, I do something crazy, that one loss is going to weigh. It's going to be weighted into that equation heavier. So again, double-edged sword with this stuff. Questions on any of this stuff, guys? Questions? Thoughts? So you said higher RR first, but lower RR first. That was. I do. And again, there's going to be multiple schools of thought, right? So this is now my opinion. I want to kind of differentiate between what I would say is just the simple math behind it and now my opinion. I think if most traders just started with a 1-to-1 and around a 50% win rate, and we tried to win maybe just a little bit more than we lost, like a 1.1, 1.2, by allowing those trades to run, and maybe win a little bit more quantity, rather than running at the extreme version with a real high risk to reward or low risk to reward, we would do much better. So yes, I think as a whole, again, markets are not completely random. We have other things to consider that we have to cover, fees and spreads. But we're playing a 50-50 game off the rip here, guys, if you think to really dumb this stuff down. And most traders' equity curves are a straight shot to the ground, right? And that's for more reasons than just the math behind this. But if we just started out trying to make a little bit more and win a little bit more, rather than some crazy expectation of having the confidence to trade a 20% win rate, 5 risk to reward system, yes, we would be much better off. And I think as you grow as a trader, you'll naturally find, based on your strategy and approach, right? Trend following systems may provide much larger movements. It may make sense to attempt to capture a whole lot more of that move. Reversion trades that, we saw some guys trading here, they may provide these really cheap setups where you are going to take multiple haircuts, run this low win rate, high risk to reward when it finally hits. But I think off the bat, that can be difficult. It can be really difficult to handle. And again, opposite is true. Same is true for the extreme, right? I think a negative risk to reward system, what I would refer to as a negative risk to reward system, where you are standing to lose more than you make by a lot, can be very difficult. Very difficult to trade. Requires a lot of accuracy. And while it can seem like you're a godlike trader right off the bat because you don't need the market to move in your direction very quickly, a couple losses can be really, really tough to stomach and tough on the P&L. So, did I answer the question? Awesome. Questions, thoughts, concerns? Let's get there. Come on, PowerPoint. There we go. Yeah, go ahead. Mm-hmm. Yeah. Yeah. We'll pull it up. I meant to put it on this, but it's a simple chart. I'll include that for you guys. Mm-hmm. Mm-hmm. Changing the sample size to get a percent probability? Yeah. Yeah, that 50 trade sample size. No, I understand. I don't think it's as important to, because I'm not utilizing that data in some super specific way outside of interpreting the difference between a one win rate over another, because that's specific to win rate. So I think a 50 trade sample size is a pretty decent chart to look at, and it will give you that understanding of the probability of seeing it. But if you wanted to get an exact number, there's math behind it where you can do it simply. So yeah. What would your feedback be? So I do that to size my positions. Mm-hmm. So I know I have between a 50 and 70% win rate. Mm-hmm. On a strategy I've used for more than a year now. Mm-hmm. I have about 1,000 trade samples. Sure. But when I'm only doing one trade a day, I realize I need to push it more because the chances of me hitting that variance were actually less. Yeah, it's one way to do it. I would probably just lean on the high end of, because you're doing it for like risk of ruin, right? Like for risk of blowing the account, like right for just full account sizing. I'd be way more conservative than that. Yeah. So this is more advanced position sizing strategy, which is a good way to do it. It's an interesting way to do it. I don't know that I would use that chart in that specific way, and I don't know that I would look at a very small sample size, because I do think it requires a fair sample size to get an idea. So yeah, it's an interesting way to go about it. Yeah. We can talk about it after in a little bit more detail. Yeah. More questions, guys. 'Cause I'm gonna get to the end of this right here. The key takeaways here. Neither win rate or risk reward is more important. One's not more important than the other. There's no edge in risk reward alone. And again, if you leave with anything, I want you to reflect on that. A high R multiple is not going to save you. A high win rate is not going to save you. You don't have to have an ego in one of those or another. And there's going to be a combination that's best for you. And if you allow yourself the freedom and flexibility to review your averages here and experiment with, again, maybe a lower R multiple, higher win rate, because I feel most traders are dead set on trying to get a 2 or a 3 to 1 out of their trades for some reason, you can open yourself up to more profitability, to more expectancy. Different combinations have unique benefits and drawbacks. We talked about some of that. Do the expectancy calculation. Look at your averages, do the expectancy calculation, and then play with it. What would it look like if I had a higher R multiple and I kept my win rate the same? What would it look like if I increased my win rate, but I kept my R multiple the same? Adjust from there. Experiment. Understand the relationship between risk to reward and create a positive expectancy. Find the balance. Find the balance for you, your personality, your strategy, your approach. That's what I got for you guys. And guys, thank you. No, I appreciate you. If you guys have questions after this, I'm happy to be here. I'm happy to show you my charts, talk about any of this stuff in detail. I do majority of what I do for free. More than happy to have you on my live sessions, 9:30 a.m., and in my free Discord. It's not a VIP feeder program, anything like that. Hope to see you guys there.
One more time, everybody. The new look, Mr. Boyajian. So, first question I'll pose to the panel. How long did you strategy hop before you finally decided to commit to the strategies that you've all taught today? All three of you spoke over the last 2 days. You traded this morning especially. How long did you strategy hop? And then what happened with that strategy you're trading today, the initial balance, that it told you or it felt to you that this is it? You want to go first, Ev? And then we'll just go down the line?
Yeah, I mean, I didn't really hop per se. I mean, I'm not trading what I did day one, but I think a lot of it is you could hand me the strategy I'm trading now. Like in the first week I ever discovered trading, yeah, I'm probably going to suck at it. That doesn't mean the strategy's broken. I'm just not a good trader yet, which is fine. That I think like when I started to find success, I was just saying, well, it's probably this strategy because it's working. Those other ones weren't. I think it's probably a mix of both. Maybe the strategy, my own self-beliefs, and just my own tolerance of things. But I think it was also, well, you just weren't ready to make any strategy profitable in the first 2 months. So don't blame the strategy, look within. But I think that more so in the past 2 years, like strategy's just been set. It's just been evolving and maybe removing some things and adding something to replace it. But the asset, the time frame, the VWAPs have been the same for over a year now, and I don't really like make drastic changes of, okay, now I want to go trade gold and remove all the VWAPs. I'm going to look at some other indicator. It's really just becoming how can I add, but also how can I subtract some things so I don't overcomplicate things. Just always be adding. If I'm adding something, it's most likely because I'm removing something that's went down in importance. But hopping in the beginning, yeah, I definitely did that, as most of us do, just to find what fits best for your own beliefs and what do you like. But it's also you're gaining experience of reading price action with all these different types of indicators. What makes sense, what doesn't make sense to you, and then you just pick and choose which ones you want to run with, and then you stick to it for a longer period of time.
Good, Joey. Is anyone in here in strategy hopping phase right now? Okay. It's okay. Put your hand up. Like, we all been there. Yeah? Yeah.
I definitely strategy hopped. I mean, I was the fucking Easter bunny between strategies.
Dude's got jokes, bro.
I went from strategy to strategy, right? And I did that for probably a year, maybe a year and a half before I actually found what works for me. And I think the turning point there was when I found something that not necessarily was easy, because trading's not easy by any means at all, but the strategy felt easy. Like it felt like I had a clear vision of what I wanted, where I wanted price to go. Like I talked about on the initial balance, right? Where it gave me clear targets of what I wanted to see, whether it was 50% of the IB or the full. I knew exactly what I was looking for. And then from there, things clicked. And so I think, you know, it's perfectly normal to strategy hop until you find that one thing, right? We all, as traders, we all have that one thing. And once you find that and things click and feel easy, that's when you really find a turning point in your trading.
The biggest issue is too many people don't try strategy long enough to have enough data to be like, oh, this works. Because not every strategy is going to be perfect. You're going to take losses. Like the best strategy in the world is not going to work perfectly. Even saw today, that was a bread and butter setup that I took live in front of you guys. My management could have been better, right? There's still areas to tweak on it because it's never perfect. But over time, I've done that so often and taken that entry at least that I know I'm like, okay, I'm in the driver's seat. Now I just still figuring out how to navigate the road as it works, but the markets are, you know, we don't know what's gonna be given to us. So when I first traded options, this was actually really something I struggled with because I'd have all these different playbook setups, doing all these different types of things. And I remember actually one specifically where my best edge was called the power earnings gap. And basically it's when a stock had crazy good earnings, they gapped up specifically into all-time highs, and it's just like a gap and go continuation trade. And I like never forget the night. I kind of like saw this a little bit when I was getting my footing. It was on Chipotle, and it was like one of my best options trades like to this day. Night before, back tested it. It was a gap into all-time highs, and I was like, all right, if this starts to go at the open, I'm just gonna get long basically and go for it. Got long, got in calls. They were extremely mispriced in my favor. And 4 minutes later, I sold it, and I made $4,000 off $900 into the play. And I was like, oh my gosh, this is the best day ever. Of course, I was really early, and then I watched it rip, and I would have made 30 grand off the play. And I'm like, are you kidding me? But anyways, the whole point of that is once I found that, I was like, oh, this is something that has edge. And then I continued to forward test it as time went on when some of these things did gap into all-time highs. And there would be scenarios where it didn't work out the same. So then I would have to figure out, okay, what does it look like now when it gaps into all-time highs and doesn't rip right away at the open? What if it pulls back a little bit, right? What if it does this? So there's all these like variations of the scenario. So it was a lot of strategy hopping initially with options, which kind of made it difficult to find something that made a lot of sense. But eventually those earnings plays did work out very well for me, and that's kind of what got me actually profitable. Then when I switched to futures, the biggest thing for me that helped was documenting that easy money setup of the day. And I did that for an entire year straight, documenting that pullback to VWAP setup, that one play every single damn day, to the point where I'm like, I can find this almost every single day. Yes, it's not always going to materialize perfectly, but my eyes are now trained to find it, and I know it works all the time. So that's kind of like a clicking point where I'm like, okay, I can do this over and over and over and make money. And I never had the mindset of like, well, let me try this or try that. And the shiny object syndrome is like the #1 killer of traders in the developmental phase, especially.
How many strategies do you think a trader should have in their playbook?
For trading futures, I literally have 3. That's it. 3 basic strategies: pull back to VWAP, pull back to volume point of control, or a key level reaction. That's it. And so other than that, if it's not one of those and I find myself taking a trade, I'll literally ask myself out loud, I'm like, Tanner, what the fuck was that? That's not that's not your
Do you
setup.
answer the question back out loud too?
Yes.
I don't know, bro.
That's not a setup. Like, come on.
I don't know what I'm doing. What do you think, Joey? How many strategies?
I think 2, max 3, right?
Okay.
I mean, if you have more than that, you're spreading yourself too thin, and then you start to confuse yourself on what it is you're looking for, because at that point you could be seeing 2 different things, 2 different strategies coming into play, and you don't know which one to take, and you could be wrong on both, right? So
absolutely,
I feel like 1, 2, like that's it.
Ev?
Yeah, I'd say 2 to 3, and even within that strategy, if it's not going to be any of ours, it's just like the more simple you could make it, that you don't need to like, oh, let me explain it to you. Like you have like 2 days, it's going to take a while, because this checklist, I go through everything. It's just going to be tougher to remember for yourself and also act on and go through in the moment. That if you could just dumb it down and keep it simple, then you'll be easy. Like it's easier to just find on the day to day, and like Tanner was saying, just ingrain that pattern. Once you just study it for so long. I mean, I have like a VWAP bounce and a VWAP break, and then the only third play would just be like full on tilt. doing something that's not part of the plan. That'd be the third setup that I don't want to be in. But yeah, anything outside of that, it's just like you don't necessarily need it. And like he was saying, you're just gonna find, well, that's telling me to long it. This is kind of telling me to short it. So like, which strategy do I like better, or do I want to follow today? You don't really want to have to confuse yourself or make it harder than it already is.
And if
So tilt's not a strategy?
No.
No, it's a playbook on TradeZella. But
It is. I was just going to say. So what you could do is you can actually track on TradeZella through playbooks. There's a playbook section there. Track your price plays. I call them price plays, where you're just kind of guessing. You don't have a VWAP. Maybe you got a key level. Start tracking it. As soon as you see how red those things cost you, you'll stop doing it. It just track your tilt. Because when we tilt, most of us don't even do a daily report card. I'll challenge you to do the opposite. Track the tilt. All of a sudden, you stop having tilt days. Shocker. Hard-written rules. We talk 2 to 3 in the playbook. Do you guys believe that traders need to have handwritten, hard and fast rules printed on the desk, read it every morning before you trade?
Like physically read it? Is that a requirement?
Why? Because you can't read?
Yeah, I'd prefer not to.
Right. Yes. I'm asking you, should they go home and write out the rules that they take from the strategies they learned here in the videos and then read it every day before they trade?
Yes, until you can break me down the plan A through Z without hesitation or having to look up anything, or dumbing it down, keeping it simple. Your trading plan shouldn't be too complicated. But yeah, I think it's definitely healthy in the beginning to remind yourself, what am I looking for this morning? What do I need to see today? What is my risk tolerance today? What size am I going to put on? Like, reminding yourself at any stage is always good, but especially in the developmental stage, always have to remind yourself in the morning what you're looking for, why you're doing it, what do you need to do, when you're going to cut off. All those simple questions definitely going to help in the beginning.
Yeah, he pretty much nailed it on the head there. I'll just reemphasize that. Some of my mentorship students, I had them write down on a piece of paper what they needed to follow, the systems they were going to follow, and that would help set them in the right direction on where they need to go for the day. That put them in the right headspace, give them total clarity on the day, and I found out that really helped them. So just to reemphasize that, I think that's pretty much it. Write it down, read it every morning before you start trading.
Write it down on a sticky note, put it under your monitor, read it, never follow it. And then over and over, you realize
the answer's right in front of me.
The answer's right in front of you. I can't tell you how many sticky notes I used to have with the rules there. But no, like this is something where like when you're doing the breakdown of like a psychological component of the day at the end of the day, you'll see the same thing you're doing over and over that's really holding you back. And like that is like the part of my daily report card that I always use is changes I need to make going into tomorrow. And it's a lot of time it's the same thing. And I see this with traders I mentor as well. It's the same thing over and over and over and over, because just like one bad habit that's ingrained in us, and we know it's holding us back. We know it. And whenever you're in your logical state of mind, you're like, this is the one thing. Fix this one thing. And then you have 1 or 2 days where you actually fix it, and you're like, oh, wow, I see so much value in this. So the biggest one usually is just around risk, right? Just respect your hard stop. I told you guys a story yesterday of the $50,000 I could have made extra from respecting that one rule. It can be that simple.
Yeah, I'd say most of us have like that light bulb moment like at the end of the session, right? Whether the day was good or bad, you go back at the end of it to review it, document it. Okay, now I know what I need to do. I know what went wrong today. I'm going to do that tomorrow. But, I mean, that's like 12 hours later, because hopefully you're not trading the Asia session, that by the time you come back the next day, remind yourself, what did I just say last night that was the biggest lesson of that day that I need to implement today, and even just going forward in general that, I mean, the biggest lessons are like, okay, the day's over, let me go look back at it. But you got to remind yourself in the morning, hey, what did I learn last night that the goal is to do today and fix today? And like Tanner was saying, it's always the same shit, and it's always like the same 5 things, right? No one's experiencing something special. It's like, I'm struggling with this 4 days out of 5. All right, let's fix that thing first, and then we'll worry about everything else and maximizing. But we can't get anywhere without fixing this one thing that's standing out in every report card. Fix that first, and it's just going to be staring at you.
Yeah, like today, I looked at YM. I don't know if you guys looked, but if I just wouldn't have listened to Austin and not moved my stop, I would have hit my target. I'm just kidding.
Okay, let's get controversial. You know I like that. How important is a morning routine to successful trading?
Massive, huge. I think it's super important. I've been through it, and I've seen clients that go through it too. I'm like, oh, well, what do you do to get ready for the open? Well, my alarm goes off about 10 minutes before. I roll out of bed.
I wish I could sleep that much.
They get up, they don't look at anything. And I've gone through that too. I remember back in the day, I'd literally wake up like 10 minutes before the open and be like, all right, let's rock and roll. Let's look at some stuff. And Now it's like, okay, I need at least an hour, if not 45 minutes minimum.
That's how you know you're getting old, bro.
Yeah, it's like get coffee, get ready. I do think your brain needs to be awake, especially me on the West Coast. Like I wake up earlier than you guys have the luxury here of like you have a lot of time, right? Like I'm waking up at 5:30, got to get my brain up, going, and you need to be awake. You need to be focused because if you're not prepared for the day, and it will show over time. You can't just wing it. Eventually, you're going to get smoked.
Yeah, I agree with that too. There's a lot of things out there that send a message where you got to wake up at 5 a.m., meditate for 20 minutes, read a book for 30 minutes, go work out for an hour, and then start your day. You don't necessarily have to do that. Like, I mean, at least give yourself time to wake up and get your brain ticking, get the blood flowing, right? If somebody comes to you, say you have a business meeting, right? Someone's coming to your house at 7 a.m., right, to make an important financial decision about their business, and you just roll out of bed 10 minutes ago. Do you think you can make a logical decision for them and their money on the spot right then, 10 minutes after you woke up? Same thing for your own trading, right? If you wake up, roll out of bed, go to your computer and start clicking buttons, you're not thinking fully, right? You're not thinking clear. And so at least give yourself the time to wake up, have some coffee, maybe grab a workout, right? And get the blood flowing enough to where you can make good decisions.
Who here has caught themselves thinking that morning routine is not important? Be honest. Who's like, I'm going to fucking figure this out without that stupid cold plunge, cold shower, morning routine? Be honest. Anybody? Fucking liars. I know all of you. Half of this room has thought to themselves, the morning routine doesn't matter. Yeah, like at some point, every person in here has been told your morning routine is going to determine your success. And you said, fuck it, it's not for me, because I'm better than that. That's what I'm saying. So one thing to look at is actually like science. Like if you like data, then you could just be a nerd. They do studies on your brain. Your brain works better after you get your body moving. It's a fact. It's just a fact. You can... Exactly. The same thing. But what I'd add is do something difficult. I'm psycho. I used to go to the gym in Philly, and I would just go on the treadmill and run because every treadmill was empty, and there'd be people doing this, bicep curls, packed. And I'm like, the treadmill's empty. Why? Because it's hard. Nobody wants to run on the treadmill. But I was crazy. I'm not as crazy anymore. But I was crazy, and I would just run because it was difficult. So I would encourage all of you to do something difficult that requires discipline before you start your trading day. The subconscious practicing of discipline off the charts will spill over into the discipline on the charts. You with me on that? Everybody? Good. What's the hard thing you're going to do? Shout some things out. Cold shower. That's not that hard. What else? Meditation, 10 minutes. Easy. Huh? Anything else? Cold shower, meditation. What's another hard thing you could do? Make your bed. What was that book the Navy SEAL guy wrote? No, it was the Admiral.
No, isn't it Make Your Bed? Is
that the name of the book? It's like some Admiral guy. He talks about like if you just start your day consistently with something that most people won't do, it spills over into the way you talk to yourself, and it spills over into the way you act. How you do one thing is how you do everything. That's come up 5 times in the last 2 days. So again, like he said, if you act unprofessionally in your morning routine, how will you act when your morning starts? Y'all are smart.
I think as well, if you can trick your this might just be me because I'm fucking fucked up, but if you could trick your brain into being like, oh, I love this. This is really difficult. And it doesn't even have to be like the hardest thing. Like recently I started doing fasted cardio, wake up at 5 a.m. and go upstairs in my apartment and just go on the treadmill for 30 minutes. But I've noticed once I get back to the desk, I'm like alert, I feel good, and and so the night before, I'm not like, oh, I gotta get up at 5. I'm like, I get to get up at 5. Let's do it. This is gonna suck, but you gotta do it. So it's like I like trick my brain into being like, oh, I hate this, but it's good for me.
Evan listens to Drake and sings every morning. I get him on the stream sometime. Kiki, do you love me? Remember what I'm saying? That was big, bro. That was big.
Allegations.
Sorry. So just one more point on this morning routine thing, because Tanner brings up a great point about the fasted cardio, and then you start thinking it's like different. I would just say, like, do it because it's difficult and other people won't do it. Don't do it because you talk to yourself and say you're fucked up. You're pushing yourself. They're fucked up for being complacent and stagnant and boring. You're doing it because you know it's hard and they're not gonna, and it's gonna reward you. So find that motivation. Is a cold plunge easy? I hate it, bro. Like, no one in here hates cold more than me. Promise you. It's hard. But how rewarding is it? Because we've all tried one. Probably posted it on Instagram too, because if you don't post it on Instagram, you didn't cold plunge. But how rewarding is it? You get out, you're like Wolverine, bro, coming out of that tub, remember? Yeah. So do the things that reward you even when they're difficult, because you only got one life. In the words of Drake, YOLO.
I'd say notice how no one's answer was wake up and get right to the desk. Not even just because you're like still half asleep. It's just a matter of your mental capital. I'm gonna be thinking at the open and trying to make these decisions on do I want to get in, whatever, for the next 2 to 3 hours on stream or not on stream. That I want to like do busy work or just bullshit stuff in the morning that don't require a lot of critical thinking or decision making. That like I'm not mentally drained of like, oh, it's the open. I've been at it for like 3 hours. Like I'm done with these emails. I'm done with all of this. That I've been doing work, I've been running, I've been working out, whatever you guys are doing pre-market, but then you're still now awake, but you haven't really turned your brain on to decision-making, risk management, all these different trading things, because let's worry about that for the rest of the day. We don't need to be thinking about trading at 5 in the morning when the open's at 9:30 on the East Coast.
So let's talk about another controversial point. Morning routine was good, but we all kind of agreed. Backtesting. When we talk about process and strategy, how important is backtesting? Should people be backtesting, or should they just be following their mentor and letting the mentor tell them if they were backtested or not?
I've never backtested. I think the best thing you could do is, it could be tough to find someone you trust. I guess that would be the one thing of the strategy of like, I just showed you it, some pieces of it, and you could be like, well, I want to go see if it really worked in the past. But the next best step would just be start tracking it today. If you're interested in it or it made sense to you, start tracking it every day, doing markups. It's going to take time to store those, but going back, I mean, it's very tough to do with hindsight bias, especially with the VWAP being able to track the volume back then. I can't really do it that strongly, but even just the hindsight of, oh, that's the candle break on the VWAP I want to get in at. When plenty of the markups you saw today, like I took on drawdown because I took it, and then it takes on drawdown. But if I'm going back in the past, I'm going to mark up right when it looked beautiful. And I think just moving forward, you'll refine it in today's current market conditions, and then add this view up, remove that one. I think forward testing and currently just doing your own markups each day is going to be the best thing for you.
I'm in the same boat there too. I don't really back test that much. I never really did. I don't like going back in time and being the hindsight, you know, because I'm gonna be the same exact way. I'm gonna go back and mark levels where I think it looks beautiful, right? Because I've already seen it. Right, and so I want to make sure I'm getting real-time testing versus backtesting, because I feel like I'm going to excel and get more of an idea if this strategy works in real-time data versus past.
Yeah.
I'm pretty much the same with it as well. I haven't done too much actual back testing. A lot of it is forward testing, easy money setup of the day, because in theory that's like a method of back testing because you're looking back on it. I do think what back testing is beneficial for, but enough people don't do it correctly, is specifically for entries. Because you can do back testing on like TradingView or whatever, and you see bar by bar, just like going like boop, 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 boop. But if you're watching literally price in the moment where you want to take an entry, we know how it is. That candle could be full red, then it turns into a hammer. But if you're doing back testing and just going bar by bar and you just see like red bar, hammer, like when that bar was all the way down, what was your decision? You don't know. So it's like actually seeing price literally moving and doing its thing to take a good entry. That's a good form of back testing in my opinion. But other than that, like I don't do it that often, to be honest.
If you did chart markups like we showed earlier with all those thoughts and details and emotions in the moment and you snapshotted the whole day, would that be more valuable than doing backtesting?
Yes.
I agree.
1000%.
Absolutely. So don't get too caught up here, everybody. If you're new to a strategy and you're going to do, where's Isaac? You're going to do Isaac's strategy going forward, absolutely disregard everything they just said and go do 50 markups of the strategy and send them to him for feedback and make sure you're seeing it right. Once you've gotten past that point, it should be all live market journaling. That way you can get what Tanner's saying, an understanding of your thought process, not an understanding of strategy. It's more important for you to be focused on, am I understanding the concepts? Cool. Now how am I reacting in the live market? Concepts in strategy is a very small portion of executing it correctly. Do you agree or disagree? Agree or disagree? Yeah. So I think if you're thinking about it from a perspective of what is going to be the most valuable use of my time, especially in retirement, 150 back tests, you cherry pick and markups, waste of your time. Not valuable at all.
I'm just going to add it now because we're running low on time, and I'm sure later I'll have way too much tequila to get this across to you guys. But every single person that is here got invited by Austin or was referred or suggested that this person comes here for a reason, right? We put up enough performance to at least partially deserve a spot up here. I was telling somebody out in the back, some of us are good traders, some of us are also great traders, right? But it's not about the strategy. It's funny how this says trading process and strategy, right? And the last thing we were talking about was like evolution and growth and everything like that. 8 times out of 10, the strategy is not the problem, it's you. Your money management, your trade management, your emotional management. The more that you can automate, the better off that you are. You can try any one of our strategies, because you saw what yesterday, we all went long for different reasons, some right around the same area, some other areas, right? But we all walked away with money, right? And, you know, I was critiquing my peers and saying, all right, this, I don't know if I like that too much or whatever. But, like, if you tried any one of our strategies and gave it 4 months or like a quarter, right? But you made sure that you were spot on with your management and the trade management, I guarantee you'll find more success than what you found. Whether you found a little bit of success or none at all, if you try that, and it's not just mine, like whichever one you're vibing with the most, whichever one you understand and comprehend with the most, or feel most comfortable with, start with that. Don't strategy hop, right? And just trust the process, but more often than not, it's a you thing and not a strategy thing. Because we all have decent enough strategies. We've all been paid by prop firms and so on and so forth. So that's it.
And in your thoughts here, everybody, like, don't let backtesting in general think that is, or don't confuse yourself and make yourself think, if I don't backtest this, I won't understand it. You can understand a strategy fully if you can immerse yourself in some of the guys that are on stage. You know what I'm saying? All of us are available to be talked at, questioned, talked to. So what is the most valuable thing we all have? Time. So don't waste it. Who said that? That was gay. What you got, Lawrence? I don't want to trigger you. I'm sorry.
Lawrence, get out.
Fuck you, bro. No, go ahead. What's your thoughts? I've never had to do that. I've never changed the way I've entered the market because of something that the market is doing. I've changed the way I trade because I got new information. If the strategy is dependent on market cycles, I'm not a guy to give you advice on that. Because the people I coach and the people I work with, the strategy should work in all market conditions. Do you have to adjust stop losses? Absolutely. When volatility goes up, you need... Yeah, so if you're doing little tweaks, you can figure that out through tracking in the live market just as much, if not more, because of the points Tanner said, than through the backtesting, in my opinion. So I think if you were documenting your trades in the moment as detailed as you do your backtesting, if not take your backtesting energy and do that snapshot of the day, where's the money of the day, how I could have managed my trades better today, that will reward you more long term. It'll also probably tell you when the market is changing faster. Because now you're not going back a week ago or 2 months ago and looking at charts from then. You're looking at today with 10 times more detail. You see what I'm saying? That could be more valuable to you to make that adjustment when it's needed. You want to go on that?
I won't speak on your strategy, but I think with mine, a mix of it would be I do rely on some discretion that in real time I want to know what was I thinking at this time, what maybe influenced me to like it or not like it, when on another day it maybe is a textbook setup, but just something about it today told me, yeah, there's news in 10 minutes or the higher time frame just doesn't look super clean today, and it's sometimes tough to describe, right? We all take maybe a feeler position where it's just like, it's not completely on plan, but I just feel like it makes sense, and it's not as much of a gamble. I feel like with discretion involved in my own strategy, at least, I want to know today, tomorrow, the next day, like tracking that mixed with the VWAPs, mixed with the hard rules that I have, all right? I'm not solely reliant on my discretion, just throwing trades around, but back testing would just be tougher to find that discretion in there.
Since we're all VWAP guys, let's pose this question. It's a good thought. And then Brian will come to you in a sec. Why do you Why would a strategy change? What would the VWAP do different that I would have to change? I'm curious to know if anyone has a thought on that, because I'm thinking of it myself. I don't have an answer. Like, what would happen where I'd look at it and be like, yo, VWAP is not working? I don't think that can happen.
So it's still discretionary by nature, right? So I think what helps me on day, because there's tons of days where VWAP actually doesn't work that well, but it's depend on.
But what does that mean?
Market conditions.
So that means like you tried to buy bounces off it and it keeps going through it. And through
Exactly.
It.
So, but once it happens once or twice, that's enough information for me to go, okay, this is a range day. VWAP is just super static and not dynamic one way or the other. Therefore, it's not a good strategy today to use.
Correct. And so it's not like you would change that strategy. You put it on the tool belt, come back to it tomorrow.
1000%.
Yeah.
I think a perfect example too would be if we're talking market conditions would be when we started talking about tariffs and we got all of that volatility into the market. Before that volatility, let's just use VWAP as an example. Before all that volatility, were you getting more clean bounces off VWAP versus when we had that volatility, was it running through VWAP before it got the bounce, right? And so I think in that specific scenario, when you're getting different conditions that have increased volatility, the strategy all stays the same. It's position sizing that you change out of all of that, right? Because there's a little bit more risk involved when there's higher volatility. And so that might mean widening stops. And so strategy should stay the same always, right? Position sizing should be what you change.
Does that click with you?
It does. I mean, but is it just because you guys are VWAP guys, or is this like, should this be like a global, universal thing?
This is tough.
It's that, and I'm sorry, I'm keep going because.
Keep going. And we got to go to Brian.
How do you guys know the stats on your setup? Like, how do you know that it's meeting its expected value?
It doesn't matter.
Yeah.
It doesn't fucking matter. I love you. It doesn't matter. You could have an 80% win rate strategy, but if you traded at 60, what does it matter what the backtesting says, bro? It doesn't fucking matter.
And so
you're going to think you're 20% off the win rate when in reality, the backtesting could be perfect and you're a human, which is never perfect. So you know what I'm saying? There's going to be a deviation, but I just don't think that I would ever base like I've never looked at trading and said this strategy through a Python or C++ software backtested is a 72.68% win rate. Because today we're collecting a new data point, that number could change. Tomorrow's a new data point, that number can change. So I've never based it off of that. I've based my changes off of my data. For example, I got guys in the Black Shirt Club that suck at longs and they crush it in shorts. The backtesting says trade long and short. How many people have heard me give the advice to not do that and trade one side of the market that you trade better? I just gave it to you last week, right? The backtesting says to not do that. The backtesting says if you just shut the fuck up, Frank, and just take all the trades, you're going to make 80% win rate. That's not how it's going to work. So when we look at Frank's trades and he wins 80% long and loses, or he wins 40% short, I'll tell him, fuck the backtesting, look at your stats and tweak it there. Would you guys add on that?
Yeah, also too, like, and just to speak on, because I'm not like a huge VWAP guy. Like these guys really trade VWAP. That's not my main strategy. On initial balance, it all stays the same, right? It's market context. Initial balance never changes. It's always the first hour, no matter what. And so when we get that increased volatility, for me, I'm going to look for the exact same trades, the exact same setups, just on different sizing. Again, just speaking from a different strategy point of view, it's all the same.
Brian, did you want to get your question in here? Mm-hmm.
So like, I'll have a weekly level that won't get tested for 2 months.
How do you come up with the weekly level?
Through my charts, through the weekly charts, maybe out for like a year.
So like,
I'm using the continuous contracts to get it. So when I see it, and then if it's approaching it, I'll sometimes go and back test it beforehand just to see how markets reacted during that time. And then with TradeZella, you can do the second by second, so you can actually see the fluctuations of how prices operating in that area.
okay.
And then I also forward test it with the data from today too.
Okay.
If I match it together.
What was your question?
So like pretty much a little bit of kind of what he said, is this more of like a VWAP or like order blocks since it's like a
Probably. The answer for both, yes, is probably something. What you two were talking about sounds a little more subjective to me. I can't be subjective about VWAP. I anchor it at 930, and it does based on what the market is doing, based on price and volume. There's no subjectivity. I don't know when I trade with fibs if I should draw from this low to here or this low. So I would try to cut out the subjectivity, because I think when you do subjective stuff, it actually makes it more sexy to do backtesting. Well, I could just do it to this level, and if we do it to the, dude, 20% more in the win rate if we just go to this level. But like Tanner said, what happens in between those levels in this example? That your decision making may throw off the outcomes of those trades. So maybe to challenge you guys, all of us, in this conversation of backtesting that is somewhat controversial, try both sides of the coin. Be willing to kick the door down and break the mindset, break the bullshit rule we talked about yesterday is I need to backtest my strategy in order to trade it. It's not true. So I would just challenge it a little bit and see if there are more definite things you can add to the strategy that are less subjective, like orders on an order book that are clearly centralized, like levels that don't move as much. Like, Brian, when I ask you the weekly level, and you're like, well, I look back on the charts. That to me initially sounds not specific enough, because what if we are in a heightened period of volatility? The levels could be way bigger. Then we go into a period of contraction when we're getting those small trickle up days on the ES. Those levels are going to look way different. So when you backtest it in a bull market that's very small daily candles versus a bear market with huge down candles, it's going to look way different, right? But what I'm saying is you're not factoring in the size of the candles day to day. The strategy, if it's based on levels, will probably perform differently when the levels are further apart because of volatility versus when the levels are closer together due to less volatility. Does that make sense? So that's what I'm saying. So it's hard to backtest something like that and say it covers all market conditions, because it could be very subjective and work better in certain market conditions than other. Where like if I buy when I'm above VWAP, whether it's heightened volatility or not, I probably make money. This is a really good point. We're going to move off of it in a second, but like, you see how in the weeds you can get, everybody? The simplest stuff probably makes you the most money. So I would say, out of this entire conversation, simplify it. If you're going to backtest it, make it super simple. Otherwise, don't even do it. Keep it simple. The guys in here that made the most money today are the simplest people.
Do what works for you as well. If backtesting has been working for you, keep doing it. There's nothing wrong with it.
For sure.
Just personally, I didn't have too much value out of it. I do backtesting in different ways, but if it's something that works for you, keep doing it. Like it's like that's big. That's something I'm big on. Your trading business, your process, it works for you. Good. Keep doing it.
Is everyone feeling good? No air conditioning on, so we warming up in here?
It's getting toasty, bro.
Getting toasty. Give them a round of applause, everybody. You guys can come on down. So this panel, like we did yesterday, a little more mindset. This is about growth as a trader and seeing yourself a little bit more from that third-person view, a little more third-person perspective. Am I growing? Am I advancing into that person I want to become? Who is that person? What does he look like or she look like? What is he doing? What is she doing? You know what I'm saying? And I think often if you have no picture of that in your mind, you wander aimlessly. So hopefully through this panel, you can get a clearer picture of how these guys have seen that vision of themselves, the future version of themselves that they wanted to become, and how they stepped into it. So first question, I'm going to ask all three of you this. Ev, you can go first. How do you define a great trader, and how did you know that you were becoming a great trader?
I would say a great trader is someone that's, like you said earlier, hard to kill, adaptable, but really just like a good learner. Someone that is genuinely curious about themselves, about the market, just anything in general, that they want to learn, because obviously we've all been through the trading process, that you learn about yourself a lot more than you probably thought you would. I think a great trader is just someone that's always looking to learn more. They're never complacent and think they have it all figured out, that they handle losses well one week, the next week they don't. They're not like, oh, fuck, I thought I had that figured out. They're still hungry to learn and figure out themselves of why this thing keeps happening. Why am I still not progressing as fast as I thought that would be? Because the people around me are getting better. What is the next thing I need to work on? And just like the challenge of it and learning about themselves. And when I knew I was a great trader, you said, fuck, I don't know. I don't even think I am. I'm a good trader. But it really just comes with like when your habits start to line up with like the goals that you have. Like you say you want to achieve 10,000 a month, but then you look back at like everything that you're doing, and it's like I probably don't deserve that, because what I'm doing does not really line up with all the people that are out working me or out studying me or whatever the case may be, that once I actually stopped tilting, stopped doing things that I knew were wrong, and try to do things that lined up with the visions and the goals that I wanted, then I was like, okay, well, now you're at least disciplined enough, and maybe you do deserve it because you're taking the steps necessary, or what I thought would be necessary to achieve what I wanted. That's when I thought, okay, yeah, you do have the right head on your shoulders for now than you did a week ago or 2 months ago.
You are a great trader, bro. You're humble. So there's another thing to take out of it. Humility, you know? Even calling yourself a great trader carries some weight that some of us don't want to carry. We'll come back to that. Go ahead. How do you define a great trader, and how did you know when you were becoming one?
So for me, I think that any trader who is just mature and professional is a good trader. You know, the ones that are not doing that degen stuff, the ones that are not breaking their rules, the ones that are not treating it like a game. Like these evals and these sim-funded environments, they provide a safe environment for you to take a crack at this. And I think the trader that treats it all the same, right? Like eval, sim-funded, live, personal funds, right? When you treat it the same every single time, I think that's the makings of a good trader, because I think one of the most underutilized things is the practice account. Like you guys have a practice account. Like that's where you test things. That's where you break your rules on purpose. That's where you do the degen stuff, is in that practice account. And I knew that I was getting to the point of becoming a great trader when I no longer had anxiety or even concern around the outcome of the trade. Because one of the things I say that's kind of like, it sounds like a contradiction, and it's hard for people to wrap their heads around it, but you know, a good trade can be a losing trade if you followed your rules. If you stuck to your plan, right? Even if the trade didn't work out because you were either right and tight or you were just flat out wrong, but you committed to the rules and the process and it didn't work out, you still did the right thing, even though it didn't pay you.
Yeah, so I think there's a lot of definitions for it, but for me, what I think a great trader is, and when I felt myself becoming a better trader, was when I started to fall in love with the process, with the journey, right? And oftentimes we're on this hunt for profitability. And I even hate the word, like you guys said earlier, the way that we speak about it, like we're gonna flip a page one day and be this great trader. And it's just gonna be roses and rainbows, and we're gonna make money every day, and it's all green P&Ls. And that's never the case. And once I really accepted that, and I watched the guys above me that were doing really, really well, that were continuing to work on themselves like everybody up here, and it wasn't one day they just made it after a couple years and that's it, and it's great now. That's what I define as a great trader, someone that stays a student in the game, constantly looking to improve, continue to get better, and falls in love with the journey, the process of trading itself, and of that never-ending improvement, right? As you get better, as you get risk management down, your strategy down, you face different demons, and it's a kind of a never-ending process as you start to scale, right? If you make it in one account, you're gonna want to maybe copy trade more accounts, maybe you're gonna get to a live account, you're gonna eventually wanna scale up. You are facing that never-ending challenge of getting better, managing more risk, and if you become a person that is constantly able to be resilient and be looking forward to that next step, that's how you become great.
Let's talk about that word, resilience. You've all mentioned it. What builds resiliency in this business? You want to whack at that, Zach?
Yeah, so it's a little bit part of my presentation coming up next, but I think a lot of it is built around trading, in your personal life, outside of trading, right? So within trading, it's showing up every day, it's doing what you need to do, following your system, you know, really controlling your emotions or being aware of your emotions and creating new responses to them. But I think it's built in other areas of our life, right? And I kind of talk about this a lot. If you're undisciplined in every other area of your life, what in God's good name makes you think that you'll be disciplined when there's money on the line? It's not going to happen. So creating the right habits outside of, you know, trading itself, going to bed early, reading, studying, actually reviewing your trades around trading, maybe picking up a hobby. You know, maybe you're not going to run ultra marathons like me, but you're going to go on a walk every day. You're going to read, you know, 10 minutes of a trading psychology book. So it's creating this discipline in other areas of your life that you bring to the chart that builds resiliency, right? Because if you have the confidence that you don't break promises to yourself, you know, you go on that walk, you do whatever that thing that you do is, the hard thing every day, you know when it's time to wrap it up after 2 L's or 3 L's like me today, unfortunately, quick ones, that you do. And you don't, you know, go crazy, go on tilt, blow the account. So that's how I think you can build a lot of resiliency outside of trading itself to bring to trading.
Ev, and then Isaac. Building resiliency.
Yeah, I think it comes down to the trader just being honestly delusional. I mean, we've all got into trading saying okay, like 95% fail. I want to do that. Like that sounds probably like I could make that work. I have no idea what it is, but I think I'll have a Lambo in about a month. If 95% fail, I should be pretty good at it. But it's that delusion that you deserve it and that you think you can accomplish it no matter how much you've failed or how many losses you've taken. You want to still figure it out. That you think, "No, I don't care how long it's taking me. I think I could do this. I know I can do this. That's why I'm going to keep on pushing." And that's why, if you're here, you haven't given up. That's a matter of, I think any successful trader is just one that didn't stop. There's plenty of traders that we've all experienced the same shit in the beginning. It's just a matter of, well, if you're still here today, it's because you just didn't quit. That you need to have like that delusional self-talk in a positive way. That you're taking all these lessons as like, oh, this is a challenge. I love it. I'm going to keep on getting better. Just wait and see. Give me 3 months. You'll see how much better I can get. I mean, like anyone in this room, I think it just takes time if you could believe in yourself.
So before I could probably add to that, I would ask you, like, how would one measure resilience?
I think it's like that bandwidth we were kind of talking about of like resiliency would be, in my head, you'd have no resilience if you're quickly swayed from the goals you set on Monday. By Wednesday, you're on to something different. You're not resilient. You're not consistent. You're not staying with it.
Yeah,
so like resiliency in the bandwidth on trader, like the resilient trader takes that first loss, knows he followed his system, and still can take the second trade with no issue. So how do you build that is the question.
I don't think you do. I think like it's got to be something that you bring to the table coming into this, because going back to that like 95%, it's less than that of people who like won't make it. So I think people who are naturally resilient, but then it ties into that consistency and that discipline, you're the ones that have a shot. Not even the ones that are going to make it, but the ones that have a shot at making it. Everyone else gets flushed out quick. And they're so stubborn and ignorant or whatever that they keep trying when it's just obvious like they're never going to have a shot at this. So I think it's just people who have that natural resilient nature that are the ones that have a decent chance of succeeding in this. I don't think it's something that's built up in trading.
Who here thinks of themselves as someone who is resilient? Oh, see, they hands up fast on that one. That's good. I wonder like how much external motivation feeds resilience. You know what I'm saying? I think about it like when my dad hated that I was trading and that I dropped out of college. He hated it. So I stopped talking to him. I literally surrounded myself with people that fed me becoming more resilient. Gary Vee, Grant Cardone, people that were motivating me financially or even just through the energy that they put out. That, like, getting motivated by people, I think helped me become more resilient. Because I don't know if anyone is born as a, maybe some people are, and they are just resilient. They never give up. You need a little kick. So what do you guys turn to for motivation? Zach, you want to go? What's like an external thing that you look to for, let's just call it entrepreneurial motivation?
Yeah, entrepreneurial motivation. So I'm going to say probably other areas of my life. External desires. For me, wanting to be able to take care of my family, wanting to be able to give back to the humble beginnings of my mom, my dad, which I've been able to do, gratefully over the last few years, and have more time to spend with nieces, right? Trading provides a lot of freedom and flexibility, this entrepreneurial journey. So I do look to that, right? Like if I'm having a really tough day, I look to that outside source, and I think we all have that. It's gonna be different for everybody. Maybe it's personal, right? It's not as, whatever, it's for the family. Maybe it's for you, right? You've been working really hard all your life. You want to, have nice things. You want to be able to do nice things, experience life itself and travel. But whatever that outside driver is, bring that in, and not in that materialistic way where it's money focused, but on what this means to you. Why are you here behind the charts? And if you can kind of picture that and visualize that a bit, it can really kick in when you're having a tough day or when you're having a good day, and you start to have those demons kick in and we start to go on tilt or want to continue to trade. And I reflect on that and I'll journal a little bit. After a bad day, I'll think, man, what are you doing back here? You're supposed to be doing this as a really serious professional career. Look at what's on the line. Look at what is to be gained and to be lost. And so that's a big motivator for me.
Family. What about you, Isaac? Any external motivators that feed you becoming more resilient?
Not too much. I think that the more from the outside you allow into trading, I think the higher the likelihood of you not succeeding. So like for me, I love winning, right? And I like money. I like spending money. I love winning, but I hate losing more than winning. I understand that you can't win all the time, right? You look at like racing, right? Like championships. Like think about how like you can win so many times throughout a season, right? But not win the championship, right? Or having an excellent race and you only end up on like third or second. That's fine for me, right? Because there's progress there, there's success there, there's wins there. For me, to lose means you're the bottom of the barrel. right? The loser is like really that last one, and I refuse to lose. Like, I've lost so much in my life. I've gotten to the point where I've lost just about everything except for my life and family, right? Where I'm like, I refuse to get anywhere near that side of the spectrum. So it's just like onward and upward. And then I'm just real big on that whole rising tide should lift all ships. So it's like, I don't like winning by myself. Now, if you're not going to get on board, then, right, I'm going to keep going with or without you. However, I'd like you to be there with me, right? Like, let's win together. But that's really just what motivates me, is like seeing people succeed. I think that's ultimately how I ended up in this Discord and doing stuff like this, because like, I don't have to do this. Like, I could be on a yacht somewhere, right? But it's just like, I get a lot of gratification, and like, you know, I want to see where all of you guys are at 6 months from now. I don't do it for the patent backs, but like when you send me that message and it's just like, yeah, I got my first payout, I got called out to live, I paid off this debt, I took my family on vacation, that's the shit that excites me.
Anything from you, Ev?
Yeah, I remember when I was first starting out, for anyone that doesn't know, I have 2 older brothers, and to tie it with Isaac, at first I was like, it was like egotistical. I was like, I want to be like special, like different. Like, I just want to, like, they're just better than me. They're older than me, cooler than me, taller, everything. I just like, I need to stand out and be like special. I want your brother. But then as I got older, it was, I want us all to eat. Like, I don't want to take down my own brothers. Like, I was like jealous of them, or I thought they were cool at first. But then it was like, let's just all eat together. Like, there doesn't have to be one stand out. And then to tie it to also, it's just family, of like just wanting to have control of my own life, to take care of my brothers and my parents and my whoever. And I don't have to be special to do that. I could have everybody be included in that. And just for anyone, it's like the challenge and the love of winning, that every day is somewhat the same, but it's also like you think you have it figured out, and there's a new challenge, there's a new stressor, there's a new something, that there's just always something. It's never a dull day in trading. That just exciting, and I would rather that than a cubicle job for sure.
Is anyone in here super self-motivated? Yeah? A little bit. So like something I would think about is what do you do to yourself? What can you do to fill your own cup? We talked about that a little bit yesterday. Because if the cup is full, you can give to other people. But also when the cup is full, you are more likely to evolve, I think. When you're running on half empty, you're probably not getting the most output. So something I do is on Sunday mornings, I'll have my coffee before the kid wakes up, a little joint, and some loud music. Set the state, right? The sounds, the smell, all of that changes the way you think. I can sit there, not just plan my week, I now start to plan the entire month. As an entrepreneur, not just my trading, I know what I'm gonna do. I'm gonna be in the chat with David and Evan, and we're gonna just do what we do. So sometimes the growth and evolution is like a pause. I need to slow down, no disrespect, because I agree with your answers about family, but I don't think about family when I want to evolve. My wife and my kid are motivation, but they're not gonna tell me what to do to become the better version of myself. So I gotta sit there and get in the zone. Like Kobe Bryant, again, before he plays the game, he's in the zone. You don't play. You think you tell jokes to Kobe Bryant, bro, before a basketball game? No, he's locked in. So I think sometimes you can find that evolution and that growth through self-motivation, through self-care. You know, do something that fills your cup. You might come up with that next new idea that takes your business to the next level. Especially as you start making more money, like Tanner said yesterday. You start doing well, you look around, everybody else around you is not growing as fast. How do you stay growing? Well, of course, you pay to get in rooms like this and get around other people, but you also got to go to the gym, put the headphones on, and do this, and get your mind and your state a little bit different to allow new ideas to come in that lead to evolution. You guys want to add anything on that?
Yeah, I wanted to build off that. So I do use family as motivation. I do think about family a lot, these opportunities for them, but I definitely don't want it to be misinterpreted. And Joey had a really good way of kind of saying what you just said. You need to become the best version of yourself to be there for everybody else. Like, you're never going to be able to provide for anybody else, or, you know, give these things to your family or give back whatever it is you want to do if you're not the best version of yourself. And that does mean being selfish to a degree in certain areas, right? Like, I spend a lot of time on, like, you know, working out, doing the training.
On a bike by yourself.
Doing these things, right? Like long runs, long rides, listening to, you know, constant psychology books on tape, trading psychology. But you have to become the best version of yourself 100%. And whatever that means to you, right? It's going to be different for everybody, but take that time. And I think oftentimes these days, because I see it in so many people's families, so many things, people are just running themselves ragged around their jobs, trying to do great at their job, not taking care of themselves. Like, if you're on the charts all day for 14 hours, ripping Red Bulls, and thinking you're going to be doing great coming into FOMC or whatever it is. Like it's not it. It's not it. That's not how this is built. It's not how anything is built. So,
Well said. Anything you guys want to add on that? So then let's think back for a second. If evolution means like coming from here to here, let's think. When you first started trading, what would be some advice that you could tell that version of you, day one, of how he could grow faster and how he could evolve into the version sitting on stage faster? Isaac, you want to go?
It's a little tough for me because I started so long ago that so much has changed. Like I had a lot of conversations with a lot of you guys, like everything from, first off, the options, right? How many funding firms and prop firms there are now compared to 12 years ago. Pricing's changed. The ability to get paid on monopoly money, like you can take payouts, real money to your bank account on fake gains. And again, just like the copy trading, it's changed so much. Like also these communities, right? YouTube, live streams, Discord, Patreon, none of that stuff existed when I started. So you guys have an opportunity that most people did not have when they started. Exploit that to your advantage as best as you can, right? Like use the tools and the resources. It's hard. There's a lot of BS out there, and it's hard figuring out how to sift through that. There's a lot of frauds, a lot of scams, inconsistent stuff. Prop firms disappear, people disappear. Just get the same way you got to get really good at identifying trades. Identify what's actually useful and resourceful, and then just leverage the hell out of it.
That's a good answer, but you didn't answer my question. What would you tell younger Isaac? I know it was a long time ago. You just told us how long ago it was that you're old. Cool. What would you tell him?
Just stay.
You like how I don't let him go?
Yeah, no, for me, it would just be, and I think it's ultimately what brought me here is like just stay the course, right? Just focus on the process and everything else is going to work itself out. And like I can say through the good and the bad, up markets, down markets, this president, this virus, this terrorist attack, like I'm still here. Like that resilience, I think, just shows over time. Facts. Like just keep your head down, focus on the process and the results, whether that's a ranking, whether that's a dollar amount, whether that's an award, that stuff will come if you just focus on the process.
Notice he doesn't want to change anything. The one that's been trading the longest up here doesn't regret anything. He would just tell his younger self, buy in. You're going to go where you want to go. Stick to it. Buy in. It's going to take longer than you thought. But he doesn't want to change anything. He's not like I would have gone back and joined this one Discord instead of that. That wouldn't have made a difference. So notice the lack of regret. That's a mindset thing for sure.
I do think I made the most of the things I had available to me. Like
that's huge.
Right?
You have to. You got to squeeze it. You want to add anything, Ev or Zach?
Yeah, removing that expectation and like the timeline that you give yourself when you get into trading. I mean, it's like it's going to take longer than you want and you think it's going to take, but the good news is it's also up to you of how long it could take. That it's up to you of how much you want to put into it is what you're going to get out of it. That I remember in the beginning of my trading, at least, thankfully, I didn't really have much expectations of it, of making it work super fast, or I needed to work out super fast, so I was willing to give it as much time as it needed to. So I was fine sucking in the beginning because I was aware of it. I was expecting it to. So I think if you just remove the expectation and, like Isaac was saying, just trust the process that this is just what I have to go through. This is what everyone has gone through, and if I could just make it to the other side, I will be where they're at, whoever you're looking up to. That the only way to not get where they're at or whoever you're looking up is just by quitting. That's the only way. That's just a matter of it may take you 2 years, it may take you 3, some may take 6 months because of whatever past experience they've had in the market or not the market, that you can't compare yourself to others of, I feel like I'm not progressing enough. I feel like I should be further along because the people around me are doing so much better. Who cares? Stick in your lanes, trust your own fate and in your future. And like I said, it's in your hands. That if you give up, that's the only way you're going to quit. If you quit, that's the only way you're not going to make it. But yeah, trusting the process, I wouldn't change anything either. And I wouldn't even know, nothing would make a difference.
I mean, y'all don't know. I picked up Evan when he was 8. We brought him into the academy. He's been with us forever. Like, basically like the Messi of trading, Hasn't seen his family in 10 years. Go ahead, Zach.
Yeah, so for me, again, not changing anything I think is great because everybody's on their own journey and you can't go back and look at anything with regret. But something I would tell myself would be to slow down, size down and slow down. There's a great example from Best Loser Wins, Tom Hogarth. It's a tightrope example. I think it's from that book.
It is.
Yeah. But essentially, if you wanted to learn how to walk across a tightrope in between 2 buildings, that was the goal. You wouldn't put it in between 2 buildings and try to walk across it, right? You'd put it in between two trees where it's 4 inches off the ground, where risk is very low, and you'd walk across it 1,000 times. And if you did step off, you'd lose $50 in a prop account, not thousands of dollars like I was doing in live Forex funds and crypto before that. And many of us do, just come in way too hot. And then as you raise that tightrope up, nothing changes. You're walking across the same tightrope, same distance, but something does change. Your knees get weak, palms get sweaty, you're nervous, there's risk on the line. You're not able to think about just walking across the tightrope, just trading, just executing your system the same way as when it's on the ground. So many of us want to get to where we're walking across that tightrope in between two buildings. There's no rush to get there, and you're making the risk and you're putting the game in impossible mode. When you fall off, you're losing way more than you need to in capital. You're paying that tuition way more than you need to, and you're never able to think about actually just walking across the tightrope and giving yourself a chance to learn that. So slow down, size down. There's always room to scale. There's infinite opportunity now with prop firms and monopoly money. It's one of the best times, in my humble opinion, to be a trader as far as I'm aware.
The best.
Yeah, so you got time. That's what I would tell you. Yeah, that's what I would tell yourself. You do have to size up. You have to challenge yourself continually. That's part of the journey. But, some of you guys are only a year in, a couple years in. If you're oversized, there's no amount of psychological, what's that Brett Steinberger quote? There's no mental amount of psychological work that you can do that will help a vastly over-leveraged trader. So size down, slow down.
Were you going to jump in on that, Isaac? No. Okay, great stuff. Thoughts so far? Anything you guys want to hop in on? I got a good question to finish this panel. What does the next version of yourselves look like? Everyone looks at you. Richer. Good answer. Ideally for everyone in the room. But think about it, right? You're now in the position, you're on the stage, everybody wants to learn from you. They're not really thinking to themselves until I just said that. What do you think this guy's going to be doing in a year or two? They're focused on themselves. So I think it'd be super insightful to hear from you guys as far as like, what are you doing to continue to grow and evolve? And what does that next version of you look like? Go ahead, Zach, and then Ev. Sorry.
Yeah, so I think it's just that never-ending getting better. So like right before this panel, I'm talking to Isaac about his system, his approach. Even 6 years in, I'm taking payouts every month now from Top Step, multiple. Last month just took the payout. So I'm at that spot, but I'm still looking to improve. So the better version of myself, I think, would be just personally for me in these markets. It's tricky. And something that's helped me has been getting a little bit more objective, and this is kind of technical, but just objective with my levels, with the tools that I'm using. So I've come to volume profile levels over discretionary support and resistance, a little more objectivity in my trading where becoming very discretionary, using my intuition, using my subjective interpretation of price action was very helpful. I have to question, within my results, how much that's helping me versus hurting me. So just improving, continuing to improve as a trader, getting more consistent, and continuing to scale, right? We all have to face this never-ending raising up of that tightrope, and it's the same tightrope that we're walking across, but as more money is on the line, more accounts are being copy traded, you're in a live account and you want to scale up, you have to become that great risk manager that can trade large size. So I think in a couple years from now, that's where I'm at. More consistent, better win rate, better R multiple, which we're going to talk about next, and managing more size.
I like it. Go ahead, Ev, and then Isaac.
Yeah, I think I probably have a Lotus, pull it up next to this guy's, and then we'll pull up to the yachts together and just be flexing our cash. But in the future, I think it's really about, for me, scale and getting better at risk. I mean, per account, I'll look like a $3,000 loss per account. I'd be like, oh, shit, that's going to be a bad one. That's going to be a bad look. But I want to get comfortable. That's not actually a larger trade. That's your normal risk now because your account's 50,000, 60,000. Now you have a large buffer. It's all relative, right? Everyone's, I took a massive loss today. It was like $500. It's like, yeah, at one point that is a big loss. Then 1,000 is, then 2,000 isn't even big when you were complaining about $200 losses in the past. I just want to get better at risk, my perception of it, so that I can scale quicker. Because I mean, I'd love to have $50,000 months, but it's like, holy fuck, $10,000 loss in one day. I'm not going to accept that very well today. But I like to get to the place where it doesn't really trigger too much emotion.
Block out the P&L, just make it tick some points. It's a little bit easier. I want to double up in size. It's even in a decade, it's been hard for me to become a 5+ contract trader. So I don't think it'll be by the end of this year, but at some point next year, I'd like to be trading up to 10 contracts. Because again, it's all the same, right? It's just, do you have enough equity for that drawdown? I think copy trading is the way. What would I have changed? copy trade. Like when everybody else was doing it, I was too proud to copy trade. Just because it's a real easy, fast track way to scaling up. So personally, I just want to like double my size. Well, more than double my size. I want to get up to 10 contracts on a regular basis, and then more intermediate term, I want to trade some institutional money. So I want to pull some funds together and trade like $5 million or something.
I think to double your size, they sell a pump for that.
I tried it. Doesn't work.
Come on, it's Friday. Somebody
Doesn't
got
work.
that. That was good. Come on.
I can confirm that it does not work.
It does not work. I'll jump in on this one because I want to share something. I think what I'm going to try to do as I go forward is be more balanced. I want to be a better person to people that I'm close to. I want to be a better father. I think if I focus on those things, like actually being a better human, I'll probably trade better because I'm Jewish. I'm naturally attracted to making money. So like I just got to align the stars, and the God should do the thing that he's supposed to do. But I'm serious because I think often we do get into this mode that they are coming through. They are coming through the dirt as a trader and coming out of it, right? And a lot of you probably think you're still in the dirt. While you're in the dirt, don't neglect the things that make you actually like have value in the world. Because do you really think whether you make 60 or 600 grand in a day that actually to other humans makes you more valuable? Maybe it gets you a promotion. Maybe it gets you another beach house. Maybe it gets you a nicer car. But does it truly make you more valuable to just make more money? You be alone. You're that lonely rich guy or girl sitting in the mansion killing himself, literally. So I think I would just give you guys all advice of try to find balance even while you're in your hustle mode, if that's where you're at. Because now I'm coming out of the hustle mode a little bit, trying to really be selective with my time, and I wish I have more balance because I don't have a lot of balance in my time, you know? Good? Give it up for the boys. Great panel.
All right, good morning, everybody. How are we feeling? Awesome. All right, cool. So, who feels like they retained at least 60% of what I talked about yesterday towards the end of the day? Awesome. How did you guys feel about it? Good.
Mike,
just
get that
nodding,
mic into the
just
little
nodding
closer.
heads. Yeah, I know. Listen, I don't like putting things in my mouth. All right?
Let it touch them nice, fluffy lips.
There's a first for everything. That's true. So, what were the biggest takeaways for some of you guys from either some of the feedback on the panel or on my actual presentation? You guys can just shoot. Because if you guys don't start talking now, you're going to start falling asleep. Automation, what about it? Yep, Jesus, take the wheel. All right, who else? Come on, don't be shy, guys. I'm going to start pointing at people and say, you. Who wants to talk?
How long were you spending, like years, like trading all day versus when now you're kind of slimming down and like I'm just trading this because this is my time?
So it was never all day, but I did trade unusual, foolish hours of the day, right? So I tried I'm going to wake up at 4 in the morning because that's what the billionaires do, right? And trade. And, there just wasn't enough. What were the 3 things that I said you need in the markets in order to exploit opportunities and make money? No. Range, liquidity, and the big one, the V word. Yes, exactly. So there just wasn't enough of that stuff at 4:30 in the morning Eastern time, right? Trying the 9 p.m. trades. And another thing is, and you'll see this with ATR, obviously top right-hand corner, that's my toggle time frame chart. ATR is always in the bottom of that chart. However, we read ATR on the 5-minute chart only, the same way that you read cumulative delta on the 30-minute chart only. So I just very quickly learned that really that prime time is from the opening bell to the lunch bell. You guys notice how much volume and range fall off or taper off after noon on Friday? All the big bosses at Wall Street, right, and in Chicago, they're going to the Hamptons, they're going to the cigar lounges, strip clubs, the works, right? Like 12 o'clock, they make their money, they're done. Peter Tuchman, who of you guys follow him? The Einstein of Wall Street, Peter Tuchman, no? Yeah? He always leaves at noon on Friday. Always. Up or down. I like that, right? But the same could be said. If you've made your money first thing in the morning, right, why keep trading into the afternoon? There's stuff that you could do with your money. There's absolutely nothing you could do. You could just go sit out by the beach or whatnot. So it wasn't until I started really getting involved in other, like my business ventures and other verticals, that I'm just like, I can't, right? I got things that I want to do, things that I need to do. So yeah, like I said, I always try to be out before or by Noon. Okay, so good question. Anybody else? Questions or biggest takeaways? What you liked most from the presentation yesterday? All right, cool. Then we're going to get into it. So I do have to sit down. Can't stay up here because I'm going to go ahead and start running through the charts. You could see we are approaching big round psychological number, 5,700. Lots of bullish moves. Remember the sell-off we had yesterday? Who knows why? Not sell-off, but little flush. Who knows why that happened going into and immediately after the close? Which earnings? 2 A's, double A, Apple and Amazon, right? Think? Okay, cool. So yeah, but you could see that we had a lot of overnight movement and pre-market movement to the upside. Most of it was from the 8:30 number. What came out this morning at 8:30, guys? Okay, cool. All right, awesome. So we're gonna go ahead and number one, pick our levels out, right? Because that's what I do first, and then we're gonna see what are the best opportunities and what the bias is. All right. So look at that, perfect timing almost. Okay, so what was the first thing that I do before anything? How do we get that? How do we get that chart back up, Austin? Let me see. Hold on. We're gonna try this again.
I come save you, Poppy. Don't worry.
Thank you, puppy. I think I might have got it. There we go. Cool.
See, I just got to. Maybe I just got to stand up here for you.
I'm a strong, independent man, Austin.
Yes. 2025, strong, independent men.
All right. So what do we do first, guys? Nope. Yes, econ calendar, right? So we're going to take a look at that just because. So there you could see unemployment rate, non-farm payrolls, average earnings year over year, smaller movers. So what do we have coming up that we definitely have to be on the lookout for? 10 o'clock, U.S. factory orders, right? So that means that first 30 minutes of trade, I'm just going to spend that looking for levels, right? I like to see usually what the forecast and previous was. Wait, why is my mouse not working? Okay, there we go. So forecast is 4.5, previous was 0.6. All right, and what in the world? Okay, this is glitchy. Were any of you guys having this problem? No? All right. So now, as far as picking out the levels, so we start where and work our way down to what? What was that? One more time? Yep, so go all the way from the daily down to the minute. So compared to Trade-Evate, this is a little tricky because I don't have all the tabs across the top. So what I use is usually this particular chart, which is my 1,000 tick. I jump to the daily, and we're going to go ahead and take a look at some stuff. So there's really nothing in here that I need to look towards. We can go to some much later times, possibly for some support zones, because you could see over here we spent most of this time significantly lower, right? We finally got this breakout above 5,500, and you could see the last few sessions, with the exception of yesterday, if it was not for the earnings, they were big ones, right? Amazon and Apple. So a lot of smaller boutique traders and some of the bigger institutional traders are making adjustments to their positions going into those earnings, right? So that's the only reason why we ended up having a red candle yesterday. It was very, very, very close to the end or close when we actually settled or closed lower than we opened. You see how close it is, right? So that's why it's red. So to me, this is still very bullish, right? So there's going to be areas over here that we're going to be looking for support on the daily. But then again, if you feel like you have limited data, you can always go back to much older times or much older sessions and look for areas there. But we're going to go ahead and make this a little bit quicker than normal. So what I like to do is stretch this out, take a look at things and see what stands out here. All right. So for me, right off the bat, right around here, big settlement zone. What do I mean by that? Look, we got a close, an open, and a close, and open, and then look what happened here. See this? Big flush. I think this is literally when we started having the really hot conversations around tariffs, okay? Yeah, definitely is. And where is it here? So you could also see we did find some pretty nasty support there as well, right? So we had this, and look, support here on March 7th, resistance this time around on March 12th, close on the 17th, right, and some resistance, close on the 19th, a little bit of support here, right, support here, open, close, and then a serious breakdown. We looked up to that level on some pretty aggressive trading before ultimately turning down and closing significantly lower, right, than where we opened and where we had traveled to. So this right off the bat, before looking at some volume profiles from some more recent sessions rather, this is automatically, I'm notating here on the side, this 730 to 740 zone, right? So make sure you're taking your notes because you'll forget the levels that were significant to your eyes, okay? And this is all technicals. None of this is fundamentals based, right? We pay attention to the fundamentals things like the news coming out at 10, right? Earnings yesterday, so on and so forth. You can try to remember, like when I look at charts, I see stories. Like I could see COVID, I could see 9/11, I could see tariffs, I can see elections, right? I can see someone's ear getting shot off. You can see a lot of those things in the markets if you obviously are paying attention to those things. You can always look back and be like, okay, yeah, that's when this happened. The markets always tell a story of what was going on at that time. So another thing to look at, we have this candle here where we ultimately had this big flush. So we have this close down at 670, which is also in alignment with this top on the 31st. So I'm talking about the 31st of March and the 1st of April. So I'm looking at this now, and then you look, we got settlement here, right? Resistance, settlement and open here. So this is an area of interest for me as well. That's down to, we'll call it 672. So that's something I'm going to be looking at to the downside. And then what are we looking at lower? Yeah, I like this here too, right? Look, close, support, 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 close. So we're looking at 648. So 648 to the downside is another level that I'm interested in. All right, I think that's enough for the daily chart. We'll flip this back to 1,000 tick. All right, so Renko. Sentiment, bullish or bearish? Bullish, right? So you could see lots of acceptance here in this range, right? Lots of sideways trading. But yeah, you got this low here, right? And then effectively higher lows, higher highs. We're above the moving average on the Renko. That's important. Ironically enough, is it a coincidence that the moving average here on the Renko at this point in time, 632 is where that moving average is. Look at the support here, support here, support, 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 right? A little bit of resistance here before breaking up, coming down, and then finally breaking above it. So that was 635. That's a little bit lower than the 648 that I'm looking at. So 635 is another one that I'm looking at. Now, can we zoom out on Renko where we could see areas above? Now it would be a little bit hard to see, so I'm not going to get things too messy here. Okay, on 1,000 tick, again, this is transactional. So there's a couple things I want to look at. Okay, one thing that stands out, we are farmers, dun, 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 dun. We are 4.5 minutes into the open, okay? So we're gonna have an uptick, obviously, in volume and transactions. So that means that more candles have been forming over the last 4 minutes, right? Look, we have the open right here at 9:30, and already I've put in probably close to a dozen candles. There's 1,000 transactions for every single one of these bars or candles. So one thing that stands out to me, especially when you consider that we had, oh, wait, never mind. Yes, time frames change. Okay, here we go. So there's the close, right? There's the closing bell. All of this here was earnings, right? This flush here was earnings, okay? And then it wasn't until, let's see, we broke over this 1,000 tick moving average, came down, found support, retested it again, found support, and then news drove us higher. Now this is sitting at, ooh, the dreaded 666 number on the Renko chart. So that to me is also interesting because it's in alignment with where we found some resistance here on this overnight and pre-market run up. All right, so I'll just notate that in my head. I don't really find that too important. All right, so now we start on the hourly. Oh, well, would you look at that? We ran straight up on the news to yesterday's upper level. So while you guys were here doing the trading session, I was back there, I was picking out my levels for the day, obviously. So again, the dots are my levels and the boxes are my extended areas of interest. I'm gonna go ahead and just zoom in on this just so we can kind of see what happened here, right? So yeah, 9 a.m., right? Already got a level picked out down here. So we didn't get down there on the open, right? We had a really, really, really strong move to the upside, which we gave a lot of that back going into lunch, okay? So kind of wasted effort from the bulls there. And then we did find some support, pretty much where we were at going into the open. But look at where at the 3 p.m. candle, that 1 hour candle, look at how we closed that candle effectively at my lower level, right? Also, we bottomed out pretty much at my lower level. It wasn't until, again, this earnings preparation that we got this additional push down where effectively this did fail. We did not quite get down to my extended area of interest. And I think the reason why that was, the rest of the participants were gone, right? The vast majority of people were clocked out right at 4 p.m. Eastern, right? So there's very, very, very few stragglers, probably a lot of algorithms that are still trading, you know, these earnings headlines and everything hitting the wire. So I drove us down here, but what's important is we very, very quickly in the overnight and pre-market got back into the initial, not the initial balance, the volume profile or the session range for yesterday. Now what's interesting though is that we've broken out of it on news this morning and we are now already trying to attempt to break back into yesterday's session. So we're gonna get really deep into the profile for yesterday to see if there's any key areas that we're gonna be looking at. But one thing I wanna see.
Real quick, Isaac?
Yes, sir.
What is your approach on the NFP numbers? Does that impact the way you're doing this analysis?
Yeah, so if I know that there's a big mover, I will immediately start looking for areas of interest that are a little bit further, right? So that's why like I have a set of numbers here. So like I think that 70-30 to 70-40 range to the upside, depending on what the result is on that 10 o'clock number, I think it's very realistic. It's highly probable to get up to those levels today based on that. Right.
Real quick, tap in. Anybody in a trade? Hands up. Come on, you can own up to it. I'm short. Anybody else in a trade? Tanner? Joey? Nothing? Okay, keep going.
Has anybody exited a trade already? Up or down? Down. Good
There
stuff.
is someone in the room up 60 bands already this morning.
60 bands?
60 bands.
Damn, I wish it was me.
From here, Isaac, so now you kind of gave us a really good idea of what you like look at before. Based on right now where we're at on time, when will you look to take that first trade?
Oh, not until after 10.
Oh, so we're waiting.
Yeah, for
Beautiful.
sure. Well, we're not waiting. We're working.
Working. We're setting the stage.
Yeah, we're building out the infrastructure for the rest of the day. Right?
Beautiful.
Weak foundation, right? It all falls apart.
Facts.
So, all right, this is what I wanted to look at. So we did not get down to my extended area of interest, which I know exactly why I was looking at it. I was looking at the point of control from the 29th all the way up through the value high and the session high from the 29th. It was a very, very thin distance as far as tickage goes between this POC and this session high. You could see that at the time that was my upper level for that day, which was excellent. And then we ended up trading basically down to the upper level from the 29th and from the 28th. So that's a good thing. We didn't get quite down to my extended area of interest. If it was not for earnings, I don't think we would have exceeded my lower level, right? But I'm not going to say it. I was going to say something crazy. Intrusive thoughts. So yeah, we did end up ultimately finding support where we found resistance on the 29th and the 28th. So I like that, and that's all the way down at 600. So it's about 90 points away from where we're currently trading. I think that's a stretch. I think what we're going to have to do is find areas of significance because, again, look, I have no data to match up with in this area from previous sessions. I'd have to go pretty far back. Since we're still on the hourly, I'm going to. All right, perfect. See, now we're... Okay, so look, we have a point of control from April 2nd, right? So that's a line in the sand at 8.5, right? 6.85. If that falls apart with the number at 10, then I think we see a pretty significant pullback going into the afternoon. And then, of course, we have the value high and the value low almost in alignment with one another down at 670 something, which ironically enough, that is already one of the levels on my notes, okay? I got a POC down to, again, close to that dreaded 666, so maybe I am going to, Austin said something about the devil earlier. I'm gonna put a little asterisk here.
It's Friday night, we dancing with the devil.
For 666. Okay, yeah, I think we don't really need anything else on that. So next thing we do is we go down to the 30. This is an important time frame to look at. Why do you guys think? Especially on Project X compared to Trade-of-8 or NinjaTrader. So the the volume profile tool in Project X, unfortunately, adjusts its display based on what time frame chart you're on, and you should only be looking at volume profile, market profile, and the 30-minute chart, right? Yes, come on, guys, keep me awake here. I haven't had a sip of my coffee yet. All right, so 9:30 to 1600 hours, okay? That's how you draw out your volume profile. Real quick, I'm gonna just open this up so that you guys can see my settings, right? Ticks per row, right? 1, up, down, 70%, okay? Gaussian theory, bell curve, so on and so forth. There's a reason for the 70%. Again, make sure you check out my top 1 futures market profile and volume profile class. But, okay, so look, interesting. You could see that value low was very, very close to my lower level for yesterday. We're going to go ahead and blow this up a little bit. Yes, always. So, all right, 652-ish point of control. You could see it acted as resistance pre-market. Look, from basically 5:30 to 7 a.m., we weren't able to break above point of control from yesterday's session. The only reason why we did, fundamentals, news, numbers, right? Lightning bolt shot us up, and you could see that over the last like 5 minutes or so, we're just really trying to figure out, do we want to be above or below? We're not fighting with session high from yesterday. Why not? Like, why are we not fighting with session high? Why are we putting up a bigger fight with where I was eyeballing pre-market yesterday? Okay. So again, that line in the sand. So the first order of business for bears today is what? Anybody want to take a guess? What's like the first thing bears need to accomplish and see so that they kind of just like rally, like, yeah, we got this. We're gonna drive it lower. What's the first thing that they got to get done? Anybody want to take a guess? Break of yesterday's session high. Because right now we are out, close, good guess though. Right now we are outside of yesterday's session. So the first thing that they're gonna wanna do is get back inside of yesterday's session range. And then what's objective number 2? That's like the final objective, right? We're gonna try to get back inside of value, right? Because value, what is value in volume profile or market profile? What is value? I like that. Sharp. So even though you're down, you're the one that's down on your trade today, right? Oh, you're up. All right, good stuff. I was going to say, I don't care what anybody says about you. You're a good guy. Okay, so yeah, so first order of business for me, right, I want to see us break underneath from a bearish perspective, which I'm not, right? The charts are bullish, right? So I'm, I'm leaning more towards the bull side. It really just depends on this number coming out in 15 minutes, okay? It's going to be clearing this upper level from yesterday. Then objective 2 is getting back inside the session. I think that 74, which again, it's that 72, 74, I have a star here. I think that's going to be a problematic level. It was yesterday. It was in the overnight, right? This is right at midnight, right? We found resistance here. Pretty deep pullback, right? But again, the news drove us up. We even had a little bit of resistance around there as well at 2100 hours, right? You could see point of control did act as support here and here, okay? We had a little breakout, some playing around in the value low area for yesterday. So the bears are gonna be targeting value high, right? And then point of control. And I think that this is probably, okay, hold on, we're gonna look at something else here. Yeah, so this volume spike, right? We don't have any gaps in this profile, by the way, right? It's pretty solid, right? Lots of acceptance here, I think, and that's confirmed, right, in that earnings brought us lower, but then after hours, we came right back up into the value area for yesterday, and even though we dabbled above it, we very quickly returned back inside of value, right? If we were gonna go ahead and draw this out, look, it's the majority of the value area from yesterday, right? So bears are going to want to do that. But the thing is, I don't think that I've been wanting to be over 5,500 for several weeks now. And it's just been really, really hard to get there. However, you can see that when we finally got it done, we got it done with some strength, right? Look, we were just consolidated here. And then finally at the close here, right? And then clearly we had no interest in trading back down in these levels. So we broke out with strength. Now we just got to see if we can continue that momentum to the upside. And you could see, look, going into this number in 15 minutes, we're already trying to peel back into yesterday's session high. But anyway, I was going to say we don't have any gaps in the profile for yesterday, but we do have some spikes, not anomalies, but other high interest areas above and below point of control that aren't point of control. So I'm liking, especially if, let's see, hold on. Yeah, and you could see we ended up having some pretty strong support there going into the close, so that last hour of trade. So yeah, I'm liking this like 648. Oh, look at that, 648. I put a star there because it's something that I notated on the daily chart that now I'm getting confluence, right? Things that kind of support what I was seeing, but in a different way from volume profile now. So 648, 672, those are definitely going to be target areas to the downside for me. And then, yeah, that's 730 to 740. So to be honest, I don't even really need to look at the other time frames. I'm pretty set on my levels just on what I've picked up already, but I'm still going to go ahead and run through it. I put little stars here. That way I know this is what I'm liking. So unless I look at something that really deters me from those levels on the next things that I'm going to look at, this is probably going to be it, right? We may or may not make some adjustments. So, simple moving average on the 30-minute, by the way, also is where, guys, is a coincidence that the simple moving average has floated up directly into my extended area of interest to the downside. So if something fundamentally crazy hit the wire, right, Trump tweets something, and there's a massive sell-off, right, I think that this would be a very, very, very good zone to probably exit shorts or potentially look at getting into aggressive longs. All right, so 15-minute moving average is down at 625. That is not one of the levels that I have on here. Oh, but would you just look at that? Look at where the simple moving average on the 15-minute chart has floated up to, directly to my lower level from yesterday. It's not coincidence. And then we're going to go ahead and look at the 5-minute, and we have, would you look at that? 648 is the level that I have written down here, and we have the simple moving average it actually just floated up higher, but it's situated right around that 48, 49, 50 zone. So that's not giving me information that makes me feel less confident about my levels. That's actually making me feel better about the levels.
Questions, real quick, guys.
Yes, sir.
You're going fast. Questions, everybody. Hand up if you got a question. Yes.
Anybody here watch SpongeBob? Forever. Forever, yeah, as long as we can. That's why when I took the leap of faith to jump over to Top 1 Futures, I lost all of my levels, and I should have paid a peasant to put them all on my terminal for me. Yeah, because that's really annoying, losing that data. You should try to keep annotations of your levels, like indefinitely, like as long as you can. All right, so anybody else? Questions? Yes.
Yeah. He said, why are you using bar charts?
Yes, open, high, low, close, OHLC bars, right? I think for me, right, I'm a very, very visual person. To me, this is cleaner. By eliminating the body of the candle, right, because that's happening, whatever the increment is, right, like a 5 minutes worth of time, 1 minute worth of time, 1,000 transactions, that's irrelevant. What I care is that candle higher or lower, right, when it closes relative to its open? And then just what are the distances, right? Where did it tap out, and right, where did it, find its leg? That's important, but everything that happened in between doesn't matter. I think everything that happens within a session is important because that's telling a story. The same could be said about the individual candles, but I don't really think so. Not when you're trading intermediate time frames, right? If you're scalping, like a high frequency trading or something, maybe, but if you're looking for bigger moves, 10 points plus, those things don't really matter. That's why the majority of my analysis is on larger time frames, but then my execution is pretty much on my smallest time frames, 1,000 tick or 1 minute.
Does anyone want to try VAR charts after seeing this? Is anyone going to maybe give it an attempt? I feel like Brian Shannon uses bar charts. Yeah. It's clean.
It's a lot cleaner. It's easier on the eyes. And again, if you eliminated color and you just made like your bars all white or gray or something, believe it or not, it gets even easier.
Can we pause? This has been perfect.
Let's pause.
Let's pass to Joey. I'd love to see this overlaid on how Joey sees VWAP. So if we could pass the stick to Joey or Tanner.
2 more minutes?
Yeah, absolutely.
Right, so 2 more minutes real quick. All right, so what we're going to do here is I'm going to All right, so upper level, I was looking at 730 to 740 to the upside. So what I'm gonna do there is I'm gonna go ahead and let's just meet in the middle. I'm gonna go ahead and set my level, and I usually try to put it around like 830, so I'm gonna put it right in the middle, right? 735, in between 740 and 730. To the downside, I was looking at 648.
Mark those levels.
Look at that, just under. We'll put it right here.
Now, what's going to be really cool in a second is you're going to see how Isaac takes these prices and how Tanner, and Joey, and I, a little bit more VWAP focused, look at it, and you're going to see how it overlays, just like we did yesterday.
And then, so yesterday's lower level, a few points lower, this consolidation here. So I would say 615 to 620 is going to be our extended area of interest to the downside if we have failure. All right? So 615.
Failure Friday.
No. Freaky Friday.
Freaky Friday.
Yeah, so.
Is anyone in a trade yet? Yes? Long, short? Nice. Did you short the VWAP mid-range? Anybody else take a VWAP short mid-range? Kind of following Isaac's analysis, but with VWAP? Yeah, same.
I'm looking to get long off VWAP right now.
I did. I'm up 1,500.
You like longs at VWAP? We do got value low here. Look, so the bears have already seen going into, we're about 7 minutes into that number, right? So people are preparing for that number to drop. They're bailing on their current positions because they don't want to be caught in the crosshairs. And then the idiots have no idea that something's even coming out at 10 o'clock.
Yeah. So
Right.
if you were short beforehand, sometimes it's valuable to get out of the trade and then be able to reposition yourself after
Yes.
the news, rather than just hope the news carries in your direction.
Yep.
Hope is dope.
Yep, and we traded straight down to what, guys? Straight down to value area high from prior day. Thank you. Good job.
Yep. Very nice.
Star for you. All right, so.
I was going to say, let's get Joey on here real quick just before this news comes
Yep.
in. I want to show the guys some VWAP.
Cool. All right, well, those are the levels, guys. Extended area of interest.
We're going
down
to come
here,
back. We're going to
lower
put
level,
Isaac
upper
back
level.
on in a second. I want to just spread the love. Great job.
Cool.
Let's
Who
pass that.
remembers? Can I take the station?
Yeah, get the station.
Who remembers the 3 questions that I said I asked myself every single day?
That's not fair, bro. She knows.
That is not fair.
That's not fair. Krista.
That's
cheater.
Yeah,
No, it's
that's
good.
not fair. She's a cheater. It's okay. Yes. Where's the market been? Where's it trying to go? How good of a job is it doing? Right. Now, I ask myself that every day, all day long. Right. It just gives me total clarity on the markets, what I'm looking for, areas of interest that I like, levels. I trade VWAP. I'm not a big VWAP guy. But I do use it for reference on, good price points to find maybe a support or a big area of resistance. A lot of times I see price like to bounce off VWAP, and so I'll have it on there for reference. And if we do end up holding it or finding support there, I'll use that as a guide to take long. But my areas, and don't let this all these colors get kind of confusing. I like to look at different sessions, like I mentioned yesterday. Asia highs, Asia lows, London's, all that good stuff. So don't let that these colors confuse you. That's just marking out those levels. But without going too much into my presentation later, I mainly trade initial balance as well as these London levels. But I'll let Tanner talk about VWAP. I think you use VWAP a lot. I'll let Tanner go more in detail about VWAP. But for me personally, I like to use it as a reference point because I see price like to navigate it too. You all heard the saying, all roads lead to VWAP, right? I like to use it as a reference point just for whether I want to take a long or short based off price and what price is doing in that moment.
Initial balance, everybody. Does anyone know what it is? Everybody aware of it? Is anyone not aware of what the initial...
Raise your hand if you know what initial balance is, just so I get an idea. Okay, majority.
All right, good.
Majority.
It is the first hour of trading, 9:30 to 10:30. So Joey's really going to take over once we get to that point where the initial balance is set. You can combine it with some crazy stats that say sometimes the initial balance is only broken to the high or the low, meaning it only breaks either side, about 70% of the time. So often, Joey's going to talk to us about these trades where we'll get the break and then we trade back out that way because it has a strong edge. The initial balance trade is really smart, in my opinion, because you avoid a lot of the news that happens and the shaking and the noise that happens between 9:30, even 8:30 like today, and 10:30. That first 2 hours is where everybody wants the sauce, but in reality, you can come in, you'll see you get much cleaner trades sometimes after 10:30. And then go into the tracking. You can just quit that. Yep. Then you go into the tracking of it, and you'll start to see what time of day you perform better or worse. And some of us, I know we've talked about it, perform better in the afternoons. I think there's a reason for that. Less news, less noise, less people speculating at market open. Go ahead, Tanner.
Okay, so I did get long on this spike.
Hold on, you're red first. Why are you red?
Yeah, I was red. So I did take an attempt initially because I had a key level at 41,310. I have it on my other charts over here, so it's kind of hard to see.
This is fine.
But I tried that initial stab because I wanted to see if we're going to hold at the open and kind of just go. It didn't. And so now we got the spike through, kind of the manipulation. And what I do like on this, I want to pull this up so you guys can see it somehow.
And what's that blue line there, Tanner?
The blue line's VWAP.
From where?
From it's just the extended hours.
Got it. So from the 6 o'clock last night. Yeah.
So basically, this is like my bread and butter setup right here. I just don't want to see this low break. So I'm willing to let this play out. I know we have news coming up, so it is going to be risky holding it into news.
Risk it.
But I'm down to risk it for the
Hold
biscuit,
it.
to be honest. So I don't like how we're starting to pull back here, but I just don't really want to overmanage it. So sometimes I will like go in between time frames like this. Like, see, this looks pretty bearish, but as long as we don't break the low, it's probably going to break it right.
Go ahead, Randy. What were you going to say?
But whatever. Like, this is my setup. So it's like we get a spike down into it, especially on a 5-minute chart. I really like it. It's like spike down into it, pumps back up and holds. Obviously, a better confirmation would be a break over this bar high. I'm really big on like bar by bar. So when you take it bar by bar and kind of just let it do its thing, I don't want to overthink it. I don't want to overmanage it. I do look for signals and stuff like that. Like, this obviously is looking really bearish, but I'm just not going to touch it.
You got a question
this
over
could
here, too.
hold like the lows. Yes. Yeah. Good question. So flipping between them really comes down to the daily chart setup for me. So in like opposite to what Austin actually said yesterday, I think the daily chart's the most important thing. I look at it every single day and I pick what daily chart setup looks the best based on that. So my whole reasoning for this, I do want to share this if I can.
Don't all 3 indices kind of look the same, though?
They look similar, but you can find little things here and there. So
Okay.
you guys see this? Okay, so this is my normal grid where I'm looking at everything. I look at SPY, ES, NQ, QQQ, YM, DIA, RTY, and usually I have IWM here. But what I really like today is I want to show you guys this. And I apologize for all my lines. So this is DIA, and I found this on the daily chart here where we are gapping above prior day high, and we have this big gap. And as a rule of thumb, charts love to backfill gaps. Like, they eventually will fill most gaps. Not always, but a lot of times.
I hate that, bro.
So, but
I hate that. That is a Forex thing.
It works.
All gaps fill. Yeah. That gap might
yeah.
fill in 3 years, and you're trying to trade it through every day, though.
For sure, yeah. Well, that's why it depends location-wise. So I'm sifting through these charts, and I'm going, okay, I pretty much actually only look at YM or NQ now. I just don't really trade ES. Like, I just noticed it. I just don't. So I look at this first and I go, okay, like, oh, I like this setup. I like how we're in the gap here. If we end up like holding the gap, then I want to look for longs for it to continue to fill. So that was kind of my idea this morning where I was like, okay, we're gapping above prior day high. We're in this gap. If we can pull back a little bit, maybe pull back into VWAP and hold that, we can maybe go higher. So that's kind of like what I was looking for here.
Now, Tanner, what's cool about this is when will you flip the bias away from that and be like, okay, some of the guys are making money short. We're starting to take out, maybe, is it levels? Is it a time of day? When will you be like, I'm going to give up on that gap fill for the day and do something else?
Probably after the news or once I have confirmation that the gap is really just like failing. So actually here we can see on, let's pull this up. So numbers coming up. Yeah, this is make or break for me pretty much.
Pull it back up.
No, where'd it go?
There it is. Yep.
So let's see. So if this ends up holding, this is a good.
Could someone give me the number on Financial Juice?
If this ends up holding, this is also a good reason why I just don't like to move my stop, because you see we traded all the way down. Remember, literally just a few minutes ago, I was like, oh, this looks like it's about to stop me on this big bearish bar. But look what happens. Comes down, makes a higher low, and now we're potentially holding. This could still fail and come all the way back down and stop me, but I don't really care because I'm just following my strategy. So what I did like about this as well is on DIA on the 5-minute here is I love multiple confluence zones. So we had prior day high, which is this line right here, and we had that initial spike down into it, right? And we overshot. I'm really big on overshoots. Overshoots, either to the downside, to the upside. They're basically just liquidity grabs, and they usually happen in areas where everyone is like, oh, here we go, let's continue this move. But then all of a sudden you get some spike and it actually ends up holding. So I like how this is spiking below prior day high, and confluence-wise, it was spiking into VWAP here. So I was like, you know what? This is good for me to take the stab, put my stop at the low, attempt it, see if it works. It might not, it might, but it's for me, system-wise, I'm like, this is a good trade. I don't care if it works or not. This is a great trade setup. I have multiple confluences. I have multiple areas where I'm like, it's like telling me you need to attempt this because I have multiple areas where it's like, take it. So now, especially with YM, this is also another important thing. The characteristics of what asset you're trading, they all have different personalities. NQ is like a bull on steroids, which is like why I love it. But YM is kind of boomer and slow. So it's like, but I understand that going into it. So I'm not going to overmanage it. I'm not going to overthink it. Like I'm just going to let it do its thing. Because I've seen this with YM so many times where I'm like, all right, just let the damn thing trade. Let's just see what happens. And it's kind of slow and boring. But again, it's just about the setup. And I just know I need to give it time and let it do its thing.
Which means we all sit here.
Yeah, we all just sit here. It's kind of boring.
It is boring. That's the point.
But
So
target-wise, so I have 10 contracts right now. I'm looking for that gap fill. I am looking for a much bigger move. So, and I feel like I'm in the driver's seat now. Like it's looking solid. We just broke the prior bar high.
Sorry, Tanner. Wait, what's the news, everybody? Can someone get the number? Say it again. Positive or negative? So it missed a little bit. Okay. So even on a miss on the news, you're not even looking at that. You don't care. You're just looking at color charts.
Bro, I don't look at the.
Interesting.
I don't give a fuck.
So
about the
different,
numbers.
right? Like it's
Like-
it's funny,
like,
but it is it's important for you guys to see something here. Tanner's getting payouts. I'm getting payouts. I don't give a fuck about the daily time frame. They disagree with me. We can both make money. Doesn't matter. There is no right. You see what I'm saying? That's part of why I
That's the beauty is there's a million ways to skin the cat, and there's not one size fits all. And I tell everyone that too, that I mentor specifically, because everyone comes to me with all these different strategies and stuff like that, and I'm like, you don't have to do one certain thing. You just need to figure out what makes sense to you, where your setup is, and then take it from there. So like now I'm starting to build confidence and conviction in this play as it's starting to play out more. Because I had that failed attempt to go lower. If we go to like the nitty gritty here, let's go to the 30-second chart, which I do not recommend. But like, you know, we're basically making lower highs or higher lows. I always get that mixed up. But basically we're failing to go lower here, which is good. I'm like, cool. So now let's go back to, you know, the bigger time frames. Here's a 15-minute chart. And again, just like retesting that prior day high structure area, holding VWAP, it's looking pretty solid to me. So I'm just going to let it trade, do its thing. I'm not going to overthink it. I'm not going to overmanage it.
Is anyone in this trade with him? Already got out? He's long, yes.
I'm long, yeah.
Nice.
So target-wise, because now let's kind of go into targets. Like I said, I am looking for that bigger picture gap fill, but to be safe and smart, my level was 41,310. I'll probably want to cover some here at 41,300. So I'll take off half at 41,300s, and then I'll probably just leave the rest to potentially go, if it does, right? And see, now we're kind of getting this projection, like this could still end up failing. It's not really doing...
You want to bet that $20 again that this stops you out?
It might. It totally might. It looks like it's about to.
I'll take my money back.
But
Can we talk real quick? Yeah.
VWAP? Yeah. So good. I actually do look at both. This is a great time for the grid. So I like to look at both because they both are in different locations. So let's look like right here. Let's look at these Qs in the corner, right? Look at QQQ VWAP. No closes below number one. We did get some spike throughs, but then NQ VWAP is way down here, so we didn't even get the full test of it. SPY, another great example. Look at this. ES pins into ES VWAP. We break down SPY VWAP. So what I like to look at this is actually like my favorite part of this strategy is when we break one, the next one below has to hold as support. Otherwise, we potentially are going to flip completely.
This is big, everybody. If you're
This
a
is
VWAP
big,
person,
yeah.
this is like Brian Shannon talked about this on my podcast. Tanner talked about it before. This is super important.
Yeah. So basically, I want to see the next area of support hold for that VWAP, and if we just slice through and go, then the whole setup's going to be invalidated. But I've seen this happen so many times where you get this VWAP sandwich where you're in between both. but you need to look at the next one above or below, depending on what direction we're going, to either be support or resistance. And you'll see this over and over and over and over. So depending on the strength overall, this is the discretionary nature of it, right? We're still discretionary based traders. So like I'm still watching it when it comes to, that's why I took that kind of, the initial stop that I did, because actually my first play that I took here was right here. I got long of DIA VWAP. It ended up coming through and stopping me out. And so I was like, okay, let's wait for the next one. Not a big deal. You know, took my loss, moving on. And then now, again, I'm just letting it trade, do its thing. I'm not overthinking it. I'm just letting the thing
Tanner, real quick.
trade.
You said, because I'm going to push you, because that's, I think, where we get some good knowledge from. We're in a disagreement about the daily time frame. And then I say to you, Tanner, they all kind of look the same, so why does it matter? What are the intricacies that you're looking at to spot differences?
Honestly, just what's better on my eyes. Meaning like where are we within specific, because there's some daily bars that don't all look the same. And I think that's why I do like looking in between Qs and like the index itself and the futures product, because you could see we had that gap on DIA. There's no gap on, unless you would have, I guess, you know, after hours off for whatever reason.
Right, you turn the after hour, you'll see it.
Yeah, it's like there is no gap on those type of charts. So I see that and I go, okay, that's a bigger picture time frame setup that my eyes look.
I think it's
comfortable with.
because you're biased to gaps. And I don't care about gaps, so I think that is a difference too, as we're talking about
Could
it.
be.
Yeah.
But I know that gaps get filled
often.
Yes. Not always.
Not, and
but
I mean,
often.
I've seen gaps that have taken months, quarters to go fill. You know, so it's years. So it's very
for
dependent.
sure.
Yeah.
For sure.
VWAP people, how are you guys seeing the market this morning? Are we up? Anyone up over $1,000? Anyone down over $1,000? But everyone's in trade. So what are we trading? A couple $100? How much you make? Good. Anybody over 550? Okay. Micros? Okay. Want to throw your Project X back up?
Yeah.
Okay. So holding VWAP. Buyers
So, yeah,
are making a stand.
It's doing its thing.
Yep.
But it's unfortunately it's one of those you gotta wait.
This is where now on a Friday I start to feel like the NFP came in. This number's now in. What time are we at? Almost 10 o'clock?
Yeah, it's 10
Yeah,
o'clock.
so now we're already getting to the point of the day where I'm like, is this going to be super choppy? Joey's not. What do you think of Joey?
Yeah, I like to stay out of. I'm actually in a long right now, but I like to typically stay out of news, especially NFP days. Let me ask you this: how many of you don't like trading on Fridays? Oh yeah. How many of you still trade on Fridays? It's normal. It's completely normal. We're all degens here. I find my worst days are Fridays, and I typically like to stay out of it because none of us like to go into the weekend on a massive red day, right? It will run your weekend, and so I generally just try to stay out of it. I am in a small long right now. This will probably be, unless I get a good like initial balance trade later, I might take it. But generally, I have seen NFP days after the news event come out be choppy the rest of the day, right? And so generally, I usually don't find very good setups. But like Austin said, like I'm getting to the point of the day where it's like, do I really want to continue watching?
Because it's a Friday.
It's a Friday.
Yeah.
I want to go enjoy my day.
Looks good,
you know?
Tanner.
Yeah, this looks solid.
For both of you.
And the more time you give it to, see, this is also the hard part, is when we are spiking down into VWAP, like initially, you feel like you're going to be wrong. And that's why I will take a few haircuts here and there. So I was like, remember on this bar, I was like, in the moment when I was talking to you guys, I was like, oh, I'm fucked. This is going to
We
stop
saw
me.
your butthole tighten
Yeah,
up.
I was like, oh, that's
We
it.
saw it.
But I also know I'm not going to overmanage it. I'm not going to overthink it. My stop is in a logical area where like that should be the low based on the strategy. So I'm just going to let it trade. Because one thing we often overlook, especially as traders as we keep developing, is the basics. Higher lows, lower highs, market structure, right? We always overlook the basics as we get more advanced because we think we're some crazy guru or something personally and we know everything. But then someone you talk to that's really new to trading is like, oh yeah, we just held prior day high and I just went long because of that. And you're like,
right.
Oh, yeah, that's right.
Real quick, check in. Thoughts, questions, anything from any of the boys so far that's like really sticking out to you that's maybe different than something you were doing? Something you're going to change in your approach this morning going forward? Yeah. So where's that confidence to leave the stop and know where to put it? Where do you think that confidence comes from? experience, time, but what else do you think? Yes, what kind of data? Which you do through chart study, chart markups. That's what Tanner's like, I think you call it chart markups. Sounded like a boomer when you said that. But yes.
Hey, it's your term.
It's my term, so I'm the boomer. I think like he knows his stop should be at that pin because he's not only experienced it and been in it so many times, he's done, like Krista said, the data collection every day. Where was the money today? Where was the trade of the day, like Thomas said? Even if you were not in that trade, where was the money? Tanner starts seeing these VWAP bounces, and he's like, I think that could be in there, and I think I could put my stop there. Okay, well, I saw that again yesterday, and then I saw it again today, and now it's like, okay, now I'm starting to see something. You could take it as far as you want. You could do crazy markups and build a whole book, print it out, laminate it, show it to your kids, or just save them in your TradeZella, and that's probably enough. Yeah. But if you put the stop there, couldn't you get pinned out and then it continues if it just holds that VWAP? Right. Then it's done. You'd have to study that. Chart markup that, study that, data collect on that, and decide as these trades develop, should I be managing them differently? Would you guys say anything different to that? Damn, Tanner.
Yeah, this is, you guys know I love getting edged on film.
Dude, I knew that was what you're going to say as soon as I saw that. Do you guys have any response to his question? You don't do like that.
So in a scenario like this, I probably would want to move my stop to like probably the low of this bar. So I know you're really aggressive with trailing, Isaac, but like for me overall with this strategy, I just need to let it work and just do its thing. I'm also not risking tons, so I'm willing to let it do that.
But could we say, just to play the other side of the coin, Tanner, you lock your stop at 41,187, okay?
Yeah.
You get stopped, you lose nothing,
yeah,
and you could get back in.
For sure. You're
okay.
Right. You're right.
But if you do that over the course of a year, instead of just closing the trade right now, like just take your $400 right now. I want to know, and this is what no one has an answer to, I want to know how much money do you leave on the table by taking a break even on some of them versus just close it now. Take the 400, walk away. If it comes back down, take another trade. If it goes higher, take another trade. You can add trades to the playbook.
True.
So you can still take advantage rather than donuts. Peter Brandt, our favorite boomer, has two terms I do like. Popcorn trades and donut trades. My guys know what that is, but a popcorn trade is a trade like this that would go into profit and come down and actually be red. If he gets full stop, that's popcorn. Popped and dropped. A donut, I kind of invented, is if he locks his stop, he goes into profit, doesn't take any off, and he gets stopped for zero. He gets a break even. It's a donut. If you cut the popcorn and the donuts, how do we look? Right? That's like kind of the way to think about it. It's corny, but it's true.
Yeah, definitely where we are right now. I'd say this is like probably the hardest part still.
What would you guys do? Would you take it? Right now, would you close it? Or what would you do? Speak up. Take 5. You were shaking your head no. Who's in the back screaming? Who's that good-looking guy with a new haircut?
Let's go.
Louder.
Anthony wants you to hold it. Can we go a 2-minute time frame, buddy?
Yeah.
Anybody else? Who would close it? Who would take it? Come on. Keep it. Keep it. Lawrence says keep it. We're about to get tapped.
Watch me get edged.
No, don't say that. So let me just say one thing. On this, just because I'm a big Brian Shannon fan, like he's literally one of the only day traders that's made a career over 40 years doing it every day.
Dude, look at this. This is textbook. Let's go.
Good job, Tanner.
So now, for sure, 1,000%, I'm gonna move it to break even. And
so
I thought about that earlier. I was like, "Fuck it, I'm gonna send this." Dude.
I think you might like what I'm gonna say, Isaac. One of my favorite the only stop trail strategy that I do. I would have taken if it was me. I would have taken 8 out of 10 off and kept 2. and I would have 2 at the pin low of that 2-minute bar. Brian Shannon does 2-minute low trails. It's been way more profitable for me. Instead of taking the full 290 down to 0, I'm taking 290 down to 210, and I still walk out of here with 210. That difference of $200, even if I trade the same size for the rest of the year, think of the math of that. How many trades do I have to take to make an extra 1,000? 5, an extra 50. You see what I'm saying? And it can compound very quickly. So 2-minute pin lows, if you want to make a note, I would say is one of my favorite trailing strategies. Is that similar to you, Isaac, in a way? Because yours is just number-based, but if we're moving in a typical day, 10 points, 20 points like today is a typical day, you're probably going to line up with very similar trails, right? Because you're going to do something at 4, you're going to do something at 7, right? So Tanner, this is YM, so it's a little bit different.
Yeah, this
it's
is
on
YM.
ES, right? So we would be looking at it on ES.
Yeah.
So I think our trails would line up similar sometimes.
Also, if you guys notice, I'm always sifting through all the time frames because it's so easy to get caught up in like these smaller time frames. So that's one thing I was like, I'm always kind of like cruising through all the time frames, looking at them because like look at this hourly. Like if this closes up here, this looks fucking awesome. It looks like it's just gonna keep going.
But what would suck? So that's where it's like the trail comes in. If it closes up here, do you bring this stop up? Like, would you want to be in a red hourly bar all the way back down, bro?
No, definitely not.
So
So
when-
as we kind of get higher here, I'm debating. So so this is actually something that I still struggle with too. Is easy money versus greedy money. The easy money here is as we come into the top of the structure high is to cut it. That is the easy money for sure. And the even safer, easier money was kind of when I took some off there, like just into 300s. So, because we could like barely get it back above this and then maybe fail one more time.
It would sweep them, right?
Yeah,
Because wouldn't you
yeah.
think like the
We could
amateurs
sweep.
have trades here?
Yeah.
Everyone has their take profit at recent highs.
Correct.
It's going to do something when it gets there.
Yeah.
Or even a little before
Yeah.
maybe.
So then the greedy money is my bigger picture thesis idea, but I
Hold
have
it.
such a good entry on this. I'm like, I kind of want to hold it. Like, you know, that's the thing too. I have the high R multiple for a reason because setups like this, I'm like, this looks fucking good. Like, why would I want to cut this short?
Well, I guess then the question is, would it still look good if this bar flips red?
The setup's not invalidated overall until we lose VWAP, in my opinion.
Setup's not invalidated until we lose VWAP. So even if this next bar flips red, you would still be like, yeah, it looks good.
Yeah, I mean, just let it
Okay.
trade.
Okay.
Let it trade. That's trading. You're gonna have red bars. You're gonna have.
Are y'all
red
hearing that?
lines.
Yeah, Randy.
Are you trading ES? Okay, yeah. So, because I was going to say, if it's NQ, you might want to 5x the parameters, right? So, okay, perfect. Yeah. So the thing is, so the 4.5 trail at 6.5 worth of price action or price movement, that's non-negotiable. Anything beyond that is at your discretion, right? They're in different stages of trading, right? So if you're on an eval, it's lock it the fuck down because like you have to hit a profit target, right? Or at least at most places, right? Same thing, sim funded. It's like, you know, you're still trying to get somewhere. You're trying to get into live. So you maybe don't need to be as aggressive with your trails on a sim funded. And then on live, you know, that's all on you, right? As you're building equity, like from when you're at ground zero, that $0 to $20,000 mark, I think you should still want to be aggressive, right? Because it's just add to the P&L every day, if at all possible. It's don't lose money first, add money second, right? But once you have some breathing room, you have your own cushion, you have enough equity in there, you could go ahead and you know, let things kind of ride out a little bit more. But when you're in that passing eval or challenge or combine phase, trying to get rolled into live from sim funded, you should be, at least my opinion is, you should be a little bit more aggressive with your stops. So what you'll see a lot with me, because like when I got with Top 1 Futures, like I'm at ground zero with everybody else, right? I still obviously have my live account, but like I'm just like an average Joe now, like not necessarily in a challenge, but in that sim funded environment. So like everybody who's on my streams on a daily basis, like they see me, I'm like, the first thing is like just get to that 4.5 point trail, right? At that point, then I'm like, okay, if we can get to 9 points, I'll lock in 7.5. If we get to 12.5, I'll lock in 10, right? And then usually at 10, then at that point I let it rock, right? But like for me, there's zero excuse to let yourself be 10 points in the money on the ES, or let's call it 12 points. You shouldn't hit 12 points or more and not walk away with 10. That's just my honest opinion. Yeah, to me, the most important ones is 4.5 and 10.25, right? Because I got like OCD, so commissions and fees. Like I like 4-figure P&L. So 4.5 and then 10.25. After that, you can do whatever the hell you want.
Anthony? Yep. I'd be out right there.
Yeah,
The first red bar. So while Tanner's going to hold on here and hope we make some more money, I would have been out not at 330 where his max profit was on the rest of the contracts. I would have walked away with like 275. Each green bar from entry, look at the pin low. Here, Brian does it every 2 minutes. So let me just point because I can't do this with my hands. So you're in the trade. As structure is broken, the way Brian describes it, Anthony, here are previous lower highs. Here are previous lower highs. As we make higher highs on a short-term time frame above these lower highs, this move here, 2, 4, 6 minutes, is where Brian would start to trail the stop up. I know, Brian, it's going to probably be this candle to the pin or this candle here. And he won't do it every 2 minutes. It's every other 2 minutes. You wait for 2 2-minute bars is the way he describes it. So he would have been taken out right on this first red bar down at the pin low of the green bar to the left of it. Sorry if my hand's a little shaky. You see what I'm saying? Right there. That pin would take him out. So instead of like at the peak, I think, Tanner, on these contracts, you were up like $390. You were up like another $400. So Brian would say, okay, I could have, because it is his money, the way he describes it. It's $400 of unrealized gains. I'd rather walk away with, instead of 400, 290 than zero. Because that 290 compounded over the year, when you're a day trader and you have a lot of years like Brian does, he says, dude, it makes a drastic difference in your P&L. Not a small difference, a drastic difference. That's why I like what Isaac says a lot about the trails. If you're going to trail, I think you trail aggressively, and then you just be willing to take another trade. Isaac has 5 levels of trades that he can take. I have multiple ways to play a VWAP. A mid-range bounce, top of range, yesterday's VWAP, high of day VWAP. I got other plays. So give me the gains, especially for the new traders. To my comment yesterday about bandwidth, your bandwidth is growing. You've been trading for a while. Who here is less than 5 years into trading? Your bandwidth is less, right? When you talk about bandwidth, traders that are in a winning trade like this that are new and have low bandwidth, as soon as they see 2 minutes of red candle, they're going to start to panic. So bandwidth comes in. If you're working on building bandwidth, just realize the gains. Get yourself out. Then all of a sudden, the stress comes off of you, and then you either have to decide to walk away or take another trade. That's a much better place to be, I think, making a decision from, rather than like panicking mid-trade of like, maybe I should have cut it at the top. God damn it, I should have got it out the top. You know what I'm saying? Questions for Tanner, Joey, Isaac? Keep going. Yeah.
Correct. Yeah, and that's why on this too. Of course, if it ends up tagging me out, I'm like, how could I have trailed that? Should I have trailed that? But again, I'm really confident with my entry on this to the point where I'm like, I just got to let it trade, because also that's why if you saw me pull up this, look where we pinned, right? This was my key level. This was my initial key level, 41,310. Of course we pinned there. So now, if this is going to continue and really dump, yeah, that's a possible scenario. So that's also why market structure is really important, because we extended, we bounced, we came back to the level and retest, we got the rejection candle, and so yeah, there's some follow through now, which doesn't look good, but you got to see how much it
But you're
actually
protected.
follows through.
You're protected.
Yeah.
And I look at this and I would say, if this continues through and you're not in it at all, you're going to be pissed.
Exactly.
So would you rather, what would make you more upset, Tanner? A break even or to miss the move?
To miss the move.
Exactly.
Yeah.
So it's a great question to ask when you're really confident in your system. What would piss you off more? If I miss this trade or if I'm not in it and it goes?
Also, I think I hate talking about the monetary value, but also I'm like, if I make $200 on a trade or $800 on a trade, it doesn't feel really any different to me personally.
Why don't you trade this bigger though? Why are you only at 10 micros on a 150K account?
Because I'm trading in front of 50 people and I just didn't want to go super big.
Okay.
Honestly.
But at home, what would the size have been?
No, honestly, at home, I'd probably go 15 to 20 micros on this. Because I took my initial loss, though, that's also why I wasn't as aggressive.
At what size?
Same thing, 10.
Okay.
So if I would have waited just a little bit longer and crushed this entry, I would have saw that initially. What was my stop on this initially? Right? It was
down the pin. Yep.
I forget what it
Yep.
was. It was like 260.
Yeah, a little bit closer
right?
to 300. Yep.
So I'm willing to risk 400 to 500 on the trade. So I probably would have gone double size in that sense, but I'm already down like 260 on the day before or whatever. So that's why I didn't size.
In a situation like that where you take that first loss, I find it difficult to trail the second trade. I'm quicker to just take profits on the second trade to come back and get the money back. Do you ever do that?
Not as often, no.
Okay,
I
explain
think,
why.
Yeah, I think a lot of the times.
Hold
like,
on, I'm sorry. Did you guys hear what I said? Everybody following that? Because I think a lot of us do that.
Yeah, I think a lot of the time, like, building confidence in your trading comes from the conviction of watching it do what it should do, but also understanding the scenarios where, like, yeah, it could do this here, right? So that's why, well, like I said, when we pinned this right here initially, I'm like, okay, that doesn't surprise me. It's a retest of my level after what, like a 150-point move, 200-point move. Yeah, it's going to pin here. It's a little overextended. Let's see how we treat the pullback. And now I'm back in the driver's seat, right? We're back above the wick high of this. So now I'm cruising. So
But wait, real quick, back to my question. Would you ever close the second trade to recover the first loss? Or you're saying you never will do that? You treat them each as independent, and then you could be 2 red, 2 max loss, and rather than 1 red, 1 break even.
Yeah, I treat them as independent because I don't want to think about the impact of the last trade. And I'm like, oh, I just want to fight. Because fighting to get back to green on the day is the killer of like your progress, of your mental capital too. Because that's when you go on tilt. How many times have you guys been on tilt where you're like, you're down 600 or like 1,000 on the day, and then you claw back and you're like, okay, cool, like I just need to make 200 more. Or like, yo, okay, well now I just need to make 400 more. And then you get back to that break even or whatever, and you're like, okay, now I can work again. I can keep going. But then you make another mistake and you're like, fuck, I'm down 300 again. And then it goes backwards. So I try to treat every single trade individually in that
great
sense.
Advice.
And just manage the risk initially. So that's why, like I showed you guys, I took that small initial loss of 260, and I'm okay with that because I'm like, okay, if my next one works, it's going to be like, this is over a 2 to 3 hour trade already, right? So it's like, it made up for it.
Yeah, I'm the same way too. I don't like basing my current trades off previous trades. So if I take a red trade, I don't like to base my current trade off. I want to take the P&L or take the profit just to get back that red day because I feel like that's making me be a little more reactive to my previous trades versus focusing on what I'm doing in that exact moment. A good example was actually today. I had taken a couple trades earlier. I took some small paper cuts where I was taking maybe a $60 loss and then another like $80 loss. I was down about 200 before my last trade that I was long in previously, and had I treated that trade reactively from my others, I wouldn't be in the green right now.
Interesting.
Right? I would have been either break even or still slightly red, and so still focusing on the current trade that I was in, allowing it to go, following my plan of scaling in and out, allowed me to turn green on the day.
Great point.
And so one thing I want to emphasize here too is you hear a lot of different styles of trading. Up here you have all in, all out. You have trading. You have let the trade play out, trust the system. Everybody has their own trading personality, right? We all think differently. So I would encourage you to take what you're hearing here and see how it plugs in to your trading personality. If you find something interesting, like maybe what Isaac does or what Austin does, find a way to tweak it to fit you and how you trade the best. Because at the end of the day, we're all individual traders. We all need to be an independent trader, right? And so if you just copy everybody or copy somebody to a T, you're not going to be that independent. You want to find a way to make things work for yourself.
Well said.
I just put an offer out for a few more contracts, and this is kind of how I look for like daily targets too. I am looking for that really big move, but I also just don't want to fucking sit here and watch it all day. So on the daily chart here, let me fix this. I love just looking for prior bar lows and highs, right? So as we are kind of cruising up here, the retest of this bar low, because we've already broken above all this structure here, is my next logical target. So I want to cover into here in case we reject and also come back down. You know, if you're a ICT fanboy.
Whoa. Can you go to the lower time frame real quick?
Yeah.
So the way I would manage it, just because this is a flush to a high. That is the easiest fucking money trade. People that trade with me know I am full out right now. Get me out. Because sellers are going to step in at this high. I'm not doing what he did. 1, 2, 3, 4, 5 times 5 minutes, 25 minutes of straight rise. I'm out. That's a flush. One of my mentors taught me when the market flushes, you take the money because it will often turn back around. There often will be people and algorithms that come in to take the other side of the trade. So to see this next bar start to come down, it's at equal highs. It's at the high of the day. There's definitely sell orders there.
You're right.
I think to leave this, to be up 375 and be willing to take all that. Yeah.
I'll do
Thank
this,
you,
yeah.
because you're giving
I'll
me an
trail.
aneurysm. I'm
All
like,
right,
Jesus
all right,
fucking
I'll
Christ,
trail
bro.
that, trail that,
The
trail
market on the seminar day on Spicy Friday gives you this 1, 2, 3, and you're like, I think I want more. I'm like, Tanner, we're trying to teach people not to be greedy, bro.
I know,
Jesus
you're
Christ.
right. You're right. I'm just trying to show how I trade, bro.
I
Like,
would have
that's the
taken.
thing,
No, I know,
like-
bro. I love it. I would have taken, and that's why we're all giving our different opinion. I would have taken half of your off, like 3 off there, and have 2 running, because at that high, you know it's going to turn around. Don't do it just because I fucking told you.
I know. I'm about to take some off because
But you're going to be, because this is where, like, if it hits that high, when he has to come, this is important, everybody, so follow me. When he has to come back and do that markup, and he sees it hit the high, what's the first thing he's going to say to himself?
This does look like a good reversal here.
He's going to be like, oh my God, dude, how did I not take any off at the high? It was right there.
You're right. You are right on that for sure.
It's a flush.
Yeah.
David,
And now look at this. We're getting a big bearish engulfing bar. This is like the worst thing I would potentially want to see.
think about how many pending sells were up there at the high a day.
Yeah.
So this is why we're doing this. It's a good lesson, right?
Yeah.
Everybody liking this?
Yeah.
Yes. Does anyone have? Well, they're on YM. Yeah, you don't have that. With YM, I'm pretty sure you actually need a different Bookmap subscription. Zach, can you confirm that? Yep, Steve said yep. Different Bookmap subscription for YM, right? Okay. Do you have Bookmap for YM pulled up, Zach? Okay, no worries. You're good. Questions? Yeah, Krista.
So it's just like so if then, right? Like if this crosses over and closes, right? If this holds, then you take an execution. Yeah, I'm actually in a short right now, so I'm looking to see if we have a failed upside auction. So it's small size. Do I need a microphone?
Yeah.
Yeah, so the initial balance period is already closed, right? So we have the initial balance high is up basically at 700 even, big round psychological number. I know I have a little bit of a bullish sentiment, so I'm short just outside of the point of overextension. So I'm just basically banking on a retest of overextension. It's technically not one of my setups. It's just an execution based off of technicals.
AKA he wants to fade Tanner.
Not necessarily. Well, he's
A
trading
little
different
bit.
market
You saw that, right? A little bit.
Whatever.
Yeah.
Whatever, bro.
But,
Fuck it.
yeah.
I'm running the fade right now.
Fade him.
You're also
Fade
short?
him.
Oh, you're ready to? Yeah.
Yeah, I mean, it looks so. I like going bar by bar as well. It's like if this bar fully engulfs this, which it looks like it is, it's probably going to have continuation, and they're probably going to seek out liquidity and stop me. So it's like, yeah, I'm like right now, I'm like, okay, I'm probably going to get fucked.
Well, can I be honest? When we were looking at it and it was beautiful, I'm like, damn, man, this couldn't have been any better. Friday on the seminar, Tanner's got a green trade up on the
I'm still
screen.
going to be green overall.
No, I know. I'm not taking away from that at all, but I'm just like, man, if he just would have closed it right at the high, I probably would have had a boner on stage. I would have been so proud of you, bro. I would have been like, holy fuck, dude, that was amazing.
What if we break the highs here and keep going? It goes into my targets, and I'm just like, yeah.
I'll pay you another $20.
Okay.
Yeah, hold on. Krista and then
Don't
Thomas.
stop me. Don't stop me. Don't stop me.
Yeah, you saw how we set the initial balance high right at 1026, right? We did break above, and I'm feeling like it was just a little short squeeze, right? A lot of people were looking to enter shorts just below a big round psychological number, 5,700, and we very quickly got right back underneath the initial balance. So we might still go and retest the initial balance high from below. If it acts as resistance, then the first order of business is going to get to that envelope, yesterday's session high, value, right, and then start reverting back to the mean. Yeah. However, when we pivoted off my screen, you could see that sell-off that we had, it went down to the simple moving average on the 1 minute chart, which was also conveniently also the initial balance high from yesterday. And then, of course, going into the number, we skyrocketed it up.
And when it layers like that, is that more
would have been a level 1 long. So that's selling. And again, it takes a certain set of balls to long when you're seeing the market go down like that. But you could see it went right down to the moving average, right down to basically initial balance high from yesterday. And then that's where it's turned around. And then it went, 35, 40 points up to that 5,700 level. So that level 1 long was good for about 35 points.
Let's do Lawrence and then Thomas, okay? Lawrence, good.
Who's that directed to?
Me?
Tanner? All right.
Yeah, I mean, I'm looking at all of them for sure, but it kind of just depends, I guess. Like, I am comparing all of them to see what they're doing, because sometimes you will have divergences. the cool thing is when all the markets are in unison moving together, they all will push, algo-wise, buying programs, selling programs, whatever it is. So, but there are times where you'll notice, I actually have a video on my YouTube channel about this. I had a buddy named Chandler Horton do this webinar with me a little while ago, and he talked about rotation in the markets and how they influence each other. And it's really interesting because NQ is actually the king. I know everyone thinks ES is, but ES is actually heavily influenced by YM and NQ. So what you'll notice is if there is a divergence day, NQ, let's say, is strong, YM is weak, ES is chopping. And those days don't always happen too often, but that is money rotating in the markets. And so when they all are team push though, and they're all pushing together, it's just more conviction that everything is kind of moving in unison. So, and you'll notice this a lot too if you watch RTY, because this thing is just a piece of shit. And it
Not
always,
today. Look at it today, bro.
And it just never works that well.
Well,
but
that actually brings up a good point that I wanted to mention earlier. Who here actually could say confidently they understand U.S. indices, the 3 or 4 main ones? I know you can. You can. Anybody else? Does anyone want to take a guess at how indices are weighted? Okay. Does anyone know how an index is weighted? Say no if you don't know. Say yes if you know. Market cap, Michael. Market cap is how ES and NQ are weighted. Do you know how YM is weighted? Tanner, do you know how YM is weighted?
No.
Which is crazy. I should spank you, bro.
You should. I just look at candlesticks.
But this is important. I really think, you're a great trader. You always want to learn new things. Let me give you some sauce. This was new to me this year. I love when I have guys that go, I'm a really good gold trader. And I'm like, do you know anything about gold reserves or who's moving gold? No, I don't care about that. Okay. The Dow is weighted by the most expensive stock in the index. Does anyone know what that is? It's Goldman Sachs right now. So in YM, in the indice that he's trading, a lot of this movement can be driven by Goldman Sachs, Home Depot, United Healthcare. Who else is? Caterpillar. That's where he called it the boomer index, because back in the day, they used to track the Dow as the market. And as things have changed, now what is the market? Technology. Tech is the market. The Qs, the NASDAQ. That's what people really look at. So when I'm trading ES, I know I'm trading an index that is weighted by market cap. So if I look at the MAG 7, just like with NQ, I know those 7 stocks are 35 to 37% of why that thing is moving. Does that make sense? So I don't trade YM because I have no idea why Goldman might be doing something today. It is harder for me to get a read on it because the basket is spread wider. Does that make sense? Where it's much easier for me to get a read on the MAG 7. That is directly correlated to ES and NQ. Questions on this? Because I think this is pretty important. So at least you learned something new over the 2 days. YM is weighted by the most expensive stock. The next question you should ask is, does that change? Yes. Huh? It rotates every fucking week. Yes, absolutely. You know how much NVIDIA is in the NASDAQ? How much weight NVIDIA is in NASDAQ? About 9% right now, 8-point-something%. Do you know how much weight NVIDIA is in the Dow? Well, literally less than 2%. Because all these other stocks are priced more than NVIDIA. NVIDIA's $100 right now. What's Goldman's stock price? Can anybody just check real quick? GS. 800 something? Shouldn't take this long. Can someone give me a price on Goldman Sachs? I don't have my phone on me. 560? There you go. Yes. Yeah. Yeah. No, that is not what I mean at all. It is weighted more. It will pull the index more. The most expensive stock in the Dow will pull the index more than the second most expensive stock. No, just because of its price, which is silly. This is a silly conversation if you ask me. An index should be weighted by market cap, like Michael Reese said. It doesn't make sense to weigh an index by the price of the stock. That is why I don't trade YM. We were looking at trading YM end of last year, and we stopped because we figured that out. It doesn't make a lot of sense to me because you can have Goldman be the top stock today, but by next week it could be 20th, depending on what happens. Oh, he's alive. He's alive.
I hear these guys next to me. Damn, I think I need to bail on this short.
So hold on, there were other questions. Yeah, Nick, and then Thomas. Yeah, sorry, Thomas. Go ahead, Nick. It's a great question. Absolutely. In YM, absolutely. It drops the stock price. Yeah. Which, again, makes No sense. How can you have NVIDIA be like 1% of the index when in the other index, it's literally almost 10? It's 10x the weight in the NASDAQ. So when you're trying to get a read on the indices, like this is why I don't trade the Russell. I don't even know if I can name 10 stocks in the Russell. You know what I'm saying? I don't know anything about why that index would move. So I'm not a fundamentalist, but you definitely should understand. Like, I don't have a college degree, and I can understand a little bit about these indices. You should understand a little bit about them. What are you going to say?
So on Trade-Evate, it's an auto trail. I have no say in the matter. As soon as it hits 6.5 points, it will automatically trail my stop to 4.5 points. I have no say in the matter. I went to go take a phone call. If it had gone, it would have done it for me, right? Project X, I need to manually do that, okay? Never break even. When you're talking to me, don't use those words. That's worse than the F word. Okay?
Come correct.
Never break even, because it's useless. Break even is completely useless.
Donut.
You either take an L or make some money. And for me, $300 negative or $300 positive is a flat day. That doesn't mean shit, right? Like, that was less than dinner last night, right? So it's 4.5 points, non-negotiable. And
Good
if you
question.
can do it automated, do it automated.
Yeah.
Well, we're still sitting in it.
We're still,
Joey's
yeah,
like, I'm following Isaac, bro. What do you mean?
We're still sitting in
I
it,
know,
Tanner.
I know. Whatever. It is what it is. I had my little high for a second.
Joey, did you do anything?
I am currently short right now, but I have not trailed just yet. My stop is still at the high on NQ.
Okay. Are you guys enjoying this, seeing the different perspectives? A little bit different than joining just Isaac's stream or just my stream? Yeah.
Yeah, you want to give me HDMI? Just unplug the HDMI.
Pass the aux. Hold on. It's a great question. It's a great question. That
All
dude
right.
back there knows what he's doing.
So,
dude, you can blame them. That's the beauty of being here. If you lose money.
all right, cool. So I didn't get to show you guys the other things. So the only thing that has me nervous about this particular short, well, a few things. Number one, it's counter trend, right? I talked about I had mostly bullish sentiment, right? Market's obviously going higher, right? But to me, right, there's a few things at play here, right? This, to me, wasn't a very strong extension of the previous highs pre-market and into the open. We extended the initial balance just a little bit. Like I said, once the initial balance was set, we very quickly got back inside of it, right? So like here, I'm looking to short, banking on this, making an attempt to get back into quantitative balance, right? Not be overextended, not be at quantitative extremes. So this line up here, that's the initial balance high. This line down here is the initial balance low. This line, I only do this on Project X because there is no auto trail. I like having a visual reference or representation of when price gets here, I move my trail, right? So basically, if price comes down to this amber colored line, mustard colored line, which is now inside of the envelopes, right, then I would go ahead and grab my stop and drop it down to 4.5 points, right? But I don't do it until we hit this, because if not, I'm just going to choke the trade out.
Great point. Did that answer your question? I know there was another question.
Yeah, if you guys are asking questions or you guys are talking,
No, this is
you
great.
might see me actually like manually trail the stop.
Yeah, so you leave yours on for a second. Any other questions? We're going to go with this for like another 15 minutes, and then we'll take a break. That's totally fine. Yeah. Yeah.
Take the money.
All right, this is going to be good. Isaac, you go first. Tanner
Yeah,
said take the
you
money.
know I'm really passionate about this. So I think that your payouts should be as infrequent as possible and as small as possible. I think ultimately the killer of accounts is poor money management, not even the trade management. So you can be an excellent trader, but with really poor money management, account management, right? Like you can have a successful business, but if you manage the business poorly, it can fail, right? Red Lobster, right? It's just like you would think. It's a good business, right? It's cheap food, it's seafood, it's decent, right? Well, what happened, right? A couple bad decisions on like unlimited shrimp or whatever the hell they were doing, right? And then they're filing bankruptcy, right? That's just stupid. Like unlimited shrimp, like your customers are supposed to pay you for shrimp. We're gonna just give you as much, right? So like a bad business decision. So that money management, I think that the most should be 2 payouts a month. I pay myself once a month, right? And I think you should get to the point where you can pay yourself a fixed amount regardless of what your equity, whatever your performance is for that month, right? Other people like, and I would go toe to toe with like CEOs of prop firms, and they're just like, pay yourself, so you know the money's real.
Dude, wait a minute. You go toe to toe? No way.
I go toe to toe.
No. You're not known for that.
Yeah.
No.
You know, so like, it's a long haul thing for me, right? Like I intend on having this account for a long time, being a trader for a long time. So like, what's the rush to take the money out?
What do you think of that answer?
So, okay, so let me chime in on that. So, I'm a big fan of leaving like an initial buffer. So it's like you never want to drain the account and just rinse them. That's for sure. I'm not a fan of that. So, for example, when I have clients who trade with Top Step and they're like, oh, I have a $2,000 drawdown and they're up $3K on the account, I'm like, oh, take $1K out. Pay yourself the $1K. So you're still used to that same $2,000 drawdown that you've been, you're used to, but at least now you put some money in your pocket and actually paid yourself. So I would never recommend taking out more than the initial drawdown they give you. Obviously, the bigger buffer you can build, it does make it a bit easier. Like I have an account right now with this other prop firm, which sucks, but it's up $20,000, and I'm like, okay, I have a huge buffer in it, so it is kind of cool. But like I know it would take me a lot of tilt to blow that. So.
Not impossible though.
Oh yeah, nothing's impossible.
Okay, Joe.
Yeah, I would definitely say find a good buffer amount in your account that you feel comfortable staying at and taking profits or taking payouts above that, right? Because you never want to take a payout that takes majority of your account down to your drawdown limit or to where you're basically going to blow the account. Because if you think about it, how many accounts are you going to cycle back through again? How much money are you going to pay on new accounts to get you back to that payout, right?
100%.
So you want to make sure that you keep a good amount, like whether it's 10K, 20K, whatever you feel comfortable with, and only take above that amount. That way you protect yourself from recycling or going through more accounts.
Yeah.
No. So build it to 3K, take a K out, and keep the 2K. The minimum buffer always should be the minimum buffer. I would tell them just like it depends how low it goes, right? Like if I pulled out, if I drained an account and I have like $500 left in it, dude, I'm YOLOing on NFP, like to try to get it back up, or I'm gonna blow it. But I accept that because it's so low already, right? So if you already made that decision, you have to make that decision. And that kind of is the beauty of the prop space, is we do have the ability to. There's two ways to treat it, right? Some people do super aggressive, go through a lot of accounts and kind of take payouts like that, or they slowly build them, which the slowly building is definitely a better habit overall to do because you want to treat them like real accounts in that sense. So somewhere in the middle is like kind of how I like to do it, where sometimes you're aggressive, but most of the time you're trying to be relatively safe. And when you do get above that initial buffer, excess you can pull out, but you still have that buffer, so you're still kind of trading with what you're used to.
Yeah, I'm gonna make a comment on this one as well, guys. I'm not the longest standing Top Step live account, but got paid out by Top Step yesterday. Let's go.
Flex.
I think it does come in different stages, right? And there's definitely two sides to this coin as far as building up an account that you're going to hold on to for a long period of time, not put it at risk of loss because you're not pulling money out. And also on the other end, being a complete beginner, never pulling money out of an account, never taking a prop firm payout, becoming eligible, having an opportunity to, and then running it up and running it back down into the ground. And I've heard that story from my community and so many traders so many times. So I think for me, at least personally, what helped was paying myself, making it real, building that momentum, building that confidence, being able to reinvest, but do it within reason, right? Like the goal is just to make, a couple $100 and then pull the payout right away. You're going to kill the account, and unless that's what you need to do to say, hey, I can get paid out and then build some momentum there, probably not the best, move. But the thought process is I wouldn't aim for 20K profit before you take a payout in your first funded account. That's just me, because I've just seen that story so many times where guys run it up, run it back down, and that frustration is often just tough to deal with. So I'd consider paying yourself within reason, build that momentum, and I'd also consider looking at that money as money you're going to reinvest back into your business, right? Not just going blowing it and having fun at the bar or whatever it is. So that's my 2 cents there.
Don't stop my fun.
That's really good too, because
great advice.
We've all probably seen those horror stories on Twitter where I think there was one the other day. Some dude was really close to like $1 million payout with Apex, and he fucking blew it. He was like 4 days away.
That's crazy.
And it's like that. The amount of
dude, you'd have to take a break from trading. Like you would need to disconnect for a little bit because
be
that'll set you back
yelling at
mentally.
myself in my car, smashing my head against the wall. You fucking idiot. If it is your first payout, you got to feel it. Like, I do think that's important because that's a huge milestone, right? Like, getting your first payout, you got to feel that, like, tangibly. So I don't blame you for that.
Can I get a P&L update real quick? Anyone up over $500 on the day? Hell yeah. Anybody down over $500 on the day? Hell yeah. Nice. And even if you are and you didn't raise your hand, thanks.
So, Austin, touching on what we were just talking about, real quick, I want 3 people to tell me what is your longest losing day streak? How many days in a row do you remember losing?
Last year for me, it was
week.
4.
So 5 days. Anybody else? 8? Good. One more person. 6. Okay. So all less than 10, right? So think about this. 10-day losing streaks are a real thing, okay? So if your daily loss limit, right, is $2,500, because that's what mine is. If your daily loss limit is $2,500 and you were to lose 10 days in a row, how much money have you lost? $25,000. So to put things into perspective, that should be my buffer at all times. That's maintenance balance on my account. That means I'm running fucking thin. I got 10 days in a row that I can lose money before I got to shut my business down. You start looking at it that way, and you have a very different perspective on what you should pay yourself and what you should maintain in that account. Right? Like,
we lost you there.
I got trailed, by the way.
Sorry. Is it still on there?
Yeah, now this is, yeah.
Okay. No, I was looking at my equity balance.
No, you're good. Tanner, you said you're out?
I got trailed, yeah.
Sorry, buddy.
And I think it's going to spring and go up now. Classic, but it's okay.
Yeah. Can we get Tanner back on screen real quick just to finish that? Yes, Lawrence.
Yes, sir. Loss expectancy, elaborate. I've gotten close. Most of the time, though, it's because I broke the rules of my system, right? So it's one of those tricky things. Like, you're going to lose, on average, 3 to 4 days out of 10, with my strategy. So you got to think about that, right? If you have a 10-day period and a 10-day period, right? And we're going to just actually say that the system's less profitable than what it is, like less successful than what it is. So if it's 60% win rate, that means 6 out of 10 days is winners, 4 out of 10 days are losers, right? So you have the first 10 trading days of the month, that's 2 weeks, right? 5 and 5, 10. And then the last 10 trading days of the month, which is the other 2 weeks. If you have 4 losing days at the tail end of that first 10 days, and then 4 losing days at the first front end of the next, that's 8 days in a row. Is the strategy doing poorly? No, technically it's still performing at its standard rate, right? 40% loss rate. But if it's 40% on this tail end here on the first half, and then 40% of the front end on the second half, that's 8 days in a row. And I've experienced that. But I've also been trading this exact system for about 7.5 years with very, very few changes.
Good question. Any other questions? Tanner, when you look back at the trade now, do you think of this as like, let me actually ask.
I think I shouldn't have fucking listened to you because I could have cut my stop here and now it would have been up.
I didn't tell you to trail it. I said don't do it. I told you, in fact, to get out at the highs like an average person.
No,
but it's an important question. Hold on. It's an important question, everybody, so follow me here. He hits a winning trade. He's now red to green on the day. Do you have another trade in your tool belt that allows you to participate? Or do you have to wait for the same setup that you already took? Or do you just call it?
So I'm glad you asked that because I can tell right now, I'm like, oh, this actually might go in the other way. Like, and I could feel like
I can see you
my temptation
in
to
your
wanna
body
get back
language
in.
even. I can see you want to get back in as he's talking.
I can feel like myself wanting to get back in, and I can feel one too many whiskeys last night telling me to do that as well.
Blame it on the
So I'm going to do this. And you all should too, if you're done.
Hell yeah. We'll take that, buddy.
Go.
Good job. So, questions, last call. Beautiful. Give all 3 of them a round of applause, everybody. That's not easy to do. All right, so to kick us off here, perfect time. Market just opened. So it's 9:30, everybody. So first thing we're going to look at, as you can see on screen, we've got electronic trading hours turned on. So I'm seeing an overnight VWAP. Everybody knows the market rallied really hard yesterday. So who's anticipating a pullback at market open? Who's thinking we move lower here? Can I get a bias? Lower? Can I get a bias for higher? Louder, louder. Okay. Yep, you need me on, Chris? I can go on. Okay. Beautiful. Boys, what are you looking at here? Zach, go ahead.
You're going to see. Mic sound? Nice. First off, super excited to be here, guys. Really hyped. You guys are all awesome. Very excited to be here, sharing this room with great traders up here in the back, but also all of you. I've seen some of your work. Solid stuff. I'm trying to catch up myself. I'm looking at this to pull back and then potentially run higher. On Bookmap, we got quite a bit of liquidity up to the 5700s. Right now, very bullish move out of that wild pullback and then run up yesterday. We're opening up above prior day high. We've been cracking overnight low, really just continuing up above VWAP up until right now. Opening up to the downside, I'm watching for a test maybe around that prior day high level. I have that marked on ES as actually the MAS chart that I'm on, 56.2875. Not going to jump into anything right off the bat. I'm not a big fan of getting involved in the first 15 minutes. I do it from time to time, but it's volatile. It's just a wild market to jump right into. U.S. indices are crazy off the open. So I like to sit patient, kind of just give myself a couple deep breaths, analyze, create some if-then statements, figure out how I want to structure risk, create some narrative for the morning, and then start to go from there. But right now, I'm watching this continue to sell off. I'd like to see a test around that prior day high level, 56.28 3/4. I'm going to watch down there. There's also quite a bit of liquidity on the book, about 100 lots on the book there. Want to see what happens down there, potentially look long back towards VWAP. But again, as Randy said, I'm with him. I could see the 5700s. Conversely, if we just start to really sell off from here, we could see a pretty wild pullback. Last note here, as I'm going to wrap it up, NFP Friday tomorrow. We do have some news today at 10 a.m. Oftentimes, it's a tricky day to trade. With large red folder news coming the next day, the prior day, oftentimes the market just consolidates, kind of chops around. We get some indecision, some anticipation ahead of that news. I don't like to carry a super strong bias and say, I think we're just going to chop, or I think we're going to trend all day because there's news or there's no news tomorrow. But I make myself aware of those things, right? I find that in my trading, right before NFP Friday, oftentimes there's a lot of chop, a lot of consolidation. I find at 8:30 a.m. for NFP Friday, there's a big candle, right? A big news candle. So you can be aware of these things without letting it completely derail your trading for the day. So that's my thoughts going into the morning.
I like it. A good resource on screen, forexfactory.com, for like a schedule of the day, very easy. I also like Financial Juice, which we'll keep open. Financial Juice is like a constant news feed. Like here we have something even right there. White House advisor Miller does not commit to tax relief for small businesses. So you'll see there'll be news that, like here, U.S. Chamber of Commerce asked Trump for tariff exclusions to stave off a recession, according to CNBC. And it looks like the jobless claims this morning, actual 241,000. That's what sent the dollar index lower. And looks like SPX a little lower, but it rebounded pretty well. So, Ev.
Yeah, so good morning, everyone, first of all. But I think it's similar to what Zach was saying. I really don't like to trade around that opening range setting because I could have a bias coming into the morning and then how this first 15 minutes shakes out, I'm on the complete opposite end. And I think it's okay to be flexible with your bias and just read and react. The first 15 minutes is going to tell a lot of what we might want to do in the next hour, or it could just be false information, if you want to call it that. And we do, in fact, come higher in the next hour and a half or so. But during these first couple minutes, I mean, there should be no FOMO because it's not as volatile as I've normally seen. But we have all day to find trades on any given day. This is not where I look back in the morning, oh, my best trades every day were at 9:45. What was I doing? No, they're normally at 11 o'clock, 10:30. So whatever happens here is just giving me enough information to take a better setup in 10 minutes, 15 minutes. So seeing that we're just having all sellers so far, again, it's only been 6 minutes, but it's all sellers here since the open. If you've seen any of the streams, all the VWAP plays, we're going to have to get above that New York VWAP from that 9:30 open in order to find any type of long. Austin's probably the type of guy that would trade it mid-open more than me, just because he likes to chase the price sometimes, but he does it really well.
Jab.
I do not do it as well. Where I like
Jab.
I mean, you're doing it well, so it's not too bad of a jab. He does it really
Thanks.
well of trading mid-range from bottom to top, and then I'll just catch the next move following that. But yeah, I think here, pretty much sideways, right back where we started at 9:30.
So, has anyone gotten into a position yet? Cool. As we're going through this live trading session, everybody, and we're leading, we want you to feel like, get up. Don't sit here and wait. 20 minutes go by. All right, got to take a trade now. Get up. Talk to each other. While we're talking, feel free to communicate amongst yourselves. The other boys are in the back. They're going to lead the trading session tomorrow. So today is us kind of guiding, but we want you to communicate. This is not meant to be silent study hall, okay? So if you have questions or you want to talk to each other, don't feel bad. We will not be offended. That's why we got the microphones. But right there on that candle, we took New York VWAP and overnight VWAP right there at 44. So Bookmap this morning, as you can see, we're going to do a lot of Bookmap later today. Bookmap is pretty flat. Zach, do you see the same thing? Like, I don't see anything hot at all.
Yeah, not until we get up towards that 5,700. There's, I'd say, a few evenly stacked 100-lot orders above, looking at like the 5670s, 75s, 80s as we start to push to the upside. To the downside, I'm looking at that 5630 level, again, right around that prior day high. Not a whole ton, though. Nothing crazy, right? No 500 lot, 1,000 lot on the book like we've been seeing.
Kind of thin.
Yeah, nothing crazy.
Yeah.
But I wouldn't mind to see. We didn't quite get that test of prior day high. That would have looked pretty solid if we swept down below, maybe into like the 25s, a nice aggressive sweep, and then we saw buyers step right back in. That might be an instance where I do look to get involved pretty quickly before the first 15 minutes, because I do think we can run the high here and head up towards 5,700. But for right now, like Evan said, right back at VWAP, kind of flat, somewhat choppy. Holding that bullish structure, and again, if we start to push from here towards that overnight high level, 56.62.5, it could look like one of those longs off the rip, and we've seen some of that. I like to stay patient. I like to say I'll miss that initial long and maybe miss some of that move because I often I get chopped, right? And I'm not as good as Austin as well as jumping right in there in the first 5 minutes of the open.
You say this because I won the last two, but there's like 87 of them that I've lost. I mean, if I would have jumped in long here on that break of New York VWAP and overnight VWAP, you're already in drawdown. So even more reason of why the three of us are kind of similar. That's why I have us leading the session together here. This keeps it so you can see there's no rush. Like, yeah, you got a decent sized candle here and here. Let the market settle. This whole range, the black lines here, top and bottom, that's your opening range. That's your 930 candle. This is only 20 points, correct? Not even. Are we at 20 points yet? Yeah, about 20.
Yeah, right at 20. Right at 20 on the dot. But yeah, to go off that, there's no wrong way to do it, right? So if you trade momentum really well off the open and that's your strong suit, do your thing. If you find that reviewing your data, like Austin was talking about earlier, you're finding an outsized number of losses, quantity of losses, the size of losses in the first 5 to 10 minutes, you probably want to trust that data, sit patient, let the market open up, do its thing, and then come in. There's all day to trade. And I was notorious for that really early on, especially coming over to the futures market. Wanted to just make progress right off the bat. You get volatility that jumps in. You get that FOMO. You want to jump in and start moving. You have all dang day to trade. Maybe you don't want to sit here all day, maybe first couple hours, but you don't have to ruin your P&L in the first 5 minutes if you find you get chopped. Again, no wrong way to do it. Some guys are fantastic at trading the first 1 minute, 3 minute opening range. You know, they're going to take a breakout to the upside or downside, but trust your data on this. And for me, unless I get a really clean move, which as I was describing on another day, maybe an aggressive sweep of sellers down below that 56.25 level, take out all liquidity to the downside, and then a big push back up, confirmation closing above VWAP, maybe then I'm jumping in long because I'm carrying some of that anticipation of a move to the upside based on trend. Outside of that, back at VWAP, I'm going to sit tight for right now.
You could see something's going on here. It looks like there's orders above. They're coming off. Now they're starting to stack below. So it looks like 60-30 at the bottom is a level, which is right near opening range low. They were just putting some orders on here at 56.50, but they are not filling. I just don't see how we could really be long here going into that overnight VWAP with lower highs in play. I feel like longs would be 56.44, 56.45 here, like up into that area as we move higher. Because now, look at the open. Sellers take control. Buyers tried to regain control, and sellers are now back in the driver's seat. And now look, it's getting thick right here at 56.30, that dark red right there. And look at underneath, 56.20, and at 56.65 right there. Look, 248 contracts. Can you see my green pointer, everybody? So that just came on all at the same time. There, and there. That's where those orders. Now look at how dark it is right here. I think these 30s are going to get gobbled up in a second. It looks like that. They're either going to get taken, or this will be solid support that we can use to trade long from. So now we'll watch and see at 56.36, how does it fill 56.30, 56.32? If it fills it. I'm going to say right now it's telling us it wants to because we're under VWAP. You wouldn't start to think that this is support until this starts to get above VWAP. When we start to move away from the block, taking out key VWAPs, then that starts to become support. Otherwise, with nothing else above especially, my gut says this gets taken. My experience in Bookmap says the 30s get taken before we go all the way back up to 50. Which would mean, like right now, the trade idea I'd have is a short here with a stop probably here. But again, we're not in a rush. We still got 3 minutes until opening range is set. You can control my computer, Ev. Yep. So Evan's looking at electronic trading. Go ahead.
Yeah, so this is on the 15-minute. Can everyone see that faint dotted line? That's the overnight VWAP. That on the take of New York VWAP on the 1 minute, that was a pin to the downside, and then buyers step back in. We're holding the overnight VWAP. If you've seen anything that I've traded, that's where I do want to buy it. If we're going to hold bullish, that's the best price in my opinion. Same thing how it holds it here pre-market, but it's 5 minutes into the open. It was 1 bar above New York. There is no wick to the downside anymore on the 15-minute. Sellers took it right back, so now it looks like my thesis doesn't even make sense, like it never happened. Another thing I look at is on the take of that, we can go back to the 1 minute here. This is on ES. Do you have NQ here?
Mm-hmm.
Yep. You go to NQ, since it's open, it's been nothing but sellers, not above its New York. So how can I believe that ES is going to carry higher when NQ is showing nothing but bears? No. So I like to see them maybe both get an agreement, both get above their New York VWAP, or both below it. So I could see that there's some agreement between the two assets before I just jump in that direction.
Let's see if it'll take these 30s. You see it. It's knocking on it, right, everybody? You see it. Boom. Boom. Let's see here. But you can see these green volume balls, too. That's telling us there's buyers trying to defend it. There's bids stepping in there.
Yeah, the way that I use Bookmap, we're going to talk a little bit more about it in the next session. Very simple pattern recognition. If we have a decent stack of orders above or below price, like Austin's anticipating right here, I would see that as potentially being filled. As we get here, right, these are resting buy orders on the book. we have potential of one of two things. They hold as support. Those are aggressive buyers that step in, and we find some support there, start to move to the upside. If your thesis is long for the day, you really don't want to be waiting. That could be a solid aggressive entry spot, like Evan has been describing. We really don't have a strong open here. It's been nothing but sellers, so it is aggressive, right? But it could be a solid price if you are anticipating a move to the upside of 50, 100 points, and you want to start trying that, right? Maybe you don't go in heavy on the risk. I'm starting to move away from it right now, but that could be an aggressive spot.
It's also thinning out. See, everybody? So as we started to move away here, right there, look at how it's getting lighter. The red, yellow turns into blue. That means those orders that were there are now pulling off. Whether they are bids to be filled as far as a entry, or if they are take profits. It can be either. We don't know. Does that make sense? Questions about Bookmap right now? Yeah. Great question. I'm going to show you in the next session, but I have it resetting at 9:30. I was taught you reset the delta at 9:30 at market open every day, just to get rid of all the pre-market stuff that's way lower volume. You want to know from 9:30 when all that volume comes in, who's actually in control. So, Ev, could you zoom out on Bookmap for us just to 9:30 so we can see 9:30? So this is why I think you can look at them together. Here's 9:35. That's fine, Ev. Yeah, perfect. Right? Look at the direction delta has been moving, everybody. Right? So when we were looking at this block to either fill for sells or act as support, what's delta telling us it probably does? An acts as support. Exactly. Does everyone follow that, or you want me to say it again? I want to make sure everybody gets this because this is a real-time example, so it's important. Does everybody follow, or we want again? One more time. We were looking at this block right here at 56.30 to see if it is filled. It clearly is not. It is now being used as support to go probably grab these orders up here. So when you're looking at this block and there's no orders above you, these balls, that line, that's current price. When there's no orders here and you see this and you're like, okay, I think that might fill, look at the delta. With delta rising like that, that tells us that that probably doesn't want to fill on sellers because the buying volume is stronger than the selling volume. So it's probably, if you looked at the delta, you would say that probably acts as support. So you could then think, okay, now if I long the break of the New York VWAP, I got support down here at 30. So I'm long at 41 with a stop at 30. That would be the idea, and I'm trading up to 50. And it's easy numbers today with these 20-point ranges. It's really easy to look at like 10-point blocks. And then, like Zach said, look at the orders at 60, 62, 65, and 70. They are now hot, super hot, 250 contracts. That may pull us. Let's see how it reacts to 60-50 first. Here's 46. And everybody gets what I'm saying, prices, right? You're following me? I know some of you are a little new. We're looking at prices. Why? Because like Brian Shannon says, price pays, nothing else. Okay? Who's in a trade? Come on. Win? Nice. Nice. A little naked without it. Good. First W, we love it. Randy, you in a trade? Okay. I think we'll watch these 50s here and then maybe 62. 50s right at opening range high. Can we look at a daily chart, Ev? Just something to zoom out and look at here. You can erase all that. You can erase all drawings. So this was the Trump candle. We've now clawed our way out of this. I'm very cautious to be bullish here because we know this could easily be some type of lower high in this downtrend, right? How do you think that impacts the intraday bias? I want to talk about it for a minute here. Does anyone have any thoughts about like how to use the daily time frame as a day trader? Fair idea. Take us to the 1 minute, please. Fair idea. What else? That's why I like you. That's the right answer. The daily time frame doesn't really need to be used for day trading. This, when we look at the daily stuff, it's like speculative. Brian Shannon calls it cocktail talk. Oh, Anthony, you think the market's up. Scott, you think the market's down. Where are we going to go? Fed cuts rates, blah, blah, blah. No one really cares when we're day trading. It really doesn't matter. To that point, Ev, could you switch us from the ETH to the RTH? So here's another little tip, everybody. I'm going to switch us to regular trading hours, bottom right here. Now, we can see the range much more clearly, right? Let's play this back. Who here has seen Futures 101 and Futures 2.0? Oh, beautiful. So for a mid-range trade, let's say we bought this big candle here. Ev, you want to mark that for me? Let's say we buy there. Where would the stop go on that trade? Does anyone know? Bottom of range. Are we out of that trade or in that trade? We're still in it. Yep. So I just want you to... Oh, my God. Evan is freaking out, dude. Oh, my God. You okay? I didn't put on my handicap settings for you. I'm sorry. So this is still a valid long. When you read the market, right, for the day, this is the valid long. Could this be considered an entry? It's at 56.40, especially as we start to see us move away on Bookmap, especially as we start to see Delta rising. Absolutely. Huh? Yeah. Absolutely. So longs are still in control here. Longs are still in play. Big takes of the VWAP, like this half of the size of the range, when a VWAP is taken with a strong candle like that, it tells me a lot. Absolutely. Yeah. Even here to this point, now we're going out of the range. We just broke the top of the opening range. Now I'm looking at this thinking, I'm not a great trader out the top of the range. So now I'm like, it needs to give me a pullback and a turn. Yep. Yep. So now I'm looking for the same thing. Some guys like you, Thomas, might do this where they'll put an anchor and they'll trade this as it goes higher. I'm looking for this VWAP to get up. I need this New York VWAP higher, and I need this to come out and retest it. What I'll look for is something like this, where it comes through or stops on it and turns. As soon as this turns off the next New York VWAP, I'm going to probably be long. One thing more I'll say, and this is going to sound contradictory, but that's fine, because life is sometimes contradictory. On the daily time frame, I just said how we'll run into key VWAPs and we might move lower, right? Does that mean we couldn't have 2 or 3 more days higher to lull everyone to sleep and make them think the bear market is over? Absolutely. Right? Where are some of the biggest bull rallies happening? Bear markets. So when we're moving higher, chugging off of the bottom, maybe tariffs are being paused, you don't think we're one headline away from another 2% down day? Come on. We're right here. So you can't get lulled to sleep. So to this bigger point of daily time frame or not, coming out of this conversation, who's going to use the daily time frame a little bit less than maybe they were for their day trading? A little less? Who's going to maybe get away from even the 4-hour and the 1-hour a little bit? Which is foreign to some of you that used to trade foreign exchange because that's all we used to look at. You know what I'm saying? Now, we're dirty day traders, right, Nick? Dirty scalpers. That's how we make our money. Okay. Can you pull Bookmap back up for me, buddy? You guys got anything? Don't let me just talk. Oh, that's hot. Look at that. Look at above it. And look, you can see where they came on. It is so hot there. You know we're going to 65.
Yeah, I'm still looking at this thing long. I think a break above like this, retest of VWAP, even without that nice sweep down below prior day high that I was looking at in the morning, would be really solid. One thing that's keeping me patient. Now, again, getting close to 10 a.m., we have red folder news. It's not a massive one, but we have 10 a.m.
Have it pull us back.
Yep. ISM manufacturing PMI. So that's coming up.
Start wishing for bearish news.
Yeah, 6.5 minutes. Like maybe then, we could blast off right from there, right? That could come in bullish, and that's the move. We pull back a little bit at the open, and we take right off. I don't love to trade directly into a red folder news event, especially coming off the 1-minute chart. I'd love to see a pullback down, sellers fail, and then buyers start to take it higher. I'd be in long pretty quickly after that news. On another day where we don't have this coming up in 5 minutes, I'm likely long after a retest and some pause, some hold around VWAP. Again, just anticipating the upside on Bookmap, looking good. Was watching that, coming into the open. I believe we could head towards the 5700s.
Here we come. Let's come back a little bit now. How long till news? 7 minutes? 6 minutes? Okay. Good thought, Zach. Can we get a stretch on Bookmap, Ev? Can you stretch us out a little bit, just see if there's anything else above or below? Oh, there she is. 5,700. Who called? You said that earlier. Yep, there it is. 447 contracts. Yep. We're going to do a lot with Bookmap today, everybody. Today is really Bookmap heavy. So we're going to move actually out of the live trading at like 11 o'clock into some other Bookmap stuff. So it's good to be really focused on this. Also because the guys that are leading the session tomorrow are not going to do as much, right? Boys in the back, not as much. Cool. Questions? Thoughts? Come on. Yeah. Good question. Did everybody hear what he said, or you want me to repeat it? Could you hear what he said? Yeah, kind of. Doing something else? I'm looking at you, Lawrence. So Nick said, when you see a big chunk of orders, like that one up at 5,700, we're going to get into this in the next session too. When that comes on the book, you are wondering, are we going to go to it? Does it want to fill? Is it a wall? Spoofing is a real thing. Has anyone ever heard that term before? It's like a stock trading term, right? Back in the day, this guy Raj Ranahaman, I can't say his last name, this Indian dude got busted and went to jail for insider trading and spoofing. What he basically was doing, what a lot of these people do, is they'll throw orders into the live market to fool all of us to seeing it, and then they'll pull those orders away, and then they never get filled. So you have to watch to see if the orders are going to get spoofed or not. Ev, can you do me a favor and zoom in at 5,700 and show the COB? While we're watching this pullback. It's like stretch it up and then zoom in at the top. Yep, now drag us up. Nope, scroll the other way. Yep, and now go all the way up to 5,700. Yep. So watch this. You'll see, yeah, it's perfect. Right here, let me use the clicker. You can stretch it even fatter, Ev. Right there. Okay, now go to 50. Yeah, right there. Okay, so you see how it's dark here? Dark here. There's no orders as much there, 8, 9, 66. This 447. Everyone that's looking at this, you see that white line? That tells me that of the 447 contracts currently sitting on this book, on this price at 98, basically 95% of it is one algorithm or one guy. What that little white line is doing is it's giving us a signal as to how much of this block is controlled by one entity. What would that potentially lead to, Anthony? If he decides or that algo decides to pull that off, that block disappears and it goes dark. We don't even see it anymore. So Bookmap's super helpful, like you were saying too. I know that you use it a little different, Nick. Bookmap's super helpful so I can say, okay, that number 5698, that could be a spoof. I can't really trade to it because it could get pulled. And if it gets pulled, then where am I trading to? I could be going the wrong way. So I'm cautious to know if it's a wall or not based on this little white line. Literally, Nick. Yeah. Really? You've been a part of that? I won't tell on you. No, I know. It's real. 100%. Because you can fool people. Yeah. But it's very hard in futures to bust people. No, I wasn't spoofing. My algo should have filled. But then this thing happened, and that's why the algo pulled it off. That's what you can say for the spoofing and get out of it. So they don't even go after it. When I interviewed, who watched my interview with Scott Pulcini? Did anybody see that one with the Bookmap Wizard? It's not that, right, see, not that popular. Everybody should watch that episode. Nobody does Bookmap like Scott, right, Nick? Nobody. And Scott said to me in the episode, he goes, this tool is like the CME giving us, as retail traders, a bone. Give us something. This allows us to see in a centralized market what's on the book. Now, there's a whole nother layer to this that we're not going to go into, which is icebergs, bigger orders being hidden. Nick's the expert. Talk to Nick in the Titleist hat if you want to talk about that. Oh, yeah, see, this is why we didn't just buy it on the VWAP. But to your point, Anthony, it happens. So, Nick, I'll avoid those spoofed levels.
Got about a minute and a half to Red Folder News. Just going to throw that out
Ev,
there.
you can reset the book. Thanks, Zach. Yeah, so another great point here. We would never just buy the VWAP retest, right? If you're listening really actively this morning, I said we would buy the turn or the break back through. Did this turn on the VWAP? Come on, did it turn on the VWAP? No, it cut right through. So let's see what we do on the news. Now look at how dark this is above us here. So it's telling me 35 and then 30. Next. 60 seconds until the news here. That's a strong breakthrough VWAP. So what's the size of the opening range today? 30 points, 20 points? Small. So to make a comment about position sizing, for some of you that are like, how do I know what size to trade? Bigger opening range, smaller size. Smaller opening range, less volatility. You normally can throw more contracts and put a little more size on. Follow me on that? Okay. Let's watch and see here. 30 seconds. You'll see it shake. You see it ate those 35s, right? What color volume ball did it take them with? Red. So where's this probably going? 30. Stretch us lower for us, Ev. And click that, click this thing, please. Press the play button. It'll keep it moving automatically. Evan doesn't like Bookmap anymore.
I
There
just
it
want
goes.
to point out
Look at
that
that.
his computer settings are inverse to mine. His mouse pad is weird.
Now look at the Bookmap. Look at that. Look at that spread. Look at that. Now it's caught up. There it is. Now, while we watch this shake, do you see how valuable Bookmap can be? Why do you think it goes dark, everybody? This is really important. Why do you think it's dark? Why is Bookmap dark when news comes in? Because they don't want to get caught on the wrong side of news. A lot of these algos are programmed to remove all orders before the news comes in so they don't get stuck. If you look at the difference, Ev, can you zoom in right here at 10 o'clock? Look at the spread between the red and green lines. And zoom in on the mouse with 2 fingers. Yeah, the other way. Look at that spread. You can see the line. The red is the bid, the red is the ask, the greens are the bid. Huge spread for a second there. So algos pull their orders off the book. So if you're randomly trading with Bookmap open and the book goes dark, chances are you didn't read the news that day, or news is about to come that you didn't know about. So when the Bookmap goes dark, we get a little cautious. We go, pay attention. Something's going to shake. It's going to shake. Now, if we come back through VWAP at 44, who's taking along with a stop at 32 at the bottom of the news shaking? Nobody? Good. Can you stretch us a little, Ev, now? Just so we can see if there's any orders above or below. Still above. Okay. Interesting, interesting. So someone asks, Austin, if there's orders above but we're moving lower, what do you do? Right? That's a fair question. Orders above, what do? You zoom in. Get rid of those 62, get rid of the 5,700. It's too hot. It's distracting me from what's actually going on in this 10-point, 20-point range. Follow me on that? So, Ev, can you slide us up now along that axis so the 62 is gone? Keep going, keep going. Right there, stop. Now I can see what's going on right here. You saw that? So you got to learn how to use the tool. So here, 50, maybe? 5650 stands out to me. This kind of looks like algos almost, just not too heavy. 50, 47, 50. Anybody in a trade? Anybody? Yeah, he's moving. Isaac, I saw Tanner. What are you doing in the back? I saw you dapping up. So when I say who's in a trade, the guy that's going to lead the session can't admit he's in the trade. You know I'm going to roast you now. You should have gotten up and been like, I'm in the trade. What did you do? Tell us what you did. Right before the news. 2 minutes before the news. Yeah. Can you pull up YM for us, Ev, so we can see, because I know, NQ, which has been more bearish, so it's good that you're short that. Yeah, so like that, you had more time to get short here before the news hits. Way less shaking here, too, on NQ.
Another thing I just want to point out this is NQ. What has the New York VWAP been doing since the open? It's just waving up and down, hasn't really given us any clear indication of who wants to be in control and stay in control today. It's the same thing as we're still inside the opening range. It's only been 30 minutes into the day, but if it's 45 minutes, an hour into the day, and we're in this range, I've really been complaining about it on stream lately of I don't want to touch it because we shouldn't be in this range if we're going to be nice and trending today.
Yeah, this is it's choppy overall, but I'm gonna call it that I'm getting long. I'm long from 56 to 39 and 3/4. Stop below session lows 56.25 and 3/4. It's about half risk for me, so I'm a little bit dynamic with risk management. If I'm gonna take something somewhat early, like Evan just said, right at VWAP, where we're kind of just chopping, right? We don't have a ton of direction, but I have a level tested right at 56. Yeah, hang on one second, guys. I'll plug this in so you can take a look.
Okay. Here it is. I said a few minutes ago, right? Who's going to be long at 44 if we come back through? Is anyone taking this long here? Zach is it.
Ground, hang on 1 second, guys.
Yeah.
Let's see. No. Yeah, hang out. Well, while we're looking at my background, my wallpaper here, thought process. I was watching that same level, prior day high, to be tested. We swept below it super aggressively on the news, and we had buyers step right back in. We are pushing back up through VWAP. We have a whole bunch of orders up above. There's still some on Bookmap down at the 5620s. That could be a problem for me. Again, low risk on this one, nothing crazy for me. I'm okay, upwards of $1,000 per trade, $1,500 per trade.
I like it.
Accounts. So yeah, I'm running this towards overnight high, potentially higher. These are in the top 1 futures, 150K accounts, so there's a consistency rule. It's not something that I'm going to run, all day to the moon, but I like it. I like it long. Sue me.
On Bookmap, 5650's hot, 5660, and 62.
And if you guys have, sorry, Austin, if you guys have questions on the trade, the thought process, the risk structure, the trade management, sorry to cut you off, Austin. Trade management, I usually don't run a fixed take profit. I run a fixed risk, obviously, every time. I'm a little bit dynamic. I want to watch Bookmap. I want to watch key levels, but I don't want to cut myself off if the trade starts to pop really quickly. So as it is right now. So we're going to see if we can run this next level. I'm looking at the
65. 65.
Yeah.
Can I get a 65?
Yeah, I'm looking at the the 5655s first, and then through right towards 65s. That would be pretty sweet.
Yep.
Yep.
Who else is long? Yell.
I do. So on the, I'll kind of stand as I do this, right? On the right-hand side, I've got visible range volume profile. It's actually not resetting. Yeah, guys, I'm going to throw a fixed take profit in here since I'm going to talk. I'm going to look at the 60s. I'm going to go right below the 60s for this one. We've got some liquidity on the book there. So to talk about volume profile, that's a visible range volume profile. I'll show you guys settings in a minute. Horizontally displayed volume, pretty simple the way that I utilize it. I'll use a couple of fixed range volume profiles from the prior day. I'll use regular trading session hours, and I'll take value area high, volume point of control, value area low. I'll use a weekly fixed range volume profile. I'll take the same levels. And then past that, I have overnight high, overnight low, prior day high, prior day low. Bunch of objective levels. You guys can find them the exact same way that I do. Simple stuff. The volume profile sitting on the right-hand side, again, visible range. So it's dynamic. It moves as you scroll in and out. I like to use that as the session's forming. This is a 15-minute and a 1-minute side-by-side, just to give me a display of where a lot of transactions are taking place. I find it very powerful. Haven't been using it that long. I've been in the futures market for like a year. Before that, it was just Forex and crypto and stocks. Not a whole lot of reliable volume trading Forex and CFDs. But here in the futures market, we have that, and I find it presents really, really solid levels to trade to and from. As I'm watching this trade pull back, just to kind of talk it through, I'm not going to go stop loss to break even, not going to manage risk on this. I want to see us continue to the upside. The spot where my trade would be invalidated would be past that low, right to the downside. Can we sweep that and then just continue higher? Absolutely. And if we're going to see a big move out of the day, maybe that's what we get. But that's not my trade thesis on this one. It's a sweep of that level on news, buyers step back in, take us higher through VWAP and continue. Do we get that? We don't know. We're going to watch it play out live with you guys.
Would you cut it early?
For me, on this one, I won't. It's not playing out as I would like to see it, blasting to the upside, but I'm going to trust my stop on this one. Let it run. Again, half risk for me. I'm okay taking probably 2 to 3 trades around this $500 level, just personal. So that kind of gives you a reference to how much risk I'm putting on, right? I want to try this one early, wait to see what happens. If we sweep this low, stop me out for $492 across 3 accounts, I might look to take a long again. I would just watch to see if we start to sell off first. But again, I'm going to hold on to this one, see if we can't pop up towards that 65. Again, fixed take profit because I got up to talk to you guys. Usually it's not something I do, but in case we blast it higher, don't want to be out.
Are you ready for some fun? Evan's short.
I am short.
There we go. There we go.
Now we get it going. Who else is in the trade? Somebody admit it. Anybody else try to short it yet? The black shirt boys want to short it. Pass the HDMI to Evan.
And are you on ES or NQ? So he's long on ES. I am shorting the NASDAQ. I think I mean,
dude, I'm about to buy Bitcoin. I don't know. Hedge. We're sharing dongles up here, everybody. Hold on.
Randy, I don't. And I mean, you guys, we'll talk a little bit more about each of our individual trading. I keep my stuff pretty simple. A chart might seem a little bit complex to you guys. It's very simple. Basic, objective levels. There's 3 things on the chart: VWAP, volume profile, and volume down on the bottom. I'm mainly focusing on price action and market structure, volume, where I'm getting my levels from, and then Bookmap. That's kind of my combination. Discretionary, very simple discretionary, price action, market structure, volume, and order flow.
Yeah, so like I said, I'm short on NQ, and with the lower highs today, I just cannot fade that, even though I do think ES did look nice and bullish, and NQ might as well later on. But right now, I see a retest to this New York VWAP after the first break of open range low. So I have to be in this. If it's going to sink lower, I need to be in it. And if it comes back up to the top of the range, I'll probably switch to a long bias in the next 30 minutes or so. But just riding structure underneath New York. This is on NQ again, where if you go to ES, a little bit more range bound, which is why I just didn't love either direction, because you can see can't get outside of this range. So I don't like either direction on that asset. But again, so I'm following NQ, which just looks a little cleaner, but could still see an ES.
I'm short
either
too.
Way.
I'm short with them.
Listen, I like it. I like the case here. A decision's going to be made, right? At least to go sweep highs and start to push higher, or to come back down through lows. So it's a decision-making point. We've chopped here quite a bit. I took it long before these guys jumping short, coming through VWAP. We didn't get the continuation. For me and my data, I show cutting trades early, right at stop loss, aggressively managing. At least for this style, just doesn't pay me. So I'd rather just take the stop. But I can absolutely see us coming down through this low, going to check out the 20s, the 15s. There's not a ton on the book down there. About 94 orders at 20. That could want to get filled. Again, we just basic price action market structure. Before we go higher, oftentimes we go lower. Or we might not be going higher, right? We can come back down into that big pump and kind of just chop around up here as we've been doing this week. So we'll have to see.
So with this trade, I'm really not going to manage it until we get a flush lower, then I would get out of it for a win. But even if it takes on drawdown, I would just look to see how it reacts around that mid-range New York VWAP. So with this, it's just waiting.
Who else was in? Longs. Shorts and longs. Good. Fun range day. Who's flat? Just watching and learning. Okay. One thing that's really important to emphasize, in trading, we can have longs, shorts, and everyone can make money. Exactly. So it's all about trade management. It is not about your entry. You can be late, and if you've got good trade management, you're going to be okay. Can you watch my trade, brother? Because I don't know where I'm at. I know I'm short ES, not this.
Oh, are you?
Yeah. Don't let me make more than 1,000 because I got the consistency rule.
You're up 90. You're all right.
Oh, okay, good. So for those of you, who here has a top 1 futures account? That's it. All right, good deal. Right now, if you want a top 1 futures account, they're running a promo. It's 55% off, and you get the instant payout add-on for free. Okay? So if you need an account, this is the platform you're seeing us trade on. No, it's not Top Step's platform, but I maybe heard from a little birdie that the guy that runs Top Step may also run this website. So take that for what it is when it comes to data and information. Okay, how are we feeling? Can we see ES?
So looking at this, still really choppy, really not getting continuation one way or the other.
Nope.
Would have liked to see this push and continue as we start to come through VWAP. I'm sitting right around break even on this. I see some on the book, about 125 at pretty close down below price, the 32s. If we start to come back through VWAP and get above these 50s, 55s, I like my trade. We continue down lower, we crack through the 30s. I really like your guys short for a sweep below session lows, potentially a little bit of a push lower here. So again, decision-making point overall, pretty choppy. Like I talked about right before the open, something to be cautious of before big red folder news days. Oftentimes, we just get that VWAP chop. They can
100%.
it can be really difficult to trade. And as a guy who trades with some direction, that can be tough, right? I'm not trading directly off the bottom of this range or directly off the top, just completely fading the move, looking for a reversal. But again, I don't come into the day with bias and say, red folder news tomorrow, I'm not going to trade at all. Or no news Monday, right? I just feel you talk yourself out of way too many good trades and good trading opportunities. But I'm cautious. So maybe I take this first L, I go in for a second one, I take a second L, and I go, on another day, I'd probably keep trading, but I'm going to wrap it up here. Market's not agreeing with me.
Great
we are
point.
chopping. I'm going to wrap it up here and maybe just be a hair more cautious. That's kind of how I would let that influence my trading for the day.
Ev, before you go, I would just say Zach probably made the best point of the day so far right there. Also, on trades like this, where we know we're a little choppy, Christine and I talked about this last week, I think a big help to us as traders in a sideways market, does anyone know what I'm going to say? Wider stops, smaller positions. My stop on this trade is at high a day. So I can let this thing play around VWAP 4 times before it goes lower, and then I make money. Or if it takes high a day, why would I want to be short? Now, what Evan's going to talk about is the 15-minute, right? And then that'll tie into what I just said.
Yeah, so on the push down prior to that, we had a close below the daily view up, lining up for those shorts. That's on this flush on the right. But trying to take that 15-minute view up again. So if this 15-minute candle could hold bullish, I mean, I would not be surprised if this is a higher low for the day, for the session, looking back at the yesterday, all that good stuff. So it wouldn't be totally surprised if it comes higher now that you've seen it try to hold this 15-minute. But until it's out of this range, I wouldn't physically take the long, especially since I am in the short. How's that looking? Coming up to the middle of its range.
Yep.
So we'll see how that can respect its New York. You could see NQ still below it. So I still like the shorts as long as we're holding underneath here, as long as we're holding this New York VWAP on NQ on the 1 minute.
How we feeling, everybody? Questions? Has anyone submitted a question on the QR code yet? Okay. I'd rather you get up and yell, but if you want to do the QR code, it's there. I like the interaction better. Why? Yeah.
I don't want to cut you off. Listen, and because I stream live, right? I'm here with you guys. We're all watching me maybe take an L, maybe take a win. Here's what I think can help in that situation because I empathize with it, right? The market's going to do, here's what I subscribe to first. No wrong way to think about it, but here's what I subscribe to. Kind of the Mark Douglas philosophy, right? We don't know what's going to happen next in the market, and we don't need to make money. We don't know on this next trade if Trump's going to tweet something, there's going to be a tariff comment, and it's going to, I don't even want to say it, and it's going to rocket one side or the other, right? We can't know with 100-degree certainty what's going to happen next. And if you can kind of allow that to sit with you and recognize you're not responsible for that next trade. We can tell what's going to happen in the long term. Patterns repeat themselves. There's a lot of consistency in the long term. But on the short term, the markets are very random. And that's the interesting paradox that we're faced with as traders. Like, of course, I want to hop on here, right? It's my day to trade live with you guys. I want to take the win. If I put that pressure on myself, first off, it doesn't make sense based on what I just said. And I'm not going to be able to operate objectively, right? I'm going to want to cut my trade early for a quick win and just say I won, right? I made $300 or whatever it is at right now. But if you can really reflect on the market being very, very random in the short term, it can start to take some of that pressure away. And I think you either learn that by reading and reflecting and journaling, or you get punished so many dang times that you finally recognize that that's the game that we're playing here. It's a game of probabilities in the long term. On the short term, the same way that a casino doesn't know the outcome of the next spin of roulette or the game of blackjack, we don't know what's going to happen on this next trade. We don't need to make money. So sit with that. Recognize you're going to take L's, random distribution of wins and losses. You're going to take L's, you're going to take wins. We all want to win today, right? While we're hanging out, and we want to talk about it at the bar after. But if you put that pressure on yourself, you're not going to execute well. You're not going to follow your plan.
You all saw the email where I said if you win the trade, you're buying drinks. Why are you laughing? Oh, God, that's smart. We're getting Randy drunk then.
I know I'm yapping a little bit here, guys, but I'm just going to talk about trade management here. I'm still sitting long on this one. $300 of profit, right? I have an opportunity to cap it here near the highs of this range. That's not a terrible play on a day like today, because if we're just going to chop, I stand to be taken out of this trade to the downside. I can manage it by going stop loss to break even. I don't think I'm asking for a lot out of the market to come up towards those 60s. I'm not going to hold it to the 65s, which I think it can go and tag, but I'm going to go for this next level right here. where again, even if we're not really aggressively going to break out today, I think we can go and tag this, take everybody out that was getting short, maybe these guys, and then continue lower, So that's my play here. But again, just kind of talking through trade management, there's no, right or wrong way to do it. I'm exercising my discretion. This is how I do it consistently day in and day out to a degree. Is it going to work, again, to this comment today? Maybe not, right? But you apply some consistency in the market, you let the odds play out in your favor over a long enough time, and hopefully you make money, you take a payout.
Does anyone look at this and see a trade they missed so far today? Okay, cool. Yeah.
Yeah, so I don't use cumulative volume delta. I have it up on my chart as well. I have a very similar Bookmap layout, very simple. I don't use it as much as these guys and some other guys. Mine's at 10K right now and climbing. It does look strong. The way that I really utilize Bookmap is kind of how I'm discussing it. Very simple pattern recognition, just looking at levels, looking at areas of liquidity above and below price. Again, we don't know exactly, we know what those orders are, right? They're resting buy or sell orders above or below price. We don't know the intent. We don't know if they're going to get pulled off. We don't know how price is actually going to react when we get there. But my basic pattern recognition says if there's multiple large levels above price, and that's lining up because Bookmap is kind of third on the line from price action, market structure, and then key levels on that chart. If those levels are there on Bookmap, it's added confirmation to say, I think we're going to go fill them. What happens when we get there? Do we blast through? Somewhat out for debate. But if you watch, if you stare at the DOM long enough, and again, you can use just a traditional depth of market. You could use other tools outside of Bookmap. We love Bookmap here. I love Bookmap. But that's essentially how I'm utilizing it. So cumulative volume delta looks strong, right? It's making the case for the trade as well. Again, 65s, 295 on the book, kind of below all that algorithmic stuff is what I'm looking at. I can actually show you. I'm sorry, I can show you guys Bookmap. There we go. Here's my Bookmap screen. A little bit busier than Austin's. I just run it like almost completely raw, basic standard settings. But here's what I'm looking at to the upside here. Almost 300 on the book at 265. That has stayed there the entire time. Here's the big stack of orders up above that we've been eyeballing, that right around that 5,700 level. So again, that's making the case for me. Now, it's not terribly thin today. We've got quite a bit above and below, not a massive amount. But that's making the case that maybe we go and tag 65s before we come back down lower. That's the potential here.
What I could say, too, for the shorts, with the Bookmap showing the 65 so clearly, it's a really good place if you are short to have a stop loss. Because like Zach said, once you get to that level, you'll get new information. You know what I'm saying? So when there's really hot levels on the Bookmap, those could be good levels to put a stop at, too. You don't have to think, oh, I have to trade into this level every time I see it. You know what I'm saying? Looks like we're going to push for you here.
Yeah, so I'm gonna show you guys something on Bookmap that's like a reason for concern or potentially, maybe looking to take profit. So right here, as Austin's speaking, we got orders that are coming on the book. 60s, there are a bit there, but you can see right here, 1022, we have sellers starting to step in. Now, that can be fuel to the fire. We can go and continue to gobble up liquidity to the upside, or that can be somebody starting to get involved, institution, whatever. Again, I take the very dumb guy pattern recognition way, but if I start to see orders above price light up on the book, maybe get added to, that can act as resistance. It can be sellers stepping in, outweighing buyers, and start to send price lower. So that, to me, could be an area of caution to say, hey, you know what, if I'm going to snag profit on this, maybe right up into these levels that are right here. 65 is right there as well, but I'm okay grabbing some profit on this one and looking for the next trade. So we'll watch how this one plays out.
Yeah, so finally getting a new high day on the 1 minute at least here on ES. That's pretty much going to kill the short idea, which is good. Because then now that we're breaking out of this opening range, like I said, we're 50 minutes into the day. We're really getting like a new high a day as Zach gets out of his trade.
Yeah, I'm grabbing that one right here. I'm sorry, Evan. I'm going to show you guys why. Yeah, no, it's all good, guys. Listen, if you watch me trade long enough, you watch me take plenty of L's, like we talked about. I try not to get too excited when I take a win, too excited when I take a loss, because I just don't know what's going to happen next, right? You stay calm, you keep trading. So, again, I took it right here. I know I got a fixed take profit in there. I typically don't. This one to the upside looks good to me to 65, right? And if I really wanted to hang on to a trade today, 65 I think would be the level past overnight high that I'd be looking at. But as we start to come into orders right here, we see volume traded on another day. If you watch Bookmap long enough, we see a gnarly rejection here. We see orders start to stack up, we see volume fill, and we start to sell off pretty harshly. We don't just continue to the upside. So, I'm in a profitable trade. I'm past, right around that 1-to-1, whatever it is. I'm happy to grab that. I typically don't go for a huge R multiple. And again, discretionary with trade management, right? If my thesis is we're going to break and run to the upside, I'm going to hang on to that one, right? I'm going to go stop loss where it is, entries in the middle of the zone. I'm going to run that bad boy to the upside. I'd rather grab profit here and say, hey, you know what? If this does turn into a choppy day, I got in, got out, got paid. If it turns into a big runner, maybe I wait for some structure, wait for a pullback, look to, jump back into a follow-up trade. So any questions? Yes, go right ahead, brother. So I've gone back and forth a lot with trade management, right? And I think what a solid way to decide on how you should be managing your trades is to experiment on the front end, track the data really well, use TradeZella, use something to track the data, and take a look at what's working, as simple as this is, and do a little bit more of what's working, a little bit less of what's not. For me personally, full in, full out seems to work best. If I do scale, it's usually to add right around or just adjust the initial position size. And what I actually did on this one, I jumped in with 5. I quickly added. It was a little bit above the risk that I wanted on this trade, just considering where we were. And I backed it off just a hair to 7 micros. But it's a powerful move to go stop loss to break even, to scale out, to leave a runner. For me, it's just not my forte. It's just not what my data shows works really well. And, just building off that, like another example, going stop loss to break even on that trade specifically, I would have been stopped right here, right? I would have been stopped right here. My stop loss was down here. I would be out for break even. And I'd probably be pretty pissed watching the market move in my direction to a take profit. For me, my data shows that I shouldn't go stop loss to break even. More often than not, trades that come back to my entry based on my specific style, which is going to be different for everybody, continue in my direction. They don't continue all the way to stop loss. Will there be plenty out of a 100 trade sample size? Absolutely. I'll get my stop run where I could have stopped at break even. But in the long run, what's best for my P&L? Primarily not going stop loss to break even arbitrarily, that type of a deal. And again, that just comes from looking at basic data, just reviewing my data. I mean, I live trade, so I can literally go back and watch myself, do what I do, make mistakes. But track your data and just do a little bit more of what's working, a little bit less of what's not. And I would experiment with different trade management styles. I would experiment with adjusting risk, with maybe potentially adding to winners. I don't know that I experiment with adding to losers, averaging down. But scaling out, leaving runners, going stop loss to break even and leaving, a partial, absolutely, right? And we might see that pay really nicely for me on this trade today. But just let your data tell that story. Data doesn't lie, right? Everybody else can lie. Data's not going to lie to you. I do it stupidly simple, Thomas. Very, very simple. Literally, it'll just be either a screenshot of a position tool. Well, I will say I trade live all damn day, so I have a nice recording of all of my sessions, which can be pretty painful to watch when you make a mistake, but helpful, right? Because you watch your face on the thing. Like I'm like, oh God, I know I'm making the wrong move right here. But for me, it's as simple as screenshot with a position tool and a couple notes. Why I got into the trade, why I did what I did, position sizing, and then the result, letting the market play out after. You can just look at executions as well. You can throw executions on the chart. But again, explain what you did, how you were feeling, and why. I know Austin's got a comment. Building off that, I like to journal, just kind of that hippie way of before how I'm feeling, after a good session, after a bad session. But the data will show you as you're tracking it, if you're exiting, right, at a certain point and it continues to run in your direction like this one did, and that happens on, 8 out of 10 trades and the other 2, pull back, I should probably be holding trades longer, right? It's very simple that way.
So the manufacturing PMI that came out on Financial Juice this morning, actual is 48.7, forecast was 47.9. So if you read the following headline, if you pull up Financial Juice, you'll see what I'm looking at. It says U.S. ISM factory production gauge drops to the lowest since May of 2020. So why is the market moving up on that news? Come on, people. Thank you. Dude, brains over there. What would the Fed do if we get bad economic numbers? cut rates. And what will rate cuts do to the economy and the stock market? Rip it. So that's why sometimes on negative news, the market goes up, because the market has levels of thinking. The market can perceive information and not just go, bad number, go down. You know what I'm saying? It don't work like that. Bad number, well, what's going to happen? What's the monetary policy people going to step in and do or say? See what I'm saying? That just came out the other day. Yeah. So what is that going to do for the market? It's feeding a bullish move. Yep. And that's why you have to follow the news, because then one, like we said earlier today, one bearish headline sends the market lower and you go, what happened? I didn't see that coming. I thought we were getting cuts. Great trade, Zach. Really good trade. Who else made money on the longs? Hands up. Fuck yeah.
There we go.
Who made money on the shorts? Who lost money on the shorts? Good. Small losses are good.
Yeah, this still looks good long, right? Just, again, I know we're doing a lot of Bookmap today. We got the session coming up. I don't use this primarily. I don't want to, deceive you guys here. This still looks good long. We got some stuff to talk about. We don't always. Sometimes Bookmap's just a, nothing. 65s looks good to the upside. And again, if we are going to push, there's liquidity to the upside to the 5700s. Do we go and fill these? It's like any other tool. Market can do whatever it wants to do. It's not consistent, with 100% certainty or even close to it day in and day out. But it does look good to the upside. We're testing, let me get this out of the way. We're testing this overnight high level. Again, one of the couple objective levels that I use. If we start to break and close above this with some strength, I could see the movement. And maybe this is the sweep, back down to prior day high, buyer stepping in. I'm still cautious that we could chop today. I'm still cautious that we could turn and really have that break of, initial balance high, initial balance low before that NFP. It's just so often what we see. And so for those reasons, I would be cautious holding long, but, buyer's still showing we want to take this thing higher up until right now when I'm speaking.
I'll take the dongle for a second. I just want to show the book map here. 65 just peeled off the book for me.
Again, as he's getting set up, this is real-time liquidity. Like he was talking about, anything can happen, and it's why you got to be cautious as you're using it.
Come on, baby, come back. Come on. I'm trying to show the book map. There we go. Cool. So if you take a look, right there where my cursor is, you see that? See how it goes from bright red? Interesting. Got it? Okay. Right there. You see how it goes from red to yellow? Yes? Red to yellow? Yes? I know it's subtle. Right here. 1031. Yeah? That's thinning of those orders at 56.65. See? Bright red to orange and blue and white. It's thinning. Those orders that were there are now coming off. Something's changing, like Zach said. Does that mean that it wants to not go there? Maybe. Does that mean that maybe there was an algo, like we showed earlier, that was holding orders there and it's now pulled those orders off? I think so. But I think the big tell today, so far this morning, we're going to talk about Delta in a second too, is that CVD. If we zoom out all the way to 930, there's 945. What's the Delta direction since market open, basically? Up. So shorts were tougher because you're fighting the volume. You're fighting the direction of who's in control, buyers or sellers. Questions about the Delta? Okay. Do we need a break, friends? We okay? At any time, just get up and go. No one will be offended. Get a coffee, soda. Bathrooms are close. But let's stay locked in here and see how we go. When you see Delta get this high, 9,000, this early in the day, by 10:30, Zach, what do you feel that would tell you? I know you don't use it a lot, but does that give you an instinct of like, it's going to be tough to sell this thing today?
Yeah. Again, a couple of guys asked about it. I've been watching it more, right? I try to make real small adaptations as I add to my trading. I've been watching it more. I hear a lot of guys talk about it. As it's continuing to grow and price is rising, it's telling you that buyers are outweighing sellers, right? In volume, they are taking this thing higher on volume. It becomes very difficult to start to sell it. If we came up to that high and we really started to see CVD drop off pretty aggressively and then, now really come lower, that could make the case for a short off of this, but I would be really cautious. I'd really be cautious short on this unless you're that reversal trader, right? If you're trading from the extremes back to VWAP, back and forth, and that's your play every day, you got a beautiful way to structure risk, nice cheap trades that you could take. But as far as directionally, first, I don't think we have it yet, although we are trying the highs. But yeah, that CVD is staying strong, really strong, even as we're pulling
Even
back.
right now. Yeah, I was just going to say 8,700. Great question. I don't know that answer. But I know that number goes negative and it turns red when sellers are taking control. When there's... Exactly. I was taught, maybe Nick behind you has different input on this. I was taught 2,500, positive or negative, is where we start to find trend. When you're 3,000, 4,000, green or red, you're starting to get an idea of where you're going to go. Nick, do you have a different opinion on that? 10,000. That's cool. Yeah. A higher time frame, right.
I just want to say real quick on the short we took, or some of us took earlier, I'd say like the silver lining about taking these trades in the range during the opening range is normally there's plenty of time left in the day, but even just the more information that we get, I try a feeler position in the morning. If we lose, there's still plenty of time to just receive more information. That's all that pullback and the new high a day really is, of saying, okay, buyers took us for a new high a day. At the time of my trade, we were still stuck in that range. My best trades are now going to come outside of it. So now it's really just, okay, I have more information to have almost a better trade, right? I took a trade mid-range. It's not the worst trade, but we took an L on that. But now I just feel more comfortable taking a single direction. Okay, buyers took for a new high a day. This probably wants to go higher now. Where in the beginning on this short on NQ, I'm kind of not hoping, but I'm predicting where we're going to end up. Rather than seeing where we want to go, and I'll just react and try to find that next leg of it, right? If you see NQ here makes the new high, well, then let me look for the next high after a small pullback, and that'll be this play right here. Anyone take a long in a couple last couple minutes here on ES or NQ? Since Zach got out of his.
Yeah, again, if we're going to break, guys, we're coming right up to that 65. We just swept highs again. We're putting highs this session in. If we're going to break and start to move now, you've got a way to get in before that starts to happen. Again, you would now be looking for an extension, a nice bullish day to the upside, maybe heading towards that 5,700. So, you are really looking to trade this directionally, not from maybe the middle of consolidation to the extreme the way I did with a stop all the way below session. But this is strong. Buyers are stepping in. We didn't even retest VWAP on that pullback. We're cracking above overnight high. But I'll let Tanner take this one.
Go to the 3 minute. Yo, can you guys hear me? Okay, cool. Way louder. Okay, so I'm going to give you a little bit of like how I like to look at trading. I'm big on levels, and I look at like hierarchies of stuff. So I know I talk about VWAP a lot, but I actually look at levels first. Levels is like my first thing, and then VWAP. Everything's reference points, right? Like we want to look at hierarchy of like what makes sense to our system. In my system, I look at levels first, then use VWAP as a reference. So in the opening range initially, there's not enough clarity. And one thing I like to tell everyone is clarity of price comes with time. Meaning like the more patient you are, it kind of gets clear, but everyone wants to be gunslingers off the open. And I'm also a victim of this, so I'm not perfect. But what I caught this morning, I hit a max win on one of my top 1 accounts, and I had a simple magic line on the chart. And that level was 19,900. And with levels, they're not perfect, meaning like you're going to get sweeps below. They're never just going to like touch instantly and just like perfectly bounce. But when you see reactions off the level, that is how I like to look at price. And one of my favorite analogies is the concept of risk. And the analogy is, in trading, we're going to fall. You're going to take, you're going to take losses. You're going to get hurt. So when you fall, wouldn't you rather fall off the sidewalk and scrape your knee if you're wrong, versus fall out of the skyscraper window? And when I say that, I mean structure, right? Like trading with structure. Breakout trades, I hate to break it to you, they don't work that well on the index. Like NQ, ES, all these indices are super efficient markets, meaning the breakouts, the breakdowns, they will work here and there, but you are more than likely gonna get stuffed. That's why liquidity works. That's why we see sweeps, right, all the time. Little sweep, boom, wrecked. Sweep, boom, wrecked. And that'll happen over and over and over and over. So looking at the reactions down here, I personally have a lower hit rate because I will attempt this a few times and I'll get scratched, I'll get scratched, I'll get scratched. But when I'm right, I'll make 3R, 4R on the trade. And so it will make up for those haircuts. So that's kind of what I was looking at this morning. I did attempt this initially. So I caught the short through VWAP, and then here I tried it a couple times. I got stopped, and then finally on this one, caught the long, put in my stop here, and just basically wrote it back to range highs. Does that make sense? So sidewalk, skyscraper. That's like the biggest takeaway I can give you guys from my trade today. Yes. Good question. So I generally trade MNQ. Sometimes I will trade NQ. It just depends. But what I do love about that whole like sidewalk skyscraper analogy is if I'm long here on like a reclaim, you know, maybe even before the bar closes, I can have a 15-point stop, right? 20-point stop. I'm risking, let's say, one NQ contract, $400, 20 points. So I can do that, but if I make 3R on the trade, I make 1,200. So position size, I mean, it varies for everyone. It depends what you're comfortable with, what you like. I don't really like to go more than one full-size NQ or 10 micros on a 150K straight funded account because, again, it's just like it's a numbers game at the end of the day. Like, I have gone aggressive before, especially trading Asia. You can like 15 full-size NQ. Yeah, you guys saw that reel. But yeah, that's like also the number one killer in the prop game. Like the more you try to trade with size, be really aggressive. I've had some students that are like, oh yeah, you know, I get long like 5 NQs off this level. I have like a 6-point stop. I'm like, a 6-point stop? Like that's gonna be in the blink of an eye. It's like, so give it, you know, he said it earlier, like give the trade a little bit of room to breathe. But at the same time, if I'm long here with a really tight stop, I don't mind taking haircut, and then be like, okay, once I'm right though, I'm gonna make 3 to 4R. So that's my trade.
Yeah, so as we look at NQ here, this is on the 3-minute, which I don't look at, but 1 minute, how's that looking here? Like we said, we got the new high day giving us new information. Okay, buyers were able to take that control. And I said it earlier, I guess we can go against my own trade. We didn't get outside this opening range. That's where my best trades are gonna come, especially when we open up the day choppy, then you really gotta get outside this range to show me there's some trend setting in. Well, it wasn't to the downside, it was to the upside. So there's the break for a new high day saying buyers can take control out of this range. And then we just want to not just chase it right then and there, but then you want to lean into that structure and say, okay, there's our higher high. If I can get a higher low, I'd like to continue this trend back higher. Ideally, we would have came a little bit deeper, but I know many people will trade it off this opening range high level. And I mean, at this time, yeah, initial balance is probably also around here, which we'll talk about later on in the days. But anyone's still long, I think it's just continuing the close back above that 15-minute, like we were saying, right? Would not be surprised heading into the open. Yes, easy to zoom in since the 9:30, but I think we just zoom out on the 15-minute. It's still just a higher low from yesterday and even just overnight, right? Because it's a new low a day from all this pre-market noise. But I don't even take that into consideration. It's just zooming out into the big picture from yesterday into today. Sellers have not taken control. It's just been a small little pullback, and now the buyers are back in to continue what they did all yesterday afternoon. So nice longs today, probably 5,700. We can mark that on our charts way up there. See if we get there the next 2 hours.
Yeah. If you guys have any questions, man, feel free to ask. Hands up is cool. But building off of Tanner's, comments there, and somebody asked about trade management, how do you manage risk? I think it's a really good point, right? We are talking about, technical analysis here. We're looking for entries. We're looking for direction. But oftentimes, risk management, trade frequency is kind of second to all that. And I think you really need to pre-plan it. And what Tanner did great this morning is exactly what he described. He structured his risk low enough where he was able to run tight stops, take multiple losses, keep himself cool and collected, and then finally catch the win that he was aiming for. Does that happen every day? No. But if you come in hot and heavy on trade number 1, take the loss, and then trade number 2, take the L and DLL, you watch the trade eventually play out in your favor. So think about how many trades, just for trade management, risk management, how many trades do you want to allow yourself per day, right? What is your style? Are you going to be waiting for the 15-minute chart to set up and take one trade? Put risk on, right? Your DLLs might be that one day, that one trade. Are you going to be like Tanner, structure your trades in a way where you're able to take multiple losses and then finally get the move that you're looking for while controlling risk to the downside and taking these small haircuts? So really solid trade management, solid execution. Lawrence. Mm-hmm. It's a great question. I'll just go after this one for sure. I'd agree with you on the front end. I think it was somewhat of a leading question, which is a solid leading question and a good thing to talk about. We do have mental capital, right? We are only able to make so many good trading decisions per day, especially as a beginner. So I do think it makes sense to temper that style as a beginner and say, I might not be able to handle taking 1, 2, 3 losses like Tanner did today before I catch that winner. I just won't be able to execute well. I won't be able to actually manage the trade when the winner finally comes. What often happens, what I've seen guys that I've worked with, they can't hold that winner. They finally get back to break even, they close out. How many times? Everybody's done that before, I'm sure. Or they can't realize the full profit. So I think it's a good idea. How do you measure that? Track your data, and I think if you watch your trading performance deteriorate throughout the day, it's certainly a leading indicator to say, I got to back off. I'm going to be a 1-2 trade a day guy until I start to grab some consistency here. But I think starting with 1 trade a session could be a good idea. I like 2 because it doesn't put as much pressure on that first one for like a complete beginner. But I do agree with you. I'd be cautious about allowing yourself way too much trade frequency. Most guys trade too big and too frequently. That's almost everybody that I see is trading too large, that's inconsistent, and too frequently. And you have to deal with that deterioration of that psychology, that capacity to make good trading decisions. So great question. Track your data. If you're watching yourself fall off, you're giving back profit into the day. And again, this is just the simple doing a little bit more of what's working, a little bit less of what's not. If you're watching that, you got to make the conscious decision. Don't have an ego, be real with yourself and say, I can't keep trading. I get 2 trades, that third one's always an L. The percent of that last trade after 2 or 3 or 4 drops off consistently. Stop doing that. Your data is showing you what to do and what not to do. You're not here to trade and have fun. We're here to make money, right? That's the deal. So great question.
To follow up on that. So trading is, Austin said this in like one of his pods. I forget who it was. Someone on your pod said this, but like trading is all about the concept of self-regulation, meaning like you're going to go through ebbs and flows of emotions. And this really stuck with me too. When I go to like trading conferences all the time, and I went to one last year, and Lance Brightstein, I'm sure a lot of you guys know them, he's great, one of the greatest traders. Lance, I asked him, I was like, hey, as a 15-year plus trader, you've been trading for 15 years, I was like, how do you handle losses now on the day-to-day? Do you still feel them? Like, does that pain ever go away, right? It's like, especially like, when you screw up, you have a day where you're just like, damn, I hit max loss, or I had like a really bad red day. Like, I'm sure it's happened to all of you. The rest of your day is like a heavy cloud above, and it takes like a minute to get out of that. And so I was like, does that ever go away? And he's like, honestly, it never fully goes away. You just learn how to turn the volume down on it. But it just takes so much practice and time. So like, to back on your question, I think like you can do things like recording yourself, like recording myself has helped a lot. Me and you kind of streaming, hopping on streams with people, talking it out. Because if you're sitting there just like by yourself, like a little junkie, in the middle of your floor, looking up at the sky, you're like, I just took 70 trades, what's going on? like the concept of self-regulation is something we just have to practice and practice and practice and practice. And so all the time, like I talk to myself when I'm trading all the time out loud. Like I live alone, but if I had like roommates, I had been trading when I had roommates and stuff, and they would, like I'd walk downstairs some days and they'd be like, yo, you good? And I'm like, don't talk to me right now, like rough day. But that concept of self-regulation, like talk to yourself and be like, oh, like all the time I'm like, Tanner, you're getting frustrated. You're getting frustrated, bro. You're getting frustrated. And so like I'll literally stand up and like walk away for a second. But like, you got to do that because otherwise you just sit there, and I always call it like you're in the vortex, or you're just literally just like glued to this. You're locked in. You're glued. Your house could be on fire, and you're like, I don't care. I'm long right now. This has to go to target. So that concept of self-regulation is super important. The last thing I want to add here is on like my style of trading and how like I can stomach those little haircuts and losses. You either have, it's one of two things in the trading space. Unless you're really, really good, you can do the third, but these I think are like the masters. You either have a high hit rate and a low R multiple, meaning like you win 80% of your trades, 70% of your trades, whatever it is, but maybe your risk reward is only like 1 to 1, right? Maybe 1.2 to 1. Or you have a low hit rate where it's like, 35%, 40%, which is like roughly around where mine is, but my R multiple is 2.5, 3. So it's like, that's what I can stomach those losses and be like, well, I know once I hit my really big winner, like it'll make up for it. Cause I can also hold it too. Like once the trade starts working and going in my favor, I'm like, I can hold it and do it, but that takes practice and just takes time. So that's all I wanted to add.
Is Joey here? You want to come talk about your trade? Can I get a P&L shout out from everybody that's traded? Just yell out your P&L. Beautiful. Isaac, yeah, come. I didn't see you sitting back here. Come up. Who else? Okay. 1,000. Who else? Not bad. I just want to know who's buying drinks. Boys, give them your mics for a second. Yeah. Yes. Zach definitely has a person.
600 times 3 for me.
What do you need? What asset? Ev, can you take care of that? Yeah. Hold it close. You might be off too. Up.
Check, Mike.
There you go.
There we go. Perfect. So my trade is I actually took a long. You guys can see we had a big sweep of liquidity over here. I'm very big on Asia levels, London levels, looking at Asia lows, Asia highs, London lows, London highs. NQ is notorious for sweeping levels, right? NQ is like that crazy X that just is very crazy.
No one knows what you're talking about, Joey.
And you guys can see it right here, right? You can see that we get that sweep of liquidity. You can see that once we did get the sweep, look what happens. NASDAQ does this all the time, and this has been one of my very consistent strategies. London highs, same thing. We sweep London highs. Now, we've already done that. Up here, we're kind of consolidating. Whether we come back down, today is very bullish right now, but whether we come back down or not, who knows? But right now, my one key trade was that sweep and that ride back up to get up 2K on the day. And so that's been the trade so far.
What's the way out of that? Yeah, come on, clap louder than that. That was a good trade. What's the way out, Joey? Let's talk about just your risk on it. Like, how would you get out of it, and why was your stop where it was?
Yeah, so I'm very big on see profit, take profit, right? I'm very much a scale in and scale out type of guy. Sometimes I will go all in and all out. But if I do get setups like this where it is an A+ setup, I maybe throw on 3-4 contracts. But once I get into profit, I very much want to lock some of that in, right? I don't, because like I said, the NASDAQ can go up, down, it's very crazy. It can move very sporadic. And so I will do my best to lock in profits the best I can and then allow runners to run. If that means if I'm in 4 contracts, I scale out 2, take my last 2 to break even. I'm okay if that comes back down and stops me out for break even because I've already locked in some gains. So I'm good. Stop below the lows, take us up, scale out a little bit, allow runners to run.
I love it. Okay, now let's compare it to Isaac. Thanks, Joey. Go ahead, buddy. What were you trading?
What do you think?
Gold.
No, right? Traded money. No, I only trade the S&P. What's this? Oh, a little pointer.
That's
How
a
do I
little
work
pointer.
This? How do I
Yeah.
work this? Huh?
You got it. You got it.
There we go. All right, good morning, guys. I'm Isaac. For those who
Hold
really
that thing
don't know.
real close. Down the throat,
like
preferably.
an MC. All right,
Yeah.
cool. So I'm gonna make this very, very short and sweet because I'm presenting at 3 p.m. and we're gonna be going over all this stuff. So you guys might be like, what in the world is he talking about? So firstly, I saw an opportunity to take this trade 2 times prior to taking it, but I stood out. Why? Why did I stay out of the market? Why too early? News, right? Always checking the econ calendar. So you can see right here around 10 o'clock is when we had this little blip down and an aggressive blip up, right? So I was looking to take this long closer to the open, right around here, which there was a good opportunity. However, you see this big pullback. I would have gotten trailed out, stopped out, get a small profit, right? Or if I didn't trail, right, then there was an opportunity to get a full move here. However, it was getting way too close to that news release. So I waited for it to come out, let the algos do their thing, right? We had the pullback here, and then we found support again, obviously at that same level. The only reason why we broke down in this direction was because of that number coming out. So for that reason, you can be right and tight, you could be right and too early, right? So getting into the long here, and let's just say if I wasn't, everybody that knows the way I trade know that I always trail my stops, right? But if I hadn't, right, and let's just say I had like an 8-point stop or a 10-point stop, I could have been in the money and then almost flat, and then in the money again, and then flat, and then actually stopped out and took a loss. Patience. I spell patience with a Y in between, like patience. The more patient you are, the better you'll be paid every single time. So there's always going to be another trade. There's always going to be another setup. It presented itself again. I jumped in. $2,000. How many contracts do you guys think that I used to make $2,000? 2. That's it. 2 contracts, S&P, painless. Once you get in virtually no red, okay, and I didn't even take the whole move, okay? But I did. I did the 4.5 point, then I did a 7.5 point, and then I caught a little bit, 10 points. So, and it did. You came up, and I think I got stopped out either here or here. I don't remember, right? But it's irrelevant. So, but why did I want to get long here? It was the point of quantitative extreme to the downside. And if you guys don't know what that means, that's okay, because that's what I'm going to be going over later. So we were at the point of QE. That's why you could see lots of support here going into the open, right? What moving average is this, guys? I'm asking them. That's a VWAP line. See, I don't use VWAP. See how clueless I am? I don't use VWAP at all. But what happened was we were at the point of quantitative extreme. The market gets a little scared here, right? There was even a little rip current, right? If you imagine yourself like in a pool or in the beach, rather, a little rip current here. Could have killed you, but it didn't. Ultimately, we ran back to mommy, right? Or we reverted back to the mean, and then actually crossed over that, retested it, and continued to the opposite quantitative extreme. So we're going to talk about this later in much greater detail. And funny enough, you'll see in my presentation that I updated, you'll see all the opportunities that have already presented themselves with my strategy from the opening bell till this very moment right now. So
Love it. Love it. You can be too patient. And that patience of like, well, I think it could go to this level. Well, I think it could do that. Will sometimes cost you money. Now, what we're going to talk about in this section is using multiple time frames to master VWAP. Evan is a master of VWAP. He truly does understand how to stay patient enough while using the higher time frames to find how to combine the right price with the right time. So, we're going to get into it. We got bunch of sessions, bunch of panels still to do. So try here on this session, it's a little shorter. Try to hold your questions till the end, okay? Unless it's super pressing to a specific chart, let's hold to the end. Good? Let's do it.
All right. So I do want to keep this simple because, I mean, with any of our trading, once we go through some of these markups here in the end, I try to keep it as simple as possible because we were talking a little bit last night of overcomplicating it, no matter where you're at in your trading, is probably never a good thing, right? It's really knowing what you do well, what you don't do well, and just refining it through time, and then sticking with what works for a longer period of time. A lot of the time, it's not seeing enough through. But I mean, now, how long have I traded like this? At least a year. And I sometimes add in maybe his Bookmap. I'll look at different levels, but the core basics are pretty much the same. But first, this was probably my best streak of trading where, what was that, 42 days, 1 losing red day. Now, they weren't all max daily profit days, but the same thing in that time. That was October to February. It was really just ending the day green. My job is just to make money. It's not to try to maximize gains every single day, as stupid as that sounds. If I could finish the day green today and stack my way towards that payout without being so emotional, right? Because could I always try to go make more? But I'm up on the day. That's going to make me feel better tomorrow where I could then trade better. The risk is always, if I keep on sticking around and trading more likely to do something stupid. Does that bleed into the next day's trading? And then the next day's trading. So my job is just knowing that at this time, one little thing might spiral me, not dramatically, but I know that the importance of ending the day green is going to help me tomorrow and the rest of the week. So the risk reward of trading the rest of the day wouldn't be worth it for the rest of my week, if that can make sense. But this was definitely the biggest tear I went on. The bottom half towards the right, obviously the size is a lot lower because it was almost intimidating of trying to keep this streak alive because everyone's watching me. Are you still green? Did you not lose yet? That's insane.
And also getting closer to the payout, so wanting to preserve the gains. Look at the small green bars, though, everybody. You want to hit them with the pointer? See them, everybody? Even the second trading day. That's him just walking away and not going red. Or it's him being red initially and getting green and just calling it and saying, I'll come hit hard tomorrow, and he does. Look at the rebound. There's only 2 small consecutive green days. You see him in there? Every other small green day has led to a big green day the next day. Isn't that interesting?
But this is also the biggest number to probably focus on. 54 losses. Obviously, I was still taking trading losses, but I'm ending the day green. That's why a lot of these are smaller. So if you want to say there's 30 solid green days of profit, the other 10 I survived. I was down, I recovered. I don't need to try to press it even more. And then for better or for worse, towards this back half, consistency of sizing of, well, I don't want to hammer it now. I'm on this crazy streak. I don't want to lose it. But that's not maximizing gains because it was the next month after this, which I don't have up here. The next month I broke the streak, but I made more money than I did on the streak just because now, well, I'm trading freely. That the streak means nothing. It just looks cool and pretty, but I wasn't maximizing gains necessarily because it did handcuff me sometimes of being less willing to take a trade. Now I'm more in my head of remaining perfect and keeping the streak intact, and that's just expectations. The streak means nothing. It doesn't pay me more, aka that's why I made more the next month without the streak. So if you just stick to what's been working, once the streak was snapped, okay, what got me that? What were the setups? I still want to repeat that moving forward, but there's no expectation of, well, you're fine to lose.
This is only good for Instagram. That's all a streak
really
matters for. It doesn't make you more money.
And then these were some of the payouts from that. And then at the very end, just cleared the entire Top Step account after I got the 30 days of, was it $200? Tradify payouts, no top ones yet, but that will be coming this month. It's all right. But scalping with the VWAP. So I really want to keep it simple on just one VWAP, maybe 2 to 3 throughout the rest of the day. But you see this black one is always going to be anchored from the 9:30 open. Keep it simple. The one level is the opening range. We have an initial balance later on in the first hour of the day. This is just the first 15 minutes of the day. And we were just mentioning, a lot of the time it's not just price, it's the timing that you're trying to play that price. So with this one, this is our first break outside of that bottom range. I probably want to be a bear today. Doesn't just mean I sell it right now because what is that, 2 more, 3 more minutes of follow through? If I don't time that exit perfectly at the bottom, now am I back at break even? So I agree it wants to move lower today, but when do I want to get in short after a pullback? Because moves like that don't sustain forever. I mean, what is that, 12 minutes of just all sellers and now I'm going to jump in? The play to jump in probably would have been from the top, not my strategy, but now I can't move in now. Everybody sees that it's bearish. Let it pull back, and then just play the next leg of it. A lot of it is going to be trend continuation. So you have to be willing to miss a part of the trend. But that's fine, because if it's going to keep on trending all day, we'll catch the next move. But if you don't have faith that there is a next move, this is the only one today, then yeah, go ahead. Jump in down here, take the stop loss, and then see it fall where you wanted it to. You just got eager and jumped in too soon. So it's all about just waiting for a pullback. You're playing the same price. What is that, 30 minutes later, but after the pullback, no drawdown initially, and this is the importance of that stop loss we were saying. I don't really pull my trades early. Case in point for this one, I try to put it at a place where I know I don't want to be short anymore. If we take that out and we're making now higher highs, yeah, I probably shouldn't be short. Now I want to be full out of it, but too many times someone's going to cut it here, see it come back down, they're adding back in, they cut it again, now they're on tilt because nothing's really happened. We moved maybe 6 points, but they've taken 3 trades. I just want to take the one trade, see the idea through, tell me when I'm wrong, or tell me when I'm right. If I'm wrong, hit the stop loss, I'll readjust, and maybe the shorts aren't in play today. I'll look for longs later on. I don't try to rush and time it perfectly. I'm giving it a shot that I want to sell this level at the bottom. If we take that out, okay, I'm wrong. Maybe I'll look for longs later on. It's the same thing here to the upside. There's the break of the top of the range. I know I want to be a buyer, but I'm not going to chase, one, the first break, but also at the very highest price up until that moment. I want to let it pull back down. It respects the same level. I could buy it at the same level that you wanted to 20 minutes ago, but now you're seeing it create some structure where you know you'd want a stop loss, and from there, it's all profit. Now, some people will say, and it is a fair point, if I buy it there, depending on where your stop is, you probably survive. We probably both make money. Because if you're buying at the same price, that small pullback's probably not enough to stop you out. But it's, again, I want to get in and take on as least amount of drawdown as possible because I know I could just operate better if I'm in pure profit, as most of us do. So I'm not saying, nah, I don't think that price goes higher from there. I know if I'm a little bit early, I may overmanage it, I may question it, I don't want to sit through that drawdown if I don't have to. So I'm not trying to time it perfectly, just trying to time it better. So if I could get in now and see pure profit, then this pullback, if I was buying it from there, seeing green, back to break even, well, now what do I want to do? I was just up, now I'm at break even. Is it going to go to red now? Do I get out of it? You start to question yourself a lot when if you could just get in when it's telling you to, all profit from there, there's less stress and less room to freak it out. But also, the thing I like about this one is you now have structure built for a stop loss. On that first one, you really would have to probably go at the low a day.
Well, there's no higher low.
Yeah.
Yeah, it's down at the bottom.
So we saw a short, we saw a long. Any questions on that real quick before we go on? It's simple. Yeah, for the most part. I mean,
even here, like you see how it pulls back to VWAP and it bounces that bullish bar. That maybe is where a Tanner or someone would try. That's the turn to me. Like that bullish black bar off the black VWAP is now sellers were trying to take and buyers have stepped in with a defense, like with a shield. Now let's see if we can continue.
But you got to think about it, of the market moving in waves. So it's the same thing we said earlier of like, there's the part of the move that I would want to catch. I didn't catch it. I don't want to just jump in at the top. I'll wait for the pullback, and we'll try to get the next one. Even if you miss this one, let it pull back, catch the next one. Don't just be jumping at the top, hoping there's more follow-through. Sometimes there is. Sometimes it's 20 points more follow-through. Sometimes it's 5. So it's a really matter of just recognizing that we're going to move in waves. I missed this one. Could I get in late now and make some money? Sure. How many times out of 100, though? The next 3 or the next 100? Who knows? So if I could just time it better of riding the next wave, I feel a lot more just ease and calm when you're entering the trade because you know you're not rushing into something or chasing something late. This is another downside just easily drawn of, if you want to take a picture of this, is really how simple it is. There's the first break after a big move. So one, I don't want to chase the first break, and I don't want to be chasing an overextended move. So let it pull back. There's the sellers saying, yeah, we're going to stick underneath this New York VWAP, and they break us out of the open range low a second time. All right, well, now I can go. Now the timing is ready because it's now the second break after a pullback, but it's the same exact price. But this one is all ready to go for profit, where this one was ready for a pullback.
Who's been caught in the red circle before? Randy, put that hand up. First break of range trades are very much a FOMO trade because there are days where we break range and go. But it's like 1 out of 10 days, I promise. The longer you wait, you'll see we don't usually do that. First break of range is sometimes a signal. We now are moving lower. Sellers are taking control. I don't want to chase. I want to wait for the better time, like he's saying, to take the trade. It is the same price, correct? He's short in the green circle at the same price he wanted to be short at the red circle. But because he gave the market space to breathe and take a breath, he now gets the right timing, he gets the instant profit. Notice the pullback doesn't go all the way to the New York VWAP. Austin, does it have to go to the VWAP? No, man. Like, think about what the market is telling you. The market said sellers at the open, buyers tried to take it back. Buyers could not even make a new high of day. There's not even a higher high here. So once the sellers take the black New York VWAP and push that move out of opening range low, it is very clear. You're flat or you're selling it today. Okay, if I'm selling it, where do I want to sell it? When it's higher, ideally, right? In some form of a pullback. Maybe you don't get that entry. The next way in is like he's teaching you here. You put a VWAP on the low of day, that's the purple line, and you take the break of that VWAP as the entry, because that is when sellers are officially stepping back in. Sellers are in control in general if we're on the lower side of the New York VWAP, but when we take that low a day VWAP, that's where the slide can happen, as you see here. Straight profit.
Yeah, it's very hard, as silly as it is, it's very hard to fuck this trade up, as when, if you're selling at the red circle and you take on 4 candles of drawdown immediately, there's a greater chance that maybe you will pull it early. You're questioning yourself, why did I sell at that price? It's so low. I know I should have waited for a pullback. Maybe you pull it early because you're saying it is going to come all the way up to New York. Let me get out of this price. Then it drops back down, and then you're jumping in late to the second move that you were already in. Where this one, I'm trying to get in with when I think it's less likely that I'm going to fuck something up because it's probably ready to go now. I don't want to really be early, as none of us do, but I feel like this is the better timing, so let me try it now rather than 20 minutes ago, even though 20 minutes ago could have paid the same and you could have maybe not even gotten stopped out. I was less stressful throughout that whole trade, so I'll execute it better. I'll get out when I'm supposed to. I didn't suffer that 10 minutes of drawdown. Now that I'm back at break even, I'm going to say, yeah, just get me out. I didn't like that draw. Just get me out break even. I got in, and I'm getting out a little over 1R. Same thing we talked about. The quicker it moves, the quicker I'm out. He's very, obviously, non-1R. I still try to shoot for around it, but for the most part, it's really just reading, reacting to how fast price is moving. Here's an upside example. Don't need to look at it too much, but another thing is they're all going to be off probably the New York VWAP, a key level, whether that's a VWAP or actual level of the opening range high there. But this whole thing is not chasing the drift higher, of having faith that they can give a bigger pullback, right? There's some small higher lows in here. You could definitely try to long those. This purple VWAP is anchored from the high of day, and the break of it is telling me buyers are back in after just retesting a key level, right? Obviously, they were in this whole time, but I want to see them take a break. Sellers try to push us lower, but respect that key level or key VWAP. And then the next time buyers show back up, now they're ready to continue the trend rather than hoping trend continues from here. I mean, it's been ripping like crazy. I hope it keeps going higher. I've seen sellers try to take it, buyers defended it, and now they're ready to go again. And same thing, stop loss keeps you alive to still build those higher lows because the move isn't wrong or invalidated at least until we break back underneath New York and start making lower highs and lower lows.
What do you notice about from market open? What is price telling you? Who's in control? Oh, I love it when you all answer. Thank God. Where does the New York VWAP go? Louder? Above the opening range. Yes. So even more of a reason there's no short to be had. How many people tried to short it, do you think, after that first run up out of the opening range? A lot. A lot. You don't need to. Wait, breathe, be cool, calm, and collected like him, and you could take great trades like this. I'd probably be aggressive, and I'd try to buy this on the New York VWAP when it turns, when it's bullish, because then I get a stop down in the range. If this turns and comes back in the range, it's broken. It's not the way it's supposed to be. So now that you're starting to see this all come together, there's a lot of different VWAPs you can play. But it doesn't matter. What matters is price. Who's in control? Are we making higher highs and higher lows, holding those VWAPs, or not?
Let's do some more examples of he was showing a little bit. Where
the
do you
flashcards.
think we go next? So this is the New York Open, big opening range in terms of it's 1045. We haven't broken out of the opening range at all. Maybe a pin to the downside, but any guesses just real quick where you think this would probably want to go? Would you rather long this or short this?
Hold on, wait, make them vote.
Flat New York VWAP, choppy obviously since the open, so we're leaning long bias.
Long? Short?
We're all wrong. But this whole thing of the opening range, more so of lately, if we're in this opening range, the people that said flat, I would agree with you now that if we're in this range, I don't know where we're going, and I don't care where we're going. Give me new information on either a break to the upside or the downside, and then I'll react to the next leg. The same thing. There's the pop to the downside. I don't need to time it that's the time it was ready to go when I thought it was ready to go back there or back there. I thought it wanted to go lower, but it just didn't have the gas to do it until then. I don't need to try to time that. You'll get burnt trying to time that over and over again. Didn't work, so let me long it then. Okay, now we short it again. If we're in this range and look at the sentiment of that New York VWAP, it's flat. Clearly no one's strongly in control, that we're trending higher. And then as you see, as it does break out, we start to fall on the New York VWAP. So just wait for the break, new information, retest off that same level, and then you catch the next leg of the trend continuation. But there was no trend here to try to continue. So don't try to guess what the trend is going to come in at. Yes, it's healthy to have a bias and look at the higher time frames, but trying to time it in these ranges, I know I'm a better trend trader. I know I don't want to time it because I'll easily get chopped up. So just get me out, give me new information. It's going to make the next trade just easier. Now I know I don't want to buy it. We broke to the downside. So now I know I'm looking for one direction. So then I can just lean into, okay, well, I want to sell it. Where do I normally want to sell it? Off the key level. It just becomes so much easier and calmer than trying to force the pop out of a chop.
And like this stop loss puts him in a position where if he's short and this comes back into the range, it ain't right. So that's why that stop is valid. And notice, if you took mid-range shorts earlier in the day, do you make money? You definitely do if you follow the rules and you put your stop at the opening range high. It does not retest opening range high. You could have shorted it. Show them. Point to it with the pointer. There's like right there, right there. You could have been short on any touch of New York VWAP to the downside. And if you put your stop at the opening range high, you still made money. But you took on hours of drawdown. So what would you rather do? Hours of drawdown or patience and flat until the entry presents correctly? Hours of drawdown? Tanner, God damn it. Everybody wants to be patient for the right entry. I would hope the hands are up for that. Who has the mental fortitude to be patient for that entry? Who's going to sit there from 9:30 till 11:30 for 2 hours and do nothing? The people that put their hands up believe in themselves. The rest of you should talk to them. Serious. It's belief. Do you believe you can be patient? Or do you believe that you're a degenerate and you're just going to force yourself into a trade? And then when that comes, I'll still take it, but you're down $500, $1,000 already. Yeah?
I've just seen too many people also sell it underneath that New York, then it doesn't follow through. It's now back above New York, so then they long it, and then they switch it back to short. It's like, well, how much new information that we got that your bias is switching that drastically, that quickly?
And you're not following the rules because you're cutting trades before they're invalid. So you're tilted. You gotta go. All right, this is a good one.
Let's do another one. We got the same thing. Opening range has been broken to the upside. New York VWAP sloping a little bit more higher here to the upside, but still within that opening range. Should be like the shorts here or the longs here more so than not.
Longs, hands up. Shorts, hands up.
So there's the break to the downside.
What'd I tell ya?
So we also have a high day view up on this one. You can notice buyers couldn't hold it there. Couldn't really get above it the second time they tried to hold New York. But it's the same thing. I think we could want to go higher too.
I would have said higher. I see higher lows and higher highs.
But we're in the range, so I don't give a fuck where it wants to go. Tell me where you want to go. There's the break. New information outside the range.
And then here, if you were long, go back one. If you were long here, where's your stop? Range bottom, exactly. So where you stopped out? Right here. Now next slide. There's your move. So you can take that loss on that long, not chase that move lower, play it short later in the day and recover. So you don't have to be wrong the whole day. You just got to be reacting, not married to the long bias. All right, I'm going to buy it at the bottom now. No, bro, the market is telling you we finally broke lower. You should be looking for shorts the rest of the day until that VWAP is taken, which it never even gets retested.
And there's plenty of money to be made in these smaller pullbacks, right? If you're definitely short biased by this point, you could want to be looking for shorts. You get a break of a lower day view up there saying, let's go continue the short trend, but it doesn't follow through. Always try to let it return to a key level or a key VWAP, and then that's more likely where the next leg of the actual trend or the bigger move of trend would want to continue from. So I'm not really concerned of trying to take these small little baby pullbacks, I would call them. Let it pull back for like an hour. Sellers clearly defend this level. Then they break the lower day, another choppy one, but good stop loss at structure. You let sellers hold in until buyers take control. Sellers try to keep taking us lower and lower, and then they finally win that battle because you're on the right side of trend that there's a greater chance will eventually fall as opposed to eventually skyrocket back up when there was no buyers at the open.
Are you guys following the VWAPs that are on screen? Purple low a day, purple high a day, black is New York VWAP.
So like this one right here? Yeah, you definitely could. That's like the small pullback retest to the key level. There's even another one here and another one over here. My thing is just seeing, I like to see a bigger pullback so I could have more structure covered, right? That I've let this all come back. I'm selling it to the low of day. That I have more room to trade to where we've already been. I know price has been down there. We can probably get there again. Rather than trading it, if I'm selling that low a day break, it's probably right there. I have, 3 points to back to low a day. And now I'm asking for new lows to be made. Not that they can't. I just like to go fill the space that we've already been. That's really it. So if I can get the bigger pullback, there's more risk reward or more room to just go somewhere that on this trade, I don't even need it to go to a new low a day. The trend doesn't even need to continue for me to make money.
Right.
If you're selling it at the lowest price, you need a new low a day to go make some money. And I don't
like
want to have to rely on that in case it does slow down.
Great answer. I like selling into low a day, not selling for a new low a day. And also, time builds a base. The more time you have from the anchor until that anchor is broken, the more information it gathers. So if you throw a low a day on it, the first break of opening range to the downside at that one candle, and it's 6 minutes until you take the short, you have 6 minutes of information. It's not that much versus if you wait for that break and then this entry, it's 2 hours of information. Much more reliability in the trend and the anchor from that point.
And this is just a quick one of just noticing how all these cleaner entries are on their way out of the opening range or already outside of that open range, that the trend is outside this range. So we are continuing higher, and then your job is just to try to capitalize off the key level and the key VWAP.
Bro, that third trade, buyers have clear control all day. They try to take control at 1140, 1150 to the downside. They can't. They even throw a nasty pin for you to use as a stop loss, and then they take the high a day VWAP, which says, don't buy the rip, don't buy the dip, buy that like he has marked, and look at the reward. I'm out of that trade at equal highs, maybe trailing one contract. When it gives you free money like that, bro, that is amazing. That's the power of trading with VWAP, especially when VWAP leaves the New York range, when we get out of that opening range.
Yep, and then one quick thing would just be these 3 or 4 candles down back below New York VWAP doesn't just necessarily mean, oh, sellers are in. The trend is changing to short. You still have to account for a structure that, okay, well, since the open, it's still been higher highs and higher lows. The New York VWAP is still sloping up. Is it more likely to continue higher with the trend, or are sellers actually in and making new lower highs and lower lows? Because this just induces so many shorts saying, well, we were above it, but now sellers are in, right? So we're going to go just sell off. Well, what's the higher time frame saying, first of all? But even just here on the 1 minute, it's still building higher lows. That there's no saying that this is going to be the higher low we're working off of. This can't be broken. From back here in the open, it's still moving higher. I don't want to be calling that now sellers are stepping in. If they do break for a new low a day, and you were right on this was the time that sellers came in, I'll just catch the leg of it later. I don't need to catch the first time sellers are in. I'll get it later.
Yeah, for new traders, like if you're really buying in on the VWAP stuff, the best thing Christine will tell you is don't fight that VWAP. Try your best to stay flat or just trade with it. Unless you really know your personality and you are a reversion kind of guy, like a revert to the mean, I want to wait for extremes like Isaac and then flip it back. They know themselves. But when you're a new trader, I believe a high win rate is easier to teach than a high risk reward, and trading with trend is easier than counter trend. That's just my opinion. So if you're here for, I would ask the other guys what they think of that, but easy means simple. Simple is what we kind of need because we tend to overcomplicate things on our own. So try to keep all of this as simple as possible. Now, this is the most important part of this presentation.
And this would be kind of similar to what we were just talking about. Clearly short buys here at the open, but we do get back above the New York VWAP a little bit longer than that short markup we just went over. But do we want to buy this higher? New York VWAP is now maybe flat, maybe even arching up. Lower day VWAP could be broken in a little bit, but are we going long here? Does anyone hate the long, like the long?
Longs? Even with the New York VWAP under opening range low? It's going up. Yep.
For now. This is the 15-minute for that day since the changeover. This is where you're long it. Saying buyers are back in. The trend is moving higher. It's still clearly making lower highs from all overnight. This is the daily VWAP anchored from. So we are above that. But again, structure is the second piece you have to add in with this VWAP. That until we maybe take out one of these white lines, which is just a lower high, we're still falling on top. I don't want to be long it into lower highs on the higher time frame or the lower time frame. But you got to think, what's the story today? Am I long buys today? Like, what's the likelihood that this is trending higher? It's not moving higher. So why do I want to jump into a long just because it's moving higher for the past 40 minutes? That is it more likely to come back down for the next 3 hours or continue higher for the next 3 hours? Probably back down for the next 4 hours.
This is a 15-minute chart, just so everybody knows. So he's out to the 15-minute time frame. See where we're at based on the overnight VWAP, and then reacting to say, do I want to just be long because it's 1, 2, 3, 4, 5, 6 15-minute bars up? Like that? Like I really want to be long now when sellers have been in control half the day at least, and then if you count the overnight 3/4 of the day, you're buying it at literally the top before the next lower high. Right there. But you can flip and still make your money back.
Think about what your bias is. What's the higher time frame telling you to do? What is your trend continuation going to be? The trend to continue would be back to the downside, so you don't want to chase this long, get caught up there in a lower high from the open, wait for sellers to step back in, back below New York VWAP, the lower day VWAP, off the key level again, and now trend's ready to continue. Another thing would even be to let it retest, and you could take the second time out. But it's also really, the New York VWAP is flat. The 15 minutes may be telling me to short it, but I want to long it here on the 1 minute. Anyone that would want to long it here or go counter trend, whatever you want to call it, you'd want to get as close to that VWAP as possible because there is money to be made in that little pump up. But you don't want to just be caught chasing it too high up now because you don't know how much further it would like to continue since it's not in trend. That just gets more dangerous longing it up here. But if you can catch the break of it, you could scalp some money long out of that.
Look at how long of a base this one built, Krista. The low of day is at 11. He's trading the break of the low of day VWAP at 1 o'clock, 1:15. So it's 2 hours of information. That's a strong VWAP to use. The bigger the base, the more confidence I have in my trades. When I take a low of day VWAP trade, the one you asked about at 6 minutes of a base, these guys know I never really am in those unless I'm tilting. That's just me chasing. This is much more of a low of day VWAP you'll see me play, especially because low of day VWAP and New York VWAP are close. 2 key VWAPs overlapping like that, like previous day New York and today's New York, a low of day and a New York, double confirmation. You know, I have a lot of orders there. No. No, because if I have to set alerts, that means I'm not focused on my trading. I've never set alerts. I've never done that. Go for a coaching call, I just go, and I don't trade. When I trade when I'm on a coaching call, I can tell my clients don't like that. And they pay a lot of money, so I ain't going to do that. Who's laughing? Why are you laughing? You know it's true. You ain't going to pay a lot of money and then be like, Austin's half distracted trading NQ at 2 in the afternoon. Right. No, I'm smart enough. I turn that sound off at least, all right? I'm good at being sneaky. Go ahead.
This is going back to the point of when it's in this range, I don't really care where it wants to go. I'm thinking of ideas and theses of where I think the trend wants to ultimately take us, but I don't need to try to predict or guess the timing of it, I guess is the better way to say it, because you could try to pop the long there, then chase it short, but there's not real follow-through and continuation hour after hour. So let it get out of the range. Get new information. For this one, it's going to be a new high a day. We've seen some markups where it was a new low a day. I mean, we do have a new low a day view up there. But new information to the upside, retest to that key level, and then I'll take the second time we're ready to go continue that trend, right? Everyone and their mother knows that we look bullish now up here. I don't want to be looking where everyone else is looking to get in long because the amateur is going to chase it up there and get absolutely smoked.
Because their stop is right there. When they buy the breakout, they put the stop at the pins at the lower high. Everybody's done that trade, and then you lose. You'll find as you get better at trading, you will be selling or buying to your older self. I find that I'm getting out of trades where old Austin used to be buying.
Yeah, the trade becomes too crowded. It's too obvious. The whole herd is going to jump in there. I don't really want to be where everyone else is buying it because it's most likely that they're going to lose money, so I don't want to be in where they're at. So
Evan's the black sheep.
But this is also the 15-minute of it. Why would I be looking for shorts when we've been higher highs and higher lows all overnight, and this is that black overnight VWAP? We're still above that, pinning below it. All this chop here at the open is a pin to the daily, pin to the daily. So I'm not really looking for shorts today. Where are we? I'm not really looking for shorts today. So even though it was potentially breaking out to the bottom, I'm not really wanting to find shorts. It doesn't make a lot of sense with this trend. So I'm not chasing that, first of all, but it's not looking good for longs either. I can't really long it close mid-range here with the structure maybe falling still on the bottom. So just let it break out. Make a new high. Tell me that it is actually potentially trending higher. And then again, the next leg. I don't need to catch the first time it pops higher. Congrats. I could have timed that. Maybe not. I'll get the next one. It's just as easy. It maybe moves even further, less drawdown. So I don't need to try to catch the first trade, the perfect trade. Just trying to catch a piece of it, and then I'll rinse and repeat the next day. All right, so that's enough of the charts, but I do want to talk about some of the lack of professionalism that I think we all still go through, but thinking that you could just make money out of any move. A lot of that would be inside that opening range, inside the chop. I think this is ready to pop higher. I think it's ready to move lower. Just thinking that there's always something to do. Whether it's to your plan or not, you're thinking, well, I've read the candlesticks and I've read the charts for like 2 years now. I can make money in anything. We all fall into that, and it is easy to try to just always create an idea of where I think this wants to go next. I think it's ready to go here. But if it's not fitting my plan, I do not care. Is it probable that it moves higher, or is it just a potential that it might move here? Because I've seen it want to do that from time to time. But there's not always something to be in, and that's really something you have to become comfortable with, that you'll see me wait an hour for a pullback, and then it's telling me to get in. I wanted to short it an hour ago, but I knew if I did and I lost, that's not to my plan. I'm going to have to just feel like shit for taking something I know better than to do, and it just costs you money. I've done it too many times to know that when I go outside of this plan, it doesn't reward me. It rewards me like once out of every 10. So it's not worth it for me to try to just keep making money out of anything when I know if I could wait for this specific setup, it does make me money. That's what got me the 30-day streak. So why would I want to do something else when I know that I have better odds waiting for something else? Do we have trend? Are we off a key level? Is it telling me to get in now? A lot of it was the timing. Is it telling me to get in now? We do have trend. It is off a key level, but it's not really telling me to get in now because there's no break of a higher day VWAP to go continue the trend higher. All right, well, let me wait to see if buyers can step in and break that higher day, telling me they're back in control and we're probably going to move higher now. It's all about timing with the trend and a key level. I mean, today was super slow, but it was respecting the key levels. The timing was tough to time because there was no continuation or follow through. And we want to be right more than you make money. That's the same bucket as just thinking there's always something to do. I think this is ready to go higher. This is just too easy. This can't possibly move lower, so I'm just going to put it on the long. I don't know where the stop loss should go, but I'm going to put it on the long. You just wanting to make money or wanting to be right more than you actually want to just be systematic and know where your odds lie and repeat that over a long period of time.
Stop thinking. Thinking is bad. Thinking means you're forecasting. I think the most important word here is he said, thinking you could make money of any move. Stop thinking. What's the market doing? React. You with me? You'll overthink yourself out of everything. You'll overanalyze out of everything, right? We've all been there. Thinking is going to slow you down. You want to build up experience so you know it like the back of your hand, and you're not thinking. You're acting. It's just part of what you do because you're asking yourself the right questions. The only thing you should be thinking about is answers to questions. If you're thinking, I hope it does this, or I think it's going to do that, if you catch yourself saying either of those, you're wrong. You're most likely wrong. What is it telling me? Yeah. Another way I would say it is like if you catch yourself thinking, I think this is going to go higher, probably need a break. I think this should go lower. Well, what is the time frame that is on? So you're thinking things of like a bias, but it's not actually giving you tactical stuff to trade off of. You're just thinking, oh, I think this can do this today. Does that make you money? That's the question. Does thinking make you money? Asking yourself questions actually makes you money. What is the market doing? What is it telling me to do? I think it's going to do... Stop. Like, I thought it was going to go lower on NFP, and I owe $10 or $20 because you make fun bets with your gambles, with your thoughts. We're trying to take the gambling out of this, take the professionalism and put that in front of it. So professionals will say, if it does this, then I will do that. Gamblers will say, I think it should do this. You got that on video back there? That was good. He's nodding his head. All right, just making sure. Go ahead.
Yeah, and that comes a lot of it with those breaks of a new lower day outside the range. I think it wants to go lower here. I do think that, but I need to wait. Okay, if I could see a pullback and sellers actually defend it, I'll look to like take this short off of my key level. I think we want to go lower, but thinking it wants to go lower right then and now doesn't necessarily pay me. I need it to be off a VWAP, off a key level, after a pullback, all these different things that are simple if I could just wait for it. They will present if I could just wait for it. If I jump in too soon, maybe I'll be out of risk to take advantage of it when it is my plan later on.
The guy that's up 60 G's in here today is a simple man. He's a very simple guy. He doesn't overcomplicate anything. And in fact, he says, I don't know all the time. He doesn't know nothing except what he knows, and that makes him money. If you think you're smart enough to be a quant, go work at a hedge fund. Don't do this. Because some of the guys that are loose and fast make the most money because it's feel. They build experience, they take losses, they build the callus, and they can feel, and then they can do really well. Where the other guy's overanalyzing, paralysis by analysis, he's missing trades, he's chasing trades, and he's on tilt.
One more thing is taking what's possible, not what's probable. I touched on that a little bit. It really comes down to how many times do you think this would win on a monthly basis? Not just, I think this can work out today. I mean, it looks pretty bullish, so what are the odds that it loses against me if I put on a long? I think it's probable that we're going to go higher here because it's bouncing off of this key level. Buyers defended it. The trend is moving higher. The 15 minutes tell me to long it. Okay, that's probably going to work out because it's fit your plan. It's fit your markups. You know you have your best chance to buy it then. Then that's a trade you should be in. Not it probably works out or sometimes it works out. I don't know. I think it's just it's possible, so I'm going to take it because why not? It's a trade to be in, but that's just wanting to be right rather than to make money. Is this what my markups look like? I talked about it last week on stream where those opening range plays came from. When it's in that red box we were showing, is this where my best longs come from? Because I was thinking about long it when we were still falling. I'm like, it could move higher. It honestly could, but it's just not what my best longs look like. So you have to know what your best trades look like, of course. That could it move higher? It probably could even go higher, but I just know this is not the structure for it. There's not the parameters for it. So if it were to lose, that's a bad trade, right? I'm not thinking about if it wins, oh, it's good. If it loses, it's bad. It's just a bad trade because that's just not how it normally works out. It normally looks like the pretty trend moving higher, and I'm just jumping on the train, not trying to time when those longs are going to come in. So just knowing, could I take this? Could it win? But is this what my best plays normally look like? And if you don't know what your best plays normally look like, you definitely have to figure that out so that you could even ask yourself that question. But if you do know what it looks like and it's not your best play, you just got to fight the urge to not take it and be patient and not have that FOMO of missing out on it. Abandoning your plan for the quick profits. We pretty much touch on that, the same stuff. So not for everybody, but just quick, simple, whether you're struggling or a lull or whatever. Your new plan, just for the short term, just an exercise. Try it for 2 weeks, 3 weeks. You'll probably make more money.
And send them half the profits.
Yeah, or 10% is fine.
Generous.
1 to 2 trades per day. We're going to talk about, well, there's that third setup. I want to take it. It sounds stupid. It may not maximize your gains. It may not. But if you're struggling, you shouldn't really be focused on how can I make 10,000. You can't even make 2,000 right now. So let's try to just get in the green, be comfortable and confident in your abilities, right? This is just an exercise to show yourself that you can stick to your word and stick to a rule plan. That's really it. Because, okay, yeah, I said I was only going to wait for key levels. I was only going to take 2. And I've done it for like 2 weeks now. So now I trust myself that when I say I'm going to do something, I can follow through with it. All right, well, then in the future, let's add a bigger plan with maximizing gains. But if you could just simplify it to just, I'm going to take 1 to 2, really mark them up. It only needs to be when the trend is super clear, off a key level. You need a max daily loss set in. So with the 2 trades, I would probably say set your max daily loss at 2 times the risk that you're putting on. So that if you take 2 losses, you're done for the day. Don't take a third, and you can't even take a third because you're locked out now. And then you're either full in or full out of your trades, right? I want to trail it. I want to leave a piece on. I think it goes higher, and it might. But it's just an exercise for the next 2 weeks when you're struggling, you're feeling like you're missing out on gains, and you're not taking profits at all. Just go full in, full out, get the confidence from bagging wins in full, saying, you know what, I got out, I bagged it, yes, it went higher without me, but I got out where I said I was going to. That feels a lot better than, oh, I should have got out up there, now it's pulling back against me, I gave back profits, now I want to trade again. It just keeps you fresh and easy. You don't have to overcomplicate things. I got out when I was supposed to, I'll do it again later. And then just don't fight the New York VWAP, which we were looking at, which is the black one from the New York Open, and don't fight that 15-minute. If you could just do these things for the short term, you'll probably find out what your best setup is a lot quicker because you're not overcomplicating your trades by taking 6 trades. I always say if I was willing to take 6 trades, then I probably would take that setup. I'll take that setup because I could always trade later on. But it's almost like if I'm saying today you only get 2 shots. That's all you're allowing yourself. Do I want to waste it on this one right now? Nah, it's not worth it. I only have 2 bullets today, so I'm not going to waste it on that. It needs to look like this because I'm really only having 2 shots today. But if you're saying, well, I don't have a cap on my trading, I could trade as much as I want, then why not take the next one? Because you have all the rest of the day to take on more and more and more. But if you're saying, I only have 2, is this worth it? Okay, it is worth it. Then go ahead and take the trade. If it's not worth it, well, then if you wouldn't take it, if you only get 2 shots, then you probably shouldn't be in it. Simple as that.
Got a picture of that? Good. Yeah.
I'm full in on like drawdown. Like letting it play out to the full stop loss because my idea is not dead until then, and we saw a couple markups of that. Did I though? I might have.
I might have. I'm probably the one that said that.
I don't think I did.
I'm probably the one that said that.
I don't think I did.
Yeah, you're blending, I think, a little bit, but it's okay. Yeah. I'm really trying to do more of what he's doing. Take good trades and trust your stop. I think if you look at my stats I showed you, I'm holding losers longer than winners. That would align with me taking full stop and not closing those trades. It also could align with sometimes closing a piece of the trade and then letting that trade have more time to come back to profit and washing it, you know? But I think where I'm cutting it is when I take drawdown hot and don't get stopped, but it comes back to entry. I will cut that for the small loss. I won't cut it on the way down. I like if I'm long, I won't cut it as it's going towards the stop. If I took the trade, I'm comfortable with the risk.
Yeah, you shouldn't be too oversized that you're like stressing, oh my God, I'm in draw. If I cut it here, I could stop the bleeding for only 500 rather than 1,000. You should be comfortable with the risk you have on that. If you take that full loss, you're fine, your account's fine, you're still mentally fine to take that next trade. Otherwise, you're just too heavily sized. And it does suck to go through the drawdown, obviously, but a lot of the time, which is why I came to that conclusion of I have to just see the idea through. Too many times I would see it pull back, I pull it, now it's back at entry. Do I get back in and maybe potentially take a second loss because it's still not working out? Then that's more likely that I'll tilt that day because I just entered 2 times on the same idea without it ever being wrong technically.
Right.
And now I actually am wrong twice. So it's really just about, I've seen it play out like this before. I'm willing to take the full loss because I have enough risk that I could take another trade and just get it back. It's not the last trade I'm going to take this week or this month that I'm like on the win streak. I took 45 losses, but there was 80 wins to it. If you could just handle the loss and not be emotional about it, then you're more willing to, or you're able to take that next setup that is clear, that I didn't have a losing trade and that next one just be pure shit because I didn't like the loss. I was able to say, oh, fuck, I like that trade, but then I wait for the next one that is just as good. And it probably won because it was a good setup, right? The thing I did on that streak there, and I still sometimes do it, is handle the losses well, which it was just, I had confidence in the system. I mean, it's easy to be confident when you're getting fed all that green, but when you do take losses, it's really just a matter of, well, if you knew you should have been in that setup, then that's fine. It's a healthy loss. Just take the next one, and then, oh, it was green, so keep trading. As long as you're fitting to that plan and that rules that you set yourself, the outcome has no play in how is the trade good or bad? Because then you're just obviously going off of the outcome in hindsight.
You can go with the wider stops too, like in conditions like right now with the volatility, it's dying down, but it was greater. Wider stops have helped me. Like the one short he had where it's playing around, I don't have a lot of patience. I just told you how fast I am. So I'll blow my load and get in short real quick, and I'll have a stop loss at that high, and I will sit through the drawdown and he won't. But we're both in the same trade. We both will make money often. So I'm going to go with the wider stop and be more comfortable to sit through. And I'm going to just let that thing go. I'm not going to cut it soon because I know we're in volatility. I know that means bigger ranges. I know that means I need bigger stops. So I need to be willing to sit in it and let the idea be truly invalid. Even if that means I was at 50-point stop, 40-point stop when the volatility was really big. But when we're moving 200-300 points in a day, what are you supposed to do? Your 15-point stop is 1 minute. Yeah, it's not going to happen. You want to put the QR code up?
Yeah, I think another simple thing that you could ask yourself, when you're in the trade, just to detach yourself from it, if you weren't in it, if you were looking at someone else being in that trade unbiasedly, the best you can, would you want to be in the direction that you're in? The likelihood that you'd say, I'm in long in drawdown, I wish I was short, you probably don't wish you were short. You just wish you weren't in drawdown in your price.
Yes.
That's just a matter of you're in drawdown. Someone
Yes.
bought it 5 points lower than you and they're floating to break even. They still love the longs. You just hate your long because you're in drawdown. So just detach from it saying, my price is just red right now. But do I still like the longs from where I'm long? Okay, yeah, you probably do. You're just detaching, I'm in red. This doesn't look good anymore. This is going to lose. It's going to go short. Probably not. So it's really just detaching from it unbiasedly the best you can.
Give him a round of applause, everybody. Great job.